Yes, students. Now we will start with the costing revision classes. In this revision classes, we will be covering the concepts of each and every chapter. That is all 15 chapters. And we will also help you. Means I will be helping you to apply the concepts in the question. Means many a times we know the concepts, but we may not know how to apply the concept in the questions or how to present the answers. Sir, how to draw the table, how to start the answer, or how to proceed further solving the questions. So I will not be solving the questions, but I will be telling you, sir, once we learn the concepts, how do we apply these concepts in the questions? Is that clear? Yes. And before we start with the revision, I just want to give a brief about the subject. Sir, what is it? Guys, costing, as you are aware, is a part of group 2. You know, na? It is a complete 100 marks paper. Yes. It has totally 15 chapters. It totally has 15 chapters. Each and every chapter we will be covering in this revision series or the marathon. We call revision, marathon, whatever different name. Everything is one and the same itself. So we'll be covering 15 chapters, each and every chapter, guys. But the first chapter is completely theoretical chapter. But let us not ignore that. Even that chapter, we will be doing it. Remaining 14 chapters are a combination of both theory as well as numerical. We will try to cover all the prospects. Yes, sir. Then coming to the question paper pattern, very important, guys. See, I want you guys to understand the pattern of the question paper before going to the examination hall. Because after going to the examination hall, in the first page, they would have given the instructions. Okay, reading there and understanding is too late for you. It would be too late for you. So please make sure that before going to the exam hall, sir, what is the pattern of the question paper? So that you are mentally already prepared that, okay, this is how the question paper would be. This is how I will start my answers. Clear? Yes, sir. So now coming to the question paper pattern, guys. So totally it is for 100 marks, means you need to attend for 100 marks, in which multiple choice question would be for 30 marks. Multiple choice questions would be for 30 marks. Sir, will there be any negative marking? No negative marking. At intermediate level, in any paper, there is no negative marking, guys. Okay. Then how the questions would be answered? Is it for 1 marks or 2 marks? Guys, there would be 15 questions of 2 marks each. 15 questions of 2 marks each, but not individual questions. There will be some case-based questions also. For example, they will give a case or scenario. Under that, they will give 3-4 questions. Yeah. After all this, I will also take up the question paper and I will solve 1 or 2 question paper. You will get an idea. But now I'm just explaining the format of the question paper. Yes, sir. So there will be the case or scenario, some story in simple if I have to tell. They would have given the story. Under that story, they will ask 3 or 4 MCQ questions. Clear? Yes. And there will be some individual questions also. Individual question means exclusively. They will ask one question where you have to answer for 2 marks. Yes, sir. Then coming to descriptive type, this is very important. Descriptive type, you have to answer for 70 marks, but there will be one choice. One choice. Totally 6 questions would be there. First question is compulsory, and all 6 questions is for 14 marks. All 6 questions is for 14 marks. First question is compulsory question, which will have 3 questions of 5 marks each. And please be careful, guys. Whatever pattern I am explaining, especially here, is as per the ICI standard what they are following in the past exams. All of the sudden, sir, what if they come and change? I don't feel they will change it in the upcoming attempts. But still, for example, if I tell, this will be 14 marks question only. Maybe if they want to change, they may make it 10-4. One 10 marker, one 4 marker. Okay, but till now, under new syllabus, from May 24, this is how they have asked. 3 questions of the 3 questions of 5 marks and 2 questions of 5 marks and 1 question to 4 marks. Okay, I will just correct it. 2 questions of 5 marks. Okay, and 1 question for 4 marks. 4 marks. Is that clear? Yes, sir. Then coming to remaining questions, guys. Remaining 5 questions, you need to answer 4 questions. Out of the remaining 5 questions, you need to answer 4 questions. All for 14 marks. But for 14 marks, single question won't be there. One individual question won't be there. There also multiple questions would be there. For example, 8 marks, 6 marks, 7 marks, 7 marks, like that. Clear? Yes. Or else 5, 5, 4, like that. Breakup would be there. 2 or 3 sub questions would be asked, guys. Okay. Then when it comes to the last question, one internal choice also would be there, guys. Internal choice in the sense, assume there is A, B, C question. C question is for 4 marks. They will ask 2 questions there. You need to answer either under C, assume there are 2 questions, 1 or 2. You need to answer any one. This is called internal choice. Clear? And please be careful, guys. In that scenario, A and B you have to answer. In C, there would be one choice. We call this as internal choice. Hope you are clear with this. Clear? Yes, sir. And sir, out of this question, one question you will take it as a choice. One question, if you want to take it as a choice in the examination hall, you have to prepare for 100% of the syllabus. If not, whatever you are not prepared will become a choice automatically. Clear? So please don't do that, because guys, I have seen literally as a student also, if I see, means when I was a student, now as a teacher, if I observe, sometimes what we feel it as very difficult in the exam, the easiest questions come sometimes. And what I feel very easy, I am very strong in this topic, I am very strong in this subject, and that's turned out to be tough. It happens sometimes, or else too lengthy. Assume one topic, sir, for example, let us take budget. Budget, I am perfect, sir. But in the exam, they have asked 8 marks question, which is too lengthy question, sir. Maybe you can take that as a choice. Clear? I am suggesting you, please leave the choice for the examination hall. Means in that 15 minutes, you will decide what question will you take it as a choice. If you are underprepared, what happened? No, you are forced to take whichever topic you are left, that only as a choice. So please don't under prepare. Make sure that all 15 chapters you know in your syllabus. See, one thing I can assure you is, as a student, if you comply with or if you do whatever you're supposed to do, definitely you'll get the results what you want. As a student, if you try to find out the shortcuts, sir, I will skip that topic, this is too lengthy, I will skip that and all, then definitely you will not be able to get the results what you want. So just give your 100%, cover 100% of the syllabus, let us see why you will not. That is the problem with CA exam. Due to maybe for any reason, one of the main reason is lack of time. Sir, as there is lack of time, I cannot prepare for 100 marks or 100% of the syllabus, so I will skip that and this, sir. Almost all the subjects they will do like that, students. So when you are under prepared, assume you are prepared 80%, guys. In the exam, will you be able to write for a full 80 marks? Maybe not. You will write for around 70 or 60 marks. When you write for 60, 70 marks, can you expect so much from the exam? That too, as per ICA standards, maybe not. Clearer? So please make sure that you prepare well and try to give your best. Definitely, you will get the positive results what you want. Oh, this is all about the question paper. And also, guys, see, this is my suggestion. When it comes to multiple choice or descriptive, sir, which one should I answer first? My suggestion is to take descriptive first. Take MCQ only later. So your examination starts at 1:45, right? So how you have to plan is that 15 minutes reading time also is very important. Don't go to the exam hall later. Okay, ಇಲ್ಲಿ ಬರ್ತಿರಲ್ಲ ಒಂದ್ಸತಿ ಎಲ್ಲ ಆಡ್ಸ್ಕೊಂಡು ಹಂಗ್ ಬರ್ಬೇಕು ಅಲ್ಲಿ ಹೋಗ್ಬೇಡಿ. So make sure that you reach the examination hall by 1:30 only. Don't try to leave your home or PG in such a way that you will reach the examination hall at 1:45 or 2. Definitely you will not reach. Clear? So try to reach early one. You can go there, study or go through, or maybe last 5-10 minutes just to relax. Just to relax. So what I suggest is you reach by 1:30. Maybe you can study for some time, use washroom if required, and last 5 minutes, that is from 1:40 to 1:45, don't study anything. Okay, even so many things are left for you to study, please don't study, because what you couldn't kissy for so long, you cannot kissy there for 5 minutes. Okay, so what I suggest is last 5 minutes, just keep your mind calm. Okay, just sit and pray, meditate, or just leave your mind blank. Because next 3 hours, 15 minutes, it has to continuously run. Okay, so give rest. If required, you can give it for 10 minutes also. Okay, sir, 6 months full rest, sir. My mind full 6 month rest only. I'm telling you just before the exam starts. Take it seriously, because last minutes don't try to feed so much to your mind or brain, because it is not a machine. Oh. Because some of your friend will come in the last moment and tell, oh, this you studied, that you studied, oh, adoda, idoda, he attempt, this is pakka anta. Okay, you ask whether you are an insider for ICA. So nothing like that. No, don't give ears for rumors and all. Just trust whatever you are prepared. Just try to keep your mind calm during that last few minutes, guys. And from 1:45 to 2, please don't waste that time. Many students waste their time. They start reading the questions from 2 o'clock. Don't do that. That 15 minutes you have to read descriptive question, not MCQ question, and decide which question will you take it as a choice and which question will you start with. Start with, sir, should I start with the first question only? Nothing like that. Nothing like that. There is no mandate to follow the same order, guys. Sir, can I start with the fifth question only first? Yes. What I suggest is whichever question you know the best, whichever question you can present to your best, please start with that. Please start with that. Even if it is the last question or third question, fourth question, first question, whichever question, you start. And please don't decide it now. Today you don't decide. Because who knows question paper will come in what way. Clear? Sir, no matter what, my lucky number is 3. I will start with 3 only. Okay, don't do that, guys, because few questions will take time. And few questions, if you're stuck there in the beginning itself, you will get panic. You'll start shivering. All this will happen in CA exam. CA is not only intellectual test, lot of tests will happen in that 3 hours. Clear? Hold your nerve. Make sure that whichever question you know the best, you start with that. Okay, and make sure that you know all the sub questions. Sir, third one I'm starting. A perfect, B I don't know. Better keep it later. You can answer that, but later. So, guys, what happens now? Just try to understand the evaluator mindset. Assume yourself as an evaluator. Do you know the student? No. How well they are prepared? No. How rich they are? No. How rich their parents are? No. How do you decide whether they are prepared well or not? Just through their answers. And once you read, assume you are an evaluator. Once you read the first and second answer, you will decide how well they are prepared. The mindset is like that. For any human being, the mindset is like that. Yeah, if you keep your best answer third, fourth, fifth, and all, then by the time they come to that, they have already lost the patience. Yeah, they have already decided how well you are prepared. Assume for first 14 marks question, they have given 8 marks. Human tendency is like they will not go beyond 8 marks for other questions. Yeah. See, we don't know who will be the evaluator for your papers and all, but let us try to keep as safe as possible from student point of view. So please make sure your first 1 or 2 answers should be the best, not only in costing, in any subjects. Yeah. And try to take, I suggest, try to take compulsory question little late. Don't try to answer it first only, because guys, first question will be the bouncer in majority of the papers. I'm not only telling in costing, in most of the papers, first question would be bouncer, in the sense they would have framed that in such a way that it will take too much time. Especially in income tax and all, total income question will come. Okay, by the time you do working out everything, you will do it, you will complete it. But how much time will you take? That matters. Because again, you ended up taking too much time for one question. There also you start getting panic or shivering. Yeah, so your hands start sweating and all. So that will not let you to continue your journey for remaining time. So I suggest to take compulsory question little later. Or else, if you are too much confident after reading the question, sir, this question is my question, sir. This is my strong area, sir. I can answer. Okay, you can take it as a first question only. But I recommend, I suggest you to take little later. Clear? Yes, sir. Sure. Then coming to multiple choice question, guys, I suggest you to take multiple choice question by 4 o'clock. Okay, this is like approximate time I am giving you. You can start by 3:45, 4:15, anything like that. In around 4. Better you keep some standard time. First 2 hours you will write full descriptive. Then your hand also will be paining because continuously you will be writing. No, so that is fine. Just. So in that case, what you do is you just give a break for your hand. That doesn't mean that you will walk out of the examination hall. Okay. You read the multiple choice question and start answering from 4 o'clock. Please don't consume full entire 1 hour for MCQ. You can try to answer it as early as possible, finish it off, and straight away go to what comes. Again, descriptive questions, because you will be left with few questions. Definitely, you would have not completed by 4 o'clock. I told you to switch from descriptive to MCQ at 4 o'clock so that you will answer all MCQ questions. Okay. So once you complete all the MCQ questions, you come back to descriptive, definitely you will be left with few things completely. And last 5 minutes, Even the invigilator will give you a final call, last 5 minutes and all. Go back to MCQ, check whether you have marked everything. It should be marked in OMR sheet, guys. Hope you know. Please mark it properly. Don't mark more than one option for the same question. Student do that also. They will try their luck. Sir, assume second question. I was having a doubt between A and B, sir. So I have marked both, sir. You take whatever you want. It will be considered as wrong answer. If you mark more than one option for a single question, it will be considered as wrong answer. Please be very careful. Please mark it properly also. Guys, you have to fill that full circle. Hope you are aware of all that. Okay, you have to fill that full circle. Take care of it. And even before you start answering in the answer sheets, you have to take care of few things like roll number. You have to write in number, words and all. Please practice writing your roll number in words before going to the exam. Okay, how to write it? Yeah, yes. And you need to stick the sticker and all that and all. Invigilator only will take care, but still you also ensure that they're sticking your sticker only. Okay. Yes, which is right opposite to your name. They will open and stick it in front of you itself. Oh, then what I was about to tell is last 5 minutes you will come back to MCQ and cross check whether you have answered all the questions. And if by chance you don't know few questions, assume 2-3 questions you don't know the answer. What do? Mark something and come. Mark something and come because there is no negative marking. Clear? Mark something and come. I didn't tell at the beginning, Pawan. I told at the end. Okay, sir, from first 15 only you can recall, because I told mark something, 15 questions, anchi minchi. Okay, please don't do that. Okay, first answer whatever you know perfect. At the end, you have a doubt or you don't know anything about that question. Please mark something and come on. Okay, sometimes God may help you, God may save you. Because 1 or 2 marks will make difference. I have literally seen students who have scored 145, 146, 148, passed in all three subjects, but didn't pass the exam. Sir, why? Aggregate. This will happen. So just imagine 2 or 3 marks extra you're able to get in each subject. That will definitely help you to get the aggregate and so please don't ignore, do that guys. Fine, sir. So this is all about the question paper pattern guys. If you want, I will also show you one the instructions which they are given. Okay, this is like May 25 question paper guys. You can just have a look into this because I don't want you guys to waste time in the examination reading all this. In the examination hall, I will just display, please read it. Yes, fine. We will now begin with the chapter 1 revision guys. Let us start. See, first chapter is completely theory chapter. Some of the students will take it for granted, but you please don't do it guys. Clear? Because many of the things which we will be covering in upcoming chapters, we will be studying in this chapter. The basic. In detail, we will be learning in the later chapter, but at least the basics we will be learning here. And you will get questions even on this chapter in the exam. Okay, just because it is a theory chapter or introduction chapter or basic chapter, that doesn't mean that they will not ask any question. Fine. We'll begin with Introduction to Cost and Management Accounting. Cost. Guys, the amount of money which has been spent to produce the product or to render a service is called cost. And first of all, before we start with costing, sir, who has to maintain cost records? Who has to get their cost records audited? Where is it given? Do we learn that in our costing subject? No, guys. Who should maintain cost records and who should get audited is given in section 148 of Companies Act, read with rules. Read with rules. Sir, who are covered there is in simple. Two category of industries are covered. The manufacturer and service provider. They have to maintain the cost records and get it audited based on their turnover and all, which is not a part of your costing syllabus. You need not. So what I am trying to tell you is who should maintain cost records is you are either the manufacturer or you are a service provider. Now, sir, why should I maintain cost records? Because I want to know what is the cost I have incurred. I want to know what is the cost I have incurred. We will compare it with sales. Then obviously sales minus profit is mine. Sorry, sales minus cost is mine. profit. I want to present it. So for that process, we are doing all the steps. So what is the cost? It is the amount of expenditure of money which is spent to produce a product if I am a manufacturer or if I am a service provider to render a service. Then what is costing? Sir, I need to calculate how much cost is incurred, So there will be a number of expenses incurred, guys, like especially material, labor, overhead, under that direct to indirect to direct to indirect, so many things would be there. Yeah, overhead is always indirect, but when it comes to material, labor and all, it can be direct, it can be indirect. Yeah. So we need to accumulate all this and calculate what is my total cost. The process of calculating it is called costing. Now, sir, if I ask you to remember what is the cost I have incurred this year, last to last year, and all, will you be able to remember? No. You need to account for it. That process is called cost accounting. You have to prepare a periodical statement like costing P&L account, balance sheet, and all, like how you do in your accounts now, because we cannot remember what all happened throughout the year in our mind. So let us put it in the books. Now, books in the sense it is not manual books. We have various softwares, but you guys, for academic purpose, you have to write it in your books on sheets. Yes, sir. Then what is cost accountancy? So cost accounting you understood now, the process of accounting for how much cost we have incurred. Now cost accountancy means what? Sir, to calculate the cost and record it, we should have certain methods, principles, concepts and all. That is what cost accountancy. Even in your accounts you have accounts, accounting standard, Ind AS, accounting concepts, principles and all. Same way even in costing, we have costing standards. We have cost accounting standards, but those are not a part of your syllabus. You need not worry. Clear? And we have costing concepts, principles also. But costing concepts and principle is not so hard like your accounts. So accounts is very stringent. Okay, you have to do this. You have to follow like this. And there in accounts you have to follow what and all accounting standard, Ind AS, concepts, principle plus companies act, and various other allied laws also. Whereas in costing, it is not so stringent. It is not so hard. It is little liberal when compared to accounts. Okay. Then coming to management accounting. Guys, management accounting is for internal purpose. It is never for external purpose. Management accounting is more about decision making. Sir, should I do this or should I do that? Or should I produce this or should I produce that? It is more about decision making. Or should I use this machine or should I use that machine? So it is always used for internal decision making. But obviously, for making decisions, we will take the help of what? Cost accounting. Why is that? Because the cost data is available where? In cost records. So using that, we will make the decisions. That is called management accounting. Now, what is cost management? Guys, what using the data which is prepared in cost accounts, using the data which is prepared in cost accounts like cost data or different types of what all costs we would have incurred, cost it and all. Using that data, if I am making the decisions, that is called cost management. Using the data which is meant or which is recorded under the cost accounts to make various decisions within the organization is called cost management. And there we will also try to manage our costs. Manage our costs in the sense we will try to keep our costs as low as possible without compromising with the quality. Okay, sir. Then coming to objectives of cost accounting, maybe like your 4 or 5 marks question. You need not, sir, will I write only points? No, guys, in the exams, please don't write only the points. Here I have given only points, but I will be explaining it. Here. And sir, should we also explain it in the exam? Of course. But should we write any definitions here, sir? Guys, no. There is no definitions for all this. Clear? But try to use some standard words, which we will see. Okay, by going through, we will see. First objective is what, guys? Ascertainment of cost. Why? See, if I know my cost only, I can fix my selling price. Without knowing my cost, if I fix my selling price, what if I end up making losses? So any organization, first they should know their cost. Over and above their cost, they will add certain profit and they will fix their selling price. So that at the end of the year, they know that what is their performance in terms of what? Profit. Okay. Then determination of selling price and profitability. That is what I told you. Once you know your cost, you will fix the selling price by adding certain profit. Then the difference between the selling price and cost is called the profit. Yes. Profit we can calculate per unit also. We can calculate overall also. Then cost control. Cost control is an important technique, guys, because no company will be happy with whatever cost they are incurring. They want to control their cost. They want to reduce their cost. But cost control and cost reduction is not one and the same. They both are different. Ultimate objective is to reduce the cost only. Clear? But they both are different. What is it? First, under cost control, we will follow different steps. At the beginning of the year, we will fix some predetermined costs. For example, to produce each and every unit, I am supposed to incur a cost of 100 rupees. I am supposed to incur a cost of how much? 100 rupees. Yes, sir. 100 rupees. We call this as standard cost. We call this as standard cost. Now we will measure the actual performance. Measure the actual performance means, sir, actually work is done. How much cost did I incur? How much cost I have actually incurred? Now assume guys, I have incurred 120 rupees. 120. 100 rupees is what I was supposed to incur, but I have actually incurred 120. 20 more. So what is the variance? Sir, we have got 20. When I compare standard with actual, we got a variance of how much? 20. Now we will analyze what is the reason for it. Why did we incur 20 rupees more? Because 20 rupees more means 20 rupees less profit. Because I was supposed to incur 100 rupees cost, but I ended up incurring how much? 120. So we will analyze this and report it to the top level management. Sir, why did this 20 extra we incur? Clear. So that what will management do? Immediately they will try to take a precautionary measure so that at least in the future we can avoid this. We can avoid because anyway we cannot change the past. At least going forward we can change something if we bring any necessary changes in the organization. So actually then there is a chapter called standard costing. The standard costing entirely is based on the concept of cost control. That is what we will do in standard costing chapter. First, we will set a standard cost. Once we do the actual work, we will calculate the actual cost, compare actual cost with standard cost and see is there any variance. And that variance can be favorable or adverse. Favorable means when your actual cost is when your actual cost is less than standard cost, we call it as favorable because that will lead to additional profit. Whereas if your actual cost is more than your standard cost, we call it as unfavorable or adverse variance because that will result in lower profits. Got it? Yes, sir. So I have also given the explanation of cost control. In the next page, we will just see that. Cost control. Cost control ensures that the expenditure are in consonance with predetermined set standard. Means we are ensuring that my actual cost is actually equal to standard cost or below the standard cost. Equal to standard cost or below the standard cost. And any variation is nothing but the variance what we call it as. From this set standard is noted and reported on a continuous basis to whom? Top level manager. Yeah. And to calculate this actual results, guys, we will not even wait till the end of the year. We may do it at the end of week or at the end of the month so that at least we can take the necessary actions in the upcoming period. Got it? Yes. So it's very simple. We will set a standard. Once we are done with the work, we will calculate the actual. We will compare the actual with standard and see is there any variation. Variation is nothing but the difference between the actual and standard. Sir, which is always good or favorable? Keeping actual lower than standard. That is in terms of cost we are talking. That is in terms of costs. Okay. Next is the cost reduction. Sir, what is cost reduction? Guys, assume now presently the company is incurring to produce each and every unit, they are incurring a cost of 50 rupees. Will they be happy with this? No. No company will be happy with whatever cost they will be incurring. They will always be finding the ways to reduce their cost. Okay, but in a healthy way. In a healthy way. Hey, American, listen here. So, whenever company is incurred, in my example, they have incurred 50 rupees cost. They will try to find a way. Is there any possibility to reduce this cost below 50? Maybe for 45, 40. Okay, maybe if there is any wastage in the process, if there is any loss in the process, or some of the workers simply sitting idle. Okay, maybe they can do the cost cutting by removing those workers. Yeah, because we are paying them for not working, or there is no productivity. So if there is any loss or wastage, maybe the company can try to avoid. So now assume they have achieved the cost of 45. By doing some actions, they have reduced the cost of 45. First check, is it a permanent reduction or is it only a temporary? Okay, because sometimes temporary reduction also will happen. For example, assume in the market, raw material, for me, the raw material is tomato. Okay, it is the price of tomato is always market driven. Now assume that all of a sudden the tomato prices has come down. Okay, will it be down forever? No. Assume for one and a half months. So my raw material cost has come down. So that is why my manufacturing cost also has come down. Is it a permanent achievement? No. So whatever 5 rupees reduction we have achieved, just check, is it a permanent reduction? Is it a real reduction? Real means what, sir? Is there any duplicate reduction? Guys, for example, for book purpose, we can show all that. Okay, assume I want to show more profits, so I may show less profits and less cost and all in that scenario. So it should be a real achievement. Clear? Yes. So let us see what is cost reduction. I have given it in the next page. Let's just come to this part. Yeah, let me read it. Cost reduction is an achievement of real and permanent reduction in what? Unit cost. Right? What was in my example 50 rupees is the cost of manufacturing 1 unit of output, not total cost. So did we achieve the unit cost reduction? Yes. Of goods manufactured or services rendered without impairing their suitability. That is also important. Without compromising with the quality for the use intended or diminishing in the quality of the product. We should make sure that, sir, 45 rupees what cost we have reduced is without compromising with the quality. Now, I started using cheap quality raw material. I started using unskilled workers in my production process. Cost will come down. But will customers come back again? Definitely not. So that will affect your reputation and goodwill. So please make sure that whatever cost reduction you are achieving is not without compromising with your quality. That is very, very important. Yes, sir. To do cost reduction, the following actions can be taken. What are those? Each activity within an entity is segmented to analyze and identify value added and non-value added activities. First, identify what are all the different activities which are happening within the organization. And within the organization, there will be few activities for which you are spending the money, but they are not adding any value to you. They are not adding any value to you. So try to eliminate them. Or if not possible to eliminate, at least reduce it so that your cost will come down. Clear? Sometimes you also feel that all these are not necessary in my life. Okay, all these are not necessary in preparation. Clear? So even in your day-to-day life, you will be doing a lot of non-value adding activities. Okay, most of you. Clear? So try to eliminate that. You will definitely get more and more time for your preparation. Especially one non-value adding activity which I can tell is usage of mobile phone. Okay, if you can have a control over it to some extent, at least till you finish your exams, definitely it will have a lot of productivity for you guys. Try to do it. All non-value adding activities are eliminated without affecting the essential characteristics of product or process. See, when you are eliminating, please eliminate non-value adding activity. As a manufacturing process, I thought manufacturing is not required. I will eliminate it. From tomorrow, what will you do? Correct. That is value adding activities. Correct. So try to identify some non-value adding activities in your organization and try to eliminate it. For example, assume guys, after producing each product, sir, there is a worker who will take it, go keep it in godown and come. Instead of that, bring some automation. Okay, so why simply involving the human intervention? Better you can bring some automation where as soon as the goods are produced, if you just keep it, it will automatically go. There are many companies who have introduced this. Yes. So, conducting continuous research and study to know better way to do anything. This is very important. Any company, okay, especially the technology-based companies and all, they will have a R&D team. They will always be finding the ways. Sir, how can I do the same thing in a different way? Or how will I come out with a new product or new service? Okay, if not, if you are not updated, you will become outdated. That is what happened with Nokia was. Okay, Nokia was the number one smartphone seller, number one phone seller in one time. But they couldn't upgrade themselves to smartphones. That is where the others overrided them. Sir, did they do anything wrong in terms of financials or anything, any fraud? Nothing. They couldn't update themselves. Clear. Whereas when others did it, they took over the market of Nokia. Yes, like that, there are many things. Even you can take some camera companies and all, like Kodak and all. So they were the number one sellers in the past. Okay, they were the market leader. But over a period of time, others overrided them just because of the innovations. Okay, sure. Then we also have a difference between cost control and cost reduction. Guys, one of the expected question in exam, they have asked it in the past. Explain the difference between cost control and cost reduction. For 4 or 5 marks, you can get it. Yes. If they have asked for 4, at least write 4 differences. If you can write another one extra, give extra. Okay, they will definitely not give extra marks. If question is for 4 marks, they will maximum give only 4. But if possible, you try to write 1 or 2 extra points. Okay. Yes. Sure. If it is asked for 5 marks, you have to write all or 5. Guys, please pay attention. If you understand the word cost control and cost reduction, the difference becomes easy. What is cost control? Cost control aims at maintaining the cost in accordance with what? Established standard, which is nothing but standard cost. Whereas coming to cost reduction is concerned with reducing cost. Concerned with reducing cost. Then coming to cost control again. Cost control seeks to attain lowest possible cost under the existing conditions. Means I'm not bringing any changes, sir. Sir, whatever I am doing, I will continue to do it. But I will try to match this my actual cost with what? Standard. But under cost reduction, it is not like that. I am finding the ways. I am ready to bring changes in my production process so that my cost will reduce. Cost reduction recognizes no condition as permanent since a change will result in lower cost. Guys, please be careful. Cost reduction is permanent. But whatever I am doing, nothing is permanent. Can I change something tomorrow? Yes. Why? In order to bring down my cost. In order to bring down my cost. So I thought, okay, I am assuming this. I am following method A to produce my output. Now I thought if I introduce method B, then my cost will be so much. So can I change it? Yes, nothing is permanent. Sir, if I am following method A, that doesn't mean that forever I will follow method A. I will be waiting for the opportunities. If I can bring in some other method which will reduce my cost, which will help me to produce in a better way, then I will introduce that change in my organization. Okay. Then the third one, under cost control. In case of cost control, emphasis is on what? Past and present. Yes, when we are setting the standard cost, this one, when we are setting the standard cost 100 rupees, how did I set it? Just I woke up, I got 100 rupees in my dream, I fixed it up. No, I would have worked out based on my past. I would have checked in the past what is my cost, and in the industry what is the standard. Based on lot of research and my past calculations, I would have fixed this. Correct? And in the present, I am trying to match my actual cost with what? My standard cost. Hope you are understanding. So it is more about past and present. In the present, I am trying to match with my what? Standard cost. How did I fix my standard cost? Based on my past performance. Based on my past cost data. Okay, sir. Then coming back. In case of cost reduction, it is more on the present and future. Present, sir, my cost is 50. Presently, my cost is 50, but I want to bring down to 45. What should I do in between this? Obviously, that is with respect to what? Future. With respect to future. So I will introduce a change. Change will not give result to today only. It will take over a period of time. Clear? Maybe by the end of the year or end of 6 months, I will achieve my 45 rupees target. Is it the present and future? Yes. Present cost is 50. I want to reduce it to 40. That is my future goal. That is my future goal. Then fourth one. Cost control is a preventive function. Cost control is a preventive function. Means, guys, I already know that my standard cost is 100. I should prevent my actual cost going above. Are you understanding? Observe the words. Guys, I have fixed my standard cost as 100. Now what should I do? What is in my control? Actual cost. I should prevent my actual cost going above. I should prevent my actual cost going above 100. I should ensure that it is 100 or less than 100. 100 good. Less than 100 very good. Clearer? Yes. Whereas under cost reduction, guys, it is corrective function. Corrective function means, guys, my actual cost is 15. I know that I have incurred more. I know that I have incurred more. No, I should correct in such a way that it will come to 40. Clear? I am repeating again. Sir, I know my present cost is 50. Okay, I know there is some wastage, loss, or idle time, some mistakes we have done. If I can correct all that, then my cost would be 40. Hope you understand. So if I bring some changes where I can correct my mistakes, which has increased my cost, if I correct that mistakes, now I can reduce it to 40. Hope you are getting it. Yes, sir. Last one, fifth one. Cost control ends when target is achieved. When target is achieved, right? Assume I have set a standard cost of 100 for this year. At the end of the year, assume I have achieved 100 rupees or 90, 80, some target I have achieved. This work, this work is done. This work is done. That doesn't mean that, sir, standard costing ended. No. Again, for next year, we will set a new standard. But will we work on the same standards? No. For example, next year I may set a different standard, 110, because there will be inflation from year to year and all. I cannot keep the same standard year after year. Last year I had kept 100. Next year I have to change it. That is in the current year I have to change it. Clear? So whatever standard I would have set, assume for 1 month. At the end of 1 month, that is done and dusted. Next month, again I will set a new standard and will work as per. Whereas cost reduction, there is no visible end for it, and it is a continuous process. Now assume at the end of the year we achieved 45 rupees cost. Will we again be satisfied? No. No. We have to now further bring it down to how much? Assume 42. Next year we will start working. How do we reduce from 45 to 40? Because no company will be happy with whatever cost they are incurring as. Even from 50, if they bring down to 45, to next year, they will try to find a way. How will we reduce this 45? Clear? So is there an end? Sir, once we achieve 45, will we stop? No. It is a continuous process. Continuous process. Oh, sure. Coming back. Cost reduction we have discussed. The last one is assisting the management in various decision making. There are a lot of decisions which has to be made even in costing guys. Actually, in FM and all, also you will be doing a lot of decisions, correct? Capital budgeting decisions and all. Sir, should we invest in this or that? We will have various proposals and we will have limited budget. Okay, where to invest, how much amount? Considering risk, reward, everything, we have to decide. Same way in costing also. Should I assume I have an option to produce three products. Product A, B, C. Which one should I produce? A na, B na, C na. Which will give me more profit? Clear. If there is a key factor, I should consider that also. Key factor means which will limit your activities. Something is available for you in limited. Something is available for you in limited. So should you consider that when you are planning? Yes, sir. So there are various decisions which we have to make. Obviously, all these decisions when I'm making, I should also consider one of the important factor. What is it? Cost. What is the cost involved in it? Guys, correct? No. Even in your FM and all you do, no? So now assume capital structure decision you are making. Capital structure. Sir, I want 100 lakh capital, sir. I have two major options. What is it? Equity, debt. Both will come with a cost. Cost of equity, cost of debt. Now you will analyze, sir, which is better. Both has its own advantages and disadvantages. Correct? Sir, if I go with equity, I have to dilute my ownership. But there is no fixed commitment. I should not pay any fixed interest, or there is no commitment with respect to repayment. But a part of ownership is going to you. Clear? If you are ready for it, you can go for it. If not, coming to debt, there is a fixed commitment to pay interest. Principal repayment has to happen. Clear? But ownership will be with you. Clear? So there is a things also. We have to consider EBIT. That is nothing but EBIT or PBIT. How much profit you will be earning and all. So if you are having an expectation that you will earn very less profit, then better don't go with the debt. Better don't go with the debt. If you have an expectation that you will earn large amount of EBIT, then you can go with debt. So that even after paying interest, still lot of money is left to the equity shares. Clear? This is just an example I am giving you. Same way, even in costing, guys, as I told you, sir, I have to produce product A or product B. Or, for example, there is a proposal from you because, sir, I will buy so many items from you, but offer me a discount of 10%. Should I accept this or not? Or I am purchasing the raw material. I am purchasing 10,000 kgs at a time. Now you came and told, because, sir, if you purchase 50,000 kgs at a time, I will give you a discount. Now, should I accept this discount or not? All these are decision making. So for accepting these decisions or not, what all should I consider? EOQ, carrying cost, ordering cost, purchase price, all this I have to consider. Only then I can decide. I cannot blindly tell, okay, you are giving me discount, let me accept that. Because when I purchase more, you are offering me discount only if I purchase 50,000 kgs at a time. When I purchase 50,000 kgs at a time, automatically my carrying cost will shoot up. Purchase price will go down because of discount, but carrying cost will go up because I have to take care of large quantity of raw materials. These are just few examples which I gave. Okay. Sure. Some important concepts. This can come either as an MCQ or even as a descriptive theory questions. So what are those one by one? Please be careful, guys, because there will be small difference between each of them. You will get confused. You will feel like after studying all this, sir, cost object and cost unit is one and the same, sir. Actually, they are not same. What is it? I will explain, but please be attentive. First, cost objects. Cost object is anything for which a separate measurement of cost is required. For example, right, I am manufacturing this pen. I want to know what is the cost of manufacturing this pen. Yes, overall. So what is my ultimate cost of it? Pen. I want to calculate the cost of this means. This is my objective. Clear? So for anything for which I have to calculate the cost, that is called cost object. Now, for example, I want to calculate the cost of this classroom or cost of this batch. Can we calculate, sir? Yes. That is called cost batch. Sorry, cost object. Cost object may be a product, a service, a project, a customer, a brand category, an activity, or a department, or a program. Even there is like activity-based costing where we will calculate the cost of each activity. Clear? Now, even for example, brand category. Sir, for example, some companies will operate multiple brands like HUL, ITC, and all. Now, they want to calculate the cost of the company as a whole, but they also want to know the cost of each and every brand or each and every product. In that case, that will become a cost object. Clear? Or else even a department. Sir, I want to calculate the cost of a particular department. In that case, for example, HR department, accounting department, production department, sales department, we want to calculate the cost of each department. In that case, that becomes a cost object. That becomes a cost object. Yes, sir. Classification of cost element is direct or indirect, fixed or variable. All depends on what? Cost object. That's simple. Once first you freeze your cost object. Assume I am freezing my cost object as what? Pen. Now, if there is any cost which will vary with how many units of pen I will manufacture, what is that cost? Variable. If there is any cost which will not vary with how many units of pen I manufacture, no matter how many units of pen I will manufacture, cost will remain same only. What is that cost for? Fixed. Clear? So more the number of units I produce, more will be the variable cost. Lower the number of units I produce, lower would be the variable cost. Whereas total fixed cost will always be constant. Okay, sir. Then coming to even direct and indirect. Sir, if there is any cost which is directly attributable to the pen or product, we call that cost as what? Direct cost. Means I can tell this is what I have incurred to produce each and every pen. That is called direct cost. If not, no sir, I am not able to tell. I have paid a salary for accountant. How can I tell how much salary I have paid for each pen? No, I cannot tell. So in that case, what do I call it as? Indirect. Same way, sir, I have paid a rent of 10 lakh, sorry, 1 lakh for my factory building or office building. Can I tell how much I have incurred to produce each and every pen? No, that is indirect, which is also fixed in nature. Oh. Examples I have given. Examples of cost object are as follows. First one, product. Smartphone, tablet, computer, SUV car, that is sports utility car, book, etc. Okay. Or any of this. I have given only few examples here. That doesn't mean this is an end list. Then service. An airline flight from Delhi to Mumbai, can they calculate the cost of this? Yes, sir. Audit assignment, for example, assume I have got an audit assignment, statutory audit. Can I calculate the cost of that assignment? Yes. Teaching, can we calculate the cost of it? Yes. So then project, any particular project we have received, which may take number of years also, like metro rail project, road project, etc. Then activity, different activities performed in an organization. Can we calculate the cost of each of them? Yes, we will learn this in activity-based costing, where we will identify what are the different activities which are happening in the organization and what is the cost of each activity. Yes. Quality inspection of materials, placing of orders, etc. Process. Refinement of crudes in oil refineries, melting of billets or ingots in rolling mills, etc. Yes, this is the process. Now in process costing, which is one of the method of costing, what do? We will calculate the cost of completing each and every process. Yes, in that case, process is a cost object. Even in activity-based costing, guys, first step, we will identify the activities. We will calculate the cost of each activity. While we are calculating the cost of each activity, what is the cost object? Activity. Then we will assign the activity cost to the products. Now what is the cost object? Products. Clear? In the last step, we are assigning activity cost to what? The products. Okay, whichever products you are producing. Now what is the cost object? Clear? Yes. Department. Production department, finance and accounts, sales, etc. Even guys, if you know in overhead chapter, we do something called as primary distribution, secondary distribution. Sir, in the primary distribution, what do we do? Sir, whatever common overhead or general overhead is there, we will distribute it to all the departments based on what services they have used or how they have taken the benefits. Yes, sir. At the end, what do we get? The cost of each department, that is production as well as service department. So here, what was the cost of it? Each department. Next, we will redistribute the production department cost to service department. We call it as secondary distribution or reapportionment. Correct? At the end of secondary distribution, we will have cost only for whom? Production department. Only for production department. Now listen. Sir, we have got the cost of 3 production departments. Just a minute. Assume we have 3 production departments. Guys, I am already connecting to next thing now. Sir, we have 3 production department X, Y, Z. At the end of secondary distribution, we got a total cost or total overhead. We can call it as some amount. Sir. We have got some amount. Now, what do we do is that we will divide it by output. Each production department is engaged in production now. Yes, sir. Now we will divide it by number of units. Number of units. So output would be in what? Units. Total cost would be in rupees. So assume this would be in units. Okay. Now let us give a notation. This is A, this is B. Now if I do A by B, what do I get? Cost per unit. Cost per unit. We call this as cost unit. We call this as cost unit. Guys, listen down. First, we calculated the cost of each department, production department. This is nothing but what we do in overhead chapter. Here, in overhead chapter, first we will distribute all the overhead costs to whom? To the production department as well as service department. If it is a specific overhead, right away do assignment. If it is a general overhead or common overhead, you will do apportionment using certain basis. At the end of primary distribution, you will get the cost for all the department, production as well as service. Now, as we have not produced anything in service department, what should we do? We need to redistribute the service department cost to production department. Because if I keep the cost in service department only, I have not produced anything there. I will not be able to calculate cost. Got it? Yes. Sir. Now, at the end, what we will do? We will prepare secondary distribution. So, under secondary distribution, we will redistribute or reapportion service department cost to production department. At the end, we will have cost only to whom? Production department. Got it? And in the production department, we have produced the output. Divide each other. You will get cost per unit. You will get cost per unit. We call this as cost unit. We will call it as cost unit. Or else we have another way. Listen. Sir, we have got total overhead here. Okay. We will take machine hours. We will take machine hours. Machine hours. We will take machine hours. If I divide each other, assume this is A, this is B. If I do A by B, what do I get? Machine hour rate. I will get machine hour rate. Is this a cost unit? Yes. Or we also call it as absorption rate. Overhead absorption rate. Is that clear? So this for overhead chapter I am telling you, we also call it as absorption rate. Overhead absorption rate or cost per unit or machine hour rate. Here, if I take output, that is cost per unit. If I take machine hour, that is the cost per machine hour. Means to operate machine for 1 hour, what is the cost we will be incurring? Hope you got it. Clear? So I have already touched both now. Cost object means, guys, in this scenario, this. What did we do? We calculated the cost of each department. Then we divided it by number of units or number of hours. What did we get? Cost unit. We got cost unit. That is, what is the cost we have incurred to produce each and every unit in each department? Or what is the cost we have incurred to operate a machine for 1 hour in each department? That is per hour or per unit or per anything we are calculating. That is called cost unit. Hope you got it. Yes. Sure. Now let us get into cost unit. It is a unit, not in total. See guys, cost object I can see major difference between cost object and cost unit is cost object is like overall. Okay, maybe in total. Whereas cost unit is per unit or per like that. Okay. It is a unit of product, service, or time. Or a combination of this. Even it can be a per unit of service. For example, sir, cost per passenger kilometer, cost per ton kilometer. Clear? Means what is this, sir? To carry one passenger for 1 kilometer, what is the cost the transportation company is incurring? Or if it is a goods transportation, to carry 1 ton for 1 kilometer, what is the cost they are incurring? Clear? So did we calculate the cost per unit? Yes. It is a unit of product or service or time or combination of this. Combination is, for example, it can be per unit per hour, something like that. Even what I told, per kilometer per passenger, per ton per kilometer. We call that as composite cost unit. Composite cost unit. That is when you are using two or more cost units. We call it as composite cost unit, which we will learn in service costing chapter. In relation to which cost may be ascertained or expressed. We may determine the cost per ton of steel, per ton kilometer of transport service, or cost per machine hour. Cost units are usually the units of measurement, that is physical measurement, like number, weight, area, volume, length, time, value, etc. Some of the examples I have given, guys, this is as per the industry standards. Even in exams, they are asking this. For example, they will give some products or industry and tell you which is the appropriate cost unit for it. They will ask you which is the appropriate cost unit for it. See, there are few products or services for which you can have multiple cost units. There is no fixed list, guys. In that case, if you feel that 2-3 things are relevant, write it, no problem. For a particular industry or a product, if you feel that, sir, 2-3 cost units are there, better you write. Don't restrict to only one. Oh, check. First, automobile number. Sir, automobile is per car, per vehicle like that. Okay, that is why I have written number. So it can be like per car, per bicycle, or even per vehicle, or per two-wheeler. Then cement, it is always ton or per bag. Per ton or per bag. Don't write per kg and all. Okay, that is not an industry standard. Then bricks work, 1,000 bricks. Standard I am telling you. Sir, I purchased only 10 bricks, sir. No, industry standard is 1,000. Yeah, yes. That is, guys, we are talking from manufacturer point of view or from service point of view. Okay, not from customer point of view. Like, for example, we purchased 5 kgs of cement, 5 bricks. So, sir, should we consider that here? No. Clear. So, please consider from industry standard point of view. Chemicals, it can be in liter, gallon, kilogram, ton. Because few of the chemicals can be in liquid form also. Next, steel, sugar, coal mining, everything per ton. Next, transportation, it depends on passenger or the goods. If it is passenger, per ton per kilo, sorry, if it is goods, per ton per kilometer. If it is a passenger transportation, per passenger per kilometer. Next, gas, cubic feet. Power or electricity, kilowatt hour. Professional services, any kind of professional services, normally we charge based on hour, per hour. Then education institutions, enroll student or per student or per course or per year also it can be. Next, hospitals, per patient per day or per bed, it can be like that, or per treatment or per doctor visit, any of this. Next, hotel or catering, if it is accommodation, then per room per day. If it is like restaurant, per meal or per items. Then the last one is bringing bear. Okay, it's the process of making the alcohol. Next, cost driver. Cost driver. Sir, what is cost driver? Cost driver. Guys, see, for any cost, there will be a factor which is affecting the amount of cost. For example, purchasing cost. What is the factor affecting the purchasing cost? Number of purchases. Number of purchases. Higher the number of purchases, higher will be the purchase cost. Same way. Inspection cost. Number of inspection hours will be the cost driver or the factor. Here, same way. For example, as in production, overall production cost I am taking. What is the cost driver there? Number of units. Number of units. Higher the number of units you produce, higher would be the production cost. Got it? Yes. So, cost driver is a factor which will affect your cost. Higher the cost driver, higher would be the cost. Lower the cost driver, lower would be your cost. Yeah. A cost driver is a factor or variable which will affect the level of cost. Which will affect the level of cost means here level means which level? Amount of cost. Higher the cost driver, higher would be the amount of cost. Generally, it is an activity which is responsible for cost increase. For example, if there is no production cost. If there is no purchaser, no purchase cost. Correct? Higher the cost driver, higher the cost. Or if there is no cost driver, then there is no cost at all. Okay. Example, number of machine setup. So for machine operation, if you are incurring any cost, number of machine setup will be the cost driver for it. Because higher the number of machine setup, higher would be the setting up cost. Then, with respect to purchase cost, what is the cost driver? Number of purchase orders. In case of test performed, how much test is performed? Number of tests performed is the cost driver. Clear? Now, for you guys, for your results, to get that successful on your screen, what is the cost driver? What is the driver? Driving force. What is the driving force? Rohit? Huh? Preparation. Your preparation, consistency, and determination. Guys, see, if you take care of the process, results will come. Because successful is not just an event which will happen on a particular day. It is a result of the process. Only if you take care of the process, results will be in your. So please make sure that you guys are highly dedicated because CA is something which we cannot take it so lightly, guys. Before entering this course itself, you know that yes, this is one of the challenging course in commerce stream. Tough. In fact, I can tell toughest in commerce stream, and I am taking it. So you are already mentally prepared for it. Make sure that whatever it requires, you are giving it. Only then ICA will give what you want. Or else it will keep on telling, come again, come again, come again. Because for CA, there is also one more full form, come again. Chartered accountant is what world know. But for students, okay, sir, it also means come again. Pawan, you don't take this very seriously, okay? So please make sure that guys, if you want the results in your way, you are working very hard for it. Definitely you will get it. Sometimes it will take time. You may not get the desired result in the first attempt or maybe in the second attempt. You must identify what mistakes you have. Definitely there will be something which you have done which you can improve. Which you can improve now. Because guys, always there is a room for improvement. I always believe in that. Even me as a teacher, I cannot be the same person year after year. I have to keep on updating. I have to keep on updating with respect to my knowledge, content, notes, everything. If you attend my class this year, if you attend my class again next year, obviously you will not do it, but still I'm telling you, you will not see the same notes, same content for sure. Why, sir? Because even I would have come out with a different ways of presentation. Okay, somewhere at least few charts I would have added UD, few content I would have added, something I would be doing it. Because after each and every class, even I will try to analyze, can I do this better? So that, okay, this will become more simplified to the students. So same way, guys, if results have not come your way in the last attempt, that means there is a way where you can improve yourself. Maybe few topics you would have left. Maybe you are not practiced well. You know the concept, but you don't have writing practice. That is the biggest mistake CS students do. So straight away hitting the examination on without a practice. Exam becomes a practice for you. Clear? Don't do that. Please try to take mock test, guys. Try to take the mock test wherever it is possible. First choice is ICI mock test. Okay, sir, no, sir, I have taken somewhere else or I am following some other teacher. They are giving mock tests. You can do it. Okay, there are a lot of test series also available in the market. But whichever you guys have already decided, please stick to that. Okay, or the best one is taking the self test. Self test means, guys, before every exam, there is something called as mock test paper, which ICA will release, MTP. Okay, so try to take it, take a printout of it, and try to attend. First, maybe once you would read it, try to answer it as if it is your exams from 1:45 to 5. Not at your convenience whenever you want. You have to answer it from 1:45 to 5 itself. At least try to take 1 or 2 tests. If you can take more, always better. But minimum, I'm telling you, 1 to 2. That will give an overall idea, guys, where you are getting stuck. Okay, are you able to manage the 3 hours time? Okay, are you able to stay focused? All these things will give you some inputs. Definitely, you may not be 100% satisfied with whatever you are doing in that test. But before going to the examination hall, you can improvise. That is what I suggest you. So please take mock test for all the subjects. If you are writing one group, all 3 subjects. If you are writing both the groups, all 6 subjects, take the mock test. And that should be between 1:45 to 5. So how I suggest is, take a printout. Don't refer to soft copy and all. Please take a printout of it. And even suggested answers would be released by SCI, but don't refer to it until you finish writing. So you decide a particular days for each subject, guys. Assume on a particular day you are taking costing test. 1:45 only you start. 15 minutes reading time, from 2 writing. And from 2 when you are writing also, please take care of each and everything. Now in between, don't go get your calculator you have kept somewhere, pen you have kept somewhere. In between, don't get up. Clear? So as if you are tell your parents also, if not in between, Papa, you are very tired, they will give some supplements to you in between. Okay, sir, snacks, so okay, not snacks, fruits, and all. Avoid it in that 3 hours. Okay, maybe you can start after your lunch only. In between, your mother will come, hey, come have lunch, have lunch, and all. So tell them also that don't disturb in between. I'm taking a mock test as if it is an exam. Don't disturb me for 3 hours. And after 5, Gunjan, after 5, take a break, have something, rest. Maybe from 6, you try to compare your answer to ICA suggested answer. I tell you, your answer will definitely not match ICA answer in all questions. For sure, it will happen. Try to see where and all you can improve. Okay, somewhere assume the question was for 5 marks. Clear? You are supposed to write at least like one side of the paper. But he couldn't complete. Sir, for 5 marks, I knew only 5 lines, sir. Okay, now that 5 lines only I will repeat, copy paste, copy paste. Please don't do such things in CA exams. The evaluator will not be a fool. Don't try to test his knowledge. Okay. So now what you are, how can you present more? That and all you will get to know when you see the suggested answers, guys. So please take it seriously. After this revision classes also, for costing as well as other subjects, please do it. That will definitely help you guys. You will definitely feel happy and satisfied, not in the mock test, in your main exam. Clear? So please take it seriously and try to do it. Will you? Will you? Yes, yes, energy should be there. Sure, this is done. Next, responsibility center. Responsibility centers. To have a better control over the organization, management delegates its responsibility and authority to various departments or persons. Now, owner himself cannot do everything in terms of business. So there will be a separate department to take care of each and everything. So the top level management will delegate their responsibility to others. So what are those centers called as? First one, cost centers. The center whichever is responsible for the incurrence of cost control, cost reduction, that center or department we call it as cost center. In simple, we will keep it inside. The center we will call it as cost center, which is nothing but cost accounting department. Costing department. Let us see. It is held accountable or responsible for incurrence of costs which are under its control. The performance of this responsibility center is measured against what? Predetermined standard or budget. Means they would be given a budget. See, cost department, maximum cost you will incur is 10 lakh. In that 10 lakh, material should be 5 lakh. Labor should be 3 lakh. And overhead should be 2 lakh. They would have given a budget like this for you. They should make sure that whatever actual cost they are incurring should be within this limits. Within the limits. Assume guys they incurred a total cost of 12 lakh. Now they are answerable for it. They should tell why they incurred 2 lakh extra. Why did they incur 2 lakh extra? The cost center are of two types. First one, standard cost center. Cost center where output is measurable and input required for the output can be specified. The input output ratio for standard cost center is clearly identifiable. For example, raw material. Sir, to produce each and every unit of output, I require 2 kg of raw material. Each kg will cost me 100 rupees. What is my cost of raw material? 200 for each and every unit of output. Can I measure it in terms of input output? For every 2 kg of input, I will get 1 kg of output or 1 unit of output. Clear? Yes. So what is the cost of my raw material? It is 200. As per my example, 200. Hope you got it. Yes. Now, means input outputs are standard cost center means simple case. I know that if I incur so much cost, this is what the benefit I will get. Or this will be the output. Okay. The actual cost for input is compared with the standard cost. Any deviation or variance in cost is measured and analyzed into controllable and uncontrollable. Means whatever variance we get, assume in my example, standard cost was 10 lakh, but actual cost we incurred 12 lakh. What is the variance? 2 lakh. In that we will identify how much is controllable, how much is uncontrollable. Assume guys, controllable is 1.5 lakh, uncontrollable is 0.5 lakh. This anyway I cannot change. This is not in my control. At least for this, I will take necessary precautionary measures for the upcoming period. Because this extra 1.5 lakh maybe we would have incurred because of our negligence or ignorance or mistakes or wastage. So if I take necessary action, I can avoid it in the upcoming period. The manager of cost center is held responsible for adverse cost variances. Adverse means, in my example, 2 lakh was adverse. Standard cost was supposed to be 10 lakh, but we have incurred how much? 12 lakh. So we have a variance of 2 lakh, which is adverse. Now, who will be questioned for this? The manager of that particular center. Okay, sir. Next, discretionary cost center. Guys, discretionary cost center means, sir, here we cannot measure in terms of input output properly. We are incurring a cost of so much, but we don't know what is the result of it exactly. For example, we are spending for research and development 5 lakhs. Will I know exactly what is the benefit I will get? I can estimate, but can I tell with accuracy? I cannot. Same way, assume guys, we are spending 10 lakh for advertisement. We are spending 10 lakh for advertisement through different modes. Will I get to know exactly, accurately, what is the benefit I will get from this? No. See, definitely it will drive my sales. But exactly, accurately, can I tell how much sales we have got through this advertisement? No. Yeah, some company will do estimation and all. But will it be an accurate number, sir? No. Oh. Discretionary cost center. The cost center whose output cannot be measured in financial terms. Thus, input-output ratio cannot be defined. The cost of input is compared with allocated budget for the activity. Means for this activities and all, normally a budget would be set guys. For marketing, so much. For research and development, they will set a budget of so much. We should ensure that whatever cost we are actually incurring is within that. The cost of input is compared with the allocated budget for an activity. Example of discretionary cost centers are like R&D or advertisement department, where output of this department cannot be measured with certainty. I can estimate it, but with accuracy, or with certainty, can I tell? No. And correlated with cost incurred on the inputs. I will not be able to tell, sir, this is what the benefit I have got by incurring so much expenditure. Clear? Yes. Next, revenue center. Revenue center is nothing but sales department or even the marketing department. How much revenue they are generating. Even for them, target would be given. Clear? So especially you guys would have seen some people working in sales department and all, they keep on calling you, telling this is there, that is there, that offer is there. You are eligible for so and so option and all. Clear? Yeah. So because they would be given a target to increase their sales. The responsibility centers which are accountable for generation of revenue, which is nothing but sales for the entity. Sales department, for example, is responsible for achievement of sales target and revenue generation. Next is profit center. Whoever is in charge of both cost and profit, because revenue minus cost is equal to profit. Correct? So they are called profit centers. Profit centers. These are the responsibility centers which have both the responsibilities of generation of revenue and incurrence of expenditure. Since manager of profit centers are accountable for both cost as well as revenue, profitability is the basis for measurement of performance of these centers. Very simple. Let me give it with a practical example. See, cost manager. I can call this as cost manager, the in charge of the cost department. This guy as sales manager. Okay, now about these two people, there will be something called general manager or just a manager. This guy will take care of both of them. He will moderate both of them. Clear? He will ensure that sales is increasing. He will also ensure that cost is kept as low as possible. Yeah. So he is controlling both of them. That guy is called profit center here. That guy is called profit center, who is in charge of both cost center as well as revenue center. Oh. Next, coming to investment center, finance manager. You know finance manager? Hello. What does he do? He take various decisions with respect to finance, where to invest, how to get the money. There are three important decisions in financial management. Which are those? Investment decision, financing decision, dividend decision. Clear? So those decisions are taken by this guy. Clear? That is nothing but investment center, sir. Even for costing, should we do investment? Yes. Sir, should I purchase the machine or should I take it on rent? Or should I purchase this machine or should I purchase that machine? Okay, all these are investment decisions, guys. These are the responsibility centers which are not only responsible for profitability but also have the authority to make capital investment decisions, capital budgeting decisions, and all you make clear up. Guys, whenever you have alternate proposals, you will use various things. First thing you will consider is risk and reward. Next, you will consider we have various methods to decide where to invest or in which proposal to invest. What are those? IRR, profitability index, or NPV. Clear, especially NPV, IRR, and all is most important thing. Okay, using that we will decide, sir, where to invest or which proposal to choose. The performance of these responsibility centers are measured on the basis of what? Return on investment. Besides profit. Means, sir, on this investment, what is the return we have got? We have got the return. Yes, sir. If you want, you can also make a note of it. Who is in charge of each of this? This is like cost manager. This is like sales manager. This guy is like general manager. Last one is like finance manager. Trupti, make a note of it. CM means cost manager. SM means sales manager. GM means general manager or just a manager. Last one is finance manager. See, if you are thinking from that point of view, you will understand what is your role. Okay, for example, if you are thinking as a cost manager, now you should know what is your task. What is your responsibility? Think like that. It becomes very easy. Okay, sure. Next, classification of costs. Classification of costs. Assume guys, we have incurred a total cost of 1 lakh. We have incurred a total cost of 1 lakh. Now, using a different basis, I can classify this cost into different types. Here, for example, material, labor, overhead, or direct cost, indirect cost, variable cost, fixed cost. Guys, please be careful. Whatever the total expenses I will incur will not change. My total cost is 1 lakh only. But now I need to give a breakup. Sir, 1 lakh. How much you have incurred for what purpose? How much you have incurred for what purpose? For example, if I ask you, out of 1 lakh, how much is variable, how much is fixed? You will give 2 breakup. If I ask you, in 1 lakh, how much you have incurred for material, labor, overhead? You will give 3 breakups. Clear? Or else if I ask you, out of 1 lakh, how much is directly attributable to the product and how much is not directly attributable to the product? You will give a breakup of direct cost, indirect cost. Or product cost, period cost. Clear? Yes. Each of them we will see guys, one by one. It means grouping of costs according to their common characteristics. Yes, sir. First one, nature of elements. Nature of elements. Under this type of classification of cost, total cost of a cost object. We already understood what is cost object, for which we are determining the cost separately. My example, pen, is classified on the basis of element of cost. What are the elements of cost? Material, labor, and overheads. Even in between other expenses will be there, but may not be there always. If it is there, we will take care of it. Yes. So, material, under that direct, indirect, employee or labor cost, even under that direct, indirect, even other expenses under that direct, indirect, and all the indirect expenses put together, guys, we call it as overheads. Overheads. A sum of all the indirect expenses is called overheads. Okay. And overheads can also be classified as production overheads, or we also call it as factory overheads, then administrative overhead, selling and distribution overheads. All these are just a classification. So each one of them will quickly go through. All these are very simple, but still we'll quickly go through. Material. Sir, what is material? Material cost means the cost of raw material which we use to produce a product. It might be direct or indirect. Sir, what is direct material? Guys, if a raw material is present in my output, I call that direct material. Or else I can tell, sir, to produce each and every unit of output, what is my raw material cost? For example, to produce each and every unit of output, we use 10 kg of raw material, and for each kg the cost is 10 rupees. Now, can I tell what is my material cost for producing each and every unit? 100 rupees. This is called direct material cost. Sir, what about indirect material cost? Right? Indirect material means, sir, I have used it in the production process, but it is not possible for me to tell for each and every unit how much I have used. How much I have used. For example, in the production process, for the machine, we have used machine oil or petrol or diesel. Okay. Now assume I have filled 1 liter of petrol. Using this, we will produce number of products. Can I tell for each and every unit how much liters of petrol we consumed and all? Not possible. Okay. And it is not economically feasible. If I put a lot of extra efforts, literally I can calculate. But is it required? No. So in that case, what do we put it as? Indirect. Clear? So simple, guys. Listen. If there is any material which is used in the production process, but not present in the output, means I cannot tell, sir, petrol, diesel, where is it? So what is it? Indirect. Or else, sir, they are not directly attributable to my output. Clear? Means I cannot tell for each and every unit of output how much raw material I have used. We can treat it as indirect. Or else there can also be a situation like this. Sir, I can tell how much I have incurred for each and every unit of output, but it is of very small values, insignificant values. Can I treat it as indirect? Better you can treat it as indirect. Examples I have given, you can see for direct materials. Cloth in dressmaking, material purchased for a specific job, etc. Whereas indirect, lubricants, cotton waste, bricks, all these are indirect materials. Even see, if I have to give the example, now assume there is a furniture making company. I have asked them to make this bench and desk. Now to make this bench, what is the basic raw material? Wood. Clear? That is the direct material. Now they will also use other things like polishing, nails and all. See, are they using it in the output product? Yes. See, if I put an extra effort, I can count and see each and every table has how much nails and all. Sir, but is it required? No. Insignificant value. Insignificant value. So can I treat it as indirect? Yes. Same way polishing. Okay, used in the manufacturing process. But I cannot tell for each and every unit of output how much you have used. So better to treat it as what? Indirect. Got it? Yes. Same way. Now coming to labor. Now that's simple. Labor means the one who are engaged in the production process. Yeah. And we call this employees. They are actually using their brains. There is a difference between labor and employees. Labor and worker is one and the same, whereas employees is different, guys. Laborers are the one who are employed in factory. Okay, who put their physical efforts into the work more. Whereas the employees are sitting in office. They use more of their brain. Yeah, they're qualified. They're qualified, they have some experience. Clear? What we pay to labor is called wages. What we pay to employees is called salary. But for costing, there is no distinction like that. Everything one or the other way they will use it. Sometimes they use wages, sometimes they use salary and all. So you don't get confused. Clear? Listen. See, factory is a place where production happens. In a factory, there are two set of workers. One set of workers who are directly engaged in production. For them, whatever wages we pay is called direct wages. Okay. For the workers, whoever is engaged in production, for them, whatever we pay is called direct wages. In the factory, there will be workers, but who are not directly engaged in production. For example, factory supervisor, factory security guard. For them, are we paying based on production? No, we are paying it like monthly fixed amount. Who are they called? Indirect labor. For them, whatever we pay is called indirect wages. Yeah. And anything paid to the office staff or administrative staff, sales staff, marketing staff will always be indirect in nature because they are not directly engaged in production. Clear? So please be careful. You should know what is direct. Direct workers or direct laborers means who are engaged in production. Sir, we can tell what is the wages we are paying them for producing each and every unit. In that case, we call it as direct labor. Whatever we pay them is called direct wages or direct labor cost. Anything paid to others is indirect labor cost tax. Oh, let me quickly read it. Wages paid to workers for converting raw material into finished goods is called labor cost. Direct labor. Example I will go. Employee engaged on actual production of a product or in carrying out the necessary operation for converting the raw material into finished product. That guy, whatever we pay them is called direct wages or direct labor cost. Indirect. Salary paid to foreman and supervisors, maintenance workers, etc. Because they are not directly engaged in production. They are supervising the work, but they are not directly engaged in production guys. And as I told you, even anything paid to office, administration, staff and all will always be indirect in nature. Then coming to other expenses. Right? Anything other than material and labor will come under other expenses. Even this other expenses can be direct or indirect. If it is incurred for each unit of product produced, we call it direct. For example, please be careful. Again, I am telling other expenses means other than material and labor. As in guys, for each and every unit I produce, I have to pay excise duty. Excise duty, which is now subsumed under GST, but only for few products it is there, including alcohol, because alcohol has been kept outside the GST. Now assume I am alcohol manufacturer. As and when I produce or I manufacture alcohol, I am supposed to pay something called as excise duty. So is it based on production? Yes. So can I call it as other expenses, other direct expenses? It is other direct expenses. Or else assume guys, I have taken a machinery on rent. I have to pay for each and every unit I produce using that machinery, I have to pay a rent of 2 rupees. What is this? Other direct expenses. Yeah. Or else I have taken a patent right to manufacture. Using this patent right, each and every unit I produce, I have to pay a royalty of 10 rupees. What is this? Other direct expenses. So in simple guys, direct expenses also will come later. Okay. We saw already direct labor, direct material and all. So what is direct means? If I can tell to produce each and every unit how much cost I have incurred, that is direct in nature. No, sir, I cannot tell. Then it is indirect in nature. Then even under other expenses, indirect also will be there. Anything which is not direct, which is not based on production, we call it as what? Other indirect expenses. Oh. So if I combine all this guys, indirect expenses, what do I get? Overheads. We can also further classify that overheads into different types. What are those? One by one. The aggregate of indirect material cost, indirect labor cost, and indirect expenses is known as the overheads. The main groups of overheads are as follows: production or work overheads. Very simple. Production, work, or factory overheads is one and the same. Any indirect expenses incurred in factory is called the production overheads. See, please be careful. Even direct material, direct labor might be incurred in factory, but they will not be a part of overheads. Factory is a place where production happens. So any indirect expenses incurred in factory is called as what? Work or production overheads. Now if you ask me, sir, in factory, do we incur both direct as well as indirect? Yes, we will incur both direct as well as indirect. If there is any expenses which is directly related to production, we call them as direct. No, sir, we have incurred some expenses in factory, but they are not directly related to production. What do we call it as? Production, factory, or manufacturing overhead, or even work overhead. All one and the same guys. Okay, yes. Indirect expenses which are incurred in the factory and for running the factory. Example, like factory rent, or factory power or electricity. Then coming to administration. Guys, outside the factory, listen, y'all. Outside the factory, any expenses we incur will always be indirect. Will always be indirect because manufacturing happens only in factory. If you are incurring any expenses in office or administration or even in marketing, sales and all, it will be always indirect in nature. So administration overhead. These are the indirect expenses related to management and administration of business. This is incurred for more of planning and execution. Example, office rent, lighting, telephone, or any office staff salary, or even accountant salary. Then selling over. Guys, now once I have produced the product, how will the people know about me or my product? We need to incur some expenses for advertisement and all. So any expenses incurred to create demand for my product is called selling over. Is called as selling over. Example, advertisement expenses, commission to sales person and all, because they will also get an encouragement. If I sell more, I will get more commission. So we are paying them based on their performance. Last one is distribution overhead. Sir, now we have found the customer, we have sold the product. Now I have to reach my product to him. Now, for that, any cost which I incur is called distribution, like freight outwards or the transportation cost, or even if there is any packing to be done. Example, warehouse charges, packing, or that is secondary packing will come. That is which is packed at the time of delivery. Then the loading charges, loading or unloading or even transportation cost will come in as. Then by functions we can classify the cost into direct material cost, direct employee cost, direct expenses. We already saw all this, no? We already saw all this. Direct material cost, direct labor cost, and direct expenses. Guys, this three we put together, we call it as prime cost. Prime cost. Prime cost. And remember one thing, prime cost till here, it will always be direct in nature and it will always be variable in nature. It will always be variable in nature because it will always vary with the number of units you produce. Higher the number of units you produce, higher will be the cost. Lower the number of units you produce, lower will be the cost. Whereas anything which comes after this is called over expense. It can be variable or it can be fixed, but it will always be indirect in nature. It will always be indirect in nature. So what are the different types of overheads? Manufacturing production overheads. One and the same. Administrative overhead, selling overhead, distribution overhead, or sometimes we put together call it as selling and distribution together. Last one is this research and development cost. Guys, again I will talk about it in detail when I go to a chapter called cost, because the entire cost sheet chapter is based on this. Okay, and it has to go in this order. Yeah, if you want, you can just mark few things here. As I told you, guys, these three are called was what? Prime cost. It will always be variable in nature. It will always be variable in nature. No question of being fixed. Okay. Whereas this can be variable or fixed. Overheads can be either variable or fixed costs. Okay. Next, by changes in activity, variability, or behavior. Guys, if a cost can change according to the units we produce, that cost is called variable cost. For example, listen. Sir, to produce each and every unit of output, we require 5 hours of labor. For each hour, I need to pay them 100 rupees. Now, what is the labor cost per unit, guys? 500 rupees. Now, if I produce 100 units, what would be my labor cost? 500 into 100. If I produce 1000 units, what would be my labor cost? 500 into 1000. If I produce, assume 1200 units, what would be my cost? 1200 into 500. Hope you are getting it. So, the total variable cost, is it varying? Yes. If you increase the production, the total variable cost will increase. If you decrease the production, your total variable cost will decrease. Whatever you get here is nothing but total variable expense. But variable cost per unit remain fixed, remains constant. Clear? So variable cost per unit will remain constant. But if you multiply it with number of units, higher the number of units, higher would be the total variable cost. Lower the number of units, lower would be the total variable cost. So is it varying with your production? Yes. So that is why we call it as variable cost. Whereas fixed cost is not like that. Guys, listen here. Total fixed cost, let us take it as 10,000. Assume I am paying a rent of 10,000 to my factory building. No matter how many units I produce in my factory, in a month, I have to pay 10,000. I have to pay 10,000. So is my total fixed cost fixed? Yes, it will not change. How much ever number of units I produce, it will not change. But listen, per unit will it change? Yes, but in the opposite direction. Now assume guys, I have produced only 1,000 units. What is my fixed cost per unit? What is my fixed cost per unit? 10. Correct? 10. Now if I produce only 100 units, how much it would be? 100. Got it. Now you listen guys. Only base I have changed. Total fixed cost, numerator will remain same. If I produce more number of units, fixed cost per unit will decrease. Why? Denominator will increase. Now fixed cost per unit will decrease. Sir, what if I produce less number of units? Fixed cost per unit will increase. Hope you are understanding. So numerator is fixed depending upon the denominator. Guys, it moves in an opposite direction. Higher the number of units, lower will be the fixed cost per unit. Lower the number of units, higher will be the fixed cost per unit. It moves in an opposite direction. So all this MCQ can be found. Fixed cost per unit and the number of units will move in dash direction. Same direction or opposite direction? Opposite direction. Here, whereas total variable cost and output will move in the same direction. Whereas variable cost per unit will remain same. Guys, come on, repeat along. You answer my question. Total variable cost dash with the output varies with the output. Higher the output, higher will be the variable cost. Lower the output, lower will be the variable cost. Whereas variable cost per unit will remain constant. Coming to fixed cost. Fixed cost in total remain constant. Whereas per unit it will vary, but in an opposite direction to output. Higher the number of units produced, fixed cost per unit will be lower. Lower the number of units produced, fixed cost per unit will increase. Will be higher. Got it? Yes. Now there is something called a semi-variable. Combination of both. It is a combination of both. Semi-variable means up to certain point it will be fixed cut. After that it will become variable. Like your telephone bill or even electricity bill. Assume your electricity bill up to 50 units is same. After 50 units, for every unit they charge some amount. Even if you don't consume anything, minimum bill is like for 50 units, how much ever is there. Now in Karnataka, electricity is free. Okay, up to certain units, but I'm just giving an example. Assume right, up to 50 units, they're charging 200 rupees. No matter how many units you consume, 10, 20, 30, 40, 50, 200 you have to pay. But if you consume more than 50, assume they are charging for every unit, 10 rupees. Here, now assume you have consumed totally 80 units. How much we have to calculate? 200 is for 50. For remaining 30, how much guys? 10. So that comes to 300. So what is my total bill? 200 plus 300. 5. Hope you're getting it. Partly fixed, partly variable. Partly fixed, partly variable. But when we're solving the question sets, this plays a major role. So we need to identify if the expense is semi-variable. We need to find out how much is variable portion, how much is fixed portion. For that we have a formula, we will see that. Okay. By changes in activity, variability or behavior, fixed costs. These are the costs which are incurred for a period. They do not tend to increase or decrease with the changes in output. They remain constant. Fixed costs in total, the wording is same. Please be careful. Simply don't write fixed costs remain same. Fixed costs in total remain constant, irrespective of the level of production. However, fixed cost per product or per unit decreases with the increase in production. Example, factory rent, insurance of factory building, etc. We can call all this as indirect expense because always this will be indirect in nature. Then coming to variable cost. Variable cost varies with, observe the keywords, varies with increase in the production. Any increase in the activity results in increase in the variable cost and vice versa. Clear? And if you want, you can also write total. Increase in what? Total variable cost. However, per product or per unit, variable cost will remain constant. Example, cost of direct material, cost of direct labor, etc. Example, what I gave was direct labor. For each unit, we need to consume how much, we need to work for how many hours? 5 days. For each hour, what is the payment? 100 rupees. So, direct labor cost 500. Is it a variable in nature? Yes. Next, semi-fixed or semi-variable. This cost contain both fixed and variable components and are thus partly affected by fluctuation in the level of activity. It remains fixed up to a certain point. Thereafter, it increases with increase in production. Example is telephone and electricity bill. And that's for problems, that is for numerical question. Whenever there is a semi-variable expenses, you need to find out how much is variable portion, how much is fixed portion. For that, what is the formula we will use? Change in the amount of expenses divided by change in the level of output. Clear? They would have given the data for 2 period or 2 years and all. You can accordingly take the figures and divide each other. Clear? Two figures would be there, minimum. If you divide each other, you will get it. You will get what? Variable cost per unit. Mention better. Variable cost per unit. Whatever we get through this formula is called variable cost per unit. Clear? Then if you multiply whatever you have got with number of units, what do you get? Total variable cost. Total variable cost. For example, guys, assume you got 10 rupees here. Number of units is 100. So what is your total variable cost? 1000. Now assume your total cost, semi-variable expenses is 1500. So minus 100 variable, what is the 500? Fixed cost. I repeat, 1500 is your total expenses. In that, how much is variable? 1000. Sir, how did I get this 1000? Per unit, I will find out first. Multiply it with number of units. We got total variable cost as 1000. If I reduce 1000 from 1500, what do I get? 500, which is fixed. Which is fixed element. Don't worry, we will consider this even while solving the questions and all. It is applicable while solving the questions. Or diagram wise also I have given. You can see your units and price or cost here. So fixed cost will always be a straight line, guys. Whether you produce 0 units or 100 units or 1000 units, fixed cost will be same. Whereas variable cost always will start from 0. If there is no production, 0 variable cost. As the production increases, even variable cost keeps on increasing. Clear? Whereas total cost will start from here. Because total cost means what? Fixed cost plus variable cost. Minimum fixed cost will be there, no? So that is why it will start from here, and from there it will take variable portion. Higher the number of units you produce, higher will be the total cost. Is that clear? And if you ask me, sir, how will the semi-variable look like? It will be like this. It will be like this. Up to a certain point, it would be fixed. After that, it becomes variable. Clear? Yes. Next, by controllability. Controllable cost. Cost that can be controlled, typically by a cost or profit or investment center manager. Means if I can control the cost, then that cost is controllable cost. Controllable cost incurred in a particular responsibility center can be influenced by the action of executive. That is the person who is working there, heading the responsibility center. Example, raw material cost, labor cost. Guys, raw material cost, labor cost and all depends on how many units I produce. If I decide to produce more will be the raw material cost, more will be the labor cost. Clear? Yes. So if I can control some costs that are called controllable costs. No, sir, no matter what, those costs are not in my control. Then we call it as uncontrollable cost. For example, rent of a factory building. Rent of a factory building. Now see, what I can decide is whether should I stay there or not. But if I'm staying there or if I'm working there, obviously whatever the owner demands, I have to pay. Is it in my control? No. Example, fixed cost like rent gas. So even when it comes to your preparation and all, Guys, there are two things which are uncontrollable. Please don't waste time thinking on it. For example, this attempt, what will be the results? Okay, will they give more or less? Or question paper, will it be tough or easy? Sir, last time, fasting paper was easy or tough. This time, how it will be? Is it in your control? No. What you guys can do, only think about that. Then, coming to normality. Guys, assume to produce 10,000 units, my cost was supposed to be 1 lakh. This is called normal cost. But I ended up incurring 1,20,000. 20,000 extra, which was not planned, unexpected. This we call it as what? Abnormal. If I have incurred something for which I am not planned for, which was not expected, then we call it as what? Abnormal cost. Normal cost which is normally incurred at a given level of output under the conditions in which the level of output is normally attained. Okay, means to produce, assume for 10,000 I had planned to incur a cost of 10. If I actually produce 10,000, what will be my cost? This is called normal cost. If I end up incurring more than this, which is not expected or which is not planned, then we call that excess part as abnormal cost. Abnormal cost, the cost which is not normally incurred at a given level of output in the conditions in which that level of output is normally attained. It is charged to costing profit and loss account. So it is always charged to costing profit and loss. Any abnormal cost or abnormal loss will always be debited to costing profit and loss account. There are many other different types of expenses we will see. These are like miscellaneous, last, which are used for decision making. According to this basis, that is based on decision making, the costs are categorized into following guys. First three is one and the same guys actually. Even in ICI material, they have given it in different name. I have also given here, but I'm just telling you, please be careful. These three are one and the same. We just call it by different name. Okay, when a cost is calculated in advance, we call it as predetermined cost or standard cost, which is kept as the target also. Where under cost control, we used to decide. I guess I gave an example of 100 rupees. Yeah, that was nothing but the standard cost. Then estimated cost. Everything is one and the same. Let us go through what is predetermined cost which is computed in advance before production or operation start on the basis of specification of all the factors affecting the cost, considering material, labor, overhead, everything. Then standard cost means a predetermined cost, starting with that only, same thing which we studied in first point, which is calculated from management's expected standard of efficient operation and relevant necessary expenditure. Yes, sir. It may be used as a basis for price fixation and also for cost control through variance analysis. Do we use it for cost control? Yes, sir. The first element there itself is the standard cost. This 100 rupees is nothing but the standard cost. Fine. Next, estimated cost. Kohler defines estimated cost as the expected cost of manufacture or acquisition, often in terms of unit of a product, that is per unit, computed on the basis of information available in advance of the actual production or purchase. Means what can be my purchase price per unit or what might be the production cost per unit. Next, marginal cost. Guys, marginal cost is nothing but variable cost. Sir, what is the cost of producing one unit or even selling it? Guys, it can also be called like this. Sir, what is the cost of producing one additional unit? What is the cost of producing one additional unit? For example, what is the cost? Assume for producing 10,000 units, I was incurring a cost of 10 lakh. Per unit, how much, guys? Per unit, how much? Per unit, how much? Divide 10 lakh divided by 10,000. Total cost to output. Ah. 100. Yes, sir. Now assume guys, I am producing 10,001 units. What will be my cost? 10 lakh 100, huh? No, because there will be fixed element. Assume it would be 10 lakh 60. 10 lakh 60. To produce one additional unit, what is the cost I have incurred? What is the cost, extra cost I have incurred? 60. That is called marginal cost. That is called marginal cost. Sir, here we got 100, no sir. Guys, that will include fixed element also. fixed element also. So what is the cost per unit, which is variable in nature? 60. So how much is the cost which I incurred to produce one additional unit? 60 rupees. We call this as marginal cost, which is nothing but variable in nature. Guys, if I produce one additional unit, my cost increased by 60 rupees for one unit increase. What is that cost? Variable in nature, because fixed cost, no matter how many units you produce, will remain same. So that increase in cost is obviously due to variable nature. Okay. You can see, I will just read it. It is an aggregate of variable cost, prime cost plus variable over. That 60 rupees is nothing but variable in nature. It is also the cost of producing one additional unit. Next, opportunity cost. Opportunity cost is what I have forgone, what I have lost. For example, I am working for my own company. I am not drawing any salary. But if I am working elsewhere, I will get 1 lakh salary per month. What is the opportunity I have lost? 1 lakh. Clear? Or else, I am using my own building for doing the business. If I let out this building to someone else, we will get 20,000 rent per month. But I am not charging any rent. What is the opportunity cost here? 20,000. 20,000. We also call it as notional cost. See, when I'm thinking from owner's point of view, this is an opportunity cost for me. Whereas when we are thinking from business point of view, we call it as notional cost. Clear? Listen here. If I had given this building to someone else, how much rent I would have earned? 20,000. It is an opportunity cost for me. Same way for business point of view. Now, if they have taken the building from someone else, how much rent they would have paid? 20,000. That they will consider it as notional cost. One and the same, but from two different perspectives. Clear? Same way. Salary will let us talk. If I am working elsewhere, how much salary will I get? 1 opportunity loss. Now, from company's point of view, if they are appointing someone else in my place, how much salary should they pay? 1 lakh. That is called notional cost. For business, can they consider notional cost? Yes. Only for calculation purpose to know what is their total cost. In costing, you can consider notional expenses. You can consider notional expenses. So, opportunity cost. Opportunity cost refers to the value of sacrifice made or benefit of opportunity forgone in accepting an alternate course of action. Now, by taking CA also, you have also done lot of sacrifices. You also forgone lot of things. Okay. Maybe here and there you will also feel guilty seeing your friends. Okay. They are enjoying doing full musty in their life. We are attending the classes full day, preparing and all. It's okay. You are achieving something big. You have to make certain sacrifices in this process. It is the amount that can be received if the asset is utilized in the next best alternative. Opportunity costs are not recorded in the books. It is important in decision making. In making decisions, can we consider it, sir? Yes. Nisarga, can we consider? Feeling hungry? Sure. Differential cost. Differential cost has been defined as the difference in total cost between alternatives calculated to assist decision making. Guys, see, I have two different alternatives to produce my product. A, B. If I go with alternate A, 10 lakh is the cost. If I go with alternate B, 12 lakh is the total cost. What is the difference in this cost? 2 lakh. Yeah. So what is the additional cost I will incur if I go with B? 2 lakh. Clear? Yes. So if I am comparing any two alternatives, if I find out what is the difference in total cost between them, that is called differential cost. Differential cost is the increase or decrease in the total cost resulting out of producing or distributing a few more or few less of the products. Even the marginal cost also I can call it as differential. Why is that? To produce 1 unit extra, what is the cost I am incurring? 60. Or a change in the method of production or distribution. Okay. Guys, let us also see for opportunity cost, there is one thing also here imputed, something connected to this. Just a different name. It is actually nothing but opportunity only imputed. Let us see that also as it is connected to opportunity. This cost are notional costs which do not involve any cash outflow. Should we pay to anyone? No. There is no cash outflow. This cost are similar to opportunity cost. This cost are similar to opportunity cost. For example, interest on internally generated funds means I have invested my own funds. If I have kept it somewhere, at least I would have got FD interest. Yes, I'm losing that. Salaries of owners of proprietorship or partnership or notional rate. All these are the example. We consider it to make various decisions, but is there any cash outflow? No. Even implicit is something connected to this only. We will see. Implicit cost. This cost do not involve any immediate cash payments. They are not recorded in the books of accounts. They are also known as economic cost. Even for this, there is no cash outflow. So all these are one and the same, guys. Next, product cost. Product cost means the cost which we will use to value the products or inventory. So there are two techniques of costing under costing, guys. Two techniques of costing that depends on the treatment of cost. That is marginal costing, absorption costing. Under marginal costing, we will take only variable manufacturing cost to value the product. Whereas under absorption costing, we take total manufacturing cost to value the product. Under absorption costing, my inventory will always be overwhelmed because we are taking an extra element while valuing the inventory called fixed manufacturing cost. Okay, we have a separate chapter for this. We will learn there. Okay, what is the difference between both? Next, period of cost. Sir, what is period of cost? Period of cost means which is incurred not based on production. It is incurred based on the period, like per month, per week. For example, rent what I pay per month, salary what I pay per month. We call it as period cost. And we will not include this in the valuation of the goods or inventory. Then what do we do with this, sir? Straight away debit it to costing P&L account. Yeah. So only the variable product cost or product cost we will consider it to value the products. Oh. Then capitalized cost. Sir, whatever cost we have incurred to purchase an asset, like fixed asset or capital goods, we call that as capitalized cost, which we will capitalize and record it in the balance sheet. But over a period of time, we will take a part of it and write it off to P&L account in the name of what? Depreciation. Okay, entire amount we will not debit it in one shot. Over a period of time, a part of the cost we will take and debit it to costing P&L account in the name of depreciation. Then imputed cost we already see where there is no cash outflow. Whereas out of pocket cost means what, guys? Sir, I have to spend, I have to pay for it. I have to pay for it. Because of this, my cash and bank balance will come down. Then even explicit cost means same. This costs are also known as out of pocket cost and refer to costs involving immediate payment of cash. This both are one and the same, guys. Whereas imputed or implicit means no cash payment. So this is something notional in nature. We just consider it to make decisions, but there is no payment for it. Next, shutdown cost. First, shutdown cost means, sir, for 2-3 months, I don't have business. So I'm temporarily thinking to close my business for temporary period. Even if I close the business, there will be some cost which I will continue to incur. That is called shutdown cost. I'm not permanently shutting down my operation. Assume I am doing seasonal nature of business. 9 months I will have business, 3 months I will close because I don't have any business. In that case, when I close down the business for 3 months, still I will continue to incur some expenses like rent or even for few employees I have to pay salary even though they are not working because they will have to continue working with me in next year. No, I cannot remove them also. So those expenses we call it as what? Shutdown cost, which is continued to be incurred even after the temporary shutdown of the business. Please be careful. I am using the word temporary. It is not complete shutdown. Okay. Example of like any fixed expenses. Sunk cost. Sir, what is sunk cost? Well, sunk cost is something which is already incurred. It is almost irrelevant in my decision making because past we cannot change. So sunk cost is something which is already incurred. I cannot change it. We also call it as historical cost. So which has already happened. So I cannot change. It is irrelevant in my decision making. Then absolute cost. Whenever I am presenting the cost in totality, in total, sir, to produce 1,000 units, what is that total cost? Material, labor, overhead, everything. That is called absolute cost. Sir, can I present it per unit or as a percentage of total cost also? Yes, that is not called absolute. For example, guys, whenever we are preparing cost sheet, see, I can add one column, only one column, which shows total cost. Or else I can add one more column per unit. Yeah. So per unit is not absolute. Or else, for example, assume it is like this: direct material, direct labor, overhead expenses. 5 lakh, 3 lakh, 2 lakh. So total expenses is how much? 10 lakh. Now if I show it as a percentage, how much is my material cost as a percentage of total cost? 50%. Labor cost 30%. Overhead 20%. We don't call this as absolute. This is expressed in percentage terms. How much is my each cost when compared to my total cost? How did we get 50%? 5 lakh divided by 10 lakh. How did we get 30%? 3 lakh divided by 10 lakh. Like that. Even the balance sheet items or P&L items we can present like this. Okay. How much is each item when compared to the total percentages? Clear? Yes. Last one, discretionary cost. Discretionary cost means, sir, if I have enough money only, I will spend for it. Okay, I can decide based on my funds how much to incur for this purpose, like advertisement, research and development and all. Is it mandatory to incur this expenditure? No. If I have good amount of vitamin M, okay, only then I will plan for this. Clear? Higher the amount I have, then I will have a separate team only for R&D. And advertisement, sir, buy juice, you know how they spend left, right, center, everywhere they give advertisement. Today, bank. Okay, so if you don't plan your money well, this is what will happen. When you spent like anything, you got business, but you're not able to manage. Okay, by doing all this advertisement, they got some business, but they couldn't handle. Okay, they started selling the services, products to their parents. Okay, the main target was not children, parents. Okay, so the Papa parents are in their busy life. Okay, they tried to capitalize that, but they couldn't manage their business for a long period. Oh, fine. Then with the type of cost. Okay, few more minutes. We'll just finish this chapter. Limitation or disadvantages of cost accounting. Limitations or disadvantages of cost accounting. Sir, what are those? One by one. Expensive. Sir, obviously we already have a separate accounts team or finance team. Now for maintaining cost records, we should have a separate team. For that, they will come with cost, or we should have a system, cost accounting system. Obviously, that will include an additional cost for us. Yes. Next, requirement of reconciliation. Guys, we have something called as cost accounting system in chapter 7. There we will read reconciliation. When I am supposed to maintain cost records, I have two set of books which I need to prepare. One is financial records to record financial transaction. The other one is costing records to record costing transaction, which will lead to two to profit. One financial profit, the other one is costing profit. Will it be same, sir? No. There will be some difference in treatment. Yeah, majority of the transaction we record in both the books, but few transactions there will be a difference, which will lead to difference in profit. I need to reconcile it at the end of the year. Why there is a difference between financial profit and cost profit? Obviously, this is also extra work. Yes, sir. Next, duplication of work. Duplication of work means, right, majority of the transaction we will record in both the books, financial books as well as costing books. For example, purchase or sales or wages paid or raw material purchase, or if there is any loss of raw material and all, we record in both the books. So that is leading to duplication of work. Duplication of work means same thing recorded twice or same thing done twice. Then inefficiency. Just having cost accounting system will not help you to reduce cost. You should implement it and work it as per that. Only then the cost accounting system can be efficient as. Here, yes, because I have spent money, sir. Is it enough for cost department? No. You should ensure that they are working as per the plan. Next, methods of costing. Guys, there are different methods of costing available in the market or in the industry depending upon what work I am doing or what product I am manufacturing or what service I am rendering. I will choose the suitable method of costing for my company to calculate the cost of my work. That is the cost of the product or the cost of the service. So we will see one by one. I repeat once again, we use the method of costing for what purpose? To determine how much cost we are incurred. Because depending upon what work I am doing or what I am manufacturing, I can select the suitable method of costing for my company. Okay, it is optional for me. Whichever I want, I can choose. First one, Unit or single or output costing. When I am producing one product on a continuous basis, then it is better to adopt what? The unit costing, where I will calculate first the total cost of my production divided by number of units, you will get per unit what is the cost. Then coming to job costing. Guys, when I am doing the work as per the customer specification, you will come and give me the order, only then I will work. Like motor workshop or printing press and all. So only when you give the work to me, I will do it as per your specification. In that case, I will follow what? Job costing. I want to calculate what is the cost of each and every job separately. So for each job, I will calculate what is the material cost, what is labor cost, overhead cost. Yeah. So what is my cost object here? Each job. Each job. Then coming to batch costing. It is an extension of job costing. When I'm producing the units in batches, like 100 units, 1000 units, 12 units, like dozen and all, we call it as batch costing. For example, tablet manufacturing or biscuit manufacturing. Sir, will they produce one unit? No, they will produce it in a batches. Clear? Assume the batch size is 100. Batch size is 100. It is a standard size. Each and every batch will have how many units? 100 units. So first our cost object is batch. We will calculate the cost of completing each batch. We will consider material cost, labor cost, overhead cost to complete a batch. Then we will divide the batch cost by number of units in the batch. You will get what? Cost per unit. Cost per unit. Hope you understand. First you calculate what is the total cost of the batch. Then divide the total cost of the batch by number of units. You will get cost per unit. You will get cost per units. Okay, sir. Next, contract costing. Guys, whenever I am doing any construction work, where I would have taken a contract, normally this will take more than 1 year to complete also. Assume I am a construction company engaged in construction of roads, bridges, or any apartments and all. Then for me, what is better to follow? Contract costing. I will treat each contract separately. I will prepare a separate contract account where I will record what is the cost of completing that particular contract. Maybe I will also give a different name for each contract. Okay, because I would have accepted number of contracts from different people. So for each contract, I will maintain a separate account where I will calculate what is the cost of completing each contract. Next, process costing. Guys, when I am following different process to convert my input into output, it is better to follow process costing. Assume in my manufacturing process, I am following three processes. Clear? Process P, Q, R. Now I want to know what is the cost of each process. So under process costing, what is the cost object is each process. I will calculate the cost of each process separately. So that at the end of the year, I can also evaluate the performance of each process. Then operating or service costing. These are normally followed by service rendering entities. Whoever is engaged in service like hospitals, education, transportation and all, they follow service or operating costing. Last one is multiple or composite costing. That is, when the same company is following multiple methods of costing, two or more, we call it as composite costing or multiple costing. For example, listen now. Sir, assume I am manufacturing part as well as my output. Parts is nothing like my inputs. For parts or inputs, I am following batch cost. Whereas for my output, I am following unit cost. Then both two methods I am following for two different things. One for input, one for output. Then I am set to following what? Multiple or the composite costing. Hope you are understanding. When same company is following two or more methods, we call it multiple or composite costing. And guys, please be careful. Here also you can get theory questions. For example, for 4 or 5 marks, they can tell explain any 5 methods of costing. Yeah, or else they will give you the industry. You have to tell which is the suitable method of costing for them. They will give various industries. You have to tell which is the suitable method of costing for it. You can see here. You can just have a look into this. I have given some examples. Nature of output. If series of processes are followed, which is a suitable method? Process costing. What do we do there? We will calculate the cost of each process separately. Example, textile, chemical, etc. Then construction of building. I am engaged in construction of building, which is a suitable method. Contract costing. By following the contract costing, what do? We calculate the cost of each contract separately. Which in industry will follow this? Real estate or construction companies. Then coming to similar units of single product produced by single process. Okay, single product is produced on a continuous basis, which is the suitable method. Unit costing. Here, what do we calculate? We will calculate the cost of the entire activity, but average for the output. Average for the output means what? Simple. First calculate total cost, including all the elements, then divide it by number of units. What will you get? Cost per unit on an average. Okay. Example, cool drinks, bricks, coals, etc. Next, if you are rendering the services, then which is the suitable method of costing for you? Operating costing. What do you calculate here? Cost of rendering the services. Example, hospital, transportation, educational, charitable, all those things will come up. Next, customer specification, single unit. As per customer specification, you are doing the work. Which is the suitable method? Job cost. What do you calculate here? Cost of completing each job or each task. Example, advertising, printing press, motor workshop, etc. Last one, consisting of multiple varieties of activities and processes. Which is the suitable method? Multiple costing. Multiple costing is not a separate method of costing, guys. When you are following two or more, we call it as multiple costing. Is it a separate method of costing? No. Combination of any method like unit, batch, or job batch, anything like that. Example is cars. And even here, guys, when they are given the question in your exams, like 5 industries they have given and asked you to answer, which is the most suitable method of costing. For few industries, you might feel that, sir, both can be suitable. Sir. Both can be suitable. For example, batch job, something like that. If you feel two or more, give it, no problem. If you feel any one which is more suitable, you give that. Yeah, even in our regular class, we have discussed number of examples because most of the time same thing will repeat. Okay, so most whatever we have discussed, most of the time same thing will repeat, or by chance one new thing came. You just decide. If you are confused about two methods, better mention both of those. Okay, yes. So this is car assembly. Next, techniques of costing. Right? Students get confused between methods and techniques. Method is different, technique is different. Method is all about ascertaining the cost. How much cost I have incurred. To calculate my cost, sir, which is the suitable method we will adopt as per the work what we are doing. Whereas techniques of cost is more about treatment of cost, which will help you to make decisions, not to calculate your cost, but to make decisions. So this is helpful for making decisions, guys. Please be careful. The following techniques of costing are used by the management for controlling and making managerial decisions. Okay, so that means this is used for decision making purpose. One by one. First, historical costing. Historical costing means our cost is already incurred. Can you change this? Divya, can you change this? No. That means is it relevant for my decision making? No. This is something which has already happened. I cannot change it. So it is not in my control. It is irrelevant for my decision making. Next, standard costing, cost control. Sir, what do we do under standard costing? We will set a standard at the beginning of the period. Then as and when we do the actual work, we will calculate the actual cost, compare it with standard and see if there is any variance. And if there is any variance, we will try to find out what is the reason for it. Controllable, uncontrollable, or adverse or favorable. Especially if it is adverse, we need to take necessary actions, guys. Then marginal costing. Guys, marginal costing is a technique where they believe that only variable cost is in my control. So any decisions I will take is with respect to variable cost. When I reduce variable cost from my sales, we get something called as contribution. So they make decisions based on contribution, but not based on profit. Guys, there is a format, okay, which we will follow. Sales minus variable cost will give us contribution. Contribution minus fixed cost will give us profit. See, under marginal costing, they completely ignore the fixed cost because it is not in my control. They only believe in variable cost because, sir, if I take any decisions, it will influence only variable cost. So any decisions under marginal costing, they will make it based on what? Variable cost or contribution. Clear? Yes. Even while valuing the product, they will take only variable manufacturing cost to value the products. Whereas absorption costing is opposite to marginal costing. Sir, what is absorption costing is telling us cost is cost, sir. Whether it is fixed or variable, it doesn't matter. Okay, I have incurred it, consider it. And absorption costing is used only for external reporting purpose. That is for income tax purpose or even in your accounts and all. Have you ever seen what is variable, what is fixed and all? No, you just record the total cost. Clear. So marginal costing is more about internal decision making, whereas absorption costing is for external reporting purpose. They are not bothered about variable or fixed or controllable or uncontrollable. They don't care about it. Cost is cost, record it. That's all. Oh. Uniform costing is like me and my competitor. We both are working for the same industry. Yes. Now we both came together and we decided let us follow same method of costing or same principles methods so that at the end of the year it will be easy for us to compare us. Clear. So we are following the same method of costing, same principles, same concepts so that at the end of the year we can compare ourselves. Is that clear? And this is possible only if you both are from the same industry. Okay, for example, Infosys HCL. Can they do this? Yes. Infosys TCS? Yes. Sir, can go Infosys go and do it with HUL? No, because they are not from the same industry. Yes. Let me read that uniform costing. A technique where standardized principle and methods of cost accounting are employed by a number of different companies and firms in the industry is termed as uniform costing. This helps in comparing performance of one firm with the other. The last topic in this chapter, that is digital costing system, that is introducing or inculcating the technology in the costing base to bring integration. For example, assume there is a digital costing system which is introduced in or implemented in our company. Now the top level manager or CEO can access all the information from all the departments. Now production manager will be given access only to enter his data, sales manager only to enter his data, purchase manager to enter only the purchase related data. Now, using all this, can the top level management access all this information sitting in one place? Yes. Sir, should they visit the production department? Should they visit the sales department to know all this? No. Sitting in one place, they can access all the information. That's the power of technology. Now, you guys also sitting in one place, can you watch the classes? Yes, anywhere. That is how the recorded classes or even YouTube and all is working. Yeah. So this is the power of the digitalization. And it is actually helpful to the extent possible. Companies are trying to bring even automation in their software or through systems so that they can reduce the human intervention. Yeah. Yes. So this is all about the first chapter. Yes, guys. Now we will revise chapter 2, which talks about material cost. Guys, when we were discussing the classification of cost in the first chapter, we saw the elements-wise classification. There, the first element was what? Material. Guys, especially for the manufacturer, material is the major cost. Why so? Because without material, what will he produce? What will he able to produce? So, raw material is the major source or major cost I can tell to the manufacturer. And anything we discuss in this chapter, guys, is from raw material point of view. That is direct material. We do a lot of calculations in this chapter. Everything is for raw material. Sometimes in the question to mislead you, they will give the information about output. Maybe it is irrelevant, or using the output data, maybe we can find out the input data. That is the raw material required in a year, which we call it as annual demand or annual consumption. So please be very careful, be very clear with that. Anything which we calculate in this chapter is for raw material, which we also call it as direct material. Oh, let us see. Material is all commodities, physical objects supplied to an organization to be used in producing or manufacturing of a finished or intermediate goods. Materials are of two types, which we saw in the previous chapter itself: direct material, indirect material. Direct material means what? Material cost of which directly attributable to the end product. Here, end product is nothing but our output, for which it is being used in economically feasible way. In economically feasible way means what, sir? In an easier way. Okay, we are not spending too much time into that. Okay, even money. We are not spending too much money to find out what is the material cost to each and every product. Clear? So this is nothing but the basic raw material which we use it in converting it into output, guys. Coming to indirect material, those materials which are not directly attributable to a particular final product is called indirect material. Maybe it is used in the production process, but I cannot tell. For producing each and every unit, how much raw material did I consume? I am not able to tell it. Clear. So in that case, I told you cost, cotton, waste, or even the oil, diesel, all this consumption will happen in the production process. But we are not sure that, sir, how much did we use for each and every unit? Okay. Next, coming to material control. Guys, as the cost of the material is the first element of cost, we need to control it. For example, see, now assume my total cost is 50 rupees per unit, I'm telling you. So in that direct material is how much? Let us take it as 25. Direct labor is 15 and overhead, let us consider it as overhead, is 10. So total is 50 rupees per unit. Now, if I have to reduce this or if I have to control 50 rupees, can I straight away go and control 50 rupees and reduce it to 45 rupees? No, not possible. If you want to control the cost or even if you want to achieve the permanent reduction in cost, you have to control element wise. You have to control element wise. Means you need to first find out what is the material cost you have incurred, 25 rupees. Now you see where and all it is possible for you to decrease this cost. In this chapter, our target is how do we control this cost? How do we control this cost? What are the ways which we can follow in reducing this cost? Okay, fine. Material control. Direct material constitute a significant part of manufacturing and production of goods. Being an input and a significant cost element, it requires adequate management attention. Cost control starts from where? The material. Cost control starts from material. So if you want to control 50 rupees, you cannot go and straight away control 50 rupees. How do you control it? The element. We start with what? Material. Close the windows. Cost control starts from here, and for this purpose, it is necessary that the principle of three E's. What is it, sir? Economy, efficiency, and effectiveness has to be followed. Sir, what is it? Economy in procurement. Procurement is nothing but purchase. I should make sure that I am purchasing the raw material from the best supplier at the best price and the right quantity. Clear? I cannot simply purchase and keep it with me also because one or the other day it becomes outdated. Clear? So I will not be able to use it, which becomes a loss for me. So in simple guys, procurement, I should make sure that economy in procurement means, see, it's not that I am purchasing some cheap quality raw material so that whoever is offering me at 2 rupees, 3 rupees, I will purchase. No. You have to purchase the right quantity of raw material at right price from the right party. That is important. All this you have to take care in the procurement procedure. We also have a purchase procedure. We will see it later. Sir, whenever the organization has to purchase the material, what is the procedure they will follow? That we will see later. Okay. Economy in procurement done. Next, efficiency in handling. Handling means, sir, when it is stored in the godown, along with when it is used in the production process, we should make sure that there is no loss. Or even if there is a loss, there is a minimum loss. Especially abnormal loss is in our control. We should try to reduce it as low as possible, guys. So efficiency means we should try to keep the loss as low as possible in the storage process as well as in the production process. Last one is, and that is efficiency in handling and processing the material. The last one is effectiveness in the producing desired output. As per the standard is also applied for this cost element. That is effectiveness means what, sir? Producing the output with zero defect. Or even if there is a defect, try to keep it as low as possible. We call it as zero tolerance. Zero tolerance means we should produce in such a way that there is no defect. No defect in my product. Yes. So you can see here also it is there by way of chart I have given. Elements, what all will play a role in material control. Material procurement control means we should decide what quantity has to be purchased from whom at what price. And when should I place an order? That is also very important. We call it as reorder level. Okay, we will discuss all these terms. So I have to decide all with respect to all this so that I don't run out of stock also. Guys, there are two situations. Overstock, understock. You should not get into both also. You have to balance a strike between both. you should have a right quantity of raw material, I told you. Why? Because if you have huge quantity, now you will be using very less. Now you would have invested huge amount into purchase of raw material. Your investment is blocked. And to get that investment, there is a cost involved, either cost of equity or cost of debt. Yes, you have to pay for it. And when you purchase large quantity, you need large space to store it. So carrying cost would be huge, like rent, insurance premium and all will be huge. Okay. Sir, what if I purchase only littles? Chur. I will purchase only chur quantity and I keep it with me. Then when there is an immediate demand or sudden demand, you don't have raw material with you. When you don't have raw material with you are not able to fulfill the commitment of the customer. If you are not able to fulfill the commitment of the customer on time, what does he do? He will not get back to you. He will not get back to you next time. This time somehow you can convince and sell it. Then when you are not delivering it on time, the customer may not turn back to you guys. So that will not affect only financially, but also your reputation would be at stake. So I cannot maintain huge quantity also. I cannot maintain very less quantity also. I have to strike in between this. So that is where we have something called as stock levels, minimum stock level, reorder level, maximum stock level and all, which we will discuss later. Then coming to material storage control. That is when we have purchased the raw material, sir, immediately we may not use it. We will store it in the godown or warehouse. In that, we should make sure that there is no loss or wastage, or even some of the employees may steal it, pilferage. Clear? So we should take precautionary measures in order to avoid all that. And here, when it is in the stores also, we should make sure that we have a proper record for it, like stores ledger and all. Whenever I receive the quantity, I should record what quantity did I receive today, what price. Then whenever we are issuing it to the production, same company, stores department, production department belongs to same company, but still we should record it. How much did store department issued to production department and when? Because we should maintain the proper records. Oh. Then the last one is material usage control. That is when we are using it, we should make sure that in the process, that is the production process, the loss is minimum or even zero if possible. And also we should ensure that the output is as per the desired level. Clear. So we should not compromise with the output. Just to keep our raw material cost lower, I cannot use cheap quality raw material and compromise with my output. Clear. That is what we discussed. Guys, in procurement, what should be there? Economy. Economy in procurement means try to purchase it at a best quality raw material but at a right price. Best price. Okay. In the storage, what should be there? Efficiency means try to keep your loss as low as possible. Then in the output, what should be there? Effectiveness means your output should be as per the desired way. Okay, so then the objectives of system of material control. The objectives of system of material control are as following. First one, minimizing the interruption in the production process. Means, guys, if I have a right quantity of raw material, whenever production department asks, stores department will be supplying it. If they don't have the quantity of raw material, then they will do what? Stores department will ask the production department, wait. I will ask purchase department to purchase and then send it to you. It will take long time. Assume it will take 1 week. In this 1 week, the production will be interrupted. Yes. So in that case, what happens? We cannot deliver on time to the customer. But that will end up in too much cost, guys. Because 1 week my workers will be idle. Even for that, I need to pay them. Even for idle time, I need to pay them. Okay. Next, optimization of material cost means try to get the best quality raw material at the best price and by choosing a supplier. That also matters. You have to choose the best supplier. Assume you have choose a supplier, he is not able to deliver it on time. When he is not able to deliver it on time, you cannot work on time. When you cannot work on time, you cannot deliver on time. To whom? To your customer. Yes. Reduction in wastages. Guys, when it comes to wastage or loss, there are two types. Normal loss, abnormal loss. We'll discuss about all this later also. But let me mention. Obviously, by now, you guys would be having an idea about it. Correct, no? Normal, abnormal, you know, right? Yes. Normal loss is something which is unavoidable. It is bound to happen. I cannot control it. It is not in my control. So whatever I do, I cannot control it. So we will not worry about it. Which we should worry about is abnormal loss because it was avoidable, but because of my ignorance, negligence, carelessness, it happened. So, if possible, I should take precautionary measures in order to reduce the abnormal losses. Then, adequate information. Guys, through stores ledger and all, we know we will maintain adequate information. Whenever, assume today manager came and asked, because what is the closing stock of raw material as on today? Will we be able to tell as per the stores ledger? Yes, because on any day we will be having the closing balance in the stores ledger. Anyone who come and ask, we will be able to tell. Or else they only can check it through digital costing system we discussed. Now they can only check it. Yes, and also each and everything, guys. That is how much quantity of raw material we have, and also the companies would have maintained suppliers data and all. Okay, from whom and all they would have purchased in the present as well as in the past. They will keep all the data clear, and also from whom, how much we have purchased, when, all this data would be kept. Then completion of order in time. That is, output has to be produced on time and it has to be delivered to the customer. Okay. This is material procurement procedure. Procurement is nothing but purchase. If you want, you can just write there purchase. Purchase. Yeah, what is it? Right. There are different departments in an organization, but still, even though they are the department working for the same organization, they have to maintain the proper records. What they received, what they gave, and all, they have to maintain a proper records. See, production department is the one who will handle the raw material, who will use the raw material. But stores department is the one who will store the goods or raw material. And whenever the production department asks for the raw material, stores department has to give it to the production department. If stores department have the raw material, they will give it to the production department. Sir, what if they don't have it? Then they will request the purchase department to purchase the raw material. Okay, that procedure I have given here. First, engineering or planning department will prepare a document called bill of materials. Bill of material. Sir, what is bill of material? Guys, it is a document in which the planning department would have told to produce each unit of output, how much raw material should you use. Okay, the planning they would have given, like input output ratio and all. For example, for each unit of output, production department is supposed to use maximum 5 kg of raw material. Clear. So 5 is to 1 is the ratio. Clear. That planning they would have mentioned it in bill of material. Okay. Means, and also budget set means in the current year how much unit of output you should produce in this year. All this data would be given in bill of material. Now coming to production department or workshop. They are the one who is engaged in production. Whenever they want raw material, whom will they request to? To the stores department. Sir, how will they request? Stores manager is my friend. I will tell, hey, console, send it and the no. We have to request it to through a document called material requisition. Material requisition is a document which production department has sent to whom? Stores department. Requesting, please send so much quantity of raw material for production. Guys, if they have it, immediately they will supply it to production department. Immediately they will send it. Sir, what if they don't have it? Then they will request the purchasing department to purchase the raw material. Sir, can stores department straight away purchase it? No. The authority to purchase the raw material will be given to purchase department. So stores department, whenever there is a shortage of raw material, they will request the purchase department through which document? Purchase requisition. They will issue a document called purchase requisition asking the purchase department to purchase the raw material. So means quantity, everything would be mentioned. Okay, sir. Now after receiving this purchase requisition, purchase department will start scouting for the suppliers. They will start scouting for the suppliers. Means who can supply the raw material, whatever I want at the best price. So they will call for the tenders. Who purchase department call for all the suppliers in the market for a tender and ask them to submit their quotation. Sir, what is that quotation? Guys, supplier, whoever is willing to supply for the company, they will give their quotation to the company. Okay, that is nothing but purchase department telling we are ready to supply so much quantity of raw material at so and so price. Clear? This is like a proposal, they will give it to the purchase department. Now assume the purchase department has received the quotation from 5 different suppliers. Now they will choose one best among them and issue a document called purchase order. Means we are placing an order to you to supply so much quantity of raw material. It is an order for purchase. So they will issue the purchase order to whom, guys? The selected supplier. The selected supplier. Once the order has been placed to the supplier through purchase order, now supplier will supply the goods. Who will receive it? Stores department, not purchase department, stores department. And there will be a person who will take care of all the procedure. Once the goods is unloaded in the company's warehouse or the godown, they will cross check everything is as per the purchase order. Quantity, everything they will check. Okay, now, and even there will be different variety of raw material sometimes. Okay, whatever we have placed, whether they have delivered the same answer, we should cross check. Once stores department receives the goods, if they ensure that everything is proper as per the order, they will issue something called as goods received note or material returned. Material goods received note. Here it is. Goods received note or material received note. Okay. Yes, sir. They will give it to whom? To the supplier. Telling yes, whatever you have supplied, we have received it, and it is as per our order. Okay. Now payments has to be done. Yes. So supplier would have given. See, it depends on the industry practice. Sometimes supplier will send pro forma invoice to the company. Pro forma invoice means before the goods are delivered, they will send a preliminary bill to clear the amount. Some suppliers will supply only if you make the payment, I will supply like that. So they will send the pro forma invoice. You clear the payment, only then they will send the goods. Clear? Some suppliers are like that who are in demand. Some suppliers, Papa, who wants actually the customer to purchase, they may tell, no, sir, we will send the goods. Okay, then we will issue the invoice. You make the payment, sir. And some people will also ask for a credit period 30 days, 15 days, 45 days, and all. Clear? So the payment depends, guys. Sometimes before the delivery or after the delivery or at the time of delivery also. Yes. So once supplier supply the goods, the stores manager or stores department will cross check it and issue a document called goods received note. After that, the payment would be cleared as. Who will do the payment? Normally the cost accounting department or accounting department or even the finance department. Okay, sir. Next. Sir, what if by chance material was not okay? After stores department received it, they realized it. Whatever products the supplier has sent is dummy products, sir. Is dummy product. Can it be returned back? Yes. Stores department will return back the goods to the supplier and they will prepare a document called material returned note. Material return note. This is only for the goods returned. Or else, assume guys, out of the 10,000 kgs of raw material received, sir, 500 were damaged already. Sir. During the transit itself, it was damaged. Can it be returned back? Yes. 500 can be returned. So for 500 units, you prepare material return note, whereas for 9,500 units, you prepare goods received note. Goods received note. Okay. All this documentation stores department would be doing. Even they have to send something called as material abstract to the cost accounting department. Clear? A copy of all this document also will be sent to cost accounting department, guys. Along with what? Materials abstract. What is material abstract? Full details about what all happened. I explained the procedure. Na? The details of that will be sent to cost accounting department. Why is that? Because they have to calculate the cost and pass the entry. Na? They have to record it in the books. For that purpose, you need to send full details to them about the purchase of raw material. Got it? Yes. See here for pro forma invoice payment and even the invoice, the numbers are given 7, 8, 9. Where, sir, before the goods are delivered, the payment is made, but may not be always. May not be always. As I told you, it actually depends on the credibility of the supplier or the power of the supplier. If he is actually really good in the market, he can demand advance payment. If not, sir, if the purchaser is in the commanding position, then he will ask for credit period. Clear? So this things, guys, can vary. Okay, it can happen before or even after the supply. Oh, this is all about the purchase procedure. I have given a note here. Anything which we calculate in this chapter is for raw material, guys. Okay. Valuation of material received or receipts in simple purchases, guys. Whenever we purchase the raw material, sir, at what value should we record it in books? Guys, in your accounts and all, you pass the journal entry. Na? Purchases account debit to bank. If it is a cash purchase, immediate payment. Or if it is a credit purchases to creditors. Clear? So now you will pass this entry with an amount. Sir, how much is that amount? We are calculating. We are calculating it now. Okay, important guys. You can get a numerical question on this. Okay, they are asking in the exam numerical question to calculate the cost of inventory, cost of inventory, cost of material, cost of purchases is everything one and the same. Okay, please pay attention, guys. It is just here plus minus game. So should we add it? Should we deduct it? Or should we not do anything? Should we not do anything means don't add also, don't deduct also. But please give a note. I told don't add, don't deduct. That doesn't mean that you will completely leave it and come in the exam hall. At least give it. Why are you not adding? Why are you not deducting? Clear. So try to give clarity, guys. That is very important. Guys, even I made you to read the first page of the question paper. There also they would have told your answer should include notes. Your answer should include working note. Or else vice versa they would have given. Working note should form part of your answer. Students still ignore that notes and working notes. I have literally seen. Why, sir? No time, sir. Okay, in the class you would have done that only. Sir, whatever you give now, main answer we will take the notes and all we can manage, sir. In the exam you will understand. So please, that is why in the class, actually in my regular class, I will make you to write each and everything. Okay, full answer along with notes, working note, everything. Some students might be lazy, but still I will make them to write. Why? Because what you do now, same thing you will follow in the exam. Please make sure, guys, for any question, especially numerical question, wherever required, please give the notes and working notes. It is the must and it is the part of your answer. If you don't write it, then you lose the marks. Please be careful with it. Oh, fine. And guys, this is very similar to your accounts. In your accounts, you would have learned accounting standard 2 or Ind AS 2, which talks about valuation of inventory. Now, very similar to that. Very similar to that. But don't completely apply that knowledge here, telling biological assets, so that this and all are there. But here, so much complication is not there. So much complication is not there. It is easy. Clear? Yes. Sure. Fine. You will see. Cost of material includes cost of purchase net of trade discount, rebate, duty drawback, input credit, that is input tax credit with respect to GST, guys, and other costs incurred in bringing the inventories to their present location and condition. Guys, keep it simple. Sir, what all costs I have incurred to purchase the raw material to bring it to my place till it is ready to use? What all costs you have incurred? You have to include it in the cost of inventory. You have to include it in the cost of inventory. Sir, once it is purchased and brought to the godown, it is ready to use. After that, if I incur any cost, should I include it in the cost of inventory? No. You will treat it as a separate expense. Oh, one by one we will see. So please pay attention, guys. Here, even the color will play a major role. Even the color will play a major role. Okay, sir. Sure, we'll start. Treatment of items associated with purchase of materials is tabulated as below. First, discounts and subsidy. Item by item we will go. First is discount and subsidy. Guys, when it comes to cost accounting or even accounting, there are two types of discount. First one is trade or quantity discount. The second one is cash discount. See, trade or quantity discount, guys, let us try to analyze from accounting point of view. Assume you have purchased the material for 10 lakh. You have purchased the material for 10 lakh. And at the time of supply itself, that is at the time of purchase itself, I got 10% discount. I got 10% discount. Now in the invoice, properly the supplier will record a supplier will record. So value of goods, assume 10 lakh minus discount 10%, which comes to 1 lakh. So what is the final price? 9. Clear? On this, any GST and all will be charged. Okay. Now in my books, I will record it the purchases at 10 lakh or 9 lakh. 9 lakh. What is the entry, guys? Purchases account debit. Assume it is credit purchase to creditors. 9 lakh, 9 lakh. Now even for cost accounting, should I take 9 lakh or 10 lakh? 9 lakh. No version, guys. I was not able to pay it on time. It was a credit purchase. I was supposed to pay within 15 days, but I didn't pay. Now, supplier told, Vikas, at least pay it now. We will give another 5% discount. Another 5% discount. Now, this discount, was it recorded previously? No. This is the discount which is given after the purchase made. Okay, from GST point of view, if I tell post-supply discount, post-supply discount, can we reduce it while calculating the value of supply? No. There are certain conditions which I will tell. Don't worry. Oh, so this is like creditors. Now we have already recorded the purchases at 90,000. Now the supplier is telling, I will give you another 5,000 discount. Another 5,000 discount, which comes to 4,500. Correct? Yes. How do we record this, guys? We will record it as a separate entry in accounts. What is the entry? Creditors account debit. Debit to what? Discount received. It is a gain for me. Discount received is a gain. Any gain has to be credited. How much, sir? 4.5, 4.5. That is 1,000, not lakhs. 1,000. Okay, sir. Now, what is the net credit balance of credit assets? Net credit balance 90,000 was already there. Now 4,500 we have to reduce. Remaining, how much should the creditors pay? Means I am liable to pay to how much? 90,000 minus 4,500. My liability is 85,500. My liability which still pending is 85,500. Assuming I paid it. What is the entry? Creditors 85,500 to bank 85,500. Got it? Yes. Guys, initially when I purchased, I recorded the inventory at how much? 9 lakhs. So even while valuing the inventory now, as per the cost, we should include only the discount which is given at the time of sale. For me, it is a purchase. Clear? If any cash discount is given later, guys, cash discount is given only to make a payment as early as possible. Okay, they would have told, if you pay today, 5% discount. If you pay within 3 days, 5% discount. Like that is called cash discount. To promote you or to encourage you to make the payment as early as possible. Is that clear? Yes, sir. Sure. Coming back to this, let me read it. Trade or quantity discount is deducted from the purchase price. At the time of purchase itself, the seller would have reduced it in the invoice. If it is already shown as deduction in the invoice, then don't deduct. Okay, normally they will just give like, for example, in the question they will give, okay, purchase price 10 lakh or value of the goods 10 lakh, discount given is 10%. Should we reduce it, sir? Yes. And whenever discount is given in percentage, please apply it on this one. We call this as value of goods or list price. Okay, on this we have to apply. So here it was 10%. No, 10% on what, sir? 10 lakh. Yeah. So if question is silent, always deduct it. Okay. If they have already given that, for example, this 10 lakh is already after considering discount. 10 lakh was already considering discount. Or else, let me take it in another way. Assume guys in the question they are already given 9 lakh, which is already after reducing discount. Should we again reduce it? No. Okay, but what I have observed in the questions is they will give this value 10 lakh. That is before discount. So you have to reduce. If by chance, assume in the upcoming attempt, they told value of the goods after considering discount is so much. Straight away take it. Straight away take it. Should we reduce the discount again? No. Oh. Next, cash discount. Cash discount is not deducted from the purchase price because this is something which is given later. I will record it in my books, but not as an inventory cost. I will record it as discount received, which is a gain. I told you, I will pass this in. I will pass a separate entry, guys. Oh. Now, if I have to connect this to GST, guys, if I have to connect to GST, because somewhere in GST also we have a discount treatment, correct? Hello? 15 subsection 3. 15 subsection 3. Sir, 15 subsection 3 which talks, 15 talks about value of supply. 15 subsection 3 talks about discount. There are two types of discount, guys. If discount is given at the time of supply and recorded in the invoice, can we reduce it while calculating the value of supply? Yes, sir. We can reduce it. Yeah, that is nothing but this discount. Yes. Yeah. Second discount, which is covered in 15.3b. There are two discounts, 15.3a, 15.3b. Second discount is discount which was known or agreed at the time of supply, but it is given after the supply is made. Means it was already committed that I will give. Telling if you purchase more than 1 lakh units in a year, I will give you so much discount. It was agreed. But was it given at the time of supply? No, it is given only after the supply is made. We call it as post-supply discount. You can reduce it, provided it was known at the time of supply, credit note is issued, and the recipient, if he has already claimed the credit, he needs to reverse. He need to reverse. Yes, sir. Only in that scenario, you can reduce that supply. Sir, what if it is a surprise discount? Supplier had not agreed for giving supply, but after supply is made, he came and told, Vikas, if you pay today 10% discount, then should we reduce it while calculating the value of supply? No, we should not reduce. Yeah, that is for GST part. Clear? But here there is nothing called post supply, pre supply discount and all. Whatever language I have used here, same thing. I just connected it. Okay, and here should we be bothered about some credit note is issued or not, credit is reversed or not and all? No, don't worry about all. Clear? So if it is a trade or quantity discount which is given at the time of purchase, we should deduct it. If it is a cash discount which is given after the purchase made, but at the time of payment, should we reduce it? No. Oh, next, subsidy, grant or incentives. Guys, if subsidy, grant or incentives is given by someone to purchase the raw material by me, I should reduce it. For example, assume I was about to purchase the raw material for 10 lakh. Now government or any NGO came and told, because we will give you 2 lakh. We will give you 2 lakh. Now how much I ended up paying out of my pocket? Only 8 lakh. So what should be my cost? Only 8 lakhs. Only 8 lakhs. So remaining 2 lakhs, should we reduce it, sir? Yes. And please be careful, guys. Here subsidy received from anyone has to be reduced. Subsidy received from anyone has to be reduced. Whereas in GST it is different. Guys, if you already learned GST, good, you can connect. If not, don't worry about whenever I give connection to GST. Don't worry, you will learn it when you are studying GST. As costing is a part of group 2, I believe that you would have studied taxation by now. Now coming to subsidy. Actually, subsidy in GST is covered under section 15 subsection 2 clause E. Clause E, which will tell if subsidy is received from anyone other than central and state government and if it is linked to the price, only then you need to add it, not deduct. You need to add it. That is in GST. Clear? And why they are adding it? That's simple. I will just give you the reason. Assume my normal selling price of the goods is 100 rupees. 100 rupees. Now, assume Infosys Foundation came forward and told, Vikas, you sell this at only 80. I will give you a subsidy of 20. So they are giving me a subsidy of 20. So I reduced my selling price at 80. Is it subsidy which is linked to the price? Yes, linked to the price means because of subsidy, you have reduced your selling price. You have reduced your selling price. Now, while calculating the value of supply, should I pay GST on 80 or 100? 100. So on the selling price, whatever is there, we need to add back subsidy, guys. So for GST, what is the value of supply? 100. Value of supply is 100. Please be careful. Only if it is given by others, we need to add it here. What if it is given by central government or state government? We should not add it. In that case, what would be the value of supply, sir? 80. It would be 80. Again, Pawan. This is for what purpose? GST. Coming to costing. Sir, if it is a subsidy, grant, incentives received for the purpose of purchase of raw material, who gave it doesn't matter. Who gave it doesn't matter. Just reduce it. Just reduce it. Oh. Then coming to duties and taxes. Second line items. Road tax, toll tax. If it is paid by the buyer, I am the buyer. I have purchased the raw material, and when I am getting that raw material to my place, I have paid during the transportation. I have paid some road tax or toll tax. Should I add it? Yes, we should add it to our cost of purchase. Next, GST, guys. Guys, GST, what you have paid on purchases is called input tax. What you are supposed to pay on your sales is called output tax. Let me explain this with an example. Just a minute. Listen, guys. Now, my inward supply is nothing but purchases. In GST, we use the word inward supply for purchases. And for that, anything we pay is called input tax. Whereas my sales is actually called in GST language outward supply. On that, anything I pay is called output tax. Clear? I have just taken a numerical example. Now listen, guys, my purchase value is 10 lakh. On that 5% GST I have paid 50,000. So total purchase value is how much? 1050. Now for costing, sir, is purchase value 1050 or 10? Is my doubt. That depends on can I claim credit of this 50,000 in GST or not? Sir, what is that input tax credit? Guys, listen. Now I am purchasing this, doing the manufacturing activity, and I am selling it thus output at 30 lakh. On that also, assuming I am paying GST at 5%, which comes to 1 lakh 50. So how much will I collect it from my customer? Totally 31 lakh 50,000. 30 lakh is for me. 1 lakh 50 is tax amount. So we call this as output tax. Now should I pay entire 1 lakh 50,000 to the government? No. They're telling if you have paid tax on your purchases, then guys there are certain conditions which has to be satisfied of, which is given in section 16 and 17 of CGST Act. Section 16 talks about conditions, whereas section 17 talks about restrictions and block trade. Yeah, yes. If you satisfy all that condition, you can claim this as a credit. Claim this as a credit means what, sir? I can adjust it against output tax. When I adjust it, I will remit only the remaining to the government. I will remit only the remaining to the government. GST to be paid. Got it? Yes. Rohit, what do we call this 1 lakh X? Means in GST, there is a word we use. How do you pay this? Chetan, GST to be paid through electronic cash ledger. Electronic cash ledger. They ask question in GST, one question on this only. Okay. Output tax you have to calculate, input tax how much you have to calculate, adjust it in the order and show finally how much you have to pay through cash ledger. Correct? Huh? Some of them are looking like something new I am talking about. Okay, if you already studied tax, you should be able to connect to all this. Huh? E-way bill is not this, not related to this. E-way bill is different. Okay. Chalo, fine. Now, sales on on sales, I am supposed to pay output tax 1,50,000. Now, whatever tax I have paid on my purchases, I can adjust it against my output tax. If I can adjust silence, if I can adjust my input tax against output tax, what do we call it as? Input tax credit. Input tax credit. Remaining I have to pay tax. Now, if I can claim the credit, this is where Pawan in GST. If I can claim the credit of 50,000 which I have paid at the time of purchases, should it be included in my value of inventory? No. For costing, what is the value of inventory? 10. 10 lakh. Got it? Same way. Sir, no sir. This is blocked, sir. Assume for some reason credit is blocked or I am not satisfied the condition. In that case, entire 1,50,000 I have to pay. Correct? In that case, what is the cost of material? 10,50,000. 10,50,000. Hope you got it. Yeah. If you remember in GST, there is also a provision on capital goods. If GST is paid on the purchase of capital goods, then if that GST amount is already capitalized in income tax to claim depreciation as per section 32, then on that GST component, you cannot claim the credit. You cannot claim the credit. Where is it given, sir? Section 16, subsection 3 of GST. Clear? So section 32 of income tax connected to section 16, subsection 3 of CGST. Clear? So even for capital goods, they are telling either you claim depreciation or you claim credit, but not both. But not both. We will not give you double benefit. That is for capital goods. Nowhere connected to costing, but I just connected so that you guys have to study all the subjects and pass all the subjects. Okay, you should know how the things are in different subjects. Now coming to our costing. Sir, costing very simple. Sir, in income tax or even let us come to GST. In GST, there are certain conditions, restrictions and all in section 16, 17. No, should we know all that for costing purpose? No, guys. They will not test that knowledge here. They will only give clue in the question whether credit is available or not. If credit is available, don't add the GST. If credit is not available, please add the GST. Now, sir, if question is silent, what should I assume? Assume credit is available. Assume credit is available and give a note for it. And give a note for it. Chalo. IGST, CGST and FGST. That number you know, na? IGST we pay in case of interstate supply. CGST and SGST we pay in case of intrastate supply. Or if it is within the union territory, CGST plus duty GST. Whoa. Sure. GST, that is nothing but IGST, SGST and CGST paid on supply. That is nothing but purchases for me. For me, it is a purchase, inward supply of goods or services. If credit is available for the buyer, Don't add it. Don't add it. Even if question is silent, please assume that credit is available. Okay. Next, if credit is not available for the buyer, add it to the cost of purchase. Clear? Right? In the question, sometimes they clearly give the information. Credit is available or not available. Or sometimes they will tell credit is blocked. Credit is restricted. Even in that case, you have to understand that credit is not available. Credit is not available. Okay, sir. Next, basic customs duty. Guys, this is paid when the goods are imported from outside India to India. So the importer, the purchaser is now called as what? Importer. Now, whatever import duty he has paid, we need to add it to the cost. But here also, if you can claim the credit of it, or if you can claim the duty drawback of it, don't add it. No, sir, there is no duty drawback or credit available. What should we do? Add. Basic customs duty paid on the import of goods is added with the purchase cost. If credit or refund or duty drawback, any of this they may give it for customs duty, then not to be added. It should not be added. Even duty drawback is nothing but like a refund. Yeah, whatever tax you would have paid on your import, they will give it back to you. Customs is actually not a part of your intermediate syllabus. You will be learning it at final level. Next, penalty or charges. Penalty or charges. Chinmaye. Demurrage. Demurrage is a penalty imposed by whom? Transport for delay in uploading or offloading of materials. Guys, you are wasting the transporter time. You have booked the vehicle. Okay, he is coming and waiting for last 2 hours. You are still not loaded the goods. Or else it has reached your place, you are still not unloaded the goods. You are wasting their time. So for that, they are charging you demurrage. Even for this Ola, Uber and all, waiting charges, they same way. Okay, now you made a transporter to waste his time because of your ignorance. Okay, or you being a late latif, you are making them to wait for you. For that, if they are charging any penalty, that is called demurrage. Sir, should we include it in the cost? No, we should not include it in the cost of material. It is abnormal in nature. Oh, sorry, here it is. Next, detention charges are fine. Detention charges are fine imposed for non-compliance of rule of law by any statutory authority should not be added, guys. Even that is abnormal in nature, it should not be included because you have paid some fine or penalty. Assume you have overloaded your vehicle and the traffic police stopped you and they charge some penalty for your vehicle or fine for your vehicle. Sir, should we add it in the cost of materials? No. Last one, penalty. Penalty of any type is not included with the cost of purchases. Any type. See, all these three are abnormal in nature. We will not include it in the cost of materials. We need to debit them separately to costing, profit and loss account. We need to debit them separately to costing, profit and loss account. Then coming to other expenditure. Insurance charges. Insurance charges paid for the goods in transit is added with the cost of purchase. Guys, listen now. I have purchased the raw material from a supplier from Tamil Nadu. Now I have to bring the goods from Tamil Nadu to Karnataka to my godown. During the transit, that is during the transportation, I have taken the insurance policy for which I have paid the premium. Should I include it in the cost of inventory? Yes. Now listen. Sir, the goods has reached my godown or warehouse. I have stored my goods in the warehouse. There also to protect my materials, I have taken insurance policy. I am paying the premium when the goods are in my godown. Can I include that premium also in the value of inventory? No. You separately debit it to costing figure. Yeah, so please be careful. If insurance premium is for the insurance which is taken during the transit, it should be included. Sir, once it is delivered to the place, during the storage, if policy is taken and if premium is paid, should we add it? No, guys. We should not add it. Oh, next. Commission or brokerage paid. Commission or brokerage paid is added with the cost of purchase. If it is paid by the purchaser, always add it to the cost of purchase. Next, freight inwards. Guys, freight inwards, you know, in your accounts and all that plays a major role. This is incurred to bring the material inwards. That is at the time of purchase. To bring the materials to your place. What all cost you have incurred is called freight inward. Should we include it in the cost of inventory? Yes. If you guys are remembering, you should have considered this in trading account. Na? Yes. Sir, what if it is a freight outward? Guys, that is a transportation cost which you have incurred to deliver your goods to the customer. That is sales. Clear? Will it be a part of the freight inward here? No, no. That will be a part of distribution overheads. Distribution overheads. So only freight inward, you have to include it in the cost of purchases. Even in your account and all, if you remember, while calculating the cost of purchases, sir, will we include the freight inward? Yes, in the cost. Next, cost of containers. Treatment of cost of containers are as follows. It depends in what way it is given by the supplier. If it is non-returnable containers, then the cost of containers should be added to the cost of material. If it is returnable containers, if supplier is not charging anything extra for that, then don't add anything. Don't add anything. Guys, assume if it is a returnable container, sometimes suppliers will ask you to deposit some amount. Assume you are sending the goods to me in a container. For that, you have asked me to deposit 10,000. You will give it back to me, but only 8,000. What is my cost? 2,000. I deposited 10, you give back to me 8,000. So, what is my cost now? 2,000. Should we include it in the cost of inventory? Yes. You can see returnable containers. If on return of containers, cost of containers is returned back, then it is in this case cost of container will not be added with the cost of purchase. If the amount of refund on returning the container is less than the amount paid, then only shortfall is added with the cost of purchase. In my example, what was the shortfall? 2,000. I paid 10. You gave back me how much? Only 8. So how much should we add back? 2,000 to the value of inventory. That is because that is my cost. Next, shortage. Shortage or loss or wastage we call it as. Here for this purpose, that everything is one and the same. Actually, there is a difference in spoilage, wastage, scrap, everything. We will learn that at the end of this chapter. But for valuing the inventory now, to calculate the cost of material, shortage, wastage, loss, everything is one and the same. Sir, first, whenever there is a wastage or loss, identify whether it is a normal loss or a abnormal loss. If it is a normal loss, then the cost of normal loss units will be absorbed by remaining good units tax. Automatically, the cost of remaining units will go up. If it is an abnormal loss, then valued separately and debited to costing P&L account. Should you include it in the value of inventory? No. Shortage due to normal reasons. Good units absorb the cost of shortage due to normal reasons. Means whatever is the cost of normal loss will be absorbed by good units. Losses due to breaking of bulk, evaporation due to unavoidable conditions, etc. are the reasons of normal loss. Shortage due to abnormal reasons. If there is a shortage arises due to abnormal reasons such as material mishandling, pilferage. Pilferage is nothing but stealing. Due to avoidable reasons are not absorbed by good units because that has happened due to my mistake. So what should I do? I have to bear that loss. How I will bear that loss? Valued separately and debit it to costing P&L account. Sir, if you debit it to costing P&L account, how will it be like you are bearing it? My profit will go down. Now. It is I am suffering it. Okay? Yes. Losses due to abnormal reasons will be debited to costing, profit and loss account. Yes. So here I have discussed the treatment of each and every item. Okay, this is what maximum will come in case of valuation of inventory. And see guys, as a format I have given every item here. That doesn't mean that in every question every item will come. Yeah, be prepared for anything. Let them ask whatever they want. You answer what they have asked. You don't answer what you want. That is what students will sometimes do. Okay, sir, they have asked the question, but I will write what I know. Then evaluator know what he will do. Okay, don't take such risk. And guys, especially when it comes to questions, some questions might be tricky. I'm not telling all the questions. Some questions might be tricky. Even if required, please read it twice before you start answering. Because without even understanding the requirement of the question, you will start writing the answer. See, two things are there. When you realize that you are doing mistake in the exam hall only, then you will scratch and start writing again. You would have wasted some time. Okay. Another irony is you will not realize that you have committed a mistake. Even after you are coming out of the exam hall, you will not understand. When you get the result, shock. What is that? I wrote for so many marks, but they gave only this much marks. Yes, it happens in CA exams and all. They would have played that tricky in that question stacks. Okay, they will try to mislead you at least in few ways. Okay, so please be very careful with that. Okay. See the format now. Whatever we covered, how do we treat it? Divya and Co. Pay attention. Listed price of materials means they would have given this in the question, guys. You will start with this. Clear? Then trade discount, guys. Normally they will give it as percentage. This percentage you have to apply on which figure? Listed price. Clear? You will apply it on listed price. If there is cash discount given and all, please don't get misled. Give a note telling cash discount should not be reduced while calculating the value of inventory. Okay, sir. Then, if there is any tax to be paid, guys, please listen. Tax to be paid, even if that is given in percentage, please apply it on this figure. For example, assume this is 10 lakh, discount is 1 lakh. How much is the remaining amount? 9 lakh. So we need to calculate tax on what amount? 9 lakh, not on 10 lakh. Even in GST also, they will allow you to reduce the quantity discount, right? Yes, that is nothing but 15, subsection 3, clause A, first discount, which is given at the time of supply and recorded in the invoice. Okay, sir. If GST 18% is given, you will apply it on what? What? 9. Okay. And sometimes they will see, they give only GST at 18%. Just calculate one figure. GST at 18% or 9. They will give CGST 9%, SGST 9. You also give a break. Clear on 9 lakh, CGST 9%, SGST 9%. However, they give accordingly you follow. If they give only one right, straight away do one calculation. Okay. Even if they give basic customs duty, that is when you have imported the goods, please apply it on the value after discount. After discount. Okay. Then we need to add this to here only if imported credit is not available, you will add it there. Credit, refund or duty drawback not available, only then you will add it. Even for GST, only if ITC. ITC means Indian Tobacco Company. Input tax credit. Only if credit is not available. Oh. Next, subsidy received from anyone. Hello? Anyone. Anyone include anyone. Okay. Please, anyone under the sky, including government, please reduce. Because I know, see now many times I would have told you, especially if you are writing both the groups, you would have studied GST, you would have studied costing. You would have studied in GST different thing. If you receive from them that this and all. Here actually deduction, there is actually addition. Okay. There if you are received from central government, state government, you should not do anything. By chance in costing they have told subsidy received from central government. You remembered, I have studied that. Central government means do nothing. Do nothing. Please be careful, guys. Yeah. So wherever connections are there, please study properly. If required, you can also make a note when you are studying. In GST, it is like this. Yeah, so that you will not mislead. Okay. Always we should add it. Then toll tax, freight inward insurance charges during transit. Then commission and brokerage paid by the buyer. We need to add it. Then if it is a returnable container, check how much is the amount deposited. If the same amount is returned back, nothing to add. But if the amount refunded is less, then whatever is the difference you need to add it. Oh. Then you will get the total cost of material. Assume guys the total cost, I am just taking it as 12 lakh. Total units was thousands, but in that 10% was normal loss. Normal loss. How much you will get as good units now? Only 900. Now, if they ask you to calculate cost per unit also, it should be 12 lakh divided by 900. Please be careful. Only if they have asked, you will do this last two steps, or else you will stop at this point. Just calculate the cost of material and stop it there. And guys, please be careful while calculating the units, which will be denominator for you to calculate cost per unit. Please reduce only normal loss units and not abnormal loss units. Clear? Yes. Now, once you do this, assume how much you get. Quickly tell me. 12 lakh divided by 900. Sorry. Okay. This is the cost per unit. Assume by 50 units is abnormal. Out of this 900, sir, around assume 50 units or 20 units are abnormal. What do we do? we will value it separately and debit it to costing period. Yeah, that and all they will not ask it under material charge, but I'm just giving you a knowledge. Clear? We need to value it separately and send it to costing P&L. Is that clear? So I'm stressing on one thing while calculating the total input here, that is good units. Please reduce only normal loss units and not abnormal loss units, because abnormal loss we will value it separately and send it to costing P&L. Okay, sir. Now coming to techniques of material control. Guys, we discussed about material control. Sir, especially while purchasing, how do we control the material? Material procurement control. Yes, how do we exercise the control? We have different ways, guys. What are those? One by one we will discuss. The objective of inventory control is to make balance between sufficient stock and overstock. Means you should not keep overstock also, you should not keep understock also. There should be a balance in between this. The stock maintained should be sufficient to meet the production requirements so that uninterrupted production flow can be maintained. Means my production should not stop throughout the year. The management may employ various methods of inventory control, which are as follows, one by one. First, EOQ. EOQ. Now, guys, assume in a year, I require totally 1 lakh units. In a year, totally I require how many units? 1 lakh units. And each unit will cost me 10 rupees. So the total investment is 10 lakh. I have enough money. Can I purchase the entire 1 lakh units and keep it in my godown? No. Guys, there is something called as carrying cost and ordering cost. Ordering cost is the cost which I will incur to place the order and receive the goods. Till I receive the goods, whatever cost I will incur is called ordering cost. I have to arrange for transportation, I have to contact the supplier, all this cost will come in that. Okay, now ordering cost. Once I purchase the material, once it reaches my place, to take care of it before I use, in the production process, what all cost I incur is called carrying cost. Carrying cost. So I need both are cost to me. If I purchase in large quantity, guys, if my purchase is in large quantity, in that case, carrying cost will be more, whereas ordering cost would be lower. Sir, why, sir? Guys, assume entire 1 lakh kgs, I purchased this one shot and I kept it. I need a huge investment of 10 lakh, and obviously this will come with a cost. Yes. And I need huge space to store this 1 lakh units. Okay. I need to pay more rent. Then I have to take insurance insurance policy for this 1 lakh units. Higher the quantity, higher would be the premium. Yes. And I have to appoint more people to look after this. So higher quantity means higher carrying cost, whereas ordering cost would be lower. Why, sir? I got everything in one shot. So ordering cost would be lower. Why, sir? Because only order placed is only one order. Clear? Yes. Same way. Sir, what if quantity is less? I am purchasing, assume, 1000 kgs every time. 1000 kgs every time. Carrying cost will be very less. Why is that? Because investment is less. So cost involved in that investment is less. Then to look after that, I need to appoint only maybe one person, and even premium will be less, and even small space is enough for me to store. Accordingly, rent is less. Okay, sir. Whereas ordering cost would be huge, guys. Why, sir? Because number of orders is more. Every time I place the order, I have to contact the supplier, tell him, arrange for transportation, receive the goods, loading, unloading, everything I have to take. Clear? And sir, time consumption also will be more. So now I have to balance in between both of this. I need to balance in between both of this. So that is called as what, sir? EOQ. EOQ is a quantity. Sukrita, EOQ is a quantity at which the total of ordering cost and carrying cost would be minimum. Total of both, not individually. Total, that is total carrying cost plus total ordering cost would be minimum. Would be minimum. So if I purchase, assume as per EOQ, the formula, there is a formula to calculate it, we got 10,000 kgs. Okay, or 10,000 units. What does it mean, sir? If I purchase every time 10,000 units, then my cost would be minimum. Minimum. Sir, what if I purchase more than 10,000 or less than 10,000? Then your cost will be increased. Okay. Sure. If the purchase of material is made in bigger lots or larger lots, that means you have purchased large quantity, then the carrying cost will be higher and the ordering cost will be lower. Why, sir? Because the number of orders will be less. Whereas at the same time, if the materials are purchased in smaller lots, small lots, then the carrying cost will be lower. Whereas the ordering cost would be higher, as the number of orders would be more. Both are cost to me. If I purchase large quantity, carrying cost would be more. If I purchase small quantity, ordering cost would be more. Now I have to strike a balance between both. What is it, sir? EOQ. EOQ is a lot size. Lot size is nothing but the quantity at which the total of ordering and carrying cost would be lowest or least. Guys, all this might be your MCQ question. Please be careful. Yes, sir. And there is a formula to find out. Sir, okay, you told theoretically, if I purchase so much, cost is lower. Tell me, how do we know that quantity? That is EOQ. We have a formula, square root of 2. 2 is a standard, guys. Okay. 2 into annual consumption, annual demand, annual usage. Everything is one and the same. Okay. Into cost of placing an order. Cost of placing an order. This is nothing but ordering cost per order. Ordering cost per order. Divided by cost of carrying per unit per annum. Carrying cost to look after the material once it is purchased and received. What cost we incur is called carrying cost. We should take per unit per. Got it? Yes, sir. Guys, small things we have to be careful. Listen here. This should always be for annual. Sometimes they will give monthly, weekly, and all. You need to convert it for annual. You need to convert it for annual. For example, they will give monthly demand of raw material, weekly demand of raw material. If it is given monthly, into 12. If it is given weekly, into 50. Into 52. And please be careful, even carrying cost per unit per annum, it should be. Even this, if by chance, if they given per month, per week and all, please convert. Clear? See, as per the formula itself, both of this should be per annum. Sometimes to confuse you in the question, they may not give per annum. Please convert it. Clear? Yes. Now listen. Carrying cost per unit per annum, you need to take it in rupees here. But sometimes or most of the time I can tell, they will not give it in rupees in the question. They will give it as percentage. You need to apply that percentage on what? Purchase price. Why is that? Simple logic, guys. Carrying cost depends on the purchase price of the material. If the assume the raw material is the costliest raw material, I have to take extreme care of it. So in that case, carrying cost would be more. Yes. Or else, raw material is the cheapest raw material, sir. Throw it somewhere. Okay, it will be there. When I want, I can use it. That is what we will also do, na? Okay, if you have paid too much money into that, you will keep it in cupboard safely. Okay, wrapping it. Whereas if it is something which you have paid very less amount, then you would have kept it somewhere. And when you want only, you will not find it. Every day you used to see that. But when you want, actually, you will not find it. Correct, Achinmai? Yes. Sure. Understood, na? So that is why if carrying cost is given as percentage, you need to apply it on. Hello, apply it on purchase price. Because higher the purchase price, higher would be the carrying cost. Lower the purchase price, lower would be the carrying cost. Got it? Yes. Sure. And carrying cost also is called by different name like storage cost, inventory cost, carrying cost. Everything is one and holding cost. Everything is one and the same names. Let us see what is that ordering cost and carrying cost. Silence. Ordering cost and carrying cost. What is it? Also, I have given in the below the diagram. You can see ordering cost. The costs which are associated with the purchasing or ordering of the material is known as ordering cost. It includes the cost of tender invitation, preparation of purchase orders, and transportation and inspection costs, etc. Guys, simple guys. The time you started placing the order till you receive the material, what all cost you have incurred is called what? Ordering cost. And once you receive the material, after that any cost you incur, before you use it, what do you call it as? Or holding cost or storage cost. Okay. And there is a formula to calculate total ordering cost. Guys, please be careful. What we calculate here is not ordering cost, total ordering cost. It is only ordering cost per order. Now, if I want to calculate total ordering cost, what is the formula, sir? Simple. Annual demand divided by lot size into ordering cost per order. Guys, assume in a year we need totally 1 lakh units. 1 lakh units. And every time I am placing the order for 10,000 units. What is the number of orders? How many number of orders? 10 orders. And for each order, assume the cost is ordering cost per order 1000. So what is the total ordering cost? 10,000. Hope you are understanding. Sometimes they will ask you to calculate this also number of orders. Simple. Annual demand divided by lot size. And guys, here lot size is nothing but your UOQ. Your UOQ. But please be careful. May not be always UOQ. May not be always EOQ. Listen. Assume, as per EOQ formula, I got 10,000. But I am placing the order for 25,000. In that case, what is the lot size? 25,000. 25,000. That is why I have not used the word EOQ. I have used the word lot size. But if question is silent, it is always understood. If question is silent, it is always understood that EOQ is lot size. EOQ is the lot size, guys. Okay. Hope you understand. Clear? Yes. Next, coming to carrying. I repeat, guys, what do you get from here? Number of orders. Into ordering cost per order, total ordering cost. In EOQ formula, do we use total ordering cost or ordering cost per order? Ordering cost per order. Please be careful. By mistake, you may misapply. Next, carrying cost. The cost for holding or storing the inventories are known as carrying cost. It includes the cost of storage, insurance cost of fund invested in the inventories, etc. Cost of fund invested in the inventories means what? I have spent 10 lakhs to purchase the raw material. This 10 lakh would have come with a cost. Na? Assume I have taken a loan. I have to pay interest. Na? Yes, that is called cost of the fund. Yes. Now, total carrying cost. What is the formula? Half into lot size into carrying cost per unit per. Again, lot size here means you. Okay, and actually here lot size is nothing but for what quantity will you place the order? If nothing is given in the question, it is understood that the company is following EOQ tax. But sometimes when there is any discount offer and all, they may place different quantity. Clear? In that case, we need to take here whatever quantity they are offering. Clear? Means if I have to follow that discount offer. Okay, sir. Then at EOQ level, both total ordering cost and total carrying cost would be equal, guys. This both will be equal. Okay. Guys, a few more tips. Please be careful. In EOQ calculation also sometimes they will give the information about output. So don't get confused. Please consider what is given for inputs. And especially this formula, this is annual. Please take care of it. Yes. And even for carrying sometimes 2, 4, different percentage will be given. Okay, assume 2, 4, 2 is given. You need to add up everything and take how much is this? 8%. Sometimes they will give different percentages. Okay. Yes. Okay. Then in EOQ formula, we use this part, only this part. Got it? Yes. Now you may ask me also here, sir, why this half into lot size into carrying cost? Why not the entire lot size? Assume guys, the lot size is 10,000. Why don't we take full 10,000 here? Why half of 10,000? Very simple. If I have purchased 10,000 now, will I maintain 10,000 throughout? No. As and when I use, the inventory will be keep on going down. And once it reaches reorder level, again I will place the order. So inventory will be keep on fluctuating throughout the year. So I don't know what is the exact quantity of inventory. So what do we take? We take half of the loss. Is that clear? Yes. And guys, see in the exam, if they ask only EOQ, very simple question. But sometimes they will give the question with respect to two question calculations would be there. First to calculate EOQ. Next, supplier is giving you some discount offer. Will you accept it or not? Whatever supplier is giving discount is with respect to purchase price. Discount they cannot give for carrying cost or ordering cost. One thing, very clear. Be careful. Okay, just a minute. I will show one question and I will explain so that you guys will be clear. Now, listen. Assume the supplier has given you a discount offer because, sir, if you purchase, see, my EOQ is 1000. But supplier is telling because, sir, if you purchase 1200 units at a time, we will give you 2% discount. 2% discount is in what, guys? Purchase. Clear? So, purchase price will come down. Clear? Yes. Should I accept the discount offer or not? How will I decide? Based on EOQ calculation. You need to calculate total cost both at EOQ level and at discount level. Both at EOQ level and discount level. Why, sir? Why are you taking EOQ? They didn't ask. Guys, whether to accept this discount or not. What is the base for EOQ? If there is no discount and all, what I would have followed? EOQ. Clear? Now I should compare this with what? Discount. At the end, I need to see where the cost is minimum. Wherever the cost is minimum, I will go with. Clear? Assume here I got less cost, then I will accept the discount offer. No, sir, EOQ only cost is less. Then continue purchasing whatever is the quantity that is 1000. Clear? Guys, one more thing. Please listen here. When you're doing this calculation, your lot size would be 1000 to 1. When you're doing this calculation, your lot size is 1000 units. Hope you are getting it. And guys, if carrying cost is given in percentage, apply percentage on 27 years. Whereas here you have to apply it on this. Please be careful. Here it will change carrying cost. Clear? Because when carrying cost is given as a percentage you will apply on purchase price. If purchase price change, even carrying cost will change. All this would be hidden information in the question. Please be careful. And in some questions, see, I am trying to cover all the possibilities. Okay, you don't get confused, sir. How much you are telling? Because different kinds of questions will be asked. Some questions they will tell you carrying cost assumed to be no change. Here, for example, here it is 2 rupees per unit. They're telling due to change in purchase price, there is no change in carrying cost. So here also you have to take it as 2 rupees carrying cost. I am telling you. If they themselves give it like that in the question, please take it accordingly. So here how much should you take? 2 rupees. No, sir, question is silent. It is understood that when carrying cost is a percentage of purchase price, if purchase price changes, automatically even carrying cost will change. Got it? Yes. So these are the questions which you can expect in EOQ. And guys, even if they ask you to calculate ROQ, reorder quantity, please use EOQ formula. There is no separate formula to calculate ROQ. Got it? Yes, sir. You try to present like this when they ask you to accept the discount offer or not to accept the discount offer, whether will you accept or not. It is more about decision making. Obviously, your decision has to have some reason for it, justification. That will come only with this calculation here. Sure. Okay. Now coming to this diagram. If at all if they ask you to draw the diagram, you have to draw. If at all if theory question is asked. So what is it, sir? So here we will take the quantity, here we will take the cost. Clear? Yes. See, carrying cost will always straight away vary with what? Similar to variable cost. Higher the quantity, higher would be the carrying cost. Clear? And here what quantity I am talking about? Purchase quantity. Clear? Yes. Whereas ordering cost is like this. If the quantity purchased is more, then accordingly the ordering cost will come down. So if quantity is less, then ordering cost would be more. Okay, so this is carrying cost, this is ordering cost. If I add up both, I will get total cost. You check where the total cost is minimum at this point. Draw the line to x-axis. What do we call that as? EOQ. And you can see this is the point of intersection for carrying cost and ordering cost, which is nothing but equal. At EOQ, total carrying cost will be equal to total ordering cost. Individually, they will be equal. But if I add up both, then the total cost would be minimum. Total cost would be minimum. Got it? Yes. Yes, we are done with this. Next, setting up of various stock levels. Now we discussed about we should not do understock also, we should not do overstock also. How do I decide? What quantity of raw material should I maintain in my inventory? That is where all the stock levels will help you guys. This also I will explain with an example. Listen, this is a container where I am maintaining the stock. What is this? American, what is this? Container where I am maintaining the inventory. Guys, I have fixed the minimum stock level as 5000 kgs. As 5000 kgs. Sir, what is the meaning of this? My inventory should never go below this. My inventory should always be above this. At any point of the time, my inventory should not go below this, guys. Throughout the year, minimum I should have how much kgs of raw material in my inventory? 5000. Clear. And I have fixed maximum as 25,000 kg. Means my inventory should never go above 25,000. At any point of time during the year, my inventory should never go beyond 25,000. Okay, sir. In between this is average. 25 plus 5 divided by 2. 15,000. 15,000 is called what? Average stock level. Okay, sir. Hope you understood. My inventory should never go below this. My inventory should not go above this. Below, above, it cannot pass. So it should be in between this. Correct? Yes, sir. Fine. Now, I should find out a quantity. When my inventory reaches that quantity, I should place an order. What is that quantity? Reorder. Assume I have fixed it at 10,000 kgs. As soon as my inventory touches 10,000 kgs, I will immediately place a fresh order. I will place a fresh order. For how much quantity? That is called reorder quantity. For how many units will I place the order is called reorder quantity or lot size. If question is silent, guys, we always assume this as EOQ. But sometimes it can be different. Clear? That is why we are calling it as reorder quantity. For how much quantity we place the order is called reorder quantity. When did I place the order? Is called reorder. When my inventory touches this, clear. So you can see as soon as it touches 10,000, will I sit idle now? No. I will be keep on using. My inventory will go below this. Assume 9, 8, 7, it will be going. Now immediately I will receive this. Correct. Because I have placed the order for 8,000. I may not receive it today itself. Assume it will take 4 days. So in that 4 days, will I sit idle? No. I will be using my raw material. I already have enough stock with me. Assume by the time I receive, my inventory has come to 7,000. Now immediately I will receive. So plus 8,000. It will go up to how much? 15. So I will keep on using. It will come and touch 10,000. Again place the order. Again place the order. For how much? 8,000. It is like this. Clear? Hope you understood. Reorder level means, guys, name itself is telling nothing I find. Once your inventory reaches this level, place the order. For how much quantity you place the order? Reorder quantity. If by chance if this is not given, but you need to calculate, which formula will you use? EOQ. Is that clear? Minimum means your inventory should never go below this. Maximum means your inventory should not go beyond this. Clear? And some companies, even below the minimum, they will fix something called as emergency. Clear? Emergency stock level means assume 2000. I am fixing 2000 as emergency. Even in the worst case, your inventory go below 5000. Once it touches 2000, stop using it for regular. Only if there is any emergency, use it from. Clear? Sir, then what, sir? Should I shut down my operation? No. Wait till you receive the new order. Wait till you receive the new order. Hope you understood. I repeat. Assume, guys, emergency stock level I have maintained at 2000. For some reason, sir, there was some strike or some protest happening. Assume I was purchasing from the raw material from Tamil Nadu. There was some strike happening in the border. I couldn't receive the material on time. So inventory went below 5 and touched 2000. So should I continue to use it regularly? No. Regular usage you stop. And only if there is any emergency, use it from 2000. Sir, I should stop till when, sir? Till I receive this 8,000. Once I receive 8,000, can I start using it regularly, sir? Yes. Hope you got it. These are the various stock levels, guys. Let us see. I have just given theoretically here. We also have formulas to calculate this, which we will see in the next page. Reorder stock level means, At what stock level order should be placed? In my example, how much it was? 10,000. 10,000. For how many units I am placing the order? Reorder quantity or yoke? How much quantity to be ordered? In my example, how much it was? 8,000. Minimum stock level. At least how much stock level to be maintained at all time? My example, it was 5,000. Maximum stock level. Up to how much stock level to be maintained? How much it was? In my example, 25,000. Average means in between. Normally my inventory will be around near to that 15,000. How did we get it, sir? 5 is the minimum, maximum is 25. Add up both divided by 2. Divided by 2. Danger stock level. Emergency or danger, I told you 2000. Yes, that one. Stock kept only for emergency requirement. 2000. Buffer stock. Stock maintained to mitigate the sudden demand. Sudden demand. So someone came and told order today because I want 5,000 kgs of output today only or tomorrow only. In order to mitigate that, I would have maintained something called as buffer stock or safety stock. Yeah. And this I would have kept it somewhere separated, not with my regular inventory. Okay. What are the formulas to calculate all this? See, you can expect theory question on all this or as numerical. Chances of asking numerical is more. Yeah. Yes. Sure. And guys, here also in the formula, whatever we use, please be careful. Okay, first let us discuss about it. Lead time or reorder period means what? Once I place the order, how long will it take to deliver the goods? Yeah, assume I placed the order today. You took 5 days to deliver it to me. This 5 days is called lead time or reorder period. Once I place the order, how long will you take it to deliver? Okay, yes. Who are you? Supplier. Who am I? Purchaser or recipient. Okay. Now during these 5 days, will I sit idle? No. I will continue with my production. And for this 5 days, whatever raw material I require is called what? Lead time consumption. Lead time consumption, guys. Assume in this 5 days, I will use 100 kgs per day. What is the lead time consumption? 500 kgs. Clear? That is why we will maintain reorder level and all. Clear? So that even if it takes time for you to deliver, I will not stop my show. I will continue with my shows. Lead time consumption. Materials consumed during the lead time are called lead time consumption. Clear? Yes. Now, consumption we can take it as 3, guys. Minimum consumption, maximum consumption, average consumption. Minimum means, sir, minimum, how much we consume. Maximum means how much maximum we will consume. Average in between this. Clear? Lead time also we can take it as minimum, maximum, average. Clear? Sometimes they will give like this. For example, 2 to 6 weeks. 2 to 6 weeks. So minimum is 2, maximum is 6 weeks, average is what? 6 plus 2 whole divided by 2. 6 plus 2 whole divided by 2, 4. Got it? That is average lead time. Clear? And guys, please listen here. Here, sir, should we convert this and all to annual? No. Clear? Listen. Assume consumption is given in weeks. Consumption per week. Even lead time will be given in weeks. Assume consumption is given per day. Even lead time will be given in days. Like 1 day, 2 day, 3 day length. Clear? So this two has to match with the same time period. You don't convert it for per annum and all. Like how I told for yoke. Here it is not required. But most of the time they will give it for equivalent time. Clear? I repeat. If consumption is given per day, even lead time will be given in days. Like 2 days, 5 days and all. If consumption is given per week, then even lead time will be given in weeks, like 2 to 4 weeks and all. Yeah. Assume this is given per month. Even the lead time will be given in months. Clear? Yes. So normally this will be straight away given in the question. You need not do anything. Don't worry. Clear? Yes. Reorder stock level. At what stock level a new or fresh order should be placed for raw materials? What is the formula? First formula, always the first choice is maximum consumption into maximum reorder period. Reorder period and lead time is one and the same, guys. Even consumption, no usage, everything is one and the same. Okay, or even requirement. The second formula, guys, listen. If by chance, if you cannot apply this formula, only then apply second formula. First choice is always for this formula. Okay. Yes. What are the second formulas? Average consumption into average lead time plus minimum stock level. Guys, this is nothing but minimum stock level formula, interchange of position. Interchange of position. That's all. Okay, sir. Sir, what is the formula for ROQ? Same as EO. How much quantity to be ordered every time order is placed. Then minimum stock level. What is the formula? First, okay, first, what is it? At least how much stock level to be maintained at all time. What is the formula to calculate it? Reorder level minus average consumption into average lead time. What is the formula to calculate minimum stock level? Come on, repeat with me. Reorder level minus minimum into, sorry, average into average. Now, listen. If you take this to the other side, clear, and bring minimum stock level inside, then we will get this one. Clear? That is what? Same formula is interchange, guys. Position is interchange. That's all. Okay, here the second formula for reorder level. Okay, sir. Then coming to maximum stock level. Guys, maximum should be more than minimum and all. Yes. So here something extra also will come. What is it? Reorder quantity. What is the formula? Reorder level plus reorder quantity minus minimum into minimum. That is minimum consumption into minimum reorder. Okay. Oh. Next, average stock level. First choice is always minimum plus maximum all divided by 2. If that is not possible, then you will use the second formula. What is it? Minimum stock level plus half of reorder quantity. Reorder quantity. And guys, please be careful. Sir, will I get the same answer if I apply both the formulas? No, you will get different answers. But always your first choice should be this one. If that is not possible, only then apply the second one. Next, danger stock level. Stock kept for emergency requirement. My example 2000, which is below the minimum stock level. How do we calculate it? Average consumption into lead time for emergency purchase. If by chance lead time for emergency purchase is not given, we can take minimum lead time. Minimum lead time, guys. Sometime minimum consumption can also be used instead of average consumption. If it is not given or if it is given, can I use instead of average minimum consumption, sir? Yes, that is also fine. Next, buffer stock, or we call it as safety stock. Stock maintained to mitigate sudden demand. If there is any sudden demand to meet that, whatever stock we maintain is called buffer stock or safety stock. You guys also would have kept your money 500 or 1000 somewhere, not safety, full inside the pocket. Okay. You open the wallet, then you will find some amount. That is normal stock. If you have kept something inside pocket, okay, held jogo, we call American. Huh? In that, if you have kept something, that is like safety. Okay, to safeguard your money from your friends, you would have hidden there. Lead time and reorder period is one and the same. Okay, even consumption usage is one and the same. Consumption or usage. And see, sometime in the question, instead of average, they would have used the word normal. Normal. Okay, normal or average is one and the same. Is that clear? Yes. Yeah. Inventory stock out. Sir, what is this inventory stock out means? There is a requirement for raw material, but we don't have raw material. We don't have raw material with us. Guys, see, when we need raw material for production, but we don't have, because we have not maintained all this. Whatever I taught you till now, they didn't follow that in the company. In that case, they may enter into a situation called the stock out. If there is a stock out, our production has to be interrupted. We have to stop for few days, and we cannot deliver the goods on time to the customer. And this will affect our goodwill and reputation. It will also cause loss of market share in the future, because I will lose the customers. I will lose the customer. So this will not only affect you financially, but also it will affect in other ways, guys. Stockout is said to be occurred when an inventory item could not be supplied due to insufficient stock in the store. the stock out situation cost to the entity, not only in financial terms, but also in non-financial terms. Due to stock out, an entity not only loses overhead costs and profit, but reputation, that is goodwill, also due to non-fulfillment of commitment to customers. While deciding on the level of inventory, the trade-off should be done between what? Stock out cost and carrying cost is made so that overall inventory cost can be maintained. Stock out cost means what all you will suffer or what all loss you will suffer when there is no proper quantity of raw material maintained. Now, because to avoid that, if you have maintained huge quantity, then you will incur huge carrying costs. So you have to trade in between deltas. Yes. So this is about inventory stock out. Yeah. Now we will see something called just in time. In short, we call it as GIT, guys. Yes. Just in time is a system where I will purchase the raw material only when I am starting production. And when will I start production is only when I receive the order from the customer. Now let us come reverse. When will I start producing? Only when I receive the order from the customer. When will I purchase the raw material? Only when I am about to start the production. So that means I will not maintain any inventory of raw material, sir. I will not maintain any inventory of raw material or output. When you give me the order, I will start working for it. When I start working for it, I will purchase the raw material and start. So zero inventory of raw material, right? The finished goods. Is it clear? But can every industry or every company follow this? No. Okay. Previously and all Royal Enfield, those companies used to follow this. If you place the order today, you will get the delivery after 6 months, 1 year and all. But now due to huge competition, they also started delivering little early. Even for some car manufacturers also, they had lot of waiting period. Clear? So that is how they used to work. Clear? So now today, due to in the present scenario, due to huge competition, very less companies are able to follow all this. Yeah, yes. What is it? Just in time is a system of inventory management with an approach to have zero inventories. Guys, might be MCQs. All these are the sentences which they may pick for MCQs. In store. According to this approach, material should only be purchased when it is actually required for production. It is also known as demand pull or pull through system of production. Guys, very simple. See, observe the word. Demand pull or pull through means what? Once I get a demand for my output, I will start manufacturing it. Only then I will get my raw materials. Sir, what is opposite to this? Push. See, if I don't have huge demand for my products, I will manufacture and keep it. What will I do? I will push my sales. I will try to create demand for my products. Correct? Huh? That is what many companies do it. Year-end sale, seasonal sale, all those things. They all have huge inventories. To clear that, they will give some offer to you. They will try to what? Push the sales. Push the sales. Whereas this company, whoever is following GIT, they will get the demand first. Only then they will start working for it. There is no push model for them. In this system, production process actually starts after the order for the product is received. Once I am about to start the production, only then I will purchase the raw material. On the basis of relative classification, ABC analysis. Okay, means there are different classification of raw material types. Means whatever raw material I will use in production, I will classify them using the different bases. What are those? First, ABC analysis. Here I will classify the raw material based on what? Value and quantity. So let me see that. ABC analysis. It is a system of inventory control under which inventories are classified into three categories, which is A, B, and C. Means as per this analysis, I am using three types of raw material in my production process. A being the costliest, B is average, C is the cheapest. C is the cheapest. Okay, let me explain with the number, guys. Assume I totally require 10,000 kgs of raw material in a year. 10,000 kgs of raw material in a year. And for that, I am ready to invest 10 lakh. 10 lakh. Okay, sir. Now, how much will I use A kind of raw material? A is the costliest raw material, guys. It is the expensive raw material. So I need to take the proper control of it. So will I use more or less of it? Very less. So quantity would be 10% of 10 kgs. Sorry, 10,000 kgs, like 1000 kgs. 1000 kgs. But for the 1000 kgs only, how much should I invest? 70% of my inventory value. For my inventory, totally I am ready to invest how much? 10 lakh. In that 70% will go to the A itself. That means it would be 1000 here and 7 lakh here. 7 lakh here. Now coming to B category, sir, average. So I will use 20% of my inventory here, and for that we need only 20% inventory value or investment value. Then coming to the last one, cheapest, sir. Cheapest. So that means you will find that only more in the output. Yes, sir. But I will use 70% of my raw material this only, for which there is only 10% investment. For which there is only 10% investment tax, which is around 1 lakh. Which is around 1 lakh. Hope you are getting it. So I repeat, guys. See, we will use maximum, but even for that maximum, the investment is least. So it is the cheapest raw material. So I am least bothered about it. Even if few units are lost, it's okay for me. It's okay for me. Whereas A is the costliest raw material. So as it is costed, I will try to use it as less as possible, which is 10%. But even to use 10%, I have to invest 70% of my inventory value. 70% of my inventory value. Is that, yeah, whereas, so that is why it is costliest or expensive. I need to take precise control of it. I should ensure that not even 1 kg or 2 kg is lost. Whereas B is average, 2020. 2020. Sir, guys, try to remember A or C. If you remember one, the other one is opposite. The other one is opposite. Hope you understood. Especially C is easy to remember. Cheapest. Okay. So in that case, you will use more quantity. So cost wise cheap, but quantity wise you will use more. Okay. So ABC done. Next one. Fast, slow, and non-moving items. Here we will classify the raw material based on what? Inventory turnover. Inventory turnover means how fast are you using it? How fast are you using it? Okay. Fast moving, slow moving, and non-moving. Fast moving, never nearer to the store issue point. We will be using it very frequently and we will review it whenever required. Place an order for it. I should ensure, because I will be using it continuously, I should ensure that we have adequate quantity with us. Then coming to slow moving, little far to the store issue point. We will review it periodically and we will also purchase it once in a while. Whereas non-moving, sir, I have purchased and kept it in my godown, but as of now I am not using it. So kept for disposal, and you can also create a provision for it. Future expected loss. Sir, can I create a provision for it? Yes. As per conservatism concept or prudence concept, can I create a provision for it? Yes. And even when you guys are studying and all, you follow this correct now. When you are studying Chinmay, okay, whatever you use frequently, calculator and all, you would have kept near to you. Okay, that is like fast moving. Slow moving means maybe ICI material. If you want, you will go get it. You would have kept it somewhere, okay, in the box. Okay, almost 2 boxes you require to store that. Okay, so you would have kept it whenever you want, you will go and get it. Like that. Non-moving is like your foundation books as of now. Clear? Yes. So if required, you can put. CA is the exams where even after the exam you will not put the goods for, or goods in the sense materials for scrap. Why, sir? Till the results come, thing is assured. No guarantee, sir. Sir, vital, essential, and desirable. In short, we call it as VED. Here we will classify based on what? Importance. Importance of the inventory. Under the system of inventory analysis, inventories are classified on the basis of criticality. Criticality means what, Trupti? Importance. How important it is in the production process, for the production function and final product. Generally, this classification is done for spare parts which are used for production. So here there are 3 types. What are those, sir? Vital, very important. Without that, can I complete my production, sir? No, not at all possible. If there is unavailability, means if this raw material is not available, then production has to stop. Production has to stop. Then review or control, strictly controlled by setting reorder rule. We should ensure that we will not run out of stock, because without that we cannot produce our output. Then essential. See, even if this is unavailable, still I can produce, but that will lead to substandardization. Means we will compromise with our quality of our output. So you can see cost, substandardization and loss of efficiency in the production process means even if this raw material is not available, I can use something else and complete my production, but it will not be up to the mark. It will not be up to the mark. Reviewed periodically. Whereas last one is desirable. Sir, I am using it as an option. Even if this raw material is not available, can I still do the production? Yes. Will it be up to the mark? Yes. Does not cause any production or efficiency loss. Optional in nature. If I want, I will use it. If not, also it's fine. Clear? Yes. So vital means it will play a vital role in my production. Without that, I will not be able to produce my output. Whereas essential is required, but not mandatory. Instead of that, can I use any other substitute product? Yes. But maybe I will compromise with the quality of output. Next. High cost, medium cost and low cost inventory. Here we will classify the inventory based on what guys? Price of the raw material. Clear? See, for ABC analysis, we will use both quantity as well as investment value as a overall cost. Overall cost. That is my total investment in the inventory is how much? 10. Okay. Out of 10 lakh, how much to invest for ABC, we will see. Clear? Whereas, in case of high cost, medium cost and low cost inventory, sir, whichever raw material is the highest price per kg, that is high cost. Whichever raw material per kg is the cheapest, that is the low cost. Per unit raw material wise, not as an overall inventory. The raw material wise, sir, which is the costliest? High cost. Cheapest? Low cost. And in between is the medium cost. For example, assume guys, I have X, Y, Z raw material. The cost of each unit of X, Y, Z is here 100, 120, 150. Which is the costliest? High value item. Z. Sir, which is the low cost item? X. Got it? Got it. Medium is Y. Okay, sir. Under this system, inventory is classified on the basis of cost of an individual item, not overall. Individual. What is the price of each individual item? A range of cost is used to classify the inventory items into three categories. High cost inventories are given more priority for control, whereas medium cost or low cost items are comparatively given lesser priority. Because even if I lose few things, it's okay for me to bear the loss. Sukrita and Co, be attentive. Physical control. Two bin system. Guys, under two bin system, the raw material will be stored in the two bin. Sir, first of all, what is bin, sir? Container where we will store the raw material, guys. So I would have stored the raw material in two bins, not dustbin. Container. Okay, container. Listen. What happened, Chinmay? This is the smaller bin. This is the bigger bin. Okay. Listen. In smaller bin, we would have stored reorder level. Whereas in the bigger bin, all the remaining raw material will be stored. Whenever the raw material has to be issued to production, we will issue it from here. We will issue it from here. When the larger bin become empty, we are supposed to issue from smaller bin. Immediately we will place an order. We will place an order. So simple. There will be two bin, one smaller bin, one larger bin. In smaller bin, we will record how much inventory? Reorder. All the remaining quantities put where? In the larger bin. And whenever there is an issue, from where it will be issued? From larger bin. And as soon as this become empty, what do? We will start issuing from smaller bin. Place all. Okay, and this and all is a old technique, guys. Okay, because company should know that we have reached reorder level now, they used to follow this technique. Now and all we have software. Clear? Hope you understood. Okay, even in your family and your mother, sometimes you would have kept two boxes of same item. Okay, one box become empty, she will place the order for whom? Husband or you? Children are there, empty sitting at home. Go get it. Clear? So why? To fill the other ones. It is like that. Next, establishment of systems of budget. That is to have a proper control over the inventory and all. The company would have set a budget. Means this year you are supposed to use so much raw material in the production process. And if you are using multiple types of raw material, then each type of raw material, how much should you use? How much should you use? Okay. Next, use of perpetual inventory records and continuous stock verification. Perpetual inventory records represent a system of records maintained by stores department. It is a record maintained by stores department. Even cost accounting department also will maintain, which is actually called stores data. Okay. It in fact includes three things. What is it, sir? Perpetual inventory records includes bin card, stock control card, and stores ledger. Guys, bin card record only the quantity, whereas stores ledger record both quantity as well as value. Okay, bin card is kept inside the store, whereas stores ledger, name is stores ledger, but it is maintained by whom? Cost accounting department. So it is kept outside the store. Bin card is maintained by storekeeper, whereas stores ledger is maintained by cost accounting department. Okay. In bin card, the postings or the recordings would be done as and when the transaction happens. Whenever we purchase, immediately on the same day we record it in the bin card. And whenever there is an issue, immediately we will record it in the bin card. Whereas in the stores ledger, sir, we will record only after the transaction takes place. Can we record it periodically, maybe like once in a week, once in 10 days, or once in a month? Can I record? Yes. Whereas in the bin card, it will be recorded on the same day. Last one. Interdepartmental transfer do not appear in the bin card. If there is any transfer of material from one department to another department, will we record it in the bin card? No. Whereas in the stores ledger, do we record it? Yes. Continuous stock verification means whatever record we have maintained, especially the stores ledger is important. Whatever records we maintain through stores ledger, this is as per the records. We need to cross check with the physical inventory. Is it matching? For example, assume as per stores ledger, today the closing stock is supposed to be 250 units. We will go and check in the inventory. Actually, 250 units is there. Yeah. So this is called continuous stock verification. Even in your auditing, you would have seen the inventory verification, physical verification of inventory. So whether the inventory physically is matching with my books inventory. Yes. Now, use of control ratios. Ratio analysis. Input output ratio means, guys, assume 2:1. That means for each unit of output, we are supposed to use 2 kgs of raw material. Sir, what if it is 5:1? For each unit of output, we are supposed to use 5 units of raw material. This is called input output ratio. Next, inventory turnover ratio. Guys, inventory turnover ratio will tell how fast I am using the inventory. Higher inventory turnover ratio is always better. We have two formulas to calculate this. First one, inventory turnover ratio. The formula is cost of material consumed divided by average. And higher is always better, guys. Higher is always better means you are using that raw material in a faster way. Clear? Yes. Sir, how do I get the numerator? Cost of material consumed. Opening stock plus purchases. And if there is any purchase related expenses also, you will add minus closing stock. Minus closing stock. Yes, sir. And please be careful, guys. Here, cost of material consumed should always be more. More is always better. For example, here you got, assume, let me take it like this. This is 10 lakh and this is 5 lakh. We call it as 2 times. 2 times. 2 times means the material consumed is 2 times of my average inventory. Average inventory, how do we get it? Opening plus closing whole divided by 2. Okay. Then inventory turnover ratio in days also we can calculate. We can also calculate in days. How is it, sir? Number of days in a year divided by inventory turnover ratio. Assume, guys, you will get it as 365 by 2. 365 by 2. You will get 182.5. 182.5. That means, sir, what is the meaning of it? Once you purchase the inventory, you will take 182.5 days, or let us round it up for 183 days to use it. Okay, sir, too long, sir. Higher is better or lower is better? Lower is better. Lower is better, guys. As per this formula, lower is better. Lower is better means try to use the inventory as early as possible so that your carrying cost would be less. And huge investment would be blocked in your inventory. And by the time, if you're taking so much huge time, by the time you use it, raw material may become outdated also. Obsolescence loss, it may cost too. Hope you got it. Yes. And please be careful. If they ask only inventory turnover ratio, you can go with this formula. If they also ask you to calculate in days, then whatever you have calculated here will become a denominator. Clear? Or else if they are straight away ask this, you need to do this also. Why is that? Because this you need to have it as a denominator. Got it? Yes. Next. When we are preparing the stores ledger, we will record both quantity as well as value. So value at what price? See guys, listen. In stores ledger, we will record what quantity is purchased at what price. We will know this, no problem. Who will record this? The cost accounting department. Clear? Yes. Listen. Next, when we are issuing, we know the quantity, but we don't know the price. Why? Because we are not selling it to the outsider. We are not selling it to the outsider. But still, we should record the price. Sir, at what price? That is what the question mark here. At what price should I issue the raw material? That is from stores department to production department, we are issuing the raw material now. At what price should it be issued? Can be decided based on the different methods. The most important methods here is FIFO, LIFO, simple average and weighted average. We also have other methods, but out of all the methods, 4 methods are important guys. Oh, sure. Please be careful. These methods are only to decide the issue price. When materials are issued to production department, a difficulty arises regarding the price at which material issued are to be charged. So we are deciding the issue price. The same type of material may have been purchased in different lots at different times at several different prices. That is where confusion arises. I have purchased different lot on different date at different prices. Now when I am issuing, I should know from where I am issuing. Based on that, I will fix the price. So, first method, cost price method, category. Under that, specific price method. Guys, whenever I have purchased the raw material, I purchased it for a specific purpose. And I know when I am using it, from where I am using it. So, I would have maintained separate lot for each purchase. Assume I have maintained one lot here. When I am issuing from that lot, I know I am issuing from this lot. And what price I have purchased, I will issue also at that price. I will issue also at that price only. So each lot when I have purchased, I would have maintained it separately so that when I am issuing, I know from which lot I am issuing and at what price. Next one is first in, first out method. That is, whatever is purchased first will be issued first. Clear? Whatever is purchased first will be issued first. And this method is suitable in case of falling prices. Why is that? Because when you are when the prices are falling, what do you consume first? The one which you have purchased at the highest price. Always try to keep your cost of material consumed more and try to shift it to the customer. Try to shift it to the customer. Clear? Yes, sir. The closing stock under FIFO method will be reflected at the recent purchase price. Whereas under LIFO, last in, first out, means whatever I have purchased recently or last, I will issue that. I will issue that first. And this method is suitable when the prices are increasing. That is in the situation of inflation. Why, sir? Guys, assume I have made 3 purchases at 6 rupees, 7 rupees, 8 rupees. When I am issuing, which one will I first issue? 8 rupees. So cost of material consumed would be more. Why, sir? Try to shift it to the customer as early as possible. Clear? I repeat, when the prices are increasing, which method is better? LIFO. When prices are falling, which method is better? FIFO. Because whenever the prices are changing, try to keep your cost of material consumed more and try to shift it to the customer as early as possible. Okay, sir. I will just explain with the question, just a minute. Silence, silence, silence. Listen, listen. See, 40 units at 15 rupees was there. We purchased another 20 units at 16.5. I've just taken the question. Hope you can understand the scenario. Okay. It is like this purchase, sales, and all is given here. Okay. I'm not going through the question and all. Already 40 units were there at 15 rupees. We have purchased 20 more at 16.5. Tomorrow, if there is issue, from where will I issue first? From this lot. So 30 units will be issued at how much rupees? 15. My closing stock now will be out of 40, we have issued 30. How much is remaining? 10 at 15. And this 20 will be as it is. 20 at 16.5. Again, there is a purchase of 50 units. Maintain it separately. 10 and 20 as it is. Plus 15. Plus 50 at 17.5. We have 3 lots. Tomorrow, if there is issue, 20 units we are issuing. First issue 10 from here. Another 10 from here. So out of 20, we have issued only 10. That means remaining 10 is closing stock. So 10 at 16.5. Yeah, and 50 will be as it is. 50 would be as it is. Again, tomorrow there is a issue of 40 units. From where will I issue? First, 10 out of here. Remaining 30 from here. So closing stock is out of 50, we have issued 30. Remaining is how much? 20. Which method is this? FIFO. First in, first. Yeah. And if they ask you to calculate what is the cost of material consumed, look at the format. The date, under receipts, 3 columns, quantity, price, amount, under issues, quantity, price, amount, closing balance, quantity, price, amount. Clear? Yes. If they ask you to calculate what is the cost of material issued or consumed, you need to just total up this column. Okay, you need to just total up this column. I have written here cost of material issued. Same way, if they ask you what is the closing stock, don't total up here. Okay, as on 6th December, what is the closing stock? 342. What is the quantity? 20. Under every method, quantity will remain same, guys. There is no change in these two quantities, but only the values will change. These two values will change. Yeah. Now coming to LIFO. Last in, first out. Sir, I had 20 plus 20 more, 40 I had, 20 more purchase. When I am issuing tomorrow 30 units, first I will issue from here at 16.5. Remaining 10 from here. So out of 40, 10 is issued. Remaining is how much? 30. So 30 at 15. 30 units at 15. Next, again there is a purchase of 50 units. 30 plus 50, both we have. 2 lots we have. Tomorrow when there is an issue, I have to issue from where? 50 lots. At what price? 17.1. Okay. 342. So that means closing stock. This will be as it is. I have not issued. And from 50, I have issued only 20. Remaining is how much, sir? 30 at 17.1. And again there is a issue of, yes, issue of how much? 20. Okay, 20 issue is done. Next, there is a issue of 40. 40, first I will issue 30. Then remaining 10 is from this lot. So out of this lot I have issued only 10. Remaining is how much? 20. At what price? 50. 15. Hope you understand. Yeah, yes, sir. So here also cost of material consumed and closing stock will not be same, but quantity you can observe. It would be same. It would be same, guys. Oh, coming back. Average price methods. This is also important. Simple average price method. Guys, simple average means what, sir? You need to just take an average of price. Should we consider the quantity while calculating the average price? No, only the price. Now you assume you have 2 lots. On the date of issue, you have 2 lots. You need to just calculate the average price of those 2 lots. Assume you have 3 lots. You need to just calculate the average price of 3 lots. Clear? Yes. And please be careful. Here, while calculating the average price, we ignore the quantity. We take only the average of the prices. Okay. But one thing, guys, for pricing, we follow simple average. But for the movement of goods, we follow FIFO. Means, how will the inventory move out of the store to production means in the order of FIFO. In the order of FIFO. Okay, sir. Let me explain it. Listen, listen. Simple average. See, simple average, slightly the format will change. Here, the price will not. Last, under closing balance, price will not. Don't have price column here. Okay, have it here. That is the main column here, guys. That is where we will decide the simple average price. Yeah, this column is very important under simple average price. Okay. Now, sir, I had 40 at 600 rupees. Take it. Price is not required here. Then 20 more I purchased for 330. So 40 plus 20 will become 60. Here no need to maintain separate lots. Merge both, no problem. Okay. Under P4 LIFO, you have to maintain separate loss, but here not required. Okay. What is my total cost? 600 plus 330, 930. Okay, sir. Tomorrow there is a issue. When I'm issuing, how many lots are there with me? Two lots. Both the lots are there. Take a simple average price of this. Okay, that is 15 plus 16.5 whole divided by 2, 15.75. So what is the simple average price? 15.75 at which I will issue. So 13 to 15.75 will give you 473. Closing stock now. 60 minus 30, 30. 930 minus 473, 457. 457. Hope you got it. Next, we have a purchase of 50 units. So 30 plus 50, 80. 457 plus 855, it is 131. Okay. Again, next day there is an issue. How many units? 20. Now first check how many lots you have. This 40 lots, is it fully issued? No. Out of 40, you have issued only 30. I told you for physical movement of inventory, you have to follow FIFO. So out of 40, still 10 is left. Correct. Now you have issued 30, that means still 10 is left. For physical movement of goods, what do you follow? FIFO. So do we still have 10 with this? Yes. I will use different color. Just a minute. Okay. Still 10 is left here. Plus these two lots are also. So I need to take a simple average of all three. Whichever lots are there with me on the date of issue, I need to take the simple average of, which comes to 15 plus 16.5 plus 17.1 whole divided by 3. Whole divided by 3. We get a simple average price of 16.2. Multiply 20 with 16.2, 324. Cost of material issued. Now closing stock would be how much? Previous day 80 was there. Now we have issued 20, 60. Then 1312 minus cost of issue 324. You will get 988. Okay. Guys, this 20 I would have issued from where? Listen. This 20 I would have issued from where? 10 from here, 10 from here. Correct. After issuing 10, how much is still left here? 10. Hope you are getting it. Clear? Yes. For issuing, for following quantity, please follow people. Okay. I am repeating again because you should not get confused. Next day when I am issuing 40 units, how many lots are with me? This lot, this lot. Take the simple average of this. Sir, what about the first lot? It is already over. Kali. Done and dusted. You need not take that for calculating the simple average price. So only take the average of this two, which you will get 16.8. So multiply 40 with 16.8, you will get 672. Okay, sir. So 60 minus 40 will give you 20. Okay, yes. So what is the cost? 988 minus 672 will give you 316. 316, guys. Is that clear? So here what is the cost of material issued or consumed? 1469 and closing stock is 316, which is nothing but this. Clear? Yes. Next method. Weighted average pricing. Guys, here we will calculate the weighted average price considering both price as well as quantity. We will find the total cost divided by total quantity. Total cost divided by total quantity. What do you get, sir? Weighted average prices. So you can see here. Unlike simple average price method, this method gives due weightage to quantities also. Under this method, issue price is calculated dividing sum of products of price and quantity by total number of quantity. Assume we have 3 lots. How do we calculate total cost? Sir, P1 into Q1 plus P2 into Q2 plus P3 into Q3. This is the total cost divided by total quantity. How do we get it? Q1 plus Q2 plus Q3. That's all. What do we get here, sir? Weighted average price. Weighted average. Got it? Yes. Let me explain it in the question. Weighted average price. Guys, here you need to have price column under closing balance. That is the important column. Yeah, under simple average, we didn't had it. We didn't have price column. Whereas the price under issues was the important column. Whereas here the weighted average, under weighted average, price under closing balance is the most important column. I am not the start there. Listen. How do we do it? Sir, we had 40 units at 15. Okay. We purchased 20 more at 16.5. What would be my total cost? What quantity first? 40 plus 20, 60. Total cost 600 plus 330, 930. Now, how do we get weighted average price? Total cost divided by total quantity. 930 divided by 60. Weighted average price 15.5. Tomorrow, if there is a issue, we will issue at what price? 15.5. Got it. So tomorrow there is an issue of 30 units. At what price will we issue? 15.5. Did we decide now? No, it's already available. Yes, we will take it. Clear. So that is why under this method, this column plays a very important role. Okay. So we get 465 cost of material issued on 3rd December. What is the closing stock? 60 minus 30. 30. 930 minus 465. You will get 465. See, you can multiply 30 with 15.5 also. You will get same. But when this is decimal, no, you might get some difference. So in that case, in order to avoid that difference, what you do is you do 930 minus 465. So that you will get the exact figures. You will not get any difference. Okay, that is only when weighted average price is in decimals. Next day there is a purchase of 50 units at 17.5 total. We already had 30 plus 50, 80. Closing stock on previous day was 465 plus 855. We will get 1320. Divide each other. You will get 16.5. 16.5. Tomorrow, if there is an issue, we will issue at what price? 16.5. 16.5. Hope you are getting it. Okay, actually, simple average and weighted average is easy because LIFO, FIFO, and all more time taking. You have to maintain a separate lot for each purchase. There. Got it? Yes, sir. Fine. Sure. So we have discussed all this. Simple average, weighted average done. Guys, from exam point of view, if there is a numerical question, they may ask which and all. P4, V4, simple average or weighted average. In practical life, sir, what is more important, weighted average or P4? LIFO is never followed. Okay, as per accounting standard also, LIFO is not allowed. Hope you are aware of it. Yeah, yes, sir. Sure. Market price methods. This is not normally followed in real life, but still, as a part of your academics, it is there. You will see what is it. Replacement price method. Under this method, material issued are valued at replacement cost of the items. Means, I have already purchased 100 kgs. If I replace it now, what is the cost I will incur? Okay, means if I give that and buy new assets or new goods, what is the cost I will incur? That is called replacement cost. Guys, in this scenario, what happens? Store ledger will show profit or loss. Assume I had purchased 100 units at 10 rupees. I would have recorded the receipts. Clear. Now I will record the issue. Assume 100 units. If I purchase today, the cost is 11 rupees. I will record it at replacement cost. Yeah. Listen. I have recorded the receipts at 100 rupees 10, which I have purchased. When I am issuing, Nisarga, look here. Huh? I am also there in the classroom. Huh? Chalo. Now, assume guys, if I purchase the same material today, it is 11 rupees. So I will record the issue at what price? 11 rupees. Now there is a difference between 10 and 11. See, I purchased and recorded the purchase at 10 rupees. I am issuing it at 11 rupees. So, did I sell it outside? No. By purchasing and issuing to the production department within the organization, I am making 1 rupee profit. Is it possible? No. Okay, 1 rupee profit or loss? So, is it possible, sir? So, when we are following replacement method, the store's ledger will show profit or loss. Profit or loss, which is actually not right because we are not selling it to the outsiders. Next, realizable price method. What is it? Realizable price means a price at which the material to be issued can be sold in the market. Means if I am selling it today, I am not selling. My business is not to sell raw material. My business is to sell output. But if I sell, what is the price I will get? I will record the issue on that price. I will record the issue on that price. Even here, my store's ledger will show profit or loss, which is inappropriate. Which is inappropriate. Why, sir? By issuing to the production department, can I make profit or loss? No, because production department also belongs to whom? Company. So can we make profit by keeping for ourselves? No. Can we suffer loss by keeping the raw material ourselves? No loss. Sure. Next, coming to notional price methods. The first one is standard price method. Here the top level management will fix the price at which we need to issue the materials to the production department. Now assume the top level management has fixed 10 rupees per unit. We need to issue, whenever we are issuing the raw material, we have to issue it at 10 rupees. See, stores department or production department will not decide this price. Who will decide this price? Top level management. Next, inflated price method. In case material suffers loss in weight due to natural or climatic factors, example, evaporation, the issue price of the material is inflated to cover up the loss. Clear? Means due to normal reasons, if there is a loss, automatically the cost of remaining units will go up. Correct. For example, guys, assume my total input was 100, for which cost was 10,000. Now 10 units are lost due to normal loss. So how much is the remaining units? 90. What is the cost per unit? Sir, 10,000 into 90. So automatically the cost of this 90 units, will it go up? Yes, we call it as inflated price method. The price of the raw material will go up only if there is a loss due to normal reasons. Next, reuse price method. Guys, now in the production process, if there is any loss or if there is any wastage, I may remove that materials from my production process and use it for some other purpose. Use it for some other purpose. When I am using it for some other purpose, the value of the material has come down. Yes, I will record it at what price? Lower value. I will record it at a lower price. And here also we may have a loss. Why is that? Because originally when I purchased the raw material, the price was 50 rupees. But when I am reusing it, I am valuing it at 20 rupees. That means indirectly I have booked a loss of how much? 30. I have booked a loss of 30. Yes, we are almost at the end of this chapter. Pay attention, pay attention. We are almost done. Next, valuation of material returned to stores. Returned to stores means who is returning to whom? Production department to stores. Sir, is it purchase returns? No. Guys, please be careful. Stores department would have issued the raw materials to the production department. They didn't find it suitable for production. So what they did? They sent it back. They sent it back to whom? Stores department. Stores department. So stores department has to record it as what? Receipts. They have to record it as receipts. At what price, sir? At what price they issued, at the same price you take. What price you issued, same price you take. Okay, you can see here. Such returns are entered in the receipt column. Actually, is it a fresh purchases? No. What we gave is coming back. But we don't have any separate column to record this. Where do we record it? As receipt only. Such returns are entered in the receipt column at the price at which they were originally issued. But it will not be included in the cost of material issued or consumed. Guys, listen. 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 We have issued on 5th December 20 units at 17.1. Assume they returned this back. Production department gave it back. So we need to record it at what price? Same price. As what? Issue. As issue. And in the future, when there is a issue, guys, if nothing is given, first issue from here. Irrespective of which method is followed, issue from here first. And listen, tomorrow there is a issue. First I will issue from where? 20 at 17.5, 340. Now listen, in the consumed column, 2 times it is recorded. Once when I issued originally, it came back. Again I reissued. Clear? In that case, while calculating the cost of material consumed, please don't include this. Please don't include it because it will be double record. While totaling up, please exclude this. Or else do the total but deduct 340. But deduct 340 because it would be recorded twice. Hope you understand. I repeat, when I issued, they gave it back. I need to take it back at what price? At what price did I issue? And tomorrow if there is an issue, from where should I issue? First try to issue from whatever I have returned back. Or else they would have only given in a clarity in the question telling whatever is returned back on 6th December is issued on 8th. They will give a clarity letter. If nothing is mentioned, whichever is the next issue from whatever is written back as. Clear? Irrespective of the method followed. Irrespective of whichever method you follow. Hope you understood. Sir, at what price should I issue? Same. Same, whatever you would have got. Got it now? Yes. This is the returns from production department to stores department. And please be careful while calculating the cost of material consumed. Don't count twice. Only take it once. It will be recorded twice in the issue column. But while counting or while totaling, please consider only once. Yeah. Yes. Next. Returns by stores department to vendor. That is supplier. This is actually purchase returns. I purchased the materials, recorded it, but later I found it. Oh, it is damaged. I am giving it back. Or it is not suitable for me. I am giving it back. In that case, listen, people. Now assume I purchased this now 50 units at 17.5. Next day, assume on 5th, I realize that this is not suitable for me. I am giving it back. When I am giving it back, entire 50 units, I have to record it as what? Issue only. Issue itself. Going back, that's all. Completely forget about it. Completely forget about it. But while counting the cost of material consumed, while checking the total, should I take this 855? No, please ignore it. Please ignore it. Because did we consume this? No, sir, we have given it back. As we don't have a separate column to record purchase returns, we recorded it under what? Issues. But while calculating either the quantity or cost of material consumed, should we take that returns? No, we should not take this, guys. Hope you understood. Here, yes. It is completely going outside the company. You need not worry about what will I do in the future because this is purchase returns. Oh, yes. Let me read it. It should be entered in the issue column at the price at which it was originally purchased and recorded. But it will not be included in the cost of material issued or consumed. Yeah, while calculating the cost of material consumed or issued, please don't consider this. Yes. Next, valuation of shortages during physical verification. Material found short during physical verification should be entered in the issue column. If there is any loss, where do you record it? Issue column. And valued at rate as per the method adopted. Whichever method you are following, you record as per that method. FIFO, LIFO, simple average or weighted average. For abnormal shortage, as if it is an issue. As if it is an issue, you record. Where, sir? Under the issue column. But it will not be included in cost of material issued or consumed. Why, sir? Because we need to separately debit it to costing, profit and loss account. Sir, what about normal loss? Guys, please pay attention. This and all is important. If shortage is due to normal reasons, then only quantity will be entered under issue column and cost of which will be absorbed by whom? The remaining good units. Remaining good units. Let me explain this just a minute. Guys, see in this question, at the end we have normal loss and abnormal loss. Normal loss and abnormal loss. This is like question number, just a minute. What we have solved in the regular class. Question number 16. If you already worked out this, then pay attention. Others also can understand. It is the concept you can understand. Don't worry. Now there is an abnormal loss of 900 units. Where am I recording? Under issues. Under issues. Sir, what is the price? If there was an issue, at what price you would have issued? As per the method followed, same price we follow. As if it is an issue, record. As per the method you are following, decide the price. So here it is weighted average price. So we have taken the same price. Yeah, you will record the amount also. Now guys, while calculating the cost of material consumed, will we take this figure? No. Why? Because this is not a part of cost of material consumed. You need to debit it separately to costing P&L account. You need to separately debit it to costing P&L account. You show it here. But if they ask you to calculate what is the cost of material consumed, what is the cost of material issued, don't take this. Show it in the source ledger. Okay. But don't include it in the cost of material issued. Hope you got it. Clear? Or else if they ask you what is the amount to be debited to costing P&L account, you need to tell this figure. You need to tell this figure. Now, there is also a normal loss of 300 units. You can observe it. It is recorded only in quantity. No price, no amount. Why, sir? Simple. Do we value the normal loss separately? No. What do? We will just reduce it from the quantity. Now, after reducing from the quantity, 6,900 becomes 6,600. Automatically, you can see the price went. The price of the 6,600 units went inflated. Hope you understood. That is the cost of good units went up. Whatever is the cost of this normal loss units will be absorbed by remaining units. Observe the presentation there. Abnormal loss means you will record everything under issue, including the price and amount. Whereas if it is a normal loss, only quantity. Only quantity. No price, no amount. Hope you got it. Got it? Yes. Please be careful, especially with these returns and guys, teach about this returns and loss treatment. Even in ICA material, they are not given detailed explanation. But in the questions, they are asking. In the question, one or two adjustments will be on this. So please be careful with this. Okay, last part. Tired? Even I am tired. Listen, it's okay. Treatment of losses. When it comes to material, there are 4 different types. Hey, Rohit, straight up. Sit straight. There are 4 different types of losses. What are those? One by one we will see. Waste, scrap, spoilage, defectives. I have made one diagram for this. I will explain to that. This is the production process, manufacturing process. Okay. This is where I will put my input into production process and at the end I will get the output. Clear? Yes. Now go down is a place where I will store my waste. Correct? Now, this is how you will draw your in school and whenever there is a drawing competition, this is fixed. Correct? Now, next to this one tree. Okay. And above this one or two birds like this. This is the best I can draw. Okay. I didn't get any award in drawing in school. Chill. Adjust ಮಾಡ್ಕೊಳ್ಳಿ ಇಲ್ಲಿ ಗ್ರಾಸ್ ಎಲ್ಲ ಇರುತ್ತೆ ಆಬ್ವಿಯಸ್ಲಿ ಇಲ್ಲಿ ನಾಯಿ ಪ್ರೇಮಿಗಳಾದ್ರೆ ಇಲ್ಲೊಂದು ನಾಯಿ ಇದೆ ಚಲನಾ I just rather like don't ask me, sir, is this that organ? Listen. Okay. Godown is the place where you will store the raw material. If I have lost any raw material in the godown itself, at the storage process, we call it as waste. In the storage process itself, we have lost. Or else maybe in the initial stage of production, we call that as waste. Okay. Next, sir, raw material I have introduced into the production process. In the beginning of the production process itself, we lost some things. We call that as scrap. We can put both of this for a scrap and get some minimum value, guys, which we call as scrap value. You know, na? Yes. Hope you understood. Waste is normally which is something which is lost during the storage or even at the beginning of the production process. Scrap is also something which is lost always at the beginning of the production process. And if it is in the good condition, sometimes they will also reintroduce into the production process. If it is in a good condition. Got it? Now, at the end of the manufacturing process, we have 3 possibilities. If I have produced good units, which is ready to market, we will sell it in the market. Or if it is damaged, we either call it as spoilage or defective. Check whether it is spoilage or defective. Sir, when do we call it as spoilage? I cannot rectify it. Okay, it is completely damaged. Now I cannot make it as good units. So that is called spoilage. Whereas defective, it is damaged. But if I incur some extra cost, I can rectify it. So by incurring some additional cost, I can rectify it and sell it in the market at normal selling price. So both of this I can sell it in the market, but this without any additional efforts. Whereas this I need to rectify it by incurring some additional cost. Hope you understood. Clear? This is a small differences between each of them. Clear? This too is normally in the form of inputs itself, whereas this too will be in the form of outputs. Hope you got it. Just observe the diagram or whatever I give an example. Try to understand which loss will happen when. That is important. Trupti got it? Trupti aita? Sure. Now, when we have any of these losses, guys, we need to identify whether it is normal or abnormal. If it is normal loss, whatever is the cost of normal loss will be absorbed by good units. That is remaining units. Whereas if it is abnormal loss, it will always be valued separately and debited to costing, profit and loss account. Got it? That's all for the day. Bye. Take care. Yes, students. Now we will revise the concepts from chapter 3, which talks about the labor cost or employee cost. Small chapter when compared to material. Yes. Guys, now in the previous chapter, we learned that, sir, raw material is the basic thing with which the manufacturing will start. Without raw material or without input, can we manufacture our output? No, sir. But now, to convert our raw material into output, sir, there is a production process. I need people to convert my raw material into output. They are called as laborers or workers or employees. Actually, in real world, guys, laborers and employees are different. But for costing subject, they both are same. They may use the word labor, workers, employees, everything is one and the same. And whatever we pay to them, we might be called as wages, salary. One and the same. Clear? And for the company, what they pay to the workers is a cost. Whereas for the workers, it is an earnings. Two different point of view. Correct? Now, even in income tax, you will learn. Salary head, you will learn from whose point of view? Employee point of view. What is his earnings? What and all he earned from his employer under the employer-employee relationship. Correct? Section 15, which is a charging section for salary head, will tell anything which employee has received from his employer under employer-employee relationship is taxable on due or receipt basis, whichever is earlier, which includes monetary benefits as well as non-monetary benefits, which we call it as perquisites. Clear? Yes, sir. And when we are, whatever employer paid to employee is taxable in the hands of employee under the head salary. Now, same thing can be claimed as expenses by the employer, which you would have learned under the head PGB. Is it allowed for the employer as an expenses? So that you would have learned in PGBP head. Correct? Now, can employer claim it as an expenses or not? Same thing here. Guys, when question are asked under the costing on the employee cost or labor cost, they may ask you the question, calculate the earnings of the worker. Same thing, that is from worker's point of view. Or else they may ask you to calculate what is the amount of labor cost. Question is same, but from two different angles. That's all. Clear? The answer would remain same only, guys. Clear? So from company point of view or from employer point of view, it is a cost. Whereas from employee point of view, it is a earnings. Got it? Yes. But there are different words like CTC, okay, cost to company and take home salary. There is a difference between both of this. Okay, see, normally what companies will disclose is CTC. Assume CTC is 12 lakh. You will feel like, 1 lakh salary every month I will get, it will credit to my bank account and that. But once you work, when the salary is credited to your bank account, you will understand 1 lakh is not credited. Assume on an estimation, 80,000 is credited to you. You will be shocked. Okay, you will wait maybe for one more month. That maybe first month, no, they have deducted some amount. Second month also same amount. Later you will ask, sir, employer or HR team, you will call and ask, you told 1 lakh per month, no. They will explain, this is CTC, sir. But what you take home is different, sir. Because after few deductions, the employee's contribution to PF, that contribution, this contribution, and even under income tax, if TDS is applicable, they would have deducted everything. Remaining, you will get it. That is like take home salary. Clear? So two different words are there. That is in reality or in industry. But for costing and all, do we use the word CTC like cost to company or like take home salary and all, sir? No. They will just ask you to calculate the cost from employer point of view, that is from company point of view, or earnings of the workers. Okay, so we'll start with labor or employee cost. Guys, whoever is working in the organization, they are called laborers or workers. Whatever we pay them in the form of monetary or non-monetary benefits, we call that as labor cost. Labor cost or wages. And please be careful, guys. Even here, they will not differentiate like in income tax, especially under salary rate, perquisite valuations are biggest challenge, sir. Here. So will they ask the calculations like that and all here? No. But just to know that anything which employee receives is an income for him, including purposes. Clear? So here wages includes everything paid by the employer. Okay, that is both monetary as well as non-monetary. Now, direct employee or labor cost. First of all, who is direct labor? Direct labor is the one who is engaged in the production or manufacturing. We call them as direct labor. They are straight away engaged in production, and I can tell for each and every unit of output what is the labor cost we are incurring. For example, for each unit of output, assume the worker is supposed to work for 5 hours. And for each hour, I need to pay them 500 rupees. What is the labor cost per unit? 2500. 2500. So can I tell for each and every unit what is the labor cost I am incurring? Yes. So we call this as direct labor cost. So what amount we pay to direct labor is called direct labor cost or direct wages. Now who is direct labor? The one who is engaged in production. Next, anyone who is not engaged directly in the production, maybe they are supporting the production, but they are not engaged in production. We call them as indirect labor. And anything paid to them is called indirect labor cost. And please be careful, factory is a place where production happens. In factory, both direct labor as well as indirect labor might be there. Clear? So if they are directly engaged in production, direct labor. If not, they are supporting like supervisor, safety, assume factory security guard. All these people will come under, even storekeeper. All these people will come under what? The indirect. And outside the factory, that is in office, marketing, administration, anyone working, whatever salary we pay them, always fall under indirect. Always fall under indirect tax. Later, we will see the classification for the purpose of cost sheet, that is production overhead, office and administrative overhead, selling and distribution overhead. There we will classify separately. But any salary paid to the workers who are not engaged in production is always indirect in nature. Is always indirect in nature, sir. Okay. Next, coming to timekeeping. Sir, what is timekeeping? Now, for an employee, proper track record has to be there. Clear, na? Yes. Because what if you guys join the employment? Your employer will be paying you for 9 hours, but you will go after 2 hours. Login time is 9 o'clock. You will reach the office by 11 o'clock. Why? Sir, signaling. Traffic was clear. So, to ensure that you are coming on time, you are leaving the office on time, the employer should have some system called timekeeping, where they will record the login time and logout time. Yeah, that is nothing but timekeeping, guys. So let me read that. It refers to the maintenance of recording of whom? Attendance of employee. That is the total time spent by employees in a factory. Especially some companies are doing this also. If you come late, they will deduct the salary. They will deduct the salary. Okay, maybe the big companies or big four companies and all may not do it. Okay, you might compensate. For example, you went 1 hour late. They will ask you to leave 1 hour late in the evening. Clear? Or else some companies even 5 minutes late, 1 hour salary cut, 1 hour pay cut, or half day pay cut. Amrita. Seriously, some companies will do that. Please be careful. You don't get into that trouble. Sure. That is the total time spent by the employees in a factory. Because based on this, they will decide the pay guys, the salary to be paid. What are the methods of timekeeping? There are various methods of timekeeping which may be categorized into manual. Under manual, attendance register method, metal disc or token method. Attendance register method means like what you guys do. Okay, but in the factory and all, when you are entering itself near the security guard, they would have kept the attendance register. You have to enter the in time, and when you are going out, you have to enter the out time and see sign it. Clear? So it is more of manual or physical. Okay, sir. Then coming to another one is metal disc or token method means, guys, every employee will be given a token, or ID. When you are getting into the factory, you have to give that to the security guard. They will enter. Okay, this token came at what time? Okay, and when you are going back, you have to collect it. You have to collect it. All these are old method, but still in some of the factory, not in office, in some of the factory, they might be following even today. Clear? Yes, sir. Because if you introduce biometric recognition and all in factory, it will be difficult for them. Because whoever is working in factory, maybe most of them will not be having education. Clear? So if you introduce technology and all, it becomes difficult for them to handle. Okay. Then the mechanical methods normally used in offices, guys. That is punch card attendance or biometric attendance system. Biometric might be your thumb impression or maybe eye retina or face recognition in your office. Yeah. Yes. Then coming to time booking. Time booking is different. Time keeping is different. Time booking means we are recording how much time is spent to complete each and every job. Now assume all of you are working for a particular job. You completed it in 3 hours, we will record it separately. Guys, we have learned. See, for each job, should I calculate the cost separately? Yes. Now, what is the cost of completing the job? I should know. For that, I should know what is the hours spent by my each worker on this job, so that I can calculate the labor cost for this job separately. Clear? So timekeeping is different, time booking is different, guys. Timekeeping is the attendance of employees. What time you came in, what time you go out. Here we are not bothered about what work you are doing. On what work, how much time you are spending. Whereas in time booking, we are bothered about how much time you are spending for each work or for each job. Clear? So the corporates normally will ask you to maintain something called a time sheet. They will tell you on each assignment how much time you have worked. Clear? Based on that, your boss or even principal will charge the fees to your clients. Clear? So totally we have spent 100 hours for your work or for your service. This is what is our fees. Based on that, even when you join articleship and all, your principal will ask you to maintain time sheets. Okay, you will also become a bonded labor for 2 years. Okay, so you are bound to do that. Okay, it is a part of curriculum. You have to do it. And what is the name? The principal, when you tell from principal, you ask from principal point of view, they will tell this is a learning period. Don't expect I pay in that. Okay, this is learning. You have to pay us. We are teaching you. Okay, but still you will get paid. Don't worry. At least you can manage your own expenses, is what I believe, through your articleship earnings. Where were we? Time booking. Time booking, I repeat. This is the record of employees' time spent on each job or each work. Sir, why are we maintaining this? At the end of the day, we need to calculate what is the cost of completing a particular job or work. For that, we need to know what is the time spent by each worker on this particular job. Then time and motion study. Time and motion study is like how much time is spent for each work and what is the motion. Motion is nothing but movement. For example, assume guys, to produce each and every unit, I will take 5 minutes. I am the worker who is engaged in production. To produce each and every unit, I will take 5 minutes. And once I produce, I have to go keep it in the next room and come back. For this movement, I will take 1 minute. Clear? For production, 5 minutes. For the movement, 1 minute. So this is called time and motion study. Sir, why do the company do this? Is if possible, they will try to reduce the 6 minutes. Totally, we took 6 minutes for each and every unit. Now, so they will try to bring some mechanism where we can reduce this time. Okay, maybe some automated machines or some automation in the production process so that this time can be reduced. Why? Because if time is reduced, the number of units we can produce would be more and more. Then coming to idle time. Sir, what is idle time? For students also, this is the curse. Okay, sir, when you have too much time for your exams, that time will go in idle time. When full fire is there just before the exam, sir, next month exam, full now shortage of time. Because when you add time, you spent it as an ideal time. Now when the exam is very near, you will tell, sir, no time, I am not able to cover. Okay, now whoever would have already decided 2 groups, by the time exam come, ಎರಡು group ಆಗಲ್ಲ. Time is not enough, no? Yes, let me focus on 1 group. And some people, when the exams are closer, no, time is not enough for 1 group also. Let me write next attempt, All India rank. I will aim for All India rank. And if you think you have a time, you will have it. Okay, it's all about your priorities in your life, guys. As of now, as a student, please prioritize your studies. Nothing else is important in your life other than studies. Especially you're doing CA, it demands lot of dedication and time from you guys. Only then you will be getting the results of coming to idle time from costing pattern. Idle time is the time spent by the workers in the organization for which payment is done, but no productivity. No productivity. For example, assume guys, the login time in office is 9 o'clock, logout time is 6 o'clock. Total duration is what? 9 hours. Payment will be made for full 9 hours. Yes. But full 9 hours, will there be a productivity? No. Okay. Now, sir, as soon as we enter the office, first we need to take break. Coffee tea. Okay, I cannot work, sir. Without coffee, I cannot work. You will go for coffee, there chit chat with friends, okay, colleagues for some time, then come and sit. Okay, work for some time, again one more person will come, let's go for break, another break. Okay, come and sit for some other time, work, and another person will come and tell, Uta, lunch. Okay, come, let's go for lunch. Or else, before going to lunch, some discussion will happen. About what? Way to go for lunch. Way to go for lunch. If at all, if you're going outside, if you have got a box, then obviously you have to have that only. Then post lunch immediately you cannot come and sit and work. Why? Because you will be sleepy, na? Body will be heavy. So you will go for a walk, small walk. Then you will finish the walk and you come and sit, work for some time. Then again break, tea break or coffee break or snacks break. Then again come back and work. Now full serious working. Okay, your boss is about to leave the office. You will be like, no, I am working. I am finishing the task. Okay, you should think that how hard you are working. After your boss goes, you will see. Okay, did he leave on time? Immediately. Yeah, yes, I just gave an example. That doesn't mean that everyone are doing this only. So in this process, whatever I told, sir, entire 9 hours was what? Not worked or not productive hours. So in that case, what happens? Assume guys, on an average, the productive time might be around 7 to 7.5 hours, guys. Clear? Or else 6 to 7 hours, we can take it. Clear? So we are getting productivity only for 6 to 7 hours, but payment will be made for 9 hours. Yes, sir. So that 2 hours or 1 hour is called idle time. And obviously, lunch break and all is much required. Clear. We cannot ask the employees to work without lunch, no? Without break, right? Yes, that is required. So there is some classification called normal idle time and abnormal idle time. Sir, what is normal idle time? Which we cannot avoid. We cannot ask the workers to work for full 9 hours continuous. There is some break which has to be taken, especially lunch break and all. So is it normal idle time, sir? Yes. Now, this cannot be avoided. So, do we treat the cost of normal idle time separately? No. We will not treat it separately. Then coming to abnormal idle time. Abnormal idle time means I would have avoided it, but maybe due to organization mistake or errors, it is happening. For example, there is poor electricity. Okay, you have set up a factory in a place where there is no proper electricity supply, or you don't have backup generator, you don't have, or else you have not purchased the raw material on time. Poor planning. Because of that, employees are sitting idle. For that, you have to pay them. Yes, this is called abnormal idle time. Abnormal idle time. And even fire, flood, earthquake, also they have included under the abnormal as per ICS study material also, guys. I felt something that this is not controllable in our hands. Correct? Now, this should have come under the normal, which is unavoidable. But still, maybe what is the thought behind keeping the fire, flood, and earthquake under abnormal idle time is, see, I cannot avoid this, but I can avoid the impact of that on me. Correct? For example, I know there is a few areas which is always flood. Okay, flood is bound to happen in that area. Don't set up your factory there. Better set up in some other area. Correct? You can avoid that situation, right? Yes. Same way, earthquake also. Okay, sir, in some places, earthquake will be keep on happening, sir. Better you have your factory elsewhere. Even fire, if you have taken precautionary measures, then fire might not happen in your organization. Clear? But even after all that, if it happens still, which is beyond your control, then I can tell it is a normal idle time. Then I can tell it as a normal idle time. But from ICI point of view, from your exam point of view, consider them as abnormal only. Because in ICI material also they have considered it as abnormal. Please take care of same thing. Okay, sir. And whenever there is abnormal idle time, whatever wages we have paid for abnormal idle time, we will value it separately and debit it to costing P&L account. We will debit it to costing P&L account. Then coming to overtime. Now normal working hours is 9 hours, but workers are working for 12 hours. So they are working for 3 hours extra. For this 3 hours also, should we pay the same amount? No, sir. The pay for the overtime will be more than the normal time. Assume guys, for normal time, the pay is 100 rupees per hour. Now we have worked for 12 hours. So for that addition 3 hours, they are paying you 150 rupees. So that 150, if I give a breakup, 100 is normal wages, 50 is called overtime premium. Overtime premium. There is a separate treatment for this. 100 will anyway be treated as labor cost, no doubt in that. Sir, what about the treatment of 50 rupees, which we call it as overtime premium? Hope you understood. Overtime is working beyond the normal working. So for overtime, extra amount would be paid. That extra amount we call it as overtime premium. Not entire 150, only that 50 is called overtime premium. The treatment of overtime premium depends on why did we work overtime. Why did we work overtime? Obviously, there will be a reason why we are work overtime. Na? So based on that, we need to decide the treatment of overtime premium, guys, which I have given here. Treatment of overtime premium in cost accounting. Overtime is resorted at the desire of the customer. Now, customer came and requested, please give me the product today only. So I requested my employees to work overtime and complete the task. So it is worked at the desire of the customer. In that case, what do? We will charge the overtime premium to the job only. To the job only means the cost of the job will go up. Accordingly, we will charge more amount to the customer. Correct. Now, customer, you asked us to deliver today only, no? So the price will be little more. Okay, now you tell, okay, sir, please give it. Clear. So what do? The premium we will charge it to the job and we will try to shift it to the customer. Oh, next. Overtime is required to cope up with general production programs or for meeting urgent orders. We were supposed to deliver by the end of this weekend, but we have not completed the task. So last 1 or 2 days, like Friday, Saturday, we asked the workers to work overtime. Okay, and here we are not working overtime regularly. It is irregularly. That is, only when I am not able to meet the work what I was supposed to complete, I will ask my workers to work overtime. In that case, we will treat the we will treat the overtime premium as what? Overhead cost. And we will charge it to the particular department or the cost center, whoever has worked overtime. Now you might ask me, sir, what if we are working regularly overtime throughout the year, sir? Obviously, poor planning, right? Yes. Throughout the year, we are working overtime. Or else, there is a huge demand for our products. We have limited employees, so we are asking them to work overtime throughout the year, regularly. In that case, there is no separate treatment for overtime premium. You will treat it as a part of your wage cost or labor cost. There is no separate treatment for the overtime premium. So in that case, what happens now, guys? The wage rate per hour will inflate because of what? This overtime premium element. Got it? So in simple, for premium, there is no separate treatment if overtime is worked regular. Next, overtime is worked in a department due to the fault of another department. See, production department 1 was supposed to do their work and give it to production department 2. They didn't give it on time to us. So I asked my employees to work overtime to complete the task. So we are working overtime in production department 2 because of the fault of whom? Production department 1. So in that case, whatever wages or overtime premium is paid to the workers of production department 2 has to be charged to production department 2 or 1? 1. Because we work overtime in production department 2 because of the fault of whom? Production department 1. So whatever that overtime premium is there, only that we will charge it to production department 1. Last one. Overtime worked on account of abnormal conditions such as flood, earthquake, etc. In that case, we will treat it as the abnormal cost and transfer it to the costing, profit and loss account. Costing, profit and loss account. Next is job evaluation. Once the job is completed, we will check how well it has been done. Okay, we will rate that. Clear, sir, how is the job is done, especially the product also, guys. Whenever the products are manufactured, they will test it. Is it ready for the market? Because if you send to the market the damaged products, then it will affect your reputation and customer retentionship also. Clear. So before sending the products to the market, you have to test them. Is it ready to use? Is it fit to use? Okay, that is called job evaluation. Last one is merit rating, or we also call it as performance appraisal. Here we will rate what? We will evaluate what? The workers, not the job, the workers. How well the worker is performing. Clear. Who will evaluate it? Normally the manager or top level management. Clear. They will evaluate the workers based on their performance, their behavior. Okay. Everything they will consider. Not only your productivity in the office, but also are you coming on time? Are you going on time? Clear. How are you behaving with your colleagues, with your managers? All those things they will consider and evaluate your performance. And based on this, your hike, increment, or your promotion will be decided. Okay, sir. Then coming to payroll procedure. Payroll procedure, guys, timekeeping department, they will maintain what? Time and attendance of the employees. Log in, log out time and all. Yes, sir. They will send these details to whom? Payroll department. Then HR department will send the employee details to payroll department. Clear? Means who is them? Normally, this will not be sent every year. This will, if they are present employees who are continuing with us for number of years, it will be there with the payroll department. Or if the employees are newly appointed, Then as soon as they're appointed, HR department will send the employee details to the payroll department. So payroll department using the time and the wages, whatever is negotiated by HR department at the time of recruitment, they will calculate the salary to be paid to the workers. They will send it to the cost accounting department. They will record the transaction and pay the amount to the employee. Okay, normally the payment would be done through finance department, guys, or accounting department. Okay, they will record the transaction and they will pay the amount, but after the various deductions. And whatever has been deducted will be deposited with the respective bodies, like PF contribution, ESIC contribution, or if it is a TDS, it will be deposited to income tax department. Got it? So whatever would be deducted from employee's salary has to be deposited with the respective statutory bodies. After deducting this, whatever is the remaining will be paid to the employees. Hope you got it. Next, important factors for the control of employee cost. Most of them we have already covered. Assessment of manpower requirement. This is also very important, guys. Many companies actually fail in this. I have literally seen many companies will appoint the employees and they will make them to sit on bench. Means they will take months together to allocate the job to them. And even during that time, they will pay salary to them. It is a huge loss to the company, right? Yes. So you assess your manpower requirement. Assess your manpower requirement means how many employees is required. Now you already prepared a budget for next year. Now what should be my production? What should be my sales? Based on that, you also assess your manpower requirement. Sir, how many skilled workers we require? Semi-skilled workers we require, or unskilled workers we require? When should we appoint new workers? And we should also have some industry standards of the employees who are leaving the organization. We call it as labor turnover. Clear? So I should expect some of my employees will leave. I should be ready with the backup also. I should be ready with backup also. And whenever you have seen the requirement for any job, you would have seen, okay, accountant with 5 years of experience or 2 years of experience or fresher. All that advertisement, how they are giving, they would have assessed it. What we actually need in the organization, whom we need. Based on that, they will give that advertisement or require. Clear? They will tell sometimes with 10 years of experience, with 5 years of experience and all. Clear? So see, literally, this is from industry point of view. I'm telling that is nothing but the manpower assessments. Okay. And even the salary pay and all, they would have disclosed something. Okay. The pay, expected pay would be from 10 to 12 lakh per annum. Even this, they would have budgeted. Based on that, they will give the advertisement. Now, see, the funny thing is, I have seen some requirement where they have told required CA fresher, okay, with so and so pay, with 5 years experience, with 3 years experience. Sir, CA fresher, how will they come with experience? Clear? Yes. But the thing is, in CA, it will happen. Maybe they are with that notion that after your articleship, and they will tell articleship is not counted as experience. Some industries will tell that articleship you will not count it. After articleship, that is post articleship, you should have worked for 2-3 years. Sir, I was busy with exams, sir. Where will I go and work? They are expecting that some people who are repeating, okay, maybe they are working for some years and they will have the experience like that. Okay, obviously, because what I can understand is see a fresher other than articleship, what experience he will have. Okay, but literally, I have seen some advertisement like that. See a fresher with 3 years experience, with 5 years experience. Chal, you don't worry. You clear it in your first go and get into the industry or whatever you want to do after qualification. Control over timekeeping and time booking. So we should maintain the proper data of this. If not, we may end up paying more amount to the employees. Time and motion study also I explained. Control over idle time and overtime. Especially idle time is an extra cost for us. If it is a normal idle time, I cannot avoid it, guys, like lunch break and all. Now, if it is an abnormal idle time, can I avoid Chinmayi? Yes. So try to take necessary steps in order to avoid the abnormal idle time so that you can avoid incurring the extra cost. Then control over employee turnover. Employee turnover means the number of employees who are leaving the organization. Clear, guys, it is a costly affair to replace the best employees. Okay, it will take too much time. And when new employees are appointed, they may not work in the same way the old workers were working. It will take time for them to get adjusted or get used to the work. So there are two costs here involved. What are those, sir? Preventive cost and replacement cost. Clear. Preventive cost and replacement cost are the cost which is associated with employee turnover. We will discuss more about this later. We also have a calculation. Job evaluation and merit rating, which we already discussed in this table at the end. Wage and incentive systems, which we will discuss next. Then employee productivity. So company should take various measures in order to increase the employee productivity day after day. Yes, sir. How to calculate productivity also, we have a formula, we will see. Systems of wage payment and incentives. So we have different ways of calculating the wages to be paid to the workers, guys. First one, time based or hours based, output based, combination of time and output, premium bonus method, group bonus scheme, incentives for indirect workers. So what are those one by one? Time right system. Here the payment is based on what? The time spent by the workers in the organization. For each hour, the payment would be fixed. For example, for each hour you work, you will get 100 rupees. If you work for 5 hours, 5 into 100. If you work for 8 hours, 8 into 100. Like that. Clear. But here, what happens? You are not encouraging the workers to give better productivity. You are just paying them based on hours. So they will try to come, sit and go in the office or in the factory. Or even if they are working, they may not work with the enthusiasm. Self motivation is not there for them to perform better. Or else, even some organization will fix based on the per week, per month salary or wages. Yes, that is time based. Next, piece rate system or output based. Guys, here the payment would be fixed based on each and every unit produced by the worker. Each unit you produce, I will pay you 10 rupees. So in that case, you will produce more and more to earn more. Correct? Yes, the more you work, the more you produce, the more payment you get. For each and every unit you produce, we will fix the price. That is called the piece rate system. Then coming to premium bonus method, this is important. This is what you can expect the question, numerical question on. There are two systems here, ALSE and row 1. Under ALSE scheme, what they are doing is they are encouraging the employees to complete the task as early as possible. So that for whatever time you save, I will pay you something. You are not working for that hours. Assume the time given to you is 8 hours, but you completed in 6 hours. How much time you have saved? 2 hours. Guys, for the time what you have worked, we will pay you 6 hours. But even for these 2 hours, what you have saved, we will pay you something. May not be fully, but we will give it in the form of bonus, partially. Is that clear? Yes. Even for time saved, we are paying it. Means we are encouraging you to complete the task as early as possible. So that even that 2 hours, you can dedicate that time for some other job. Some other job. Oh. Under ALSA scheme, the bonus will be shared 50% with employee. Remaining 50% is for whom, sir? Employer. Because for the 2 hours you are not working, but still I will pay you, but not 100%. How much is that? 50%. So what is the formula, sir? Total wages is equal to time taken into hourly rate. This is normal. In my example, 6 into, assume the hourly rate is 100 rupees. 100 plus time saved is what? 2 into hourly rate 100. We will not pay full 200. We will pay 50% of that. As what? Bonus. This part is bonus, guys. See, in the exam, if they ask only bonus, please use only the second part of the formula. If they ask you total wages or total earnings, then use the entire formula. Got it? Yes. How much do you get? 600 plus 100, 700. Clear? They will ask you effective hourly rate or earning per hour. What should you do? How much you will get? 700 divided by 8 or 6 hours? 6 hours worked. Please be careful. Hours worked. Not don't take 8. 8 is called in my example as what? Standard time or time allowed. Standard time or time allowed to complete the job. Got it? Yes. Now, sir, one of my friend worker, very hard worker, he took 9 hours to complete this job. Will he get any bonus? No. He will get the pay 9 into 100. That's all. Thank you. That's all. No bonus. Hope you understood. So bonus will come only if there is a time save. Time save. Hope you got it. Then row 1 scheme. Row 1 scheme, the first part of the formula is same, guys. Time taken into hourly rate. Whereas the bonus part is different. This is bonus part. What is the formula? Oh, sorry. What is the formula? Sir, time saved divided by standard time into time taken into hourly rate. So as per my example, it is time saved 2 divided by 8 into 6 into 100. Hope you are getting it. Yeah, this 6 into 100 will not come in the denominator. That is a multiplier. Okay, I have just written below. Hope you understood, guys. Yeah. And sometimes if you are observing any ICI answers and all, they would have just interchanged this position. You will get same answer. Okay, they would have taken 6 by 8 and into 2 into 100. That will give you same answer. Don't worry. Means they would have interchanged these two guys. Clear? But actual formula is time saved by standard time. Standard time or time allowed is one and the same. Got it? So if they ask you only to calculate bonus, please apply only this part. If they ask you to calculate total wages, then you have to apply the full formula. Here also, if they are asking you to calculate the earnings per hour or effective earnings per hour, you take whatever total you get divided by time taken. Time taken, which as per my example is 6 hours. Oh. Time saved, how do we calculate it, sir? Standard time or allowed time minus time taken. And there is also a statement, might be they will ask theory question or they may mix up with numerical question. Bonus under as-a plan and role plan will be same in one situation. When is it, sir? When actual time taken is equal to time saved. For example, assume time allowed is 8 hours. Time taken is 4 hours. So time saved is how much? 4. So is time saved and time taken is equal? Yes. Or else I can tell when time taken is half of standard time. Time taken is half of standard time. One and the same. Clear? Yes. Now, how do we measure the productivity or efficiency of the workers? Guys, we can measure it in two forms. One is hours based, the other one is output based. If it is hours based, we need to take standard time allowed divided by actual time taken. Standard time allowed divided by actual time taken. Standard should be above. For example, assume standard time allowed to complete a job is 8 hours. You completed in 6 hours. So your productivity is less than 100 or more than 100? Your productivity is more than 100 or less than 100? More than 100. Because you have completed the task before the time given. Clear? So here it will be more than 100. Assume guys, by mistake you applied vice versa. You did 6 by 8. You will get efficiency less than 100. There only you should understand that the what formula you are using is wrong. When you have taken the time less than what is allowed to you, that means your productivity is more than 100. Clear? Now let us take vice versa. Assume time allowed to you is 8, but you have taken 10 hours. Is your productivity less than 100 or more than 100? Less than 100. So should it be 8 by 100, 8 by 10 or 10 by 8? 8 by 10. 8 by 10. If you do 10 by 8 Chinmayi, you will get more than 100%. Do you have the productivity more than 100%? No. There only you should understand that standard divided by actual gas when it comes to hours. But when it comes to units or output, it is reverse. It is actual output divided by standard output. Assume guys, you were given a task to complete 100 units in 10 hours, but you have produced only 80 units. Only 80 units. Efficiency less than 100 or more than 100? Less than 100. So you have to take 80 by 100 into percentage and 80% is your efficiency. Hope you understood. Now, in 8 hours, you produce 120 units. Is your efficiency more than 100 or less than 100? More than 100. So, what should be the formula? 120 divided by 100 into 100. You will get 120%. Clear? So, in terms of units or output, guys, if you are measuring the productivity or efficiency of worker, what should be the formula? Actual output divided by standard output. And if you are expressing it in percentage, into 100 hours. Into 100 always. Why I explain it with example is, you may misapply this, guys. Instead of taking numerator, you may take it as denominator. So please analyze it from the work point of view. Do you have the efficiency more than 100 or less than 100? Clear? So please be careful, because here standard will be in the numerator, whereas here standard will become a denominator. Okay, sir. Sure. Next, employee or labor turnover. What is employee or labor turnover is? Guys, last year we had 500 employees with us. Will the same number of employees be with us even in the current year? May not be. Few employees will leave, few employees I have to appoint newly to replace the old workers. Or else, if the organization is growing, I need to employ more people to cater for my needs, because I have more and more work to do. Clear? So this change in the labor force is called labor turnover or employee turnover. So should company try to keep it lower or higher? Labor turnover should be lower or higher? lower, as low as possible. As low as possible. We also call it as attrition rate, employee attrition rate. That is how many employees are leaving your organization on an average. Oh. Labor turnover is the rate of change in the composition of labor force. That is, the number of employees are not same. There are few employees who are leaving. There are few employees whom we are appointing newly during a specific period. Labor turnover reduces the labor productivity and increases the cost. Why it will reduce the labor productivity, guys? Simple. When old worker left who was expert in doing the work, I have appointed a new worker. Can I expect him to work in the beginning only, like how my old worker was working? No. He will take time to get used. He will take time to get used to my organization and work. And increase cost. Why, sir? Guys, when old worker leave, immediately I may not be able to get the right talent. I will give some advertisement. Now we have a separate team for appointing the workers, who is HR team. They will conduct number of rounds of interview. Only then they will select the potential candidate. Once we appoint them, then we need to give them the training for few months or few days. Only then we will start asking them to work. So during all this, I would have incurred some additional cost. Yes. Yes, it should be kept at a minimum level. It should be kept at a minimum level. Now, what are the reasons for labor turnover, sir? It is categorized into three types, guys. First one, personal causes. That is, there is no problem with the company. Maybe I am leaving for my own reasons, personal reasons. Why, sir? I am shifting to, assume, Chennai. I am shifting to Chennai. I had my job in Bangalore, so I am leaving. Or else I am going back to my native. Enough of work. Okay, still I have age. Okay, I am not reached 60. At 40 only I want to retire. At 40 only, I want to retire. I want to go back to my native. I want to stay with my parents. Personal reasons. Clear? Or else I am getting married. I want to shift along with my wife. Clear? Previously, it was wives used to shift with husbands. Okay, now anything is possible. Vice versa is also possible. Correct, na Sukrita? Chalo. You ask your husband before only, before getting married. Chalo, whether will you shift to Tumkur or not? If not, I will not get married. Or else look a boy from Tumkur only. Chalo, chalo. Fine. Where I was? Marriage. Personal causes or else health issues. Health issues can also be a reason. Or when it comes to you, women employees, some of the women employees after marriage they may leave the job, or for whatever reasons, or even for maternity. Okay, maternity normally they get leave, paid leave, but some of them may choose to take a break. Take a break, and there is also a law that company cannot remove the employees when they are in the maternity period. Clear? But still, they themselves took a decision that I want to take a break. In that case, that and all is a personal reasons. Just so. Then unavoidable causes. Unavoidable causes means why? What you are smiling? Did you connect anywhere? Be in the class only, huh? On opening. ಏನ್ ಕನೆಕ್ಟ್ ಮಾಡ್ಕೊಂಡು ಏನೋ ಚಲ unavoidable causes. Pay attention. Unavoidable causes is here company want to cut their cost. So they are asking the employees to leave the organization, or else the demand for the company's products are coming down. So they are asking the employees to leave. You would have seen Byju's and all. They start their employees. Okay. So when company is not doing well, or when they want to cut their cost, okay, or else they are shifting their plant or factory from one place to another place. So in that case, they may ask the employees to leave. So that is unavoidable causes. The last one is avoidable causes. Avoidable causes is I am leaving the organization because I am not happy with the environment, working environment. I am not happy with the boss. I am not happy with the company. I am not happy with the pay. If they want me, they can take necessary actions in order to retain me. That is why it is called avoidable causes. If I am not happy with the pay, they may offer me more. Clear? Or else, if I am not happy with the manager, he is always causing the problem, full personal target to me. Clear? Maybe they will make us both of us sit together and have some discussion to solve the issues. Clear? Or whatever might be the reason. I am not happy with. You are not giving any facilities, no maja in office, only work. Okay, no entertainment, nothing. At least once in a while you do family day or function or party day. Okay, or bring some indoor games into the organization. No coffee, no tea in the office. How will I work? If that is the scenario, then the organization may introduce few things in order to retain the good employees. Okay, sir. Next, There are two costs associated with labor turnover, guys. What are those, sir? Preventive cost and replacement cost. Silent, Jamuna. Preventive cost is a cost which is incurred. Hey, Divya. Preventive cost is a cost which is incurred to prevent the employees from leaving the job. Prevent the employees from leaving the job. For example, I increased your pay, or I started giving some extra facilities to you, or I gave some health insurance policy to you. Clear? Or you were asking some extra facilities in the organization like indoor games or maybe snacks, tea, coffee, and all. I provided it. So, will it include an extra cost to me? Yes, that is called preventive cost. Next, replacement cost. Sir, whatever I did, I couldn't retain my workers. They left the organization. Now, in order to replace them with new workers, I need to incur a cost of what and all will it include? Selection cost, training cost of new workers. Now, new workers will not work in the beginning only like my old workers. They will do some mistake, they will do some errors. And because of that, I will suffer some loss. Even that will come under replacement cost. That will also come under replacement cost. So, both includes cost, guys. Preventive cost as well as replacement cost. So, how do we measure the labor turnover? As I already told you, we should try to keep the labor turnover as low as possible. We have three different methods to calculate labor turnover. What are those? First method, replacement method. Here we need to consider the number of workers replaced during the period in the numerator. Sir, what is the number of workers replaced? Guys, simple. 20 workers left the organization. In place of them, I appointed new workers. That is called replacement. That is called replacement. Now I left teaching. There is one more person who is ready to replace me. Okay, replacement. Replacement. Yes, sir. So that is called the replacement. So what is the formula? Number of employees replaced divided by average number of employees. Average number of employees, if not given directly, it is nothing but the number of employees at the beginning plus number of employees at the end, whole divided by 2. Okay, sir. And normally we express this in percentage, so into 100. Next, separation method. Number of employees separated divided by average number of employees. Sir, what is the number of employees separated? Totally, how many employees who left the organization? Who left the organization? That is left plus discharged both. Left plus discharged means what, sir? Guys, left means they themselves left. Discharged means I fired. Fired them means not killed. Okay, you know, this is the language used in the industry. Fired means we ask the employees to leave. Thank you. With a thank you note. Okay, sir. That is called number of employees separated. Got it? Yes, sir. So number of employees left plus discharge. Next, flux method, the last one. Here we will take both in the numerator. Number of employees replaced plus number of employees separated divided by average. We already know what is replaced, what is separated. Clear? See, please be careful. Replaced will include, guys, listen. See, my 20 employees left, guys. Now I appointed 30 new employees. 20 to replace the old workers. Another 10 is completely new due to expansion plan. Hope you're getting it. So I can call them as completely new joins. If I ask you what is the number of replacement, it is not 30, it is 20. Hope you understood. Now this 30, I call it as accessions. Total number of employees who joined. What do we call them as? Number of accessions. So if they have asked you to calculate the labor turnover through flux method using number of accessions, then instead of replacement, what do you take? Number of accessions. In my example, number of accessions means what? 30. That is 20 employees due to replacement, 10 employees completely new due to expansion plan. Hope you understand. So if the question is silent, always apply this formula. If they themselves ask you to calculate using the number of accessions, then you need to use this formula. What is the formula? Number of separation plus number of accessions whole divided by number of average number of employees. Sir, what is the number of accessions means? I have given it. You can see now. Number of employees who is newly joining, that is in my example 10, plus number of employees replaced. In my example, it was 20. Clear? Yes. Or else I can also do this, which is same, one and the same. Number of separation, okay, plus number of replacement, which is 20, plus number of new joinees is how much? 10. Number of new joiners is 10. Okay, same thing. If I add up both of this, what do I get? Number of accessions. Either of this, both formula one the same, guys. I can either give a breakup like this for 30 people, or else straight away take 30. Straight away take 30. Clear? Yes. This is if you are calculating the number of accessions. Please be careful. If question is silent, if they have asked you to calculate labor turnover through flux method, please apply this. If they have clearly asked, consider the accessions and calculate the labor turnover, then apply this formula, any one of this. Okay, sir. We are done with labor part. Now, we also have small part in this chapter called direct expenses. Guys, in the classification of cost, we learned three elements. What are those? Material, labor, and the last one is other expenses. So, in other expenses, if it is direct in nature, other expenses will be any expenses other than material and labor. Sir, when it will be direct in nature, if it is directly attributable to the output, means I can tell to produce each and every unit of output how much cost I have incurred. What do we call it as? Other direct expenses. So, expenses other than direct material cost and direct employee cost, which are incurred to manufacture a product or for provision of service, can be directly traced in an economically feasible manner to a cost object. Economically feasible manner means with less efforts and money, I can tell for each unit of output what is the cost I have incurred. Yeah, yes. So the following cost, I have given some example. This will come under other direct expenses. What are those? One by one. Royalty paid or payable for production or provision of service. Sir, I have taken a patent right to produce the product. Each and every unit I produce using this patent, I have to pay a royalty of 2 rupees. What is this for me? Other direct expenses. Next, hire charges paid for hiring specific equipment. Assume I have taken an equipment or machinery on rent. Using this machinery, each and every unit I produce, I have to pay 10 rupees rent or higher charges. What is this now? Other direct expenses. Sir, no, sir, rent is fixed 50,000 per month. Then it becomes overheads. Indirect. Clear? Yes. Next, cost for a product or service specific design or drawing. Now, sir, once the product is manufactured, we are doing some designing or painting for each and every product manufactured. Clear? So this is for each and every unit we produce. Is it a direct expenses? Yes. Next, cost of a product or service specific software. If I am using any software to produce each and every unit for which I pay or incur a cost for every unit, then that also becomes other direct expenses. Then other expenses which are directly related with the production of goods or provision of service will also come under this. Plus, guys, please be careful. See, now excise duty has been subsumed under GST, but for costing, they may give it. Excise duty paid on manufacturing, if at all if they are given, even that will come under other direct expenses. Yeah, yes. Measurement of direct expenses. Sir, how do we measure it? Normally, they would have given it in the question already per unit. You will just multiply it with number of units. But in the industry, how is it measured, sir? The direct expenses are measured at invoice or agreed price, net of rebate or discount, but includes duties and taxes for which credit is not available. Commission and other direct attributable cost, which is very similar to material. Yeah, there we discussed how to value the material. Here we are discussing how to value the other direct expenses. Same like material, guys, or inventory. In case of subcontracting, where goods are getting manufactured by job workers, I have given the manufacturing work to you. You are a job worker, and for your work I will pay you. Should it be a direct expenses for me? Yes. Independent of the principal entity are measured at what? Agreed price. That is, whatever I am paying you as per our agreement. That is my other direct expenses. Where the principal supplies some materials to a job worker, the value of such materials and other incidental expenses are added with the job charges paid to the job worker. Let me take one simple example. Assume, guys, I am running a textile industry. Okay, I sell the shirt, pants, or other apparels. Now you are a tailor. I have appointed you to do some stitching work. I will get a basic raw material, cloth, buttons, where is that? Thread, everything to you, needle, everything. Raw materials, I will get it to you. You will stitch a cloth and give it to me. Okay, in the sense, shirt. Assume you will stitch a shirt out of the cloth and give it to me. For your work, I am paying you 500. Job charges. Plus, for whatever material I gave you, I have incurred a cost of 1000 rupees. Yeah. Should I include the 1000 also in my cost? Yes. So what is my total cost now? 1000 plus 500. Means if I have given any material for your work to be done, then I need to include the material part plus whatever I have paid you for your work. Both. Clear. And the 1000, sir, should I consider it as direct material cost or other direct expenses? It depends on how is it for me. For example, I have taken a cloth and given it to you, and for that I have incurred a cost of 1000 rupees. Better to treat it as material cost. Clear? Yes, sir. Chalo. Treatment of direct expenses. Direct expenses form part of prime cost for product or services to which it can be directly traceable and attributable. So will even direct expenses form part of prime cost? Yes. If the expenses are incurred of insignificant amount, that is small, sir, it is not material, sir, then you can treat it as overhead. That is indirect. Clear? Because it will not be economically feasible for you to calculate how much cost you have incurred for each and every unit. Assume it is 20 paisa, 50 paisa, or 1 rupee. You will take so much efforts just to calculate what is the cost per unit. Better treat it as overhead. Okay, if it is insignificant value, means very smaller value, which is not material, then better treat it as a part of overheads. Clear, guys? Yes. So this is all about the third chapter. Yes, students. Now we will revise chapter 4, which talks about the overheads. There are two chapters which talks about the overheads. The first chapter is 4. The next one is activity-based costing. Whatever we will be learning in this chapter, we call it as traditional absorption costing system. Then in the next chapter, whatever we will be learning is called modern technique of observing the overheads. Both the chapter talks about the treatment of overheads. Okay. Guys, we have already learned about the material and labor, both being direct in nature. Both being direct in nature. Sir, what if it is indirect material, indirect labor? That will fall under overheads. That will fall under overheads. So in this chapter, whatever we will be learning is all about overheads, which is nothing but the sum of all the indirect expenses. Now, we can also classify the overheads based on different bases. Clear? Or classification. So what are the different types of overheads? First we will understand, and then we will get into the numerical area. Yes. First, types of overheads on the basis of function. That is functional classification. If you remember, we have covered this even in first chapter. And now coming to all these are important, especially the functional classification is important for cost sheet also, guys. Clear? Because in the cost sheet, the presentation is in the same order. Okay, first let us see. Factory manufacturing or production overhead. This is an indirect expenses which is incurred in the factory, guys. Any expenses which is incurred in the factory but not directly related to production or product, we call it as the factory overhead. And please be careful, if nothing is mentioned, indirect material, indirect labor will always fall under this. Clear? And also anything related to plant and machinery, guys, because sometimes the question would be silent on plant and machinery. Plant and machinery is always used in the production process. So where the production is happening in the factory. So like depreciation on plant and machinery, repairs on plant and machinery should always be considered under the factory overhead. Then coming to office and administration overhead. Anything which is incurred for the purpose of formulation of policy, implementation of it, or administration of an organization will come under this. Next, selling and distribution overhead. See, this you can present it under the same head or you can differentiate it. Selling separately, distribution separately. Actually, selling is different, distribution is different. But when you are preparing the cost sheet and all, sir, can I club and write it under one? Yes. But if number of items are more, better to disclose it separately. Selling separately, distribution separately. Sir, what is selling overhead? The expenses which is incurred to create demand for my products. I should make the people aware of my products. No. So for that, if I'm incurring any expenses, that is called the selling overhead. Like salesman commission or advertisement, marketing, like that. Then coming to distribution overhead. Sir, once the product is sold, to distribute to the customers, what all expenses I incur will come under distribution overhead, like secondary packing at the time of distribution or carry it outward. All those things come under this. Then types of overhead on the basis of nature or behavior. In the first chapter, we learned clear. So different types of expenses based on the behavior or variability. Sir, what are those? Here we are talking from overhead point of view, guys. Guys, please be careful. direct material, direct labor or other direct expenses, whichever is a forming part of prime cost, will always be variable in nature. Will always be variable in nature. But anything which comes after prime cost, that is the overhead expenditure, can be variable, can be fixed. Sir, how can I tell whether it is variable or fixed? Guys, if it is varying with the level of activity or level of units or production, then we call it as variable overhead. If not, sir, the total amount is fixed, then we call it as the fixed overhead. Then can also be in between both of these. What is it, sir? Semi-variable, which is partly fixed, partly variable. In that case, can we find out the variable portion, sir? Yes. How is it? Change in cost divided by change in output. You will get variable cost per unit. Clear? All these are important while solving the problems. Next, types of overhead on the basis of element. If you remember in the first chapter, okay, let me show it. Sir, you are simply telling first chapter, first chapter, first chapter. I already forgot, sir, whatever you are taught in first chapter. Yes. Chalo. So there are three elements of cost, correct? Material, employee cost or labor cost, and the last one is other expenses. Now under the direct is there, which is a part of prime cost, and also indirect is there. And also indirect is there. If I club all this, what is it called? Again, overheads. Now we are seeing that classification. Now we are seeing this classification, guys. Nothing new. We already covered all this. Now, as it is a overhead chapter, again repetition. That's all. Correct, no, Rohit? We covered all this yesterday afternoon. First day. Chalo. Indirect materials means the material which is incurred but not directly related to the production. Means I cannot tell for each and every unit how much I would have incurred. Maybe in that case we will call it as indirect material, or else it is directly not attributable to my product. Or even if it is attributable, sir, it is not economically feasible for me to calculate what is the amount of expenditure for each and every unit. Next, coming to indirect employee cost. Employee cost which cannot be allocated to the cost units or cost center. For example, there in the factory there is a factory supervisor for whom monthly salary 30,000 is paid. Now, can I tell for each and every unit how much we paid? No, sir, not possible. See, at the end, if I do some exercise and all, the total salary paid divided by total output, then I will get it. But is this expenses incurred for each and every unit produced? No, sir. So they are indirect in nature. And this will always fall under factory, guys. Especially in cost sheet, this is important. When they give indirect material, indirect labor cost, it will always fall under factory. Clear? If it is salary paid to like accountant or manager or even the director's fee, auditor's fee and all, that will come under administration. Oh, next, any other indirect expenses means anything other than material and labor which is indirect in nature will fall under this category. Then types of overhead on the basis of control. If management or organization can control the expenditure, then we call it as controllable expenditure, maybe variable in nature. Clear? If we cannot control it, then we call it as uncontrollable overhead, guys. We cannot control means, sir, it is not in my control. Okay, for example, rent, whatever we are paying, which is fixed in nature, who will fix it? Will I fix it? No, the owner will fix it. Clear? Yes. Next, guys, these steps are important. In this chapter, what you can expect is numerical question. So these steps are important for solving the questions. What are those? Guys, overheads means it is indirect in nature. Now, listen. Sir, why first of all we are learning this chapter? Why are we learning this chapter? What is the purpose of it? Guys, see, material cost or direct material cost. We know how much it is per unit. Assume 20. Next, let me. Wages cost. Assume is 30. Now, what I want to know is total cost per unit. Correct? Any organization want to know what is the cost per unit of each and every product. Now, this too I can tell for each and every unit how much I have incurred. But when it comes to overhead, even overhead is a part of my cost. But can I tell for each and every unit how much I have incurred? No, sir. Now, sir, first of all, why do you know the total cost? Why do you want to know the total cost? Because I want to fix my selling price. Sir, I want to fix my selling price. To fix my selling price, I want to know cost. For cost, what do? I will add some profit and fix my selling price. Okay. Blindly, can I fix my selling price? No. Okay, sir. So one of the component of my cost is overhead. Until and unless I know that cost, I cannot know what is my total cost per unit. Let us just imagine it is 20, guys. It is 20. So my cost per unit comes to how much? 70. Assume I want to make profit for each and every unit sold 15 rupees. So I want to fix selling price for how much? 85. Yeah. Will I know this till I know my cost? No. Till I know my overhead, will I know my cost? No. So my task is to find out this, guys. Yeah. Until and unless I know this 20, I will not know my cost per unit. Now, is this incurred for each and every unit produced? No, sir. Now I need to do some exercise in order to find out this 20. That is what we are learning in this chapter. Sir, how do we find out this 20? We will call this as overhead recovery rate or overhead absorption rate. How do we figure it out is the task in this chapter. Okay, sir. How is it? There are various steps involved in it. We will see one by one. First one, estimation and collection of overheads. Guys, there will be different types of overhead expenditure which would be incurred in an organization. First, calculate all that. Clear estimate. See, most of the time what we do is we will calculate this in advance. Why, sir? Because, guys, normally we will get to know the actual overhead incurred at the end of the year. But can I fix my selling price at the end of the year? No. So I should fix my selling price at the beginning of the year itself. So on the basis of estimation, I will try to figure out this figure. If I have to figure out this figure, then I need to estimate what all overhead expenditure I might be incurring throughout the year. Throughout the year. Okay, sir. So I will try to classify and calculate what all different types of overhead expenditure I will be incurring in the upcoming period. Then if it is a specific overhead means the overhead expenditure incurred for a particular department. I will straight away allocate it to that department. Clear up. Guys, see, there is two steps here. In the first step and second step, what is the cost object for us is department. Because we will allocate or apportion the cost to whom? To the departments. Clear up. So for us, what is the cost object in this step is the departments. Okay. If there is any expenditure incurred for a particular department, assume for production department 1, straight away allocate. Straight away allocated. Sir, there is some common expenditure or we call it as general expenditure which is incurred for all the departments put together. Then we call it as what? Common overhead. What do we do with this? We need to apportion. Apportion it is nothing but share it among the departments. For whomever we have incurred it, just share it among them. Share it among them. We call it as apportionment. And to do that apportionment, we should have some suitable basis. We should have a suitable basis. What is it? Guys, this we call it as primary distribution. Sir, how is it? I will just show you here. Listen. Assume we totally have 5 departments in our organization. 3 production department, 2 service department. There are few expenditure which I have straight away incurred for a particular department. Assume indirect material, I have incurred for P2, straight away allocated. Straight away allocate. Assume indirect labor, I have incurred for P3, straight away allocate. Because I know for which department how much I have incurred. So should I do any apportionment? Should I need any ratio? No. I don't want any ratio here. Got it? I know how much I have incurred for which department. We will straight away allocate it. Then when it comes to common overhead means I have not incurred it for 1 or 2 department. I have incurred it as a whole. As a whole. In that case, we call it as general overhead or common overhead. We will take the total and apportion it to each department. On what basis, sir? On suitable basis. And we should decide. We should decide it. Sir, how is it possible? Guys, simple. Any expenditure we have incurred will be giving some benefit to us. Correct? For example, I am paying a rent of 1 lakh for a building. In a building, there are 5 departments. All these departments are using the floor space, area and square meter. That would be the basis. Why am I paying rent, guys? I am using the space of the owner, no? So that is the benefit we are getting. In what ratio this benefit is enjoyed by each department you see and allocated. Clear? Assume there is some expenditure relating to machine, which is common. 20,000 incurred for all the departments. Machine is used by all the departments. Normally it is used only by production department. Okay, let us take only production departments. So it is incurred for 2 or more departments. How do I apportion it? Based on machine hours. Based on machine hours. Is that clear? Or else, next assume there is an electricity bill for an entire building. The building has totally 5 departments. there is an electricity bill of, assume 10,000. Common expenses, how do I distribute it? How do I apportion it based on the units of electricity consumed? Okay, we need to figure out, this will be given in the question only. Don't worry. The basis will be given in the question. We need to choose which basis for which expenses. Clear? Suitable basis. Guys, always try to figure out like this. Why I have incurred this expenditure? I have got some benefit. What is that benefit? That will become the basis. That will become the basis. Correct? Now, electricity bill I have incurred 10,000. Why? I have used electricity. So what is the basis there? Units of electricity consumed. Got it. Now assume there is a depreciation on any asset. The capital value will become the basis. Got it? Yes, sir. So this is called primary distribution. Both this put together is called primary distribution. At the end of primary distribution, we will have cost for whom? All the departments, that is production as well as service departments. Hope you are getting it. At the end of primary distribution, we will have cost for whom? For all the departments, that is production as well as service department. Why, sir? Because I would have incurred cost for everyone. Even service department is doing some work. They are also receiving some benefit. So, should cost be allocated or apportioned to them also? Yes. I will show one question also, just for better understanding this. Observe, this is primary distribution. See, indirect material, indirect wages normally will be straight away given for a particular department. So, I am taking it as actual. You can see I have maintained a separate column for basis. Please show that in the exam also. Don't keep it in your mind. Sir, I knew, sir, how I divided, how I apportioned. You don't keep it in your mind. Please put it. And also try to write the ratios. You can observe now how I have written. Either you can add one more column for the ratio, or else you can show either year or year. The ratio I am telling. Oh. Now you can see I have written actual year because this is straight away specific overheads incurred for a specific department. Guys, one more important thing. Listen here. If it is indirect material, indirect wages, always overhead. No doubt in that. But in your primary distribution or secondary distribution, if by chance in the question, if they have given direct wages, direct material for service departments, please take it as overhead. Please take it as a part of overhead. Why, sir? Because for service department, there is nothing called direct. Why, sir? Because they are not engaged in production. Because they may try to confuse you by giving. See, if it is given as direct wages, direct material for production department, it is a part of prime cost. But if direct wages or direct material is given for service departments, please take it as a part of overheads. Sir, should we consider it in primary and secondary distribution? Yes, you have to consider it. Yeah. Whereas if it is a direct wages, direct material for production department, should we consider it in our primary distribution, sir? Don't consider it because that will be a part of prime cost, guys. Anything which we take care in this chapter is overhead. And let me tell one more thing, which is, let me keep it simple, keeping the long story short. Anything incurred for service departments is always overhead. Why, sir? Because they are not engaged in production. So, is there any expenses which I will incur for service department which is direct in nature? No. No means no. Ashte. Okay. Then coming to, guys, see, you can observe indirect wages and indirect material. They are given for all the departments specifically in the question. Yes. It is a specific overhead. We did allocation. Whereas you can observe other things. They are given general expenses like this. So this is incurred for all the departments as a whole. Yes, sir. For this, we need to choose suitable basis. In the question, they would have given few basis. Out of that, which is the suitable, you have to pick it. Clear? Yes, you can observe they are given few the basis here. Okay, sir. Now all these are general overhead, which we need to do what? Apportionment. Using what? Suitable basis. Using suitable basis. You can just have a look into it. You will understand for which expenses, what is the suitable basis. Clear? In my regular class, I would have explained each and everything. What is the reason why we will take this basis and all in detail. But now let us not go in detail. Let's hope you guys are already thorough with that. Oh, and once I do this, at the end of primary distribution, we will have cost for every department, including production as well as service department. But now the question mark is, sir, what is my ultimate purpose of doing all this? To calculate overhead cost per unit. Now, is there any production happening in this service departments? No, sir. So what is the use of the cost here? No use, sir. So what should I do? I have to reapportion this cost to production department. Reason is simple. Sir, there is no production happening in service department. What do I do with that cost? Clear? So in the secondary distribution, I will reapportion this cost to the production department. We call that as secondary distribution or reapportionment. So, which are my service department, office, stores, workshop, whatever cost we have got here, we need to redistribute it. To whom, sir? To the production departments. So you can observe whatever is this cost which we have got in the primary distribution, that is the above table, we are redistributing it to P1, P2, P3. On what basis, sir? Because obviously these guys are supporting the production. In what ratio they are supporting? For example, office, what are they doing? They're doing some activities in order to support my production. So normally we need to take number of workers. If number of workers are not there, then number of workers depends on what? Direct wages, take that. Clear? Then store, what do they do? Store raw material. So direct materials we have taken as a base. Direct material we have taken as a base. Simple. First try to analyze what will this service department do. Okay, and then accordingly choose the basis. Choose the basis. And this is under secondary distribution under direct method. Under direct method, you are the one who are supposed to choose the basis. And if you are lucky enough, sometimes in the question only they may give basis also. Okay, sir. And workshop, what do they do? Sir, maybe whenever machine is at repair, they will repair the machines. So we are taking machine as work as a basis. And we will reapportion the workshop department cost to production department. Got it. Now at the end, what do we get, sir? We will get only the cost for whom? Production department. Now, is production happening in the production department? Yes. Now, whatever number of units are produced in each department, just divide it. What do you get? Overhead cost per unit. If I just divide this cost by number of output in each department, what do I get, guys? Cost per unit or overhead cost per unit, which is nothing but overhead absorption rate or recovery rate. Hope you understood the reason. Yes, sir. Let me come back to my example here. That was a question. Okay. Now, fine, sir. At the end of primary distribution, this part is primary distribution, which includes two things. For specific overhead, what do we do? Allocate. For general overhead, what do we do? Apportion. And for apportioning, what do we need? Base. Clear? Yes, sir. Now, at the end of primary distribution, we have cost for all the departments, sir. Now, let us take the service department cost and reapportion it. So what is the service department cost? Sir, 10 lakh. So 10 lakh, I am reapportioning it. I have just taken the ratio 3 is to 3 is to 4 and apportion it to P1, P2, P3. Same way, take this 15 lakh and reapportion it to P1, P2, P3. In what ratio, sir? 5 is to 6 is to 4. Clear? This ratio either has to be given in the question or you have to choose. They would have given various bases. You need to choose which is the suitable. Okay, very simple. What is this service department doing? If you know, you can aramse decide the basis, guys. Yeah. If they have given general name like this S1, S2 and all, you cannot decide what they are doing. In that case, they will only give the ratio. Or else in my question, I showed you office, workshop and all. If they give the name of a particular department like that, then you can decide, okay, what work they are doing and accordingly decide the suitable basis. Okay, sir. Sir, we did reapportionment. At the end of secondary distribution, can you observe something? Service department has no cost because we apportioned whatever they had, we reapportioned. Now only production department has a cost. Now, who is engaged in production? Only production department. Assume each of the department has produced 10,000, 15,000 and 12,000 units. Now, if I divide each other, what do I get, guys? Overhead cost per unit. Overhead cost per unit. This was my ultimate target in this chapter. Correct? I have to find out this. Why do you want to find out this, sir? Because I want to know total cost per unit. Why do you want to know the total cost per unit, sir? Because I want to fix my selling price. Got it? Yes. This is actually called as overhead absorption rate or recovery rate. Sir, what is the meaning of it? Simple, guys. 280 is what we got in P1. Na? As and when each and every unit is produced in P1, how much overhead cost we will charge? 280 rupees. We will know what is the direct material cost, direct labor cost, because they are directly attributable to the product. But the overhead I may not know accurately. But by doing all this primary, secondary distribution and all, I have found out what is the overhead recovery rate, overhead absorption rate. So for each and every unit produced in P1, we will observe how much cost, overhead cost, 280. Hope you understood. Yes, sir. Chalo. And this part, whatever we have done here, is called secondary distribution or reapportionment. Clear. And for this, we have various methods also. What are those? We will discuss later. Hope you understand. Yes, because when you know the purpose, sir, why are we doing all this? Then it becomes easy, guys. If you try to mug up the steps, this will come first, this will come next. If you don't know the reason, then it will not be so feasible for you to understand and do it. Oh, sure. Let us come back. So I guess we have discussed till here. Now coming to primary distribution is done, sir. Now we need to do secondary distribution. What is the reason why we need to do secondary distribution? Simple, sir. There is no production in service departments. What do I do with the cost in the service department? I need to reapportion it to production department, for which we need to do secondary distribution. Observe. Reapportionment of service department over production department using suitable basis. And this suitable basis, you will decide only if it is direct method. If it is a reciprocal method and all, we have a different way of redistributing it. We will learn it. At the end, what do we get, guys? Absorption rate we get. So absorption of overheads by production units. The 280 what we got in PU1, what do we do with it? We will absorb it for each and every unit produced. Clear? For example, in P1, assume in first month, 1000 units are produced. What is the overhead which will be absorbed? 1000 into 280. 1000 into 280. Okay, sir. No. The allocation or apportionment of an expenses is not dependent on its nature, but the relationship between the expense and the cost center decide that whether it is to be allocated or apportioned. Simple. If there is an expenses which is incurred for a particular department, I know for which department how much. Locate it. No, sir, I have incurred for all the department put together. For example, simple guys. There is a one manager who is taking care of all departments. For him, monthly salary is 50,000. Should I do allocation or apportionment? Apportionment. On what basis, sir? Simple. He is giving his time for the organization. That is why we are paying him 50,000. Yes. How much time he is dedicating for each department you check? That would be the basis. That would be the basis, guys. Oh, coming back here, guys, these terms are important because you should know the meaning of each term. There is a difference between allocation, apportionment, and all. Please don't get confused. Allocation is for which overheads, guys? Specific overhead, which is incurred for a particular department, which will be already given in the question. You need not worry anything. You need to just take the actual figures. Then apportionment. Apportionment for which overhead? Common overhead, for which you need to have certain basis. Only then you can allocate it. That basis will be the ratio for apportionment, guys. Then reapportionment means what? Sir, redistributing the service department cost to production department. Where, sir? In secondary distribution. That is called reapportionment. And at the end of secondary distribution, we will get what is the overhead cost for each and every unit. That is nothing but recovery rate or absorption rate. One and the same. Clear? Using that, we will charge the overhead cost to each and every unit produced. That is called absorption. Absorption or recovery of overheads. Oh. Now coming to methods of reapportionment. Methods of reapportionment means for this guys. Okay, that is for secondary distribution. What are the various methods available, sir? One by one. Following are the methods of redistribution of service department cost to production department. The first method is direct distribution method. Guys, under direct distribution method, service departments are giving service only to production department. They are not giving services to each other. They are not giving services to each other. And here we will select one suitable basis and we will reapportion the cost. I showed you one question, right? That one. So see, this is the primary distribution. Whatever cost we have got for service department, office, stores and workshop is a service department. Okay. So they have asked us to do secondary distribution here under direct method. So we need to believe that service departments are giving services only to production department. Sir, is office giving service to stores? No. Is stores giving services to office? No. Sir, what if they are giving? Then we have other methods to redistribute. Clear? So here I repeat, we can follow direct method only when service departments are giving services to only production departments. Clear? Yes. So select a suitable basis and reapportion the service department cost only to production department. Only to production department. You can do this way, or else I showed you an example here. Na? You can do it in this way also. Okay, where in the second step, sorry, where is it? In the second step, you will just put the negative, whatever you have got for service department and distribute it to only production department. Okay, so that you ensure that at the end of secondary distribution, you have zero cost for this service department. Or else Sir, in the second step, if I am doing a separate table, like how I showed in the question, you can completely ignore service department. You can take the service department cost here in the particulars and distribute. This is another way. Both ways you can do it. This is secondary distribution. Whereas in the my example, whatever I just now show, I have done both in the same table. That is primary distribution as well as secondary distribution. Okay. Coming to step method. Under step method, we will keep on reapportioning the service department cost to service as well as the production department. But we need to do it in the sequence, in the step. Sir, which service department cost will be reapportioned first? Whichever service department is giving the highest service. We will take that as first. Highest being the first, we will follow the same order. Clear. For example, there are three service department. One is giving majority service. So that service department cost has to go to another two service department plus production departments. Plus production department. And please select the ranking of the service department. Very important. Clear. Yes. Sir, if by chance if nothing is given, how do we decide the step, sir? Simple. Whichever service department cost is highest, give first ranking for that. Wherever the amount is highest, give the first ranking for that. Okay. For that also I have an example. Let's see that. This one. You can see we are doing the reapportionment under step method. Guys, Theo, I am taking in the same order how the ranking is there. So for service department 3, the cost is highest. So I am giving the rank 1. Then for S2 rank 2 and for S1 rank 3. Sir, how did you decide it? See, normally they will give it in the question or else you decide it based on the amounts. Okay, S3's cost is highest. So I am considering that as it is providing the highest service. So what is S3 cost, guys? 6 lakh. We need to reapportion to whom and all? S2. Okay, S2. Yes, sorry, here. Okay, 6 lakh I will apportion it to S2, S1, P1, P2, P. Same way. Next we are taking S2. What is the cost of S2? 3 lakh plus they would have received something from S3. Correct? Now let us take it as 350. Assuming they have received 50 here. Okay, yes. So we need to reapportion 350 for whom and all? Only S1, P1, P2, P3. Sir, should we do it for S3? No, don't go back. Don't go back. Same way. Now, what is the S1's cost? 2 lakh plus they would have received something from S3 and S2 also. Na? They would have received something from Where is it? They would have received something from S3 and S2. Let us consider that totally as 1 lakh. This both put together as 1 lakh. So totally 2 plus 1, which will come to 3 lakh. We need to reapportion to only production departments. The last service department cost has to be reapportioned only to production department. Hope you are understanding that. So you can see we are following a step here. Step ladder we call this. Clear? So please arrange the service department columns first. And in what order will you arrange? First highest service department and keep on allocating the same. I didn't take S1 here first. Why? Because they are not ranking 1. They are not the rank 1. Whichever is rank 1, place them first. Rank 2, rank 3. Then production departments. Then production department. Hope you understood. Got it? Yes. Sure. Next. Reciprocal service method means, guys, in step method, what happened is, sir, we will allocate S3 cost to S2, but not S2 cost to S3. Correct. What if S3 is giving service to S2 and also receiving from S2? I repeat, S3 is giving service to S2 and also they are receiving it. In that case, can we follow step method? No, sir. We call it as reciprocal service method. That is, assume guys, we both are service department. I am giving service to you. You are also giving service to me. We cannot follow direct method or we cannot follow step method. Then which is the suitable method, sir? Reciprocal service method, which has 3 things there. Yeah. What are those? One by. Where there are 2 or more service department, they may render services to each other. And therefore, this interdepartmental services are to be given due weight while redistributing the expenses of service departments. So we have 3 methods to do that. What are those? One by one. First one, simultaneous equation method. Guys, one more thing. Let me clarify it before only. If you follow either of this method, end result will remain same only. All three methods, end result is same. The only way we do is different, but the end result will remain same. Clear? Yes. And in the question, they would have asked you which method you have to follow. If by chance, if question is silent, you can follow simultaneous equation or repeated distribution. Preferably, you follow repeated because it will save time. It will save time. Hope you understood. But if they have given in the question itself which method to follow, please follow that only. Clear? Yes. Sir, they asked in the question simultaneous equation. I felt I have too much time taking. So I followed repeated distribution because I remember you telling in the class. I told if question is silent, you follow repeated. Clear? If they have specifically asked something, please follow the same. Oh, what do we do under simultaneous equation method? Guys, see at the end of primary distribution, whatever cost we would have got is not the final cost of the service department. Why, sir? Because one service department would have given services to each other. So a part of their cost has to go to the others. So in that case, we will form an equation to find out what is the total cost of service department cost. Then we will redistribute the total cost of service departments to whom? Other departments. Sir, how is it, sir? Theoretically, I am not getting an idea, sir. Let me explain it through a question, guys. Okay. See, all this we have already covered it in the class, guys. I'm just explaining with the steps. Okay. So that you will understand how do we deal each of the method. Listen. Sir, they have told P is nothing but service department. They are giving 30% service to A, 40% service to B, and 20% service to C, as well as 10% service to Q. Q is a service department. So P is giving services to Q also. Okay. Then Q is a service department which is giving 10, 20, 50, and 20% service to P also. So can I consider this as reciprocal services? Yes, sir. Because P is giving services to Q and Q is also giving services to P. Reciprocal. So in this question, how I have done is, first, they have already given the primary distribution. Sometimes even you have to do it, guys. Clear? Whatever figures they have given, we need to just total it up. I have done it here. So this is the end of primary distribution. This is the end of primary distribution. Now at the end of primary distribution, we have got a cost of 4,000 and 2,600 for P and Q. Is it the total cost of P and Q departments? No. Why, sir? Because a part of Q's cost has to go to P. Same way, a part of P's cost has to go to Q. So I cannot tell this is my final cost. So now we need to find out what is the final cost of P department and Q department. How do I find it out, sir? Simple. We are forming an equation. Please pay attention. Now, for department for department P, let us assume the total cost is X. Let us assume the total cost is X. And for department Q, let us assume the total cost is Y. We don't know. Clear? Guys, listen. 4,000 plus something will be the total cost of P. Same way, for Q, 2,600 plus something will be the total cost. That plus something, where do we get, sir? P will get from Q and Q will get from P. Clear? We need to find out that figure. That is the total cost figure. For that, we are forming an equation. Come on. X is the total cost of whom? Department P. Y is the total cost of whom? Q. Okay. Now, what is the total cost of department P? 4,000 plus, listen, whatever is the total cost of Q, a certain percentage has to go to P. Why, sir? Simple. Q is giving service, 20% service to P. Correct. Now, whatever is the total cost of Q, what is it? Y for us. 20% of that should go to department P. Correct. Because they are giving 20% services to whom? P. So, what is the total cost of department Q, guys? Y. 20% of that should go to X. That is nothing but department P. Department P. Hope you understood. I repeat, I have assumed the total cost of department P is X and Q is Y. Sorry, Y. Got it? Now, what is X means? 4,000 plus 20% of Y. Sir, why this 20% of Y, sir? Because Q is giving 20% service to P. So whatever is the total cost of Q, 20% of that should go to department P. Same way. If I ask you what is the total cost of department Q, it is Y. But numerically, it should be 2,600 plus how much P is giving services to Q? X into 10% of 10%. It has to go to them. X into 10%. What is X, sir? Total cost of department P. They are giving how much services to Q? 10%. So whatever is the total cost of P, 10% of that has to go to whom? To department Q. Hope you understood. With that, we have formed an equation. We have formed an equation. Now we need to solve this. We need to solve it. So in place of X, we have taken this value here. We have taken this value and we have solved X and Y. Hope you guys can take care of that. Next, sir, we have got the total cost of department P and Q. How much, sir? 3061 and 4612. Total cost after considering the service given by each other. Clear? Yes. Please be careful. This figure and that figure will not match because this is before reapportionment. Okay. Yes. So we have got 3061 and 4612. What should we do? In the next table, we will take this and reapportion it to all the department guys. 4612. We will reapportion it in what ratio? 4612 is whose cost? P's cost. So we will redistribute in this ratio guys. 30, 40, 20 and 10 including for Q. Same way. Q's cost is how much, sir? 3061 including 461 what they received from P. Correct? Yes. We will redistribute it in what ratio, sir? 10, 20, 50 and 20%. Clear? Yes. Guys, one thing you have to be careful here is, please listen here. While redistributing it, please take the total cost. Don't take the cost as per primary distribution. Whatever cost we have got by solving the equation, please take that. Please take that. Okay, sir. Then coming to repeated distribution method. Let me explain it here only. Very easy, sir. Very easy and less time consuming. What is it? Guys, we will prepare a column for all the departments. Try to put service department first and production department next. Columns wise. First, we will start with first department. P's cost. P cost we will take. How much is that, sir? 4,000. In P column, put it in negative and redistribute it to everyone. In what ratio, sir? P is giving in what ratio? This ratio. Clear? Then take Q's cost. How much is Q's cost, sir? 2600 plus they have received from P how much? 400, which comes to 3000. Distribute it to P, A, B, C. In what ratio, sir? Whatever ratio they have given in the question. Clear? Yes. And please be careful while redistributing it. Please be careful with the columns. Because the columns, what is given in the question would be different and what you have taken here might be different. When you are redistributing, I suggest you to take first service department and then production department. But in the question, they would have not given in the same order. But when you are taking the ratio now, by mistake, you may commit a by mistake, you may take it to the wrong columns. Okay? Yes. Then again, sir, this guy has received 600. Redistribute it to Q, A, B, C. Then again, next step, this guy has received 60. No, redistribute it. 60 has to be redistributed to whom and all? P, A, B, C. Then they have received 12, right? Redistribute it. So 12 has to be redistributed to whom and all, sir? It has to be redistributed to Q also. But I want to stop it here only. When it is nearer to 0, stop it, guys. Yeah, theoretically they will tell when it is 0, you stop anta, but I cannot go till 0 because when you start the redistributing decimal, there is no end for it. Okay, so you will get 12 into 10%, I guess 1.2, but I'm not taking it. Why? Because in the next step, I cannot redistribute 1.2. Clear? So when it is near to 0, also stop. So whereas here I have adjusted that amounts. Here I have rounded off and adjusted. Make sure that here, if you total up, you will get 12. You will get 12. Is that clear? So now if you add up, you will get cost only for production departments, guys. Production department. And if they have asked you to calculate recovery rate and all, they would have given hours. Just divide each other. You will get the machine hour rate or the overhead rate per hour. Is that clear? Yes. This is repeated distribution method. We will keep on distributing the service department cost to other service department as well as production department. Till when, sir? Till the cost of service department becomes 0 or nearer to 0. Nearer to 0. Don't try to take it till 0, guys. It will not happen. Even when it is nearer to 0 or 1, stop it. Okay, sir. Next, trial and error method. Under trial and error method, very similar to repeated distribution, But in repeated distribution, even production departments will come. Whereas in trial and error, we will take only service departments. Now, what do we do here, sir? Take the cost as per primary distribution as the base, then keep on distributing service department cost to another service department. So what is the P's cost? 4,000. How much service they are giving to Q? 10%. Allocate 400. Now what is Q's cost? 2,600 plus 400, 3,000. How much Q is giving service to P? 20%. So 3,000 into 20% goes here. Next step, again take 600 and distribute it in 10%. Sir, why are you taking only 600? Because 4,000 is already a portion. But here, why did you add up, sir? Because 2,600 was not a portion. So I took the total of both. Clear? Yes. So 600, I took 10% of that, 60. Again 60 into 20%, 12. Then 12 into 10%, I am taking it one, stop it. Don't start redistributing one and all. Clear? Yes, sir. We got the total overhead cost of service department. Like in the first method, using the equation, we got this now, but here in the table itself, we have got. Guys, please be careful. This is different from repeated distribution method, because in repeated distribution method, we will also take production department and only one step here. But in trial and error method, we have two steps. What we have got here is total cost of service department. Now you need to prepare one more table. Whatever cost we have got here, redistribute it. To whom and also? Q, A, B, C. Same way, take the total cost of Q and redistribute it to P, A, B, C. And ensure that at the end, the cost of service department is nil or zero. Guys. Nil or zero. Is that clear? Yes. This is nothing but same like how we did in simultaneous equation method. So in simple, if I have to tell, for simultaneous equation method and trial and error method, we need to solve it in two steps. In the first step, you need to find out what is the total cost of service department cost. Then you need to redistribute it in the second table. To whom, sir? To other service department as well as production department. Whereas in repeated distribution method, only one step. Only one step. In first step itself, we will do that. Got it? Yes. And one more information, guys. We have discussed all the methods. One more information. See, here I taught you how do we find out, sir, overhead cost per unit. Okay, sir, how did we get it? Simple. At the end of secondary distribution, whatever is the cost of production department divided by number of units produced in each department. Got it? Instead of output, if they have given machine hours or labor hours, then we will get this as the overhead cost per hour. Okay, assume this is like machine hours. Machine hours. Okay, now what is this machine hour rate? Machine hour rate. How much is that, sir? 280. What do we do with it, sir? Simple. Listen here. Assume in production department P1, to produce each and every unit, we are taking 2 machine hours. So what is the overhead cost to be observed? 280 into 280 into 2. Same way, assume in P3, to produce each and every unit of output, my machine will work for 3 hours. So what is the overhead cost per unit to be observed? 250 into 3. Hope you understand. Clear? Now let us take it in another way. Sir, assume instead of this production output, it is labor hours, sir. Labor hours. So this is labor hours. Whatever you get here is called labor hour rate. Means overhead cost per labor hour. Sir, what do I do with it? Simple. Assume 280 is the labor hour rate. To produce each and every unit in P1, a labor has to work for 1 hour. What is the overhead absorption rate? 280 into 1. Same way, assume in P3, to produce each and every unit of output, a worker has to work for 5 hours. What is the overhead to be observed for each and every unit? 250 into 5. Hope you understood. Means this can be output, this can be labor hours, this can be machine hours. Any of them. Normally, this 3 will come. Clear? Yes. Going back. So I have explained all these methods. Next. At the end, once I do all this, what do we do, sir? We will observe the overheads over the cost units or products. Over the cost units or products is nothing but output. Whatever we get here, no, guys. Even in this question, we have solved that. At the end, we have calculated production hour recovery rate, sir. Production hour recovery rate. We also call it as absorption rate. Absorption rate. In simple, I will tell you. In production department A, we have got 9.5 now, sir. Assume to produce each and every unit, we are working for 2 hours. So what is the overhead to be observed? 9.5 into 2. Got it? This process is called observing the overhead. Who is observing the overhead? Output, the products. Clear? Yes, sir. Next, methods of observing the production overheads. Guys, see, most of the time we will estimate the overhead because I cannot wait till the end of the year. If I wait till the end of the year, I will know what is the overhead cost. Correct? But can I wait till the end of the year? No. So what does the company do is based on their past figures, they will fix a percentage. How much is my factory overhead or how much is my overhead as a percentage of labor cost or as a percentage of prime cost? They will fix a percentage. Clear? How do they fix the percentage? Based on past figures. Now assume in the current year, I know what would be my direct wages. Assume my factory overhead is 50% of direct wages. I will apply 50% of direct wages is my factory overhead. Clear? So that is what we are seeing. How do we observe the overheads? Based on like certain percentages. Percentage of direct material cost. Here what do we do, sir? Factory overhead divided by material cost into 100. Assume guys we will get 20% here. Clear? So what is this 20% mean, sir? See, when I don't know the exact amount of factory overheads, so what do I do is whatever is my direct material cost, 20% of that is my estimated factory overhead. Clear? Same way, instead of direct material cost, I can take prime cost, which includes material, labor, and other direct expenses. Or else, I can also take direct labor cost. This is what preferably followed. At the end of cost sheet also, I would have given a note telling factory overhead is recovered as a fixed percentage of what? Direct labor cost. Clear? Normally, this is what is followed if you are doing an estimation, where I will take factory overhead divided by labor cost into 100. Assume you are getting it as 10%. I know for the current year or for the upcoming year, what is the direct labor cost? Because when I know what is the level of output I have to produce, I will know what is the direct labor cost. But I may not know the exact amount of factory overhead. So what do? I will take 10% of my wages as what? The factory overhead. As the factory overhead. Okay, sir. So all these are optional, guys. Clear, sir? Will the company follow all three? No. Anyone out of this. Anyone out of this. Next, direct labor hour rate. I told you, instead of taking the output here, guys, instead of taking the output here, if labor hours is taken, then what do we call this as? Labor hour rate. Labor hour rate. Sir, instead of taking labor hours, what if I take machine hour? Then whatever I get is called as what? Machine hour rate. Machine hour rate, guys. So under direct labor hour rate, we are calculating what is the factory overhead cost per labor hour. Per labor hour. Got it? So factory overhead divided by labor hours. And normally when we are taking labor hours, it will be direct labor hours. Okay. And I have already told you what is the use of this. Simple. Assume labor hour rate we have got 100. In production department 1, we need to work for 2 hours to produce each and every unit. What is the overhead to be observed? 100 into 2. That is the purpose of calculating the labor hour rate, guys. Yes. So, next. Machine hour rate. Guys, important. From numerical point of view also, they are asking questions on this. Machine hour rate. Sir, what is machine hour rate? Simple. We will calculate what all overhead expenditure is incurred with respect to machine, either direct or indirect, both. Divide. Direct means directly attributable to machine I am talking about. Obviously, anything we discuss in this chapter is overheads. But there might be some expenses which is directly attributable to machine, some indirectly. Will we take both? Yes. Okay. We will take the overhead expenditure divided by machine hours. What do we get, sir? Machine hour rate, which in simple means to run a machine for 1 hour, what is the cost we are incurring? What is the cost we are incurring? Yes, sir. Okay. Machine hour rate implies cost of running a machine for an hour to produce the goods. By the machine hour rate method, manufacturing overhead expenses are charged to the production on the basis of number of hours a machine or machines are used on the jobs or work orders. So we have two ways of calculating it. What is it, sir? Direct machine hour rates. Guys, here we will take only the expenses which is directly or immediately connected to machine. If there is any expenses which is not directly connected to machine, we will not take it. Clear? So amount of overheads directly connected to machine divided by machine hour. We will get machine hour rate. But if they are asking you the question, will you follow this? No. Actually, we normally prefer this. So in this, what do we take it in the numerator? Both the expenses which is directly connected to the machine or even if it is indirectly connected. We call it as common overhead. For common overhead, what we used to do, guys? Apportion it. For example, assume supervisor is working for 3 machines. His salary is 10,000 per month. Now, can we do apportionment for one machine? How much? Yes. Same way. Sir, we are paying a rent for factory. Assume 20,000 per month. And in this factory building, we are using 10 machines. Can we calculate for one machine how much? Yes, do the apportionment. Do the apportionment. And don't worry, in the question, they would have only given some hint for you to do that apportionment. Okay, sir. So here what do, guys? You will take total cost which is incurred for the machine either directly or indirectly, divide it by machine hours. But while doing this, one important thing, guys, is to differentiate variable cost and fixed cost. Variable cost is also called as running charges or machine cost. Okay, machine running cost. Whereas the fixed cost is also called as standing charges. Sir, what is it? Simple. Variable cost or running charge means if it is varying with your machine hours. Higher the machine hours, higher would be this cost. Lower the machine hours, lower would be this cost. We call this as running cost or variable cost. Sir, what is fixed cost or standing charges? The cost which will remain fixed irrespective of how many hours my machine will work. Irrespective of how many hours my machine will work, it will remain fixed, sir. Okay. Now coming to, guys, there are 2-3 expenses where you will have a doubt whether it is variable or fixed, like depreciation, maintenance, especially this two. See, normally repairs and maintenance depends on how many hours machine is working. Why is that? Higher the number of hours the machine is working, higher would be the repairs and maintenance. Correct. Now, because assume you are working only for 100 hours, repairs and maintenance would be less. Whereas you are working for 500 hours, double shift, triple shift, you are working the machines. The repairs and maintenance would be more clear. So repairs and maintenance, you can consider it as variable. But if you observe the ICI answers, for some questions they consider it as variable, for some questions they consider it as the fixed. So you take a chance. You take a chance in the sense, you consider any one and give a note for it. Give a note properly for it. Clear. But what I suggest is, if they have given repairs and maintenance, assume they have given 500 per month, 1000 per annum. If they are given the fixed amount like that, better to take it as fixed cost. Better to take it as a fixed cost. Then coming to depreciation part. Even depreciation, higher the amount of higher the machine hours worked, higher would be the depreciation. Clear? Yes, sir. So you can consider it as variable. But in the question, when they give SLM method, under SLM method, the amount of depreciation per year is fixed every year. So better to take it as fixed. Better to take it as fixed. Most of the time they give SLM method. Means they will give you cost, scrap value and useful life. Cost minus scrap value divided by useful life is the depreciation per annum. So where to take it better, sir? Fixed. Clear? And whenever these two items are there, you would have taken it as fixed or even variable. Please give a note, whatever treatment you are done. Clear? By chance, guys, I'm telling you. If they tell depreciation in the question is based on machine hours, then better treat it as variable. For example, they would have given like this. Cost of the machine is 10 lakh. The maximum useful hours or maximum estimated machine hours for this machine is 10,000. In the first year, we have worked for 1,000 hours. So better to treat this depreciation as variable because they have given the information relating to hours. Clear? Yes, from question to question it will vary. So if you guys have already solved good number of questions in your regular class, then you would already have an idea where to treat how. Clear? So that I'm giving you the input. If question is silent, what do you take it? Yeah, nothing wrong if you consider it under both. Both means you don't consider for same question under both, either of them. I am telling you either of them. Yes. Preferably take it as fixed. Okay, sir. I will just show you how do you present the machine hour rate. This is very important, guys, because you need to segregate between variable and fixed. That is important. If not, you will lose the marks. Just a minute. You can see here. This is a question on machine hour rate. I have given the breakup between fixed cost and variable cost. You can see. Clear. You have to give the breakup. See, even if you don't give breakup, this total will remain same only. but you will lose step marking. Please don't do that. Yes. Then you need to divide it by productive machine hours. See, machine hours sometimes will be given in the question, or sometimes you need to find out. Okay, so total available hours, from that you need to reduce something called as maintenance time, setup time and all. Clear? You will get what's up? Productive machine hours. And if there is any electricity consumption, power consumption and all, please always take it for this hours. Please take it for this hours. If by chance, if they have given in the question that electricity is consumed even for setup time, then you have to consider the electricity for how many hours? 2 year. In the question, if they have specifically given. If nothing is given, we will consider that electricity is consumed for this hours. That is productive machine hours. Clear? So you need to divide this by what, sir? Total. Total machine cost divided by machine hours. You will get machine hour rate. Is that clear? So this is one way of presenting where you have written only amount column. Or else you can also add one more like per hour column. Per hour column. If you are adding per hour column, what you do is first find out total fixed cost divided by machine hours. So this is the standing charges per hour. Then variables straight away show per hour. Observe the presentation. Okay, sir, is it required to show each of the fixed cost per hour, sir? I don't think so. Not required. I don't suggest. What you do is find out the total fixed cost divided by hours. You show fixed cost per hour as a whole how much. Whereas variable you can show individually. Variable cost you can show individually. Hope you understand. Clear? Sir, do you suggest us to have a separate column per hour? Yes, you can have it. Yeah, if you have time, better to present per hour also. No, sir, I am running short of time. I don't have so much time in the examination hall. Then this I suggest. But this is like second option. If you cannot present the per hour column, only then you go with it. If possible, try to do like this. So even in the class, I have solved questions in both the ways. Okay, more questions we have solved in this way. Clear? Yes, sir. We'll move forward. Then rate per unit of output method. Means here we will calculate the overhead cost per unit. How do we get it, sir? Simple. Divide the amount of overhead by the output. By output. Guys, see this overhead rate per unit. You can calculate either at the end of the year or at the beginning of the year. If you calculate it at the beginning of the year, we call it as predetermined overhead rate. If you calculate it at the end of the year, you call it as actual overhead rate. I repeat, assume guys you have waited till the end of the year. Now you know what is the actual overhead. You know what is the actual output. If you divide the actual overhead divided by actual output, what do you get? The actual overhead rate. Actual overhead rate. When do you calculate? At the end of the period. Once all the activity is done and closed. But normally for observing the overhead, do we follow this, sir? No. If I wait till the end of the year, then how will I charge the cost to my products? How will I fix my selling price? So normally as per the industry standards, what does the company follow is predetermined overhead rate. When is this calculated, sir? At the beginning of the year or before the year starts. So in that case, I would have estimated my overhead cost divided by estimated base, that is like estimated output. I will get predetermined overhead rate. When do I calculate it, guys? At the beginning of the year. Assume we have got predetermined overhead rate as 10 rupees. So for each and every unit I produce, how much overhead we will observe? 10 rupees. 10 rupees. Now, assume guys my actual output by the end of the year is 1 lakh. So as and when I produce one unit, how much I am observing? 10 rupees. So what is the total overhead I would have observed? 10 lakh. By the end of the year, I would have observed totally how much? 10 lakh. Now at the end of the year, you know what is the actual overhead? Yes. Assume your actual overhead, either of the two is there. Because very rarely it will match exactly with 10 lakh as. Because you cannot estimate with 100% accuracy. Okay, sir. So at the end of the year, assume your actual overhead is 12 lakh, but you have observed 10 lakh. You have observed less or more? Less, sir. So there is an under absorption of 2 lakh. Under absorption of 2 lakh. Same way, if I take the other one, assume the actual overhead at the end of the year is 9 lakh, but I have observed how much? 10 lakh. I have observed more or less? More. So 1 lakh is over absorption. Over absorption. And we will also discuss the treatment of this. What do we do with this under absorption or over absorption? We have a treatment of it. We will discuss next. Clear? Yes. Hope you got it. Clear? And whenever the company is following the predetermined overhead rate for absorption of overheads, definitely at the end of the year, there will be either of the two situation, either of the two. What is it, sir? Either under absorption or over absorption. Both cannot come simultaneously. Anyone. Okay. Or I will write. Or okay, sir. Now, guys, here in this example, what I told, for each and every department, we calculated a separate rate of absorption rate. We call this as departmental overhead rate. When do we follow it? Sir, each department is engaged in production. Each department is producing the output. So for each department, I need to calculate separate overhead rates. We call it as departmental overhead rate. Departmental overhead rate. Okay. Whereas, if the organization is producing only one product, all three production department, what they are doing is P1 will start the production, they will do some activity, send it to P2. P2 they will do their work, send it to P3. P3 will complete the product and send it to sales department. Clear up to sell it. So in that case, output would be there only in P3. Only in P3, the final output. Correct? So now how do I calculate the overhead rate? Simple. Add up all the cost. Add up the cost of all the departments divided by output. So now are we getting the one rate for the entire company or one rate for each department? One rate for the entire company. We call it as blanket overhead rate. When we are following one rate for the entire company as a whole or entire factory as a whole, we call it as blanket overhead rate, guys. Blanket overhead rate. Previous case, what I told, we have separate rate for each department. What do we call it as? Departmental overhead rate. Means for each department, we have a separate rate. Why is that? Because each of them are producing the output, sir. Each of them are producing output. In that case, can we have a separate rate for each department? Yes. Whereas in the second case, it was not like that. It was not like that. So the final output is there only in P3, sir. So in that case, we will add up all the overhead cost divided by the output. We will get one rate for the company as a whole. Okay. So first we will see departmental overhead rate. It refers to the computation of one single overhead rate, not for the company, for each department or production unit. So overhead cost allocated or apportioned for that department divided by what is the output of that department. Cost of the particular department divided by output of that department. You will get overhead cost for that particular department. Whereas in blanket overhead rate, it is different. This can be asked even as theory questions. Please be careful. Blanket overhead rates. Blanket overhead rate refers to the use of one single or general overhead rate for the whole factory. Means for the entire factory or entire company, one rate. So we will calculate the overall cost for entire factory. Assume we have 5 different departments. Add up all the cost. Add up all the cost and take it as a numerator. Divide it by what? The output. Divide it by the output. Output of what? The department or for the company? For the company as a whole. Okay, sir. When do we follow blanket rate, guys? A blanket rate should be applied in the following cases where only one major product is being produced. Only one product we are producing on a continuous basis. Can I follow blanket rate? Yes. All production departments are working on what? One product. Is each department producing separate products? No, sir. Everyone are producing same product. P1 will do their work and send it to P2. P2 will do their work and send it to P3. P3 will complete. Okay. Or else, second scenario, very rare to happen, but still theoretically they are given. What is it, sir? Where several products are manufactured. Okay. Several multi-product company. But all products pass through all departments. Okay. Every product pass through all the department and they will take same length of time in each department. Sir, how is it possible? Assume we are manufacturing 3 products and we have 5 departments. All these 3 products will pass through all 5 departments and in each department they will take same length of time. Sir, how is it possible? Practically not possible. Correct. But for theoretically, academically, this is there. If at all, if there is any theory question, please write it. Clear? Even if you are producing multiple products, it should take same length of time in each department. In that case, can we follow blanket rate? Yes. Okay, we are done with this. So here I explained about the predetermined overhead rate, right? Yes. So if company is following the predetermined overhead rate, predetermined overhead rate is calculated at the beginning or at the end, guys? Beginning. So at the end of the year, there will be two possibilities. What is it, sir? Under or over? Under absorption or over absorption? See, because guys, we are calculating the predetermined overhead rate at the beginning of the year. How much did we get here, sir? 10 rupees. For each and every unit we produce, assume in the first month we produce 1000 units. How much overhead we will absorb? 1000 into 10. Clear? Like that, every month we will be keep on observing. By the end of the year, assume guys, we got to know that total units produced is 1 lakh units. How much overhead would have been absorbed by the end of the year? 10 lakh. Will it exactly match with what is the actual overhead I have incurred? No, sir. Why? Because this was purely based on estimation. Guys, standing at the beginning of the year, can I oversee my future? Can I tell exactly what point I will go and reach at the end of the year? There will be some chances of plus or minus. Clear? So the difference between this and this is inevitable. Means it is bound to happen. By chance, sir, no, sir, I am Baba. I can predict it exactly the same. Then there is no chances of under absorption or over absorption. Clear? If this is exactly equal to 10 lakh, then no question of under, no question of over. But it will happen. Under or over will be there. So if actual overhead, when do I get to know the actual overhead, guys? At the end of the year. Compare that with the observe. There will be a difference. That difference is called under absorption or over absorption. Guys, if overhead observed is less than overhead incurred, what do we call that situation as? Under. We have observed less. Under absorption. I have already observed more than what I have incurred. What do we call it as? Over absorption. I have already observed more. Yeah. Yes. This will come only when the company is following predetermined overhead rates, guys. So you can see I have given here overhead observed is less than overhead incurred. We call it as under absorption. If overhead observed is more than overhead incurred, then we call it as over absorption. Any one will happen, guys, not both. Any one, not both. Okay. Now treatment. Treatment is also important because you can get a numerical question on this. Under absorption or over absorption of overhead. First try to figure out the reason. Sir, what is the reason for it? What is the reason for it? If the reason is, sir, if the value is small or if it is due to abnormal reasons, means I would have avoided it, but still it happened. Due to my negligence, it happened. In that case, whatever is the amount of under absorption or over absorption, we will charge it to costing P&L account, guys. We will charge it to costing P&L account if it is abnormal. If it is abnormal, whether it is under or over absorption. Sir, what is the treatment? What is the treatment? Listen here. If it is abnormal and if it is under absorption, guys, if it is under absorption, normally it will have debit balance. How is it also? I will explain. Don't worry. If it is under absorption, it will have debit balance. And if that under absorption is due to abnormal reason, how do I close it? By crediting it. What do I debit it, sir? Costing P&L. What do I debit? Costing P&L. Sir, what if it is over absorption? Then it will have a credit balance. How do I close an account which is having credit balance? By debiting it. So what is the entry? Over absorption to costing profit and loss. Costing profit and loss. Okay, sir. This is when it is due to abnormal reason or if it is of a small value which is immaterial. Treat it as the abnormal and charge it to costing P&L account. Sir, what if it is due to normal reason, unavoidable? Then we need to calculate something called as supplementary rate and apply it to the products. Apply it to the products what, sir? Produced. Now assume, guys, we have produced 1000 units. We have produced 1000 units. In that, 800 units is sold, 200 units is closing stock. So for this 200 units, I would have already calculated cost of goods sold. And for this 200 units, I would have already calculated cost of closing stock. Yes, sir. Now, first find out what is the amount of under absorption or over absorption. Divide it by 1000 units. Divide it by 1000 units. Assume guys, you get 5 rupees. You get 5 rupees. How much has to be adjusted against cost of goods sold? 5 into 800. How much has to be adjusted against cost of closing stock? 5 into 200. How did I get this 500? 5 is called supplementary rate. How did I get it? Simple. Amount of under absorption or over absorption divided by the output. divided by the output. Sir, what is the treatment of it? Simple. If it is under absorption, it will have what balance, guys? Debit balance. How do I close it? By crediting it. Debit whom, sir? For good stock of finished goods, that is for closing stock. And if there is any WIP, debit WIP account. For goods sold, cost of sales or cost of goods sold. Clear? In my example, this will be for 800 and this will be for 200. And WIP I have not taken. If there is WIP, you have to consider that also. Sir, what if it is over absorption? Over absorption means it will have credit balance. How do I close it? By debiting it. What should I credit, sir? Same items which I debited here, I should credit here. Why are you crediting it, sir? I already charged more. How will I remove it now? By giving a credit. Normally, this accounts will have debit balance, but I already charged more. Over absorption, na? I have already debited more. How will I remove that excess? By giving credit. By giving a credit. Hope you understood. And one thing you have to be careful, guys. For WIP, if there is a WIP, while calculating the denominator, you need to take equivalent units. For example, assume WIP is 100 units, with respect to which 40% work is done. What is the equivalent units? 40. You need to take 40 in the denominator. Clear? Because with respect to closing stock of finished goods and goods sold, it will be 100% complete. You will take the units as it is. Whereas for WIP, it would have not been completed 100%. In that case, they would have given, if at all, if there is a WIP, chances of giving WIP is less, but still, if it is there, with respect to WIP, 100% work would have not been done. So you need to take only the percentage what is with respect to the work done. For example, I will tell you. Assume the closing stock of finished goods is 1000. This is finished goods. WIP is 100. Goods sold is 2500. Now this too I have to take fully. Whereas with respect to WIP, assume only 60% work is done. So what should be the denominator here, guys? What should be the denominator? It should be 1000 plus 2500, 3500 plus 60 from you. 60 from here. Hope you understood. Only for WIP, you need to take equivalent units. Clear? So how much do we get? 3500 plus 60. So 3560. That we need to take it as a denominator here. To calculate supplementary rate, we need to take 3560. And this will come only if they have given WIP, guys. What I have observed is most of the time they may not give WIP. They may give only finished goods and the goods sold. Finished goods in the sense closing stock of finished goods. Hope you got it. Oh, let me explain this little detail, guys. Sir, you told debit balance, credit balance. How can you tell it, sir? How come it is having debit, credit balance and all? Simple logic. Let me explain it through this. Where are you? Here. Listen. Assume I have already observed 15 lakh rupees over it. I have already observed 15 lakh rupees over it, guys. Observed means what is the entry I would have passed, sir? Cost or cost of sales to overhead account. Correct. Absorption means the respective cost would be debited to overhead. Clear? But I got to know that I have incurred only 12 lakh. For expenses incurred, what is the entry? Overhead to cash or bank. Correct? So 12 lakh. Guys, you would have done this same thing in the accounts, but reverse. Reverse. What is it, sir? When you incur the expenses, what is the entry, guys? Particular expenses to cash or bank. Now expenses is having debit balance. At the end of the year, what do? Transfer it to P&L account. What is the entry? P&L to expenses. P&L to expenses. So expenses got closed. Correct na? But in costing, we are following reverse for overhead. First we will observe, then we will incur. Correct? Incur will happen throughout the year. But normally the entry for that will be passed when? At the end of the year. So I have totally observed already. As and when I produce each and every unit, I have observed how much totally 15 lakh. But I got to know I have incurred 12 lakh. So when I have incurred, I have debited. When I have observed, I have credited. Debit is less than credit. So overhead account is having a credit balance of how much? 3 lakh. Now tell me, is it under absorption or over absorption? I have incurred 12 but observed 15. So is it under or over absorption? Over absorption. So over absorption will have a net credit balance of how much? 3 lakh. Overhead account is having a net balance of how much, guys? 3 lakh extra credit. Correct now? Now how will I cancel it? By debiting it. By debiting. If it is due to abnormal reason, Overhead to costing P&L. I am taking 80% as abnormal. Remaining 20%, where do I charge it, sir? To cost. Because already cost extra I have charged. Now I need to reverse it. I need to reverse it. So to reverse it, I need to credit cost and debit what? Overhead. That is overhead over absorption. Clear? Why? Because listen here. Overhead is having a net credit balance of how much? 3 lakh. Normally that would have been transferred to overhead to over absorption account. Overhead to over absorption. Now over absorption is having what balance? 3 lakh. How do I close it, sir? By debiting it. By debiting it. Now what will I credit, sir? If it is due to abnormal reason, debit costing P&L account. Credit costing P&L account. Debit over absorption, but credit what? Costing P&L account. Correct. Now, why is it? Simple, guys. On costing P&L account, anything I would have already debited. I have given excess debit. Now, how will I remove it? By giving a credit. What will be this amount? Over absorption. I have already charged more, no? I have already absorbed more. That absorption will be on which side? Debit side. How will I remove that excess absorption? By giving a credit. Clear? Same way. Sir, I have already charged more to my cost. How will I remove it? By giving a credit. If it is due to normal reason. And if there is a closing stock of finished goods, even that we will credit because it would have already been overvalued. Hope you understood. Hope you understood. Sir, same scenario. What if it is the vice versa? I have incurred 12 lakh, but I have observed 10 lakh. Observed is less. So that means there is an under absorption of 2 lakh. It will have what balance, sir? Simple. Overhead is debited 12 lakh here, but credited 10 lakh here. So what is the net balance, guys? Net debit balance of 2 lakh. So it will have a debit balance of 2 lakh. Normally this overhead account, what debit balance is there? It would have been closed by transferring it to under absorption. So what would have been the entry? Under absorption to overhead account. Under absorption to overhead account. So now under absorption is having debit balance. How do I close it, sir? By crediting. By crediting. What account will I debit, sir? If it is due to abnormal reason, costing P&L account. If it is due to normal reason, then cost of sales, or if there is a closing stock, cost of closing stock of finished goods. Hope you understood. Clear? I try to explain the reason. Simply, instead of mugging up the journal entries and all, you should know why am I debiting something, why am I crediting something. Clear? Yes. Let me again come back to this. Guys. First, under absorption. Under absorption will have what balance? Debit balance. Because we have observed less. Still, there is something to still absorb or charge. How will I charge it, sir? Depends on the reason. If it is due to abnormal reason, charge it to costing P&L account. Entries costing P&L to under absorption. If it is due to normal reason, then whatever cost is observed by goods sold or finished closing stock of finished goods is less. Now charge more. They already have debit balance, but you have charged less. Now, whatever is the short, you charge it now. 2. Under absorption. Coming back to over absorption, it already have the credit balance. Why, sir? We have charged more. Cost is already charged more. So if it is due to abnormal reason, pass this sentence. Over absorption to costing P&L account. Similar to gain, guys. Abnormal gain. Clear? Yes. This is similar to abnormal loss. This is similar to abnormal gain. Okay, sir. Then, if it is for units sold or closing stock of finished goods due to normal reason, then already I have charged more cost. Credit them. And debit what, sir? Over absorption. Hope you understood. Yes. And for this, we need to calculate something called a supplementary rate, which I showed you here. How to calculate it. The amount of under absorption or over absorption divided by total output. Okay, sir. Next, we have something called as accounting and control of administrative overhead. Till now, whatever we discussed was more about what? Factory overhead. Now coming to administrative overhead or office and administrative overhead. Any expenses incurred for office administration or for the purpose of planning, formulation, monitoring and all, we call it as administrative overhead. Okay, sir. What is the accounting treatment for it? Apportioning administration overhead between production and sales department, like how we did the primary distribution for factory overhead, same way. Then charging administrative overhead to profit and loss account straight away. No apportioning to departments and all. Straight away charge it to the profit and loss account. or else just add it to cost of production or cost of sales. This is what we normally do in the cost sheet. Clear? Yes, sir. Then the method usually adopted for controlling the administrative overhead means in order to keep the administrative overhead as low as possible. What all measures we will take it, sir? Classify and analyze the different types of overhead expenditure incurring for each departments, which is for administration purpose. Try to see where we are incurring more and try to cut down that. Then controlling that through budget and standards means first set a target for each department of administration. What is the maximum cost you can incur? If your actual cost is more than the budgeted cost, try to figure out the reason. Why have we incurred more? And try to take the necessary action. Like how we do cost control, guys, which we learned in the first chapter. Then the next one is accounting and control of selling and distribution overhead. We already discussed about selling and distribution overhead. Selling overhead is something which is incurred for the purpose of selling the goods or to promote the goods or for marketing or advertisement of it. Then distribution overhead is incurred for the purpose of distributing the goods sold. How do we account for it? Guys, the selling and distribution overhead amount we can decide based on either the sale value of goods or cost of goods sold or gross profit. Gross profit, how do we get it? Sales minus cost of goods sold. We need to take a percentage of that or number of orders or units sold. The most suitable one is sale value of goods. Why, sir? Because the selling and distribution overhead depends on the sale of the product. Higher the sales, normally higher would be the selling and distribution overhead. Assume, guys, the company will fix 20% of my sales should be my selling and distribution overhead. So whatever is your sales, 20% of that maximum can be your selling and distribution overhead. Or else if they are following this, assume they would have fixed for each unit sold, the selling and distribution overhead should be 10 rupees. Clear? So using any of this basis, you can charge selling and distribution overhead, but the most suitable one is sale value of the goods. Here also we can control the selling and distribution overheads through three ways. What are those, sir? Comparison with the past performance. That is in the last year, how much was your sales? How much selling and distribution expenses you have incurred? In the current year, how much is your sales? And how much is your selling and distribution expenses? See guys, in the current year, if sales has increased, obviously selling and distribution overhead also will increase. Now assume sales actually is less than last year's sales, but selling and distribution overhead expenses is increased. We need to figure out why, for what purpose. Yeah, yes. Then we will control it through budgetary control and standard costing. That is, we will set a budget for selling and distribution. What is the maximum expenditure we have to incur? And at the end of the year, we will calculate what is the actual cost. Compare actual with the budgeted and see whether we have incurred more or less. If you have incurred less, very good. If you have incurred more, we will try to figure out the reason because there is some additional cost. When there is additional cost, the profit of the company will fall down. Then concepts related to capacity utilization. If it is installed or rated capacity means, guys, this is the maximum capacity which an organization can work with. But can anyone work at maximum capacity? May not be, sir. Why? Because there will be idle time, guys. There will be an idle time. So this is the maximum capacity at which the company can operate. Assume, guys, let me take it as 1 lakh units. Means if I work maximum capacity, I can produce 1 lakh units. Okay, sir. Then practical capacity. Practical capacity means what? Practically how much you can produce. Maximum is 1 lakh, which is not practically achievable. Tell me practically how much you can produce. Assume, guys, I'm taking it as 75% of my installed capacity, which is coming to how much? 75,000. Clear? And practical capacity is more based on estimation. Practically how much can you achieve? Considering all idle times. That is normal as well as abnormal. Okay. Then coming to normal capacity. Normal capacity means installed minus normal idle time. Minus normal idle time means normally how much can you achieve after reducing normal idle time? Because normal idle time is unavoidable, we will reduce. Then actual capacity is what, sir? Guys, installed capacity minus normal idle time is normal capacity. Minus abnormal idle time will give you actual capacity. Clear? This and this is almost same, but this is based on actually what happened. This is based on estimation. Means practically how much can we achieve. Clear? So actual capacity is actually what we have produced. So idle capacity is something which I was supposed to use, but I have not used it. And that can be due to normal capacity or ideal. Normal is unavoidable, guys. Whereas abnormal, I would have avoided, but still happened because of my ignorance. Yes, listen here. So from uninstalled capacity, if I reduce normal ideal capacity, what do I get, guys? Normal capacity. Then, if I reduce abnormal ideal capacity from normal capacity, what do I get? Actual capacity. Actual capacity. Clear? And practical is like they would have estimated both normal as well as abnormal, and they would have told on an average how much you can achieve. That is like 75% of the installed capacity. Clear? So I can tell almost this both are same, but this normally will be based on estimation, whereas this is actually what is the capacity utilized. Actually, after considering both normal as well as abnormal, what is the capacity you have achieved? Okay, sir. Now coming to treatment of idle capacity cost. Idle capacity means, sir, I would have used it, but not used. Even for that capacity, I would have incurred a cost. Yes. How do I treat it? If it is due to unavoidable reasons, that is normal, then the supplementary overhead rate may be charged to the production capacity utilized. Means it will be a part of my production cost price. Accordingly, the cost per unit will go up. Will go up. If it is due to avoidable reasons, that is abnormal, then cost should be charged to costing profit and loss account. Whatever is the cost of the idle capacity, we need to charge it to costing P&L account separately. And if it is due to seasonal factors means, sir, I will operate only for 9 months in a year or 10 months in a year. Whereas another 1 or 2 months or 3 months, I will remain idle, sir. In that case, whatever cost we have incurred for idle capacity should be charged to what? Cost of production. Means during the season, whatever units you produce, their cost will go up by inflating the overhead rates, guys. Got it? Yes. So this is all about chapter 4, guys. Yes, students. Now we will revise chapter 5, which talks about activity-based costing. So it is called the modern technique of observing the overheads, guys. So whatever we learned in last chapter is the traditional absorption costing system, whereas whatever we will be learning in this chapter is modern technique. But we will try to compare both and tell, sir, which is better. Actually, activity-based costing is the most better one. Okay, it is more realistic. But why also we will try to analyze. Oh, so before I start with this chapter, guys, whatever we have learned in last chapter, I have just given it here, just for a recap. Distribution of overhead. Sir, what do we do? If it is a specific overhead, we need to allocate it. That is in the primary distribution, we will allocate it to respective department. Whereas if it is general overhead or common overhead, which I would have incurred it for 2 or more departments, we will do apportionment using a suitable basis. Yes, sir. These are primary distribution. So at the end of primary distribution, we will have the cost for both the production department as well as service department. But there is no production happening in service department. So we need to reapportion the service department cost to production department in order to find out what is the cost per unit or overhead cost per unit. So for that we need to do redistribution or reapportionment of service department cost to production department using different methods. Yes, sir. So at the end, what do we get, sir? The budgeted overhead of the respective production department divided by the budgeted level of activity. You will get overhead absorption rate or overhead recovery rate. Using this, we will keep on observing as and when the units are produced. So this is what we will follow under the traditional system, or else we will follow machine hour rate. Means instead of taking the output in the denominator, we can take either the machine hours or labor hours. Okay, sir. So you can see here. So while calculating the cost of a particular product or service, what do we do, sir? If it is a direct cost, right away allocate it to the product. That is direct material, direct labor and all. Whereas if it is indirect cost, under traditional approach, how do we observe it to the product or service? Based on machine hours, labor hours or volume. Volume is nothing but output. I told you in each way, guys, the denominator can be output of each department or machine hours or labor hours. Clear? Accordingly, we will get the overhead recovery rate per unit or per machine hour or per labor hour. How do we observe that using it? Also, I have told you in the last chapter. Okay, sir. Whereas whatever we are learning in this chapter is through activity-based costing. Sir, what do we do in activity-based costing is, first we will identify what are the different activities which is happening in the organization and what is the cost of that activities. I repeat, first we will identify what are the different activities happening in the organization. Sir, what are those different activities, sir? Just an example I will give you. Guys, purchasing of raw material is an activity. Production, once production is done, inspection or testing of that products. Then production is a different activity, testing is done. Sir, next marketing or sales. Then accounting, then recruitment of employees. All these are different activities which is happening in an organization. For each of this activity, you would have incurred a cost of, yes, and I would have incurred number of costs for each activities. We will pull up all that cost, pull up this total up all that cost and calculate the cost of each activity. This is not the end. So in this first stage, what was the cost object for us? Activity. Next, will we stop it there? No, sir. We will apportion or allocate this activity cost to whom? The products. My ultimate objective is to calculate cost per object or product. So using the activity cost driver rate, we will assign the activity cost to the product. So how is it? Stepwise we will learn, but here the costs are apportioned based on what, guys? Are assigned based on what? Activities. Clear? So listen here. What was the link between the overhead cost and the product in traditional system? Sir, indirect cost, we need to apportion it to the product based on what? In between what was there, guys? Department or the center was there. That is cost center, we call it as. Correct. First we will calculate the cost of each department, then we will calculate the cost of each product. Whereas under activity-based costing, department will not come in between. What will come, sir? Activities will come. First, we will calculate the cost of each activity, then we will assign it to the product, guys. Hope you are understanding. Both is two-stage process. Both are two-stage process. In the last chapter, what did we do? First, we calculated the cost of each department. I would have incurred a number of overhead expenditure for each department. First stage. Then what do we do? Sir, using the absorption rate, we will charge this overhead cost of each department to the products. Got it. So in between link was what? Departments, which was nothing but cost center. Whereas under activity based costing, what is that link point, sir? Activities. First, we will identify what are the different activities happening in the organization. We will calculate the cost of each activity. Then we will assign activity cost to the products. Clear? Yes, sir. So you can see here, under ABC, we will apportion or allocate the indirect cost to the product based on what? Cost driver. Now, sir, what is it? We call it as cost driver or activity cost driver. Guys, because of this, we are incurring the activity cost. For example, let me take purchasing. Purchasing is one of the activity. Yes. What is the cost driver for it? Number of purchase orders or number of orders. Higher the number of orders, higher would be the purchasing activity cost. Yes, sir. So using this number of orders as the base, we need to assign the purchasing activity cost to whom? The products. To the products, guys. Hope you understood. Clear? Yes. So there are various terms which we use in activity-based costing. We will see that, but before that, we will see the introduction. Whatever I explained. ABC assigns cost to what? First, activities based on the use of their resources. Use of resources is nothing but the money spent. First, we will try to identify the activities. Then we will calculate what is the cost incurred for each activity. Then what do we do, sir? Then we will assign the cost to whom? Cost object. Cost object here is nothing but our products. Our products. Such as the products are customer based on the use of activities. So how is the activities used by each and every product? Using that as a cost driver, we will assign the activity cost to the cost object. ABC can track the flow of activities in an organization by creating a link between what? The activity and cost object. All this can be your multiple choice question. So here the link is created between what? The activity and cost object. Sir, will we assign the overhead cost directly to the cost object? No. Guys, cost object is nothing but my product for which we are calculating the cost. First, we will assign it to activity. Then from there, we will assign it to cost object. Oh. ABC is very much useful to the organization with multiple products and it will give accurate results, guys. Sir, why so? Guys, assume in one department we are producing multiple products. Our traditional system will not help you because you can have maximum one rate for one department. Now in one department only you are producing multiple products. Sir, is traditional system helpful for you? No. Which system is helpful? Activities. So first we will calculate the cost of each activity. Now how these activities are used by each product? We will assign the cost. We will assign the cost. And this will actually give more realistic answer. Activity based costing will give you more realistic answer. But the problem is it involves huge cost. Okay, having the activity based system in your organization will have huge cost. So which organization can have this is the organization which is scaling up or big organization, large organization. If I'm a small entity producing one or two products, maybe you will follow traditional absorption costing system. But if you want to get the accurate results, sir, I want to know the accurate answer. What is the overhead cost for each and every unit I produce? Better to follow ABC costing. That is activity based costing, guys. So what are the different terms used in ABC? First one, activity. What is activity? It is an event that is happening in an organization for which I have incurred a cost. There are different types of event happening in an organization, including accounting, recruitment, which HR department do, marketing. All these are different activities. Sir, are we incurring cost for each of them? Yes. For each activity, we are incurring the cost. Clear. Even in an educational institution, guys, when you come to take an admission, first maybe you would have called or you would have come for an inquiry. There is one person who will answer all your queries, explain you what all will be provided for you. Okay, when the classes will start, how it will go on, first group second group everything they will explain. Then on the admission day, maybe you will be given the books. Okay, then you will join the class. Then there is a separate person who will come and teach. Correct, a teacher. Then on the classes days, there will be another person who will come and take the attendance, maintain, monitor you guys. Clear. If you don't come, then they may call you. Then there will be a separate team again to conduct a test, evaluate and all. All these are different activities. Clear? Yes, sir. Next, cost object. What is our cost object? Sir, my ultimate thing for which I am calculating the cost. Normally my product or my service. Yes. Then cost driver. Cost driver means we already discussed in first chapter. Guys, this is the reason why we are incurring the cost. It will affect the level of cost. It will affect the level of cost. Higher the cost driver, higher would be the cost. Lower the cost driver, lower would be the cost. So so you can see it is a factor that causes a change in the cost of activity. Example, number of production run. Higher the number of production run, higher would be the production cost. Same way, number of setups. Higher the number of setup, higher would be the setting up cost. Okay, sir. Then there are two categories of cost driver. First one is resource cost driver. It is a measure of quantity of resources consumed. Resource here is nothing but money spent, guys, by an activity. It is used to assign the cost of resource to an activity or cost pool. Guys, cost pool is nothing but I have given here. For one activity, I would have incurred a number of expenses. You need to accumulate everything. You have to pool all of them and calculate what is the cost of each activity. That is called as cost pooling. Yes. Next, once I calculate the cost of each activity, I will use activity cost driver to assign what? Activity cost to the products. That is cost object. So there are different activities and what is the cost driver for it I have given. Guys, cost driver also sometimes they would have given in the question directly or else they would have given few. You need to choose which is the most appropriate cost driver for the respective activities. So I have given few lists here. First, let us see what is activity cost driver. It is a measure of frequency and intensity of demand placed on activities by cost objects. It is used to assign what? Activity cost to cost object. Clear? Yes, sir. So I have given examples of different activities and what is the related cost driver for that respective activity. You can just have a look. Ordering and receiving material is one of the activity. For that, what is the cost driver? Number of purchase order. Higher the number of orders, higher would be the purchasing cost. Ordering and receiving material is nothing but purchase activity. Lower the number of orders, lower will be the cost. Then setting up machine, number of setups. Then machining, machine hours. Assembling, number of parts. Then inspecting and testing, number of tests. Painting, number of parts you have painted. Then supervising, number of hours. Number of hours. Then cost pool is nothing but for each and every activity, as I told you, I would have incurred number of costs. Guys, in last chapter we learned for each department I would have incurred a number of expenses, right? So if it is a specific overhead, I will straight away allocate it. If it is general overhead, we will apportion. At the end, we will total up the cost of each department. Same way. For activities also, I would have incurred number of cost. If it is a specific overhead, allocate it. If it is general overhead, apportion it to each activity using a suitable basis. But normally for academic purpose, they are not asking that. They will straight away give what is the activity, what's the cost of it. You need to assign it to the products. Clear? But still, this is what the procedure is. I repeat, first we need to identify different activities which is happening in the organization. For each activity, I would have incurred number of expenses. If it is a specific overhead, straight away allocate it. If it is a general overhead, apportion it. Now we got the cost of each activity. This is not the end. This is like first stage. Now we need to assign the activity cost to the cost object. First, for which we need to use what? Activity cost driver as a basis. As a basis. Now let me explain it. Like in the question, sir, how do we handle it? How do we handle it? Guys, see, first let us learn why are we calculating this? Again, same story. Guys, I want to know what is the cost per unit or factory cost per unit of each product for which I want direct material, direct labor. We already have it, sir. We know for each and every unit what is the material cost, labor cost. But overhead, we have not incurred unit wise, so we don't know. So I need to find out this figure. How will I find out, sir? We are now using activity based costing. We are now using activity based costing. How do we derive this figure? For that, we are doing various calculation. Guys, please be careful. Now, assume we would have incurred number of overhead expenditure. Number of overhead expenditure. First, identify each of the activities which you are performing in an organization. These are the 4 activities. I have given the name A, B, C, D, F and all. This is nothing but activities, guys. Clear? So first, allocate or apportion the overhead cost to each activity. Using what, sir? Resource driver. Resource driver is nothing but how much money is spent for which activity. This is our first stage. Once we are done with this, we will get the cost of each activity. We will get the cost of each activity. Hope you understood. Overhead cost has to be assigned or allocated to activities using what, guys? Resource driver, which is nothing but how much money is spent for each activity. At the end of this, we have a cost of each activity. Now take it to the next table. Take it to the next table. Here we have what are the different activities which are performed in an organization. What is the cost of it? Now we need to assign it to our cost object. Our cost object is nothing but our products. Sir, how do I assign this cost to our cost object? Using cost driver. Using cost driver, or we call it as activity cost driver. Is that clear? And for this assignment, we need to sometime calculate cost driver or activity rate. We call it as cost driver rate or activity rate is one and the same. Sir, how is it? Simple. Take the total activity cost divided by total cost driver. You will get what? Activity rate. Using this activity rate, we will assign to each of the products. Let me explain with an example. Guys, assume one of the activity. Let me take it as like purchase activity. The cost is 1 lakh. The cost is 1 lakh. First, find out what is the total number of orders. Total number of orders, purchase order is 100. So, what is the activity rate? 1000, which is nothing but for each order, what is the cost we will incur? 1000. Hope you understood. That is nothing but 1 lakh divided by 100. We got 1000. Now, use what is this, guys? Cost driver rate or activity rate. Using this, assign it to each product. Sir, for that, we need what is the number of orders for each product? I have placed 20 orders for P. So how much cost should I assign for P? 20 into 1000 will go here. Okay. Then how many orders I have placed for Q? 30. So 30 into 1000 will go here. Same way for S, let me take. How many orders I have placed? 10. 10 into 1000 will go to S. This is called assignment of activity cost. If you do total, it would be 100. That is what I have taken here. Clear? So this is the cost driver for each product. If I total up that, I will get 100. To calculate the cost driver rate, what would be the denominator? Total of cost drivers. Total of cost driver. Hope you are getting it. Clear? I repeat this because this is what is important. Once you determine that, using this, we will assign the activity cost for each product. Sir, how is it? First, take the activity cost, which normally would be given in the question. Clear? Then divide it by total of cost drivers. This you need to identify. What is the cost driver for each activity? And if you are lucky, they will give sometimes in the question also, or else you need to pick it. For which activity, which is a suitable cost driver. Clear? I had given it here, na? Like some of the examples I have given. Okay, sir. Okay, I will take the total of cost driver. If I divide each other, what do I get, sir? Cost driver rate. Now, this cost driver rate, I will multiply with cost driver units for each product. For each product. Like, how much is the cost driver I got? 1000. I will multiply it with the cost driver for each product. I will get what is the activity cost to be assigned for each products. Like this, we will do it for each of the activity. We will get what is the total cost to be assigned for each of the product. If you divide it by output, you will get overhead cost per unit. You will get overhead cost per unit. And this is what I should take it here. This is what I should take here. Yeah. And this part, they may or may not ask in the exam. But this part and all will come back. Especially these two tables are important for activity-based costing questions. Hope you understood. Clear? Yes. Let me also explain it through a question. Okay. Now, I am just taking the question which I have solved in my regular class. Okay. So there are two activities here, guys. They have only given what is the cost of activities. The activities power and quality inspections. And what is the capacity they have given. So cost driver is calculated based on capacity. So how do we calculate cost driver rate? Simple. Divide each other. What do you get? Cost driver rate. Cost driver rate. You can observe here. 2 lakh divided by 50,000, 4. 3 lakh divided by 10,000, 30. What do we call it as? Activity rate or activity cost driver rate. Now what do I do with this, sir? How much you have consumed for each of the product? They have given it here. They have given it here. Okay. Now for power, what is the cost driver? Kilowatt hours. Higher the kilowatt hours, higher would be the power cost. Same way for quality inspection, they have given maybe the quality inspection hours. Clear? Now we have got, let me see. For power, what is the cost driver rate we have got? 4. Now, how much has to go to M? 4 into the 10,000. How much has to go for S? 4 into 20,000. How much has to go for T? 4 into 15,000. Sir, how did you get this 10, 20 and 15? This is the cost driver for each product. Clear? Same way. For quality inspection, what is the rate we have got? 30. How do I assign it to the products now? 30 into the respective cost driver. So 30 into the respective cost driver we need to do that to the respective product. Clear? And here we calculated the cost driver using the capacity. But full capacity is not utilized, guys. You can observe here. Totals are not matching. So the remaining is called underutilization of capacity. In this question, I guess they have asked to calculate the cost of even unused capacity. Unused capacity, which is there but not used. I have done it here. Clear? Hope you understood. Unused capacity means for power how much, sir? For power capacity is 50, but we have used only 45, so 5,000 hours. Whereas for inspection, what is total, sir? 10,000, but we have used only 9,000. Remaining is how much, sir? 1,000 unused capacity. Is that clear? Yes. Means I just tried to show you guys how do you apply this cost driver rate to assign activity cost to each of the products. Clear? Yes. So now if you calculate what is the cost of each product, you will get it here. You will get it here. They may just ask you here, stop it. If they are asking you one step ahead, what is the overhead cost of each product, then you have to total it up here. And if they ask you to calculate factory cost for each product, then material and labor would have already been given in the question. For that, you need to just add whatever you have got here. Whatever you have got here. Hope you understood. See, as a format also here, I have given everything. Clear? I told you this part they may or may not ask in the exam. If they ask you, do it. If not, just leave it. This part they may ask you, you will do it. Yeah, whereas this table, whatever I have given, normally they will only give the cost of each activities, guys. That is this figures, they will only give it. Clear? Yes. If not given, then we need to allocate or apportion each of the overhead cost to activities based on resource drivers. Hope it is clear for you. Yes, sir. Going back. Very simple. Actually, sir, what all kind of questions we may get it in exam is simple. See, there are three kind of question you can get. One is purely on activity-based costing. Because both fourth and fifth chapter is about treatment of overheads, guys. One separate question on activity-based costing you can get, or else the second chance is they may ask one single question on both traditional as well as activity. Or the third option is they may ask only under traditional. They may ask only under traditional. Hope you understood. Exclusive question on traditional or exclusive question on activity-based costing or combined question of both. Combined question of both. Okay, sir. Let us move forward. Yeah. I have explained the steps even in the theoretical format I have given. Let us just go through it once. Steps in developing activity-based costing system. First, what do we do, guys? We will identify the various activities going on in the organization. But from exam point of view, sir, will they ask us to identify? No. How do you identify? Clear? They would have only given the name of the activities, guys. Clear? Yes. Then once we identify the activities, we need to total up the cost of each activity we have incurred. How do we calculate the cost of each activity, guys? Using resource drivers. Please be careful. All this can be asked in MCQ also. Next, identify the cost driver for each activity. Why, sir? Because using this as a basis, we will assign activity cost to where? To cost object. Oh. Cost drivers are the factor which is responsible for the change in activity cost. Now, how do we calculate it, sir? Simple. Total cost of each activity, we call it as cost pool, then divide it by activity cost driver, that is total. Denominator should be total. Please be careful. And when you are assigning it to the cost object, multiply it with the cost driver of the respective product. Respective product, guys. So apportion activity cost to cost object using what? Cost drivers. Using the cost drivers. Yes, sir. So here also by a diagram I have given, you can just have a look into whatever steps we have discussed. I have just given it here, guys. We'll proceed further. Coming back to this we have seen now. Difference between, this can be your theory question. Difference between the activity-based costing and traditional absorption costing system. Guys, don't try to mug up. Understand what you have done in each chapter. It will be very easy. So under activity-based costing, overheads are related to what? Activities and grouped into activity cost pool. So in the first stage, we will assign the cost to whom? That is allocate or apportion the cost for whom? Activities. Whereas under traditional, we will allocate or apportion the cost to whom? Departments. Correct? Now, that is in our primary distribution. Then costs are related to activities and hence are more realistic. Because guys, see in reality, what if I tell you? Is cost incurred for department wise or activity wise? Activity wise. Why, sir? Simple, guys. In one department also there can be multiple activities which are happening. And for each activity, we will be paying a cost. Clear? So what is more realistic, sir? If I connect the cost to activities or to the department? To the activities. Because, for example, assume guys, you are doing inspection and for your inspection work, I am paying you 1 lakh. Correct? And this inspection is done in various departments. So, should I calculate cost department wise or the activity wise? Activity wise. Clear? Maybe later I will assign this inspection cost to the products using the time spent by you in each products or for each products. Oh. Whereas under traditional, costs are related to cost centers. Cost center here is nothing but departments and hence not realistic of cost behavior. Because cost behavior is simple, guys. Now, sir, will it vary? Will cost vary depending upon the departments? No. But will cost vary depending upon the activities? Yes. Higher the activity, higher would be the cost. Lower the activity, lower will be the cost. So it will behave as per the activity, but not as per the departments. Next, activity-wise cost drivers are determined under ABC. Whereas here we will follow what? Time or hours are assumed to be the only the cost driver governing the cost in all departments. Or else sometimes we will also take output. At the bottom, at the end of secondary distribution, when we are calculating the overhead cost, what do we do, guys? What do we take it as a denominator? Either output or machine hours or labor hours. Correct? Yes. Here, activity-wise recovery rates are determined and there is no concept of single overhead recovery rate. Under activity-based cost, is there any possibility that we can find out blanket overhead rate? No, sir. Because definitely there will be number of activities we are doing in an organization. And for each activity, we need to calculate separate activity rate. Whereas in traditional absorption costing system, can I calculate one single overhead rate? Yes. What do we call it as? Blanket overhead rate. Okay, there are certain situations when I can calculate it. That is only when I am producing one product on a continuous basis. Or even if I am producing multiple product, each product has to process through each department at the same length of time. Only then I can follow single or blanket overhead rate. Then coming to essential activities can be simplified and unnecessary activities can be eliminated. Guys, assume in an organization there are few activities which are adding no value to the organization. It is adding no value to the organization as well as to the customers. So can I identify them and try to eliminate it? Yes. Because these activities are not adding any value to me, but I am incurring cost for it. But I am incurring cost for it. So I will try to identify that and I will try to eliminate it. Then coming to traditional absorption costing, the last one. Cost centers or departments cannot be eliminated because see here the cost is calculated for each department. Now assume, can I, if I think that this department is no use, can I eliminate complete department? No, there is no department which will be completely useless. Correct? Something they would be doing. I cannot completely eliminate the departments. Maximum I can do is maybe whatever that department is doing, I can outsource that work to the outsider. Clear? But I cannot completely eliminate the department. So the traditional will not help you in cost control, whereas the activity-based costing will help you in cost control. How they will help you, sir? They will help you to reduce or eliminate the non-value adding activities. Guys. Is that clear? And one more disadvantage under traditional absorption costing is, guys, we learned under the secondary distribution, assume at the end, we have machine hour rate. Machine hour rate. Now assume for production department 1, we have got machine hour rate as 100. Now in P1, the machine will work for 5 hours to produce each and every unit. So what happens is higher the number of hours, higher would be the overhead cost. Lower the number of machine hours, lower would be the overhead cost. Sir, is it a right way to observe the overheads? May not be always. May not be always. Whereas under activities, sir, if activities is performed for a particular job or particular product more, then we will assign the cost more. Clear? So is this a good way of doing it? Yes. Clear? Because more hours means more cost may not be always realistic. May not see most of the time, yes, but may not be always. May not be always. So where the cost is actually linked to the cost object is through activities, guys. Where what is the overhead cost which is directly attributable to the cost object, which is better, sir, through department or through activities. It is more with activities. Okay, now coming to level of activities under ABC methodology or cost hierarchy. Now, level of activities means there are 4 level of activities, guys. See, this level of activities will help you to decide the cost driver required. Now, what is first? Unit level activities. Guys, if there is any activities which you are performing for each and every unit you produce, for each and every unit produced, then we call it as unit level activities. Example, indirect material or consumables. Indirect materials or consumables. Next, batch level activities. Batch means a group of products. Guys. Now, if there is any activities which you are performing for each and every batch, not product, each and every batch, that is group of products, then we call it as batch level activities. Example, material ordering, inspection of products, etc. Material ordering, especially guys, will you order for one unit? No, sir. When I am placing the order, I will place the order for ROQ. Assume ROQ is 1000. That is a batch now. So, purchase related activities will be performed for a batch or for a unit, for a batch of 1000 units. For a batch of 1000 units. Hope you understood. Now, let me give one more example. Testing. Testing, guys. Assume we are performing the testing activity for each and every unit produced. So, what is testing now? Unit level activities. Unit level activities. Or else, sir, it is not possible to test each and every unit, sir. We will do it on a sample basis, sir. In a group of 1000 units, we will pick only 5 units and do the testing on a sample basis. So in that case, testing will be batch level activities. Batch level activities. Hope you are understanding. If there is any activity which you will perform for each and every unit produced, then for example, assume, sir, indirect materials like petrol, diesel and all, we are consuming for each and every units produced, sir. So in that case, can I consider it as unit level? Yes. Whereas coming to batch, purchasing, inspection or testing, we are not doing for each unit. We are doing it for out of so much group. Testing or inspection, we are doing it out of 1000 units. We are doing only 100 units. So in that case, it is batch level activities. Even machine setup. Assume guys, as and when 100 units are produced, we need to set up the machine. So here it is what? Batch level activities. Batch level activity. Or else assume, sir, I have to set up the machine after each and every unit produced. After each and every unit produced, then it becomes what? Unit level activities. Unit level activities. Next, product level activities. Activities which are performed to support the different products in product line or to develop a product or to specify the parts of the product. We call that as product level activities like innovation, research and development, all those things comes here. Designing the product, producing the parts specification, that is the parts which will be used in the output, guys. Last one is facility level activities. Guys, these are not activities which are performed unit wise or batch wise. They are supporting activities. They are supporting activities. They are not directly engaged in production, but they are supporting it. Examples are like plant security, production manager salary, or supervisor salary, or maintenance of building. Maintenance of building. So please be careful. These are not incurred unit level or batch level, or not even for product. It is to support the production. It is to support the production. And guys, on this, you can either get the theory question or else they will give you a few activities and ask you to classify them either as unit, batch, or product or facility. Clear? So you need to classify it. This is done. Next, activity based management. So managing the cost using the ABC system is called activity based management, guys. So that is nothing but controlling your cost using ABC. Using ABC. The use of ABC as a costing tool to manage the cost at activity level. We are managing the cost at what level? Activity level. Means we will try to control or reduce the cost incurred for each and every activity. Is known as activity based cost management. So in this, what are the different steps we will follow, sir? Cost driver analysis. The factors that cause activities to be performed need to be identified in order to manage activity cost. Guys, we will first try to identify what's the cost drivers. We will try to identify the cost driver for each activity. Why is that? Simple. If you try to reduce this cost driver, automatically the activity cost will go down. Automatically activity cost will go down. Hope you are understanding. So if you can control this, you will have a control over this. Okay. Next, activity analysis means you have identified different activities happening in an organization. Now try to identify which are value adding, which are non-value adding. Which are value adding means what, sir? The value added activities are those activities which are indispensable in order to complete the process. Means without this, I cannot manufacture my product and sell it, sir. So can I eliminate this activity? No. Without it, we cannot complete our work. And even customers are willing to pay for it. Even customers are willing to pay for it means without this activity, they will also not purchase my product. For example, this bench or desk, if I sell it without polishing, will customers accept? No. Even furniture, without polishing, if I sell, will they accept it? No. So now can I tell polishing is an value adding activities? Yes. Example, polishing furniture by the manufacturer, dealing in furniture is a value added activities. Now coming to non-value adding activities means guys, these are the activities which we are performing in the organization. We are incurring cost for it, but no use. But no use. Sir, without this also, can I complete my work? Yes. Will customer also appreciate it? Yes. So what happens now? If I eliminate these activities together, my cost will come down. If I reduce my cost, maybe I can also reduce my selling price if possible. So that customers also will be happy, guys. So what is non-value adding activities? The non-value adding activity represent work that is not valued by the external or internal customers. Non-value adding activities are do not improve the quality or function of a product or service. Just for the sake we are performing this activity, but no use. Is it contributing anything to my products? No. But they can adversely affect the cost and prices. Adversely affect the cost means what? Sir, this activity, even though it is not adding any value, are we incurring the cost for it? Yes. So, higher the cost, lower would be my profits. Example, moving materials and machine setup for production run are example of non-value adding activities. Means if you can bring some automation for it, then you can eliminate the manual system and bring the automation. Clear? For example, if I tell, sir, instead of taking the attendance manually here, okay, getting it here, signing each and every person signing it will be too much time consuming. Correct? Instead of that, use the technology. Display for 2 minutes the scanner here. Ask every student to scan and mark themselves as present. Clear? So that will be more effective and it will also avoid the proxy. Correct? Now, see, I don't think you guys will do, but in any case, what if you sign for your friend? While signing the attendance, you sign for you also, your friend also. Possibility is there. Clear? Whereas, ಅವನೇ ಅದೇ ಮಾಡ್ತಾನ ಚಲೋ ರಾಹುಲ್ is showing you ರೋಹಿತ್ ಅವನಿಗೆ ಅದು ಅರ್ಥನೇ ಆಗಿಲ್ಲ he didn't even realize ಚಲೋ. So I just gave an example. Okay, you can eliminate this manual system and bring some technology where we can save time and even the energy as well as the cost. Last one, performance analysis. Performance analysis involves the identification of appropriate measures to report the performance of each activity. Sir, how each activity is contributing to the organization as a whole? As a whole, is it helping us to achieve the overall objective of a company? And assume guys, there is a particular activity which is performed, they are really working well. Then whoever is working under that activity, we need to appreciate them. How, sir? Through maybe bonus or incentives. We will try to reward them. Oh. Next, activity-based management in business through cost reduction. As I already told you, guys, through activity-based costing, we will identify the activities which are not adding any value and we will try to reduce it, or if possible, we will completely eliminate it, which will help us to reduce our cost. Next is business process re-engineering. Means always looking for an innovation, always looking for a change. We are trying to look for a way where I can do whatever work I am doing now in a more better way. In a more better way means I am trying to bring a change in my current process so that I can do it in a better way with less cost. Then benchmarking. Benchmarking means what, sir? Keeping something as base to compare my current work. For example, I can keep the last year work as a base to compare the current year work. Or else I can keep my competitor work as a base or cost as a base to compare myself with him. Clear? Yes, sir. Or else we will normally do, we will set a budget at the beginning of the year, we will calculate the actual cost and actual we will compare with budget. Here, what was the benchmark? Budget. Yeah, whatever you will keep it as a base is a benchmark for you. Then performance measurement, as I already told you, we will measure the performance of each and every activity and see who is performing better. And we will try to reward the department or the activities or the employees who are working under that activities through various modes, that is either bonus or incentives. Then the last one is activity-based budgeting. Guys, we will identify the different activities to be performed in the upcoming year and we will allocate the cost for each activity. So this is what the cost you have to incur for each activity. And at the end of the year, we will calculate the actual cost and compare with budgeted. For any activity, if you have incurred actual cost more than budgeted, then you will have a variance. And we will try to figure out what is the reason for it. If it is uncontrollable, okay, it is not in our control, we will leave it. But if it is controllable, we will try to take the necessary steps. So there are three key elements of activity-based budgeting. What are those? First, we will fix what is the type of work to be done. That is, what should you do? Next, how much should you do? Last one, what is the cost you have to incur for it? Clear? What you have to do, how much you have to do, and what is the cost you have to incur for it. This is the steps to fix the budget for each activity. Clear? Assume we have fixed a budgeted cost for an activity. Assume purchasing activity, we have fixed a budget 2 lakh. We have not told them how much to purchase. Correct? Sir, is it correct? No. Tell them how much to purchase, when to purchase, and then tell what is the budget for. So that they can also accordingly work as per. Yes, so this is all about chapter 5 revision. Yes, students. Now we will revise chapter 6, which talks about cost sheet. One of the important chapter because this will also have an impact on other chapters, guys. Very small topic here in this chapter, but it will also have an impact on other chapter, especially next chapter, that is cost accounting system. When we discuss about the journal entries and all, I will connect that journal entry sequence to the cost sheet format so that it would be easy for you to remember the sequence. Yes. First, let us learn what is cost sheet. A cost sheet or a cost statement is a document which provides the detailed cost information. It is a summary of cost, guys, which will give the detailed information about from the day we started the production till the day we complete the production and sell it in the market, what all cost we have incurred. And it will follow the sequence. Guys, my production will start with what? Raw material. Once I purchase the raw material, sir, to convert my raw material into output, we will incur number of expenses like labor, overheads and all. So first we will take material cost, then labor because we need labor to convert the input into output. And in this process, sir, if I just manufacture the product, it is not enough. There are a lot of supporting activities for which I would have incurred lot of indirect expenses. All those things also we have to take care. Now the product is ready, sir. Product is ready for the market. Now will the customer come in search of me? No. I should make the product available to the customer. I have to reach my products to the customer, for which I need to incur some marketing expenses, selling or marketing expenses. Then once the product is sold, customer may ask for a free delivery. I need to deliver it to the customer. In that process, I might incur some transportation cost, freight outwards. All this will follow the process, guys. That is nothing but the sequence. So if you know how the sequence will start, like guys, even in FM, you have an operating cycle, right? Yes, same way here also. Sir, the manufacturing cycle will start from when? When I purchase the raw material and start using it. Now to convert my raw material into output, whom do I need? Direct workers. For them, whatever I pay is called what? The direct labor cost. Next, whatever I pay, any other direct expenses, which is directly attributable to the product, we call it as other direct expenses. All these three put together, what do we call it as, guys? The prime cost. This is always direct in nature and variable. After this, there are a lot of overhead expenditure which I may incur either in factory, office, or even for administration purpose, selling purpose, or marketing purpose. Then I have to take care of all that. Then we will get the total cost. We will add certain profit for it and we will fix the selling price. So this is what we will be learning in this chapter, guys. That is cost sheet. So you can expect a numerical question, that is they will give some data, information about the cost and ask you to prepare the cost sheet where you need to place the items properly. You need to place them in the respective order, guys. That is very important. For that, you should know the cost sheet format. As I told you, nothing to mug up. If you know how the production starts and how it ends, then once production ends, that is not the end. We need to sell the product in the market, right? For selling that also, we will incur the expenses. For distributing it also, we will incur the expenditure. All that has to follow in a sequence. And that sequence is what we follow in cost sheet format. So let us see. I will explain the format later. First, we will see some introduction about this. And here, whatever classification we will use to prepare the cost sheet is the functional classification, which we learned in first chapter. First chapter. So, functional classification of elements of cost are what? First, direct material cost, then direct employee cost, direct expenses. All this put together, what do we call it as? Prime cost. Then we will get all the indirect expenses, which is divided into manufacturing or production overheads, research and development cost, administrative overhead. The last one is selling and distribution overheads, guys. Now, coming to the preparation of cost sheet, guys, in the cost sheet, we need to show various heads, that is various calculations. Don't straight away show the total cost. You need to show stepwise what are the different heads of cost you will calculate, which is prime cost, cost of production, cost of goods sold, and cost of sales. I will discuss each of them. Then I will go to the format and I will tell you how do we present it in the cost sheet. Okay. First one, direct material cost. Guys, these are the raw material through which we have produced our output. They are directly identifiable or attributable to my output. I can tell to produce each and every unit of output how much raw material cost I have incurred. That is nothing but direct material cost. We need to calculate direct material consumed. Direct material consumed. Yes, sir. How to calculate it? We will take care later. Then direct labor cost. Guys, the laborers who are engaged in the production are called direct labor. For them, whatever is paid is called direct labor cost. We need to consider it here. Sir, what if the workers are not engaged in production, but still we are paying them the wages? Then that will come under indirect labor. And if question is silent, always consider indirect labor under factory overheads. If they have given clearly that office salary or office staff salary or administration staff salary, then you will take it under the respective overheads. But if they have simply mentioned indirect labor or indirect material, please take it under factory overheads. Clear? Yes. Then other direct expenses, which is directly attributable to the production, but not material, but not labor. Any other direct expenses which is directly attributable to the product. We learned this at the end of the labor chapter or employee cost chapter. Examples also I have given: excise duty paid on the manufacturing, then royalty paid or payable for production, expenses or design cost which is incurred for each and every unit, or even if any rent is paid or royalty is paid for each and every unit produced, then we will consider it under other direct expenses. After adding all this, whatever we get is called prime cost. Whatever we get is called prime cost. Now coming to the presentation. Format of cost sheet. Guys, see, in your accounts you would have learned, sir, assume this is the income statement, that is your P&L account or trading account. You're recording your sales. Assume guys your sales is 20 lakh. On the debit side, you will record expenses. You will record expenses. How much is the expenses we will record? Sir, whatever expenses we have incurred to generate this 20 lakh sales, we will record it on the debit side. Correct? Now, that is what matching concept will tell. In order to match in the sense we need not match it in the amount. Yeah. Sir, to earn 20 lakh expenses, to earn 20 lakh sales, what all expenses I have incurred, we need to debit it. Assume it is 12 lakh. So what is my profit? 8 lakh. Clear? There might be some expenses which I have incurred in the current year, but I have not generated any sales out of it. I have not generated any revenue out of it. What do we call it as? Prepaid. Will we record it in the income statement? No, sir. We will show it as an asset. We will show it as an asset in the balance sheet. Same way, there might be few expenses which I have incurred, but I have not paid. Outstanding. Will we still record that in the income statement? Yes, we will record it. Clear? Now you would have added outstanding expenses under, correct? No, you will add outstanding expenses. Clear? So, in simple, what am I trying to tell is, guys, we will record only the expenses in the current year which have helped me to generate revenue in the current, which have helped me to generate revenue in the current year, especially when it comes to closing stock, whether it is closing stock of raw material or WAP or finished goods. Guys, on this units, I have incurred a cost in the current year. But did we sell it? No. Has it helped us to generate revenue in the current year? No. So what should we do with it? We need to deduct it. Because I have incurred this cost in the current year. But did I sell it in the market? No. As I have not sold it, did it generate any revenue to me on the credit side? No. As it has not helped me to generate any revenue on the credit side, what should I do? I should not include it in my cost. I should not include it in my cost, guys. Okay. Same way coming to opening stock. Sir, opening stock is actually, we started working for it last year or we have purchased it last year, but we didn't use it. So in the current year, first we will use that. Yes. So we will complete the work and sell it. And will it help me to generate revenue in the current year? Yes. So should I include it in the current year cost? Yes, guys. We should include it in the current year cost. So if I ask you, guys, in your P&L account or even in your trading account, what do you do with opening stock and closing stock? Opening stock you debit because you have to include it in your cost in the current year. Actually, assume this is a raw material. This is something which is purchased last year. But did you use it in the production process? No. When you have not used it in the production process, did it help you to generate any revenue? No. So you would have not included it in your cost in the last year. So in the current year, as soon as the year starts, first I will use this. First I will use this in the production process. Okay, sir. So should I include it? Assume it is 2 lakh. Plus I have purchased 10 lakh worth of goods. What is my total cost, guys? 12. So on the debit side, how much total cost is debited? 12 lakh. Assume 1 lakh worth of raw material I have not yet used. Closing stock of raw material. But it is already included here. But did it help me to generate any revenue in the current year? No. So what should I do? Give a credit. Give a credit. So what is the net cost now? 9 lakh. Sorry, 11 lakh. 11 lakh. Hope you are understanding, guys. 1 lakh is a part of 12 lakh. I have incurred it. But did I use it in the production process? No. As I have not used this in the production process, it has not helped me to generate any revenue in the current year. So what should you do? Should you include it in the current year cost? No. So as you should not include it in the current year cost, now in your trading account and all, you would have not gone and reduced it here. Instead of reducing it on the debit side, what you would have done? You would have given a credit. So if I consider both of this, what is the net debit? 11. It is nothing but the cost which we have incurred in the current year, which has helped me to generate revenue in the current year. So now if I ask you in the cost sheet, how do we present it? Opening stock we debit. Sorry, we will take. Purchases we will add. And we will deduct closing stock. Sir, closing stock, why do you debit it, sir? Sir, this is the cost which you have incurred in the current year. But we have not generated any revenue out of it. So should it be a part of cost of sales for me? No. Remove it. Simple, guys. At the end of cost sheet, we will determine something called as cost of sales, which is nothing but total cost. Now, this total cost is nothing but the cost which has helped me to generate the sales in the current period. If there is any cost which we have incurred but didn't generate any revenue to me in the current year, what should I do? Remove it. Remove it. That is deductive, which is nothing but closing stocks, guys. Closing stock of either raw material, WAP, or finished goods. Clear? Sir, opening stock should we add it? Yes. Why do we add it, sir? Guys, this is something which is incurred last year. But in the current year, what is the first thing I will do? I will complete this and sell this first. So did we sell this in the current year? Yes. So should it be a part of current year cost? Yes. It should be a part of current year cost, guys. Sure. First part we will discuss now. Opening stock of raw material you will take plus purchase of raw material during the period plus if there is any purchase related expenses, guys. Purchase related expenses. Even if you have paid GST for which credit is not available, you have to add. Sir, what if credit is available? Don't add. Credit is not available, add it. Then if there is any discount also, you will reduce it, guys. This part is very similar to whatever you would have done in the valuation of inventory in chapter 2 or material cost. Yes, sir. Then closing stock of raw material, we have to reduce it. What do we get, sir? Raw material consumed. You take it to the outer column. For that, you add direct labor cost and other direct expenses. You will get prime cost. And other direct expenses may not be there always, guys. If at all, if it is there, you take it. If not, you can ignore this step. You can ignore this step. Okay, sir. Now coming back. Once we derive prime cost, for that we need to add something called as factory, manufacturing or production overhead. This is an indirect expenses which is incurred in the factory. Clear? Any expenses incurred in the factory other than direct material, direct labor, and other direct expenses will always be indirect costs. Clear? We need to add it. Then there is a work in progress. Sir, what is work in progress? Semi-finished goods. I have not completed the work. If there is opening work in progress, we need to add it. If there is closing work in progress, we need to deduct it. Then what do we get, sir? Factory cost. Factory cost. Let us see that. After prime cost, we need to add works, factory or production or manufacturing overhead. Everything is one and the same. Please know the alternate names because in the exam when they use different names, you will get confused. Everything is one and the same. Once I add this, we get something called as the gross works cost. Then we need to add opening WAP and closing WAP. And guys, in the exam, sometimes they may not give WAP. Just ignore that step. See, here I have given everything. What all might come in cost sheet format. If something is not given in the question, sometimes even these items might not come. Please ignore that step. Just ignore that step. Okay, sir. Opening WAP. Sir, why do you add opening WAP? Simple logic, guys. This is the units which I started producing last year, but I have not completed it. Last year, could I sell it? No. So in the current year, what I will do? I will bring that semi-finished goods, complete the remaining work, and I will sell it first. So should it be a current period cost? Yes. So we are adding it. We are adding it. Same way, closing WAP. I have started working on it in the current year, but did I complete? No. As I have not completed, can I sell it in the market? No. That means, should it be a part of current period cost? No. So we are removing it. We are removing it. So we get factory cost or works cost. Okay. Yes, sir. And for that, we need to add few more items, if at all, if it is there. Okay, if at all, if it is there, guys. Quality control cost, which is incurred to check the quality of each and every unit produced, guys. Okay. Then research and development. See, quality control, if it is incurred for each and every unit, it can also be a part of other direct expenses. Yeah, but now for academic purpose, if they have given quality control cost, please take it after factory cost. Just to take it after the factory cost. Okay, sir. Because if I have incurred anything unit wise, which is not material and labor, where it will come? Other direct expenses. But as they are given in the format as a separate line item, better to take it after factory cost. Then if there is research and development which is related to the product or process or production, please take it here. Sir, if there is any R&D related to market or which is not related to product, what should I do, sir? Don't take it here. Don't take it here. Then administrative overhead, important. Only if it is related to production, we will take it here. Sir, what if it is general, not related to production? Then I will take it later, thus, after the cost of production. Yeah, yes. And sir, what if by chance if question is silent? They have just given administrative overhead. You can consider it as general, but give a note. See, first of all, they will only give clarity in the question. Is it related to production or general? If they have given it, please follow whatever they have given. If they have not given it, then please give a note for it. Please give a note for it and you can consider it as general. Next, credit for recoveries means if I have sold anything for a smaller value or put for a scrap, I have got some small value, reduce it from production. If you guys remember in process costing, we would have reduced the scrap value of normal loss units from the total cost. Clear? A similar thing here. Whatever scrap value you get from the sale of some defective or spoilage or any wastage, whatever you get, you need to reduce it from total cost, guys. So you deduct it here. And if there is any primary packing which is done for each and every product produced, not at the time of sale, at the time of production itself, you are doing packing. In that case, it should be a part of cost of production. Sir, what if it is a secondary packing, sir? Secondary packing means we are packing it to dispatch it to the customers. At the time of distribution, we are packing it. In that case, it will come here. It will come here. Okay. Yes, sir. So once I take care of all this, whatever is given in the question, I'm repeating again, guys, everything might not come in the question. Whatever you get in the question, please take care of it. Rest you forget. Sir, should I write? For example, assume they have not given anything with respect to quality control cost. Sir, as a format, should I mention and write nil, sir? Just skip that step. Oh. Now, once I add all this for my factory cost, guys, what do I get? Cost of production. This is the cost of the goods which I have manufactured in the current period. Now, there might be few goods which I have manufactured last year but not sold. What do we call it in the current year? Opening stock of finished goods. Guys, simple. This was last year closing stock of finished goods. Did we sell it? No, I had produced it. I incurred the cost in the last year, but I didn't sell it. Did it help me to generate revenue in the last year? No. So should it be a part of last year cost? No. So in the last year, what I would have done? I would have deducted closing stock of finished goods. So in the current year, what should I do? Add it. Why should I add it, sir? Simple logic. Guys, this goods I have already produced last year. So in the current year, as soon as the year starts, as soon as the show starts, first I will sell what? Whatever I have produced last. Clear? So have I sold these goods in the current year? Yes. Has it helped me to generate revenue in the current year? Yes. Should it be a part of current year cost? Yes. So add it. Opening stock of finished goods should be added. Now what do we get? Guys, once I add the cost of production to opening stock of finished goods, what do I get? Cost of goods which is available for sale. Available for sale. For example, assume guys I have produced 10,000 units. I have produced 10,000 units plus 2,000 units was the opening stock. Now how many units are available for sale? 12,000. What is the cost of it we need to take? Assume out of this 1,000 units we are not sold. That is closing stock. Now what is the units sold? 11,000. We need to find only cost of it. Sir, why are you deducting closing stock of finished goods? Simple logic. Guys, this is the goods which you have produced in the current year. It is a part of my cost of production. But did I sell it? No. As I have not sold it, it has not helped me to generate any revenue. Should it be a part of my cost? No. So what should you do? Deduct it. It has not helped me to generate any revenue, deduct it. So in your trading account and all, you used to credit it. No, why is that? Simple. On the debit side, already the cost is more. The cost includes the cost of closing stock. But did closing stock, did we sell it? No. So what should I do now? I need to remove it from my cost. So we will not give the treatment on the debit side because we already recorded the cost. So what do I do, sir? Instead of removing it on the debit side, I will show it on the credit side. So that on the trading P&L or trading account or P&L account, the net debit is what, sir? The cost of goods which is sold. That is what we are deriving here as the cost of goods sold. And for this, we need to add if there is any administrative overhead which is general or selling and distribution overheads. So let us just go through that line items also. Stock of finished goods, guys. If there is opening stock, we need to add. There is closing stock, we need to deduct. Then administrative overhead, which is general, will come here. If it is related to production, we already discussed. It will come here. That is before cost of production. Then selling overheads. It is a cost incurred to sell the product or services or to create a demand for my products like advertisement. Next, packing cost. That is secondary. That is at the time of distribution, if I incur any cost, then we call it as packing cost, which is secondary, guys. Then distribution overhead like transportation expenses or freight outward, which I would have incurred at the time of sale or distribution. At the end, we get cost of sales. For this, if I add profit, what do I derive? Sales. I will derive sales, guys. You can see. And we can present this under a single heading, that is marketing overheads. Sir, is it mandatory to present like this? No. You can just take it as administrative overhead. And selling and distribution overhead, you have two choices. You can combine both and present it under one heading, or else you can segregate both. Selling separately, distribution separately. Okay. Yes. You will get cost of sales. Sometimes they would have given information about sales or profit also. In that case, you need to take care of profit as well as sales. Two more line items will come. Yeah. And sometimes, guys, sales they would have not given, but profit they will give it on sales. In that case, what should you do? Convert profit percentage on cost. Convert profit percentage on cost. Assume, guys, they have given profit percentage on sales is 20% on sales. How do you convert it? Assume sales as 100. So what would be the profit? 20. What would be the cost? 80. Now what is the profit percentage on cost? 20 by 80 into 100. 20 by 80 into 100. Hope you understood. Yes, sir. And this is the cost sheet format for the manufacturing entity. For service industries also, similar format we can follow, but it also depends on what information we need to present. But what is covered for you in your syllabus is the cost sheet for manufacturing entity. Even we will discuss the cost statement or cost sheet for service industry, but under service costing or operating costing. Got it? Yes, sir. And if at all, guys, if you are preparing the estimated cost sheet for the future, then the overheads, they would have given it as a percentage of few items. For example, factory overheads will be recovered as a fixed percentage of direct wages. Means in the question, assume they are given factory overhead is 50% of direct wages. So you need to take 50% of what? Direct wages. Clear? Yes. Means this, when do we follow it? When we cannot calculate the overhead amount accurately, especially for the future, we cannot estimate it properly, then they will fix a certain percentage. Overheads will be recovered as a fixed percentage of, for example, factory overhead as a fixed percentage of direct wages. Whereas office administration or selling and distribution overhead will be recovered as a fixed percentage of what? Factory cost. As a fixed percentage of factory cost price. Okay, sir. Then we have a treatment of some special items. What are those? Abnormal cost or abnormal loss. Guys, if there is any abnormal cost or abnormal loss, which is avoidable but still happened due to my ignorance or mistake, should we consider that in the cost sheet format? No. Please value it separately and debit it to costing P&L account. It will not be a part of my cost of sales. Then if there is any subsidy, grant or incentives received from anyone, then what should we do, sir? If it is related to production or my product, we need to reduce it. Then if there is any penalty, fine, damages or demurrage paid, similar to valuation of inventory, guys, there should we consider it? No. We will treat it as abnormal item and separately debit it to costing P&L account. Here also same story. Then coming to interest and other finance cost. Guys, this is something which we will pay for debt providers. We have two options for it. You can completely ignore it in the cost accounting. You treat it as pure financial item, or else if you want to treat it in cost records, then you can just add it to cost of sales. At the end, you just add it to cost of sales. Both the treatment is okay. Clear? Yes, sir. Fine. So this is all about the cost sheet, guys. So you need to practice good number of questions. In the regular class, we have solved now good number of questions on this because they may twist turn the questions and ask us. Sometimes from the top to bottom they will ask, or sometimes you need to do reverse working. But please be very careful with the format. Don't change the format. However you do it, the format remains same as. Only the calculations may change. That's all. Yes. So this is all about chapter 6, guys. Yes, students. Now we will revise chapter 7, which talks about cost accounting system. In this chapter, we'll be learning the ledgers and the journal entries which has to be passed under non-integrated in cost records. Before we get into the ledger account, journal entries and all, we will first learn some basic about this chapter, guys. Why this chapter? Guys, see, there are two systems of maintaining the accounts. One is called integrated, the other one is called non-integrated. Under integrated, we will pass the entries in the same books for both costing transaction as well as financial transaction. That means we will maintain only one set of books. When I maintain only one set of books, there will be only one profit. There is no need to reconcile. There is only one profit. There is no need to reconcile it. Whereas under non-integrated system, I will maintain two separate set of books. One book is to record only financial transaction, which we call it as financial records. The other book is to record the costing transactions, which we call it as cost records. So as there are two set of books and both have different objectives, guys. In financial books, what we record is, sir, organization, how much profit they made as a whole. Means how much profit did the company make as a whole? Obviously, they would have made a profit from selling the product. Clear? Over and above that, if they have earned any other income also, like rent received, dividend received, interest received, they will account for it. In accounts, you would have done all this, no? Yes. Whereas in cost records, they will record only the income or profit which they have earned from manufacturing and selling the product. If there is any other income like rent, dividend, interest, will they record it in cost books? No. Same way, there are few expenses which we will book only in financial books, like share issue expenses, preliminary expenses, goodwill written off, or loss on sale of assets. All this we will record only in financial books, whereas we will not record it in cost books. So in cost books, we are concerned only about what? What is the profit or loss which I have made by manufacturing and selling the product? If anything else not relating to the product, I will not bother about it in my cost books. Whereas in my financial books, anything which company incur, they record it as an expenses. Anything which the company earn, they will record it as income. And they will calculate what is the profit as a whole we have made for a company. So due to this, there will be a difference between the costing profit and financial profit. So in that case, in the second stage, we need to reconcile them. Once we have prepared two separate set of books, that is financial book and cost books, it will give two different profits because of difference in treatment of few items. Majority of the transactions would be recorded as, for example, sales, purchases and all, will it be recorded in both the books? Yes. Clear? Yes. So as there is some differences between costing profit and financial profit, we need to reconcile it, which we will learn in the second part of this chapter. Clear? So reconciliation also is covered in this chapter. We will see it later. Clear? So our first focus would be on what? Sir, how do we prepare the ledger account? Or how do we pass the journal entries under non-integrated in cost books? So under non-integrated, there are two set of books now. What are those? Cost books, financial books. Sir, is financial books covered in our costing syllabus? No. Whatever you guys have learned in your accounts, that is financial books. We are not learning that in cost. So what are you teaching now, sir? Whatever entries you are supposed to pass under non-integrated in cost books. In cost books, guys. So we will see that now. So first what we are learning is non-integrated. As I already told you, I am repeating, we will maintain two separate set of books. One is the cost books to record what? Costing transaction. And another one is financial book to record what? Financial transaction. As we are maintaining two separate set of books, we will have two different profits. Should we reconcile it like how you do BRS? Same way you have to reconcile the costing profit and financial profit. Means first you need to find out why there is a difference. Okay, and try to adjust and tell, okay, this is how we can adjust it. Clear? Yes, sir. So guys, this is important. Many students find it difficult to analyze the ledger accounts or to pass the journal entries. I will try to make it as easy as possible. If you understand what each account stands for, what comes in, what goes out, or what is debited, what is credited, it becomes very easy, guys. And there is a sequence in which journal entries has to be passed. So please be careful. You have to be learning in the same sequence. Clear? And in the class, I will be teaching from A to Z everything. In the exam, everything may not come. If something doesn't come, we will skip that step. Correct? For example, we will learn lot of journal entries, guys. Here. Almost everything I have given here. Clear? Sir, will they ask everything in the exam? No. Clear? Here, what all might come, I have given. So out of this, whatever you get in the exam, they will give you transaction. For that, you will be able to manage the journal entries. Clear? And if you understand journal entries, then ledger becomes easy. Or if ledger is easy for you, then journal entry aram se you can manage. Correct? Now, because whatever journal entry we pass, we will post it to ledger. Clear? So first, I will try to explain each of these accounts, guys. Each of these accounts. Then we will go through journal entries, and later I will connect this to the cost sheet format. Okay, if you learn it along with cost sheet format, it becomes very easy, guys. I told you, we need to pass the journal entries in a sequence. That sequence is nothing but the cost sheet format. Yeah, which we already learned. Oh, let us begin with one by one. Along with the accounts, I will explain. So please be attentive. The main ledgers to be maintained under non-integrated accounting system in cost records are the following. What are those? One by one. First one, some special account we are maintaining. What is it, sir? General ledger adjustment account, or we also call it as cost ledger control account. Guys, see, for few accounts, there are alternate names. Sir, which name should I use in the exam? Whichever name they have used in the question, please use the same. Yeah, for example, even for stores ledger, we call it as material control account. Sir, which name should I use it in the exam, sir? Whichever they have given it in the question. Clear? For example, another factory, production, manufacturing overhead, everything is one and the same. Should I use all the name? No. Use any one name which is given in the question. Clear? It is always good to know all the alternate names, because when they give something new to you, it should not be shocking. Oh, your sir didn't teach us this accountant. Clear? Yes. Check. General ledger adjustment account. Guys, this account is a special account which is opened only to complete double entry system. Where, sir? In cost records. This doesn't have any much meaning. It is just open to complete double entry system. Okay, sir. And how does accounts looks like, sir? I will show it here. I will show it here. See, this account will open with the opening balance, but on the credit side, and ends with the closing balance on the debit side. This is actually credit balance only. As we have credit side balance more, we would have written the balancing figure on which side, sir? Debit side. But if I ask you what balance is this? Credit balance. Clear? So it opens with the debit, credit balance and also ends with credit balance, but on the debit side. Sir, what is this balance stands for? Quite simple. This opening balance is nothing but the opening stock of raw material, work in progress, and finished goods. See, raw material, work in progress, and finished goods is an asset for me. It will have debit balance. So in those respective account, it will show debit balance. But double entry system I have to complete now. So in order to complete double entry system, I will show the opening balance in this account on the opposite side. On the opposite side. If you see stores ledger, it will be having debit balance, which is an asset, raw material. Then even the WAP control, it will be having debit balance. Then even finished goods control account will be having debit balance. Why is that? Guys, inventory is an asset for me. It will have what balance? Debit balance. But in order to complete double entry system, all these opening balances, I will show it on the credit side of where? General ledger adjustment account. Okay, sir. And at the end, this account will also have a closing balance, which is nothing but the closing balances of various accounts. Okay, sir. Then any expenses incurred, guys, any expenses incurred will be recorded on the credit side here. Simple. Why, sir? Reason being simple, guys. See, in cost records, we will not use the name of cash account, bank account, creditors account, debtors account. Cash, bank, creditors, debtors, we will not use in cost records. Wherever I am supposed to use these four names, in place of them, I will use general ledger adjustment account. Sir, what is the reason? Guys, simple. Even in my financial records, I would have maintained cash, bank, creditors, debtors, where I will be recording the transactions frequently. Here also, if I maintain, then it will confuse the users. Clear? So that is why we are not using their names. Instead of that, we are bringing what? General ledger adjustment account. Now you guys are punters in the journal entries in accounts, correct? So in accounts, you know, when and all you will use cash, bank, debtor, creditors. Now here, in place of that, what should you use? General ledger adjustment. Now anything you purchase, any expenses you incur, what is the entry, guys? Something debit. Expenses are overhead to what? Cash or bank? But here you have to do two general ledger. Clear? So we will record it here. Same way, at the end of the year, we will make sales. When I make the sales, what is the entry in your accounts? Data, if it is a credit sales or if it is a cash sales, cash or bank, two sales. But here, in place of them, what should I bring, sir? General ledger. Whether it is cash sales or credit sales, doesn't matter. General ledger to sales, same entry. Whether it is cash sales or credit sales. Hope you understood. Hope you understood. Normally, this will be the balancing figure, or else maybe this. Whatever would be the final profit in my costing P&L also, we need to transfer it. It will be either net profit, or if it is a net loss, it will come here. Costing P&L account, we have not yet discussed, we will do it. Clear? Yes, sir. So this is the first account and very important account. And when you are closing the accounts, try to close this account at the end. The last account you have to close is this account. General ledger adjustment account in the order. Okay, sir. Next. Next. Stores ledger control account. Guys, stores ledger control account is nothing but my raw material account. Whatever raw material I will purchase and use it in the production process or issue it, I will record it in this list. In your accounts, you will record it as purchase, right? But here we will not use the name purchase. Instead of that, what do we use? Stores ledger. Guys, stores ledger is nothing but raw material account. There is nothing but raw material account. Okay, sir. Raw material is an asset for you now. Hello? Raw material is an asset for you. Yes. It will have what balance? Opening balance, debit. Debit. Opening stock of raw material. And when you purchase, what is the entry you will pass? Stores ledger to general ledger. Sir, what if it is cash purchase, credit purchase? Doesn't matter here. Doesn't matter. Same entry for both. They will confuse you sometime in the question by giving credit to cash and all. You don't care about it in cost accounts. Same entry. Because if it is cash also same. If it is creditors also, same thing has to be credited. Correct? Yes. Then once I purchase, guys, once I purchase, what should I do? If I'm issuing direct material for production, I have to send it to WAP control account. WAP control account. And if it is indirect material, I have to send it to factory overhead control account. Or if they are only told it has been transferred to administrative overhead, selling and distribution and all, transfer it to respective. If they are simply given an indirect material, transfer it to factory overhead. Factory overhead, production overhead, manufacturing overhead, work overhead, everything one name the same. Clear? Yes, sir. I'm using one name, that is factory here. Got it? At the end, this account will have a closing balance. This account will have a closing balance. What is it, sir? Closing stock of raw material. Clear? Normally, this will be the balancing figure, guys. If by chance, if this is already given in the account, try to tally that. If this is already given in the question, try to tally the account. If it is matching, very good. If it is not matching, then it will be either abnormal loss or abnormal gain. If debit side is more, then you have to be writing here abnormal loss. Where do you transfer it to? Costing P&L account. Sir, what if credit side is more? Then debit side you have to write. What is it? Abnormal gain. Where do you transfer it to? Costing P&L account. And please be careful. This is only when there is a balance in store structure. Clear? Sir, if closing balance is not given in the question, then definitely that will be the balancing figure. They have given closing balance, but still account is not matching. Then what is the balancing figure? Abnormal loss or abnormal gain, which might be hidden information. They would have not given it directly in the question. You need to pick it up as clear. Yes, very simple, very easy. Stores ledger is an asset, guys. Correct. Inventory is an asset for me. Debit what comes in, credit what goes out. When you purchase, debit it. When you issue, you credit it. Issue means it's going out, right? Yes. Okay, fine. We are done with this source ledger. Next, wages control account. Wages to salary, everything is one and the same. Here, there is no separate account for salary and all. Clear? Wages will not have any opening balance. Normally, it will not have any opening balance. When you incur or pay wages, what is the entry? Wages control to general ledger. Debit it. Debit any expenses. This is expenses, guys. Debit any expenses on loss. Correct a nominal rule. Yes, sir. We have debited. Once I have debited, if it is direct wages, I will send it to WAP control account. If it is indirect wages, I will send it to factory overhead. Or if they have given in the question that indirect wages has to be transferred to administration, selling and distribution and all, send it to the respective account. If nothing is given, please transfer it to factory overhead. Got it? So only these three entries will come. If account is matching, close it. Close it. Sir, what if by chance it is not matching? Then normally debit side will have more balance. So on the credit side, we will write it as what? Wages paid for abnormal idle time. Wages paid for abnormal idle time. That would be the balancing figure. If at all, if the account has a closing balance tax. If at all, if it has. Clear. Majority of the time, what I have observed it will match, it will tally, close the game. If by chance, if debit side is more, then on the credit side, what do you write it as? The wages paid for abnormal idle time. Where do you transfer it to, guys? Costing P&L account. Costing, so it will be by costing profit and loss account. Hope you got it. Yes. One more account closed. One more account closed, sir. First one. Sir. Next, factory or production overhead control account. And for this, there are alternate names, guys. You guys please use the name. What is given in the question? Yes. See, for any overhead account, guys, for any overhead account, overhead incurred would be debited, overhead absorbed would be credited. Overhead incurred would be debited and absorbed would be credited. Listen here. Sir, when we have incurred, the amount is going out, that is cash or bank. In place of cash or bank, what should we use? General ledger adjustment. Clear? And when we are observing, where should we send it to, sir? Next account. Whichever is the next account. Clear? The accounts will follow the sequence. Clear? Yes. Now, first, what do we record in factory overhead, sir? If you have received any indirect material or indirect wages, which is transferred here, no? It was transferred here, indirect material or indirect wages. Receive it, no? Because you know every transaction will have opposite effect. So whatever is transferred there, receive it. Debit what comes in? Clear? Yes, sir. Over and above that, if you are incurring any factory overhead, any indirect expenses incurred in the factory, record it. What is the entry, sir? Factory to general ledger adjustment account. Okay, sir. Now on the debit side, what is there? Factory overhead incurred total. Now on the credit side, observe it. On the credit side, observe it. Sir, who will observe it, sir? WAP account. Which is the next account? WAP account. So factory observed, factory overhead observed should go to which account? WAP control account. And if there is any difference between overhead incurred and overhead observed, where should it go, sir? Costing P&L account. Costing P&L account. If there is any difference between incurred and observed, that balance we call it as either under absorption or over absorption. Where should it go, sir? To costing P&L. Clear? Yes. For example, assume guys overhead incurred is 1 lakh, whereas observed is 80,000. Observed is 80,000. Under absorption. So 20,000 under absorption has to go to where? Costing P&L. Costing P&L account. We call it as under absorption. Sir, what if it is vice versa? For example, assume observed is 2 lakh, but incurred is 1.7 lakh. Incurred is 1.7 lakh, we have observed more. So that means there is a over absorption of 30,000. Where it will go, sir? To costing P&L. So here we need to pass to costing P&L account. Hope you are understanding. Debit side stands for what? Incurred. Credit side stands for what? Observed. If it is matching, very good. If it is not matching, the difference is what, guys? Under absorption or over absorption. Where do you transfer it to? Costing P&L account. Clear? There is an alternate treatment for this, which I will cover later. First, let me finish it. Hope you understood. This account done, sir. Next, WAP control account. Guys, very important. This is where manufacturing happens. This is where manufacturing happens. So all the direct material, direct labor, and factory overhead observed is coming here. Yes, sir. Receive it. No. Papa, they all sent it. You receive it. Clear. WAP control account will always start with opening balance, guys. It is an asset. So any asset will have what balance? Debit balance. And it will end with closing balance. And anything they receive from various departments, debit what comes in. Debit what comes in. Store ledger control account, wages control account, which is nothing but direct material and direct wages, and also factory overhead observed. Here, what is transferred? Receive it. No. Receive it here. Okay, sir. And listen here. If there is any other direct expenses, royalty paid, excise duty paid, or rent paid for machinery to be used for each and every unit to be produced, clear, the other direct expenses. If at all, if they have given in the question, straight away record it here. Don't maintain a separate account for it. Straight away record it in WAP control. Straight away record it. Got it? Yes. Now, once they have given all this, guys, product is ready now. Product is manufactured. Where should I transfer it to? Finished goods control account. Product is manufactured, I need to send it to finished goods control account. And the name of that amount is called what? COP, cost of production, or cost of goods manufactured. And sir, in this account, which will be the balancing figure? Normally, this would be the balancing figure. If by chance, if they have given this in the question, then this might be a balancing figure. Clear? Hope you understood. So once I take all this, deduct this, what do you get? Cost of production. Transfer it to which accounts? Finished goods control. Finished goods control account. Okay, sir. Next is administrative overhead control account. And guys, for this chapter, administrative overhead will always be considered as general. Will always be considered as general. That means it will come after cost of production. It will come after cost of production. In cost sheet, we have encountered that in two places. If it is related to production, it will come before cost of production. If it is general, it will come after cost of production. But here, it will come after the cost of production, guys. So, what is it, guys? See, any overhead account, same story. But only what is observed, it will go to the next account. Clear? So, we will see that. Administrative overhead control account. Guys, if at all, if you have received any indirect material, indirect wages and all, record it here. Clear? Yes. Over and above that, if you have incurred any administrative overhead control account, what is the entry? Administrative overhead to general ledger. Record it. Then whatever overhead you observe, that is administration, send it to which account? Finished goods control account, which is the next account. Send it to next account. Clear? Sir, if debit and credit is matching, no problem. If it is not matching, then either under or over. Where do you transfer it to? Costing P&L account. Hope you got it. Yes, sir. Next, finished goods control account. Again, an asset. It is an inventory, right? Yes. It will have what balance, sir? Debit balance. So it will start with opening balance and end with closing balance. Clear? All these three accounts normally will have debit and means debit balance, which is opening. At the end, you show it as closing stock. It is also debit balance only. But just to tally the account, I will show it on the credit side. Hope you guys are aware of all this. See, just because you are showing the closing balance on the credit side doesn't mean that it is having credit balance. It is actually having more debit. I cannot write it on the debit side. To tally the account, I would be writing it on credit side. So if I ask you which balance is this, credit balance or debit balance? Debit balance. Okay, sir. So finished goods control account. Now it is an asset, so it will start with opening balance and ends with closing balance. Then whatever cost of production is transferred here, receive it, receive it, receive it. Cost of production plus opening stock of finished goods minus closing stock of finished goods plus administrative overhead observed will give us what? Cost of goods sold. Will give us cost of goods sold. I repeat, we have received cost of production from WAP plus opening stock of finished goods minus closing stock of finished goods. If it is on the credit side, minus only, na? Yes. Plus administrative overhead observed will give us cost of goods sold. We will call this amount as cost of goods sold. Where are we transferring, sir? To cost of sales. Sir, can I maintain a separate cost of goods sold account also? Yes, you can maintain, but I don't suggest. Better transfer it to cost of sales account. Transfer it to cost of sales account. You are transferring it to cost of sales account, but amount is not called cost of sales. Amount is called what? COGS. Cost of goods sold. Hope you got it. Clear? Yes. Fine. So we covered this. Next is selling and distribution overhead. Same. Overhead means the same story. Incurred debit to observed credit to. Which is the next account after selling and distribution? Cost of sales. So, cost of sales has to observe the selling and distribution overhead observations. Clear? Now, I repeat, listen here. Even in selling and distribution overhead, if by chance, if they have received any indirect material or indirect wages, record it. Clear? It will be like two stores ledger, two wages control account. Clear? And if they have incurred any selling and distribution overhead account, what is the overhead? What is the entry, guys? Selling and distribution overhead control to general ledger adjustment account. Then once you have incurred, it is on the debit side. Now observed. Now observed. So selling and distribution overhead observed, we should go to which account, sir? Cost of sales. Now cost of sales will receive two things. One is cost of goods sold, which they receive from where? Finished goods control. Plus selling and distribution overhead observed. Now can I call both this put together cost of sales? Hello? COGS plus selling and distribution. What is it? Cost of sales. They are transferring it to sales account. Transferring it to sales account. Now, in sales account, receive the cost of sales. Record the sales on the credit side. What is the entry for sales? General ledger to sales. Whether it is cash sales or credit sales, no difference. Record. Record. Once you do this, if there is net a gross profit or gross loss, transfer it to costing P&L account. Costing P&L account. Hope you got it. Clear? Yes, sir. Now in costing P&L account, if there is gross profit which we have transferred, we will receive it here. Clear? Sir, what if it is a gross loss? You would have recorded it here and transfer it on the debit side. That's all. Clear? Yes, sir. Next, see, actually gross profit means sales minus COGS. Clear? But in cost accounting system, we will get two profits, guys. One is year, the other one is year. Just to differentiate them, I am using the name gross profit, net profit. Clear? Yes. Or else you can simply write profit also. No problem. But we will get one more profit here, which we will transfer to general ledger adjustment account. Just to differentiate between them, I am naming it as GP, NP. Clear? Yes. Now in costing P&L account, first thing you record whatever gross profit we have received from sales account. Clear? Next, if there is any under absorption or over absorption in the overhead account, we transfer it to costing P&L, receive it. If it is under absorption, record it on the debit side. If it is over absorption, record it on the credit side. Same way, if there is abnormal loss or abnormal gain in the stores ledger, if it is abnormal loss, record it here. If it is abnormal gain, record it here. Same way, in wages control account, I told you, if there is any difference, what is it? Wages paid for abnormal idle time, record it on the debit side. The final profit, you have to transfer it to general ledger adjustment account. Clear? So, by whatever final profit or final loss, transfer it to general ledger adjustment account. And only after this, I can close general ledger adjustment account. Clear? I told you, you need to close that account at the end. Please close the general ledger at the end, guys. Rest all you can close it in the order. Whereas general ledger, please close it at the end. Hope you got it. Alternatively, I will tell you. See, I have shown you your sales account, cost of sales account and all. But sometimes what they do is they don't maintain this accounts and all. So straight away, assume selling and distribution also is not there. You can exclude it. Straight away, you may transfer this amount to costing P&L account and there only you record sales. There only you record sales. Or else, another alternative. Sir, no sir, I will transfer this to cost of sales, sir. But from cost of sales, I will not transfer it to sales account, sir. I will transfer it to costing P&L. Clear? So from cost of sales, you will transfer to costing P&L account. It will come on the debit side. On the credit side, record sales. That is by general ledger will come. This is the alternate treatment I am telling you. Clear? Yes. In that case, no need to prepare sales. I hope you understood. I repeat, cost of sales, instead of transferring it to sales account and recording sales here, we will completely eliminate sales account and transfer cost of sales to which account? P&L account. It will come on the debit side here and record the sales here by general ledger. Ultimately, we will get profit here. Only one profit you will get. That profit you transfer it to general ledger adjustment account. Clear? Yes. So if there is no item given in the question, for example, administration only they have not given. So please eliminate that account. That's all. Don't prepare that account. Got it? Everything we have taken care. Now, guys, see, in overhead control accounts, I told you, if there is under absorption or over absorption, you need to transfer it to costing P&L account. But sometimes there will be an alternate treatment. Sometimes there will be an alternate treatment. What are those? Guys, simple. Listen now. In the question, if they have given the opening balances for overhead accounts, then at the end, you need to keep closing balance. Clear? I repeat. In the question, they have given the opening balances for overheads account. Opening balance of overhead account, sir. Yes, which is nothing but under absorption or over absorption. That means in the last year, they didn't transfer whatever is the under absorption or over absorption. They didn't transfer it to costing P&L account. They kept it as closing balance. Now what do? You also keep it as closing balance. At the end, if you have under absorption or over absorption, do you transfer it to costing P&L account? No. Please follow consistency. Last year, what they have done? They have kept it as closing balance. You have brought that as opening balance for the current period. You also keep it as the closing balance at the end. Got it? Yes. I will give an example. Listen. This is any overhead control account. In 2025, incurred was 1 lakh and observed was 120. Incurred was 1 lakh and observed was 120. So observed is more. So the credit balance 20,000 more is there. So on the debit side, we will write 20,000 balance carried. Means they are not transferring to costing P&L. So company is following a policy of keeping the closing balance of overheads, whether it is under or over. Guys, what is this balance? Over absorption. Over absorption means which side more? Credit side. So in the next year, we will start with what? 20,000 credit balance. What is that, guys? Over absorption. Over absorption will have credit balance. Hope you understood. Why, sir? Last year, which side was more, guys? Credit side. Clear? Okay. 2026, we started with opening balance on the credit side. In the current year, we incurred 250,000 overhead expenses and 220 observed. So which side is more? 250, 240. Debit side 10,000 is more. Correct? How do I balance it? I will write it on the credit side. But this account is having what balance? Debit balance. Clear, guys? Incurred 250. Absorbed, including this, total is how much? 240. So there is a debit balance of how much? 10,000. What is it, sir? Under absorption. Am I transferring it to costing P&L account? No. Why, sir? Because they gave opening balance. So what should I do? Write it as closing balance. What is that? Under absorption. Which balance is showing it? Which is that balance? Debit balance. So next year, 2027, we will start with what? Debit balance. Debit balance 10,000. Got it? Yes. So in 2027, we are opening with 10,000 debit balance. Assume we have incurred 3 lakh and absorbed 340. So 310, 340, 30,000 difference. Which side more, sir? Credit side. So we will write it on the debit side just to tally. But this account is having what balance? Credit balance. So what do we call it as? Over absorption. Next year we will start with what balance? Credit balance. Hope you understood the logic. In simple, guys. In the question, if they have given opening balances of overheads account, either debit or credit, please be careful. Debit means under, credit means over. Clear opening balances. At the end, you please don't transfer it to costing P&L account. You also keep it as the closing balance. And if at all, if they have asked you to prepare trial balance, take it there also. Clear. And when they ask you to prepare ledger accounts, chances are there that they may also ask you to prepare trial balance. Clear. Sometimes they ask you only ledger accounts, sometimes ledger accounts with the trial balance. In that case, obviously the marks weightage will be more, guys. Hope you understand. Clear? Yes. Okay. Now I explained each of the accounts. Okay. So whatever I explained, debit side, credit side, those are the journal entries. So I told you, if you understand conceptually, then it will not become tough for you guys because there are too many journal entries. Clear? If you try to mug up the journal entry, then you will tend to forget it or you tend to get confused. Okay. We will go through quickly. Sir, for material purchase, whether it is direct material or indirect material, entry is one for purchase. What is it? Stores ledger to general ledger. And for issuing it, if it is direct material, where should it go? Where is the production happening? WAP. Production is happening in WAP. So WAP. And if it is indirect, then it should go to the respective overhead. There is nothing called respective overhead. Okay, there are 3 overheads. Now, instead of using all the names, I have given respective overhead. If question is silent, please send it to factory overhead. Factory overhead. And if question only is telling so much indirect material is transferred to administration, selling and distribution and all, accordingly distributed. To store ledger. Very simple. Debit what comes in when we purchase and when we are issuing, it is going out. Credit. What goes out? Okay. Now, if there is any material purchased directly for a specific job, straight away, instead of receiving and sending to WAP, straight away record it in WAP. So WAP to general ledger. Then, if there is any materials returned to vendor, which is purchase returns. Purchase returns. When you purchase, what is the entry you pass people? Store, general ledger. Just reverse. Just reverse it. Because what came in? Again going out. Again going out. Just reverse it. Then, sir, what if materials are returned to store? Means the production department is giving back to store. Who is taking care of production here? WAP. So come back. So whatever I issued here is coming back. So pass a reverse entry. Pass a reverse entry. Or even if sell administration department or selling and distribution department, we had issued an indirect material to them, they are giving it back. Record it as returns. Clear? So whatever entry you have passed for issue here, you have to reverse. Clear? Debit stores ledger and credit whoever is giving back. Okay. Then wages or salary incurred, whether it is direct wages or indirect wages, entry for incurred is same. What is it, sir? Wages to general ledger. And direct wages we have to transfer to WAP control account and indirect to respective overhead. If question is silent, where do you send it to? Factory overhead. Then, if by chance if wages account is having any closing balance tax, which is not getting tallied, then we call it as what? Wages paid for abnormal ideal time. Normally, this would be the balancing figure. If at all, if it is there. If at all, if it is there. Okay, what is the entry? Costing P&L to wages control account. Then production overhead incurred. For any overhead incurred, dialog is same. Overhead to general ledger. Okay, but use the name. Okay, factory or production or manufacturing overhead to general ledger. And observe, guys, which is the next account after production overhead or factory overhead? WAP. So production overhead observed will go to which account? WAP control account. Debit the receiver, credit the giver. Who is the receiver? WAP. Okay. Then for finished goods transferred, where is the manufacturing happening? WIP control account. So when product is ready, manufactured, we are sending it to finished goods control account. Again, debit the receiver, credit the giver. Who is receiving it? Finished goods. Who is giving it? WIP, credit it. Then for administrative overhead incurred means overhead account debit to general ledger and observe which is the next account guys, finished goods. Who will observe it? Finished goods. So debit the receiver, credit the giver. Finished goods control account to finished goods control account to administrative overhead control account. Then for cost of goods sold, now in cost of sales, sir, in finished goods control account, what balance is there? That is nothing but COGS. The amount is called COGS, but we are transferring it to which account? Cost of sales. Sir, is there a need to prepare COGS account? I don't suggest it, guys. Even if you prepare, answer will remain same, but one extra step you are doing, one extra account. Yeah, so straight away transfer it to cost of sales account. Okay. Then selling and distribution already incurred. Selling and distribution to general ledger. Then who is observing it? Cost of sales. So debit the receiver, credit the giver. Cost of sales to selling and distribution. Yes, sir. Then cost of sales transferred. Where are we transferring it to, sir? Sales. So sales to cost of sales. I told you alternatively we can transfer straight away to costing P&L also. Clear? Yes. But here I am following the sequence where I am opening even sales account. So sales to cost of sales. So in sales account, we will record the sales, whether it is cash sales or credit sales, better mention there. Credit or cash, entry is same. Entry is same. What are the entries of? General ledger to, sales account, where is it? Sales made, you better mention in the bracket, cash or credit. What is the entries are? General ledger to sales. Clear. And even if it is for purchases, guys, whether it is cash purchase or credit purchase, entry is same. Entry is same. Okay, sir. Next, sales return. Just reverse this thing. Just reverse this entry. Next, guys, all this whatever I have given in red, green color, no, either of the entries will come, not both. Clear. I have given the entry for gross profit, gross loss. Under absorption, over absorption. Sir, will both come simultaneously? No, any one. So that green signifies any one. Oh. So if there is gross profit or gross loss in sales account, where do we transfer it to? Costing P&L. Or sir, what if I record straight away sales in costing P&L account only? Then you will have only one profit. That profit you will transfer to general ledger adjustment account. Clear? Same way, guys. Whenever there is under absorption or over absorption, you will transfer it to costing P&L account, provided there was no opening balance given. If there is opening balance given in the question, I told you what to do. Clear? And please be careful. I have given the entry for both here. For one overhead account, either of the two you will have. Either under or over absorption, but not both. Clear? But for one overhead you might have under, for another overhead you might have over. Because there are totally three overheads. Okay. So if there is abnormal loss or abnormal gain of materials, that is in stores ledger account, where do we transfer it to? Costing P&L. Then at the end, in costing P&L account, whatever profit is there or loss is there, where do we transfer it to, sir? General ledger adjustment accounts. Is that clear? Yes. So we're done with the journal entries discussion. Even ledger. Okay, journal entry along with ledger, we have done. Clear? Yes. So whatever we discussed till now, guys, was under non-integrated accounting system in which books? Cost books. Sir, you didn't teach us financial books. It is not a part of your costing syllabus. You need not worry. Whatever you learn in your accounts is financial books. Clear? Yes. Now we have one more system. What is it, sir? Integrated accounting system. Guys, integrated is chiller. Why, sir? We are already master in non-integrated. If you are master in non-integrated, then integrated is very easy, guys. Why is it? I will compare and tell. See, integrated means we are maintaining one set of books to record both the transaction. That is costing transaction as well as financial transaction. That means we have only one profit. Yes, no need to reconcile. No need to reconcile. Now, in non-integrated in cost books, we maintain one extra account just to complete double entry system. Now, which was that account? General ledger adjustment account. Now eliminate it. Now please eliminate it. In place of that, Whatever used to be used now, that will come. That is cash, bank, creditors, debtors will come into picture. Clear? There is no general ledger adjustment account under integrated accounting system. It is replaced by cash, bank, debtors or creditors. That is the respective accounts. Okay, sir. So I will just given few examples here. Yeah. As we already understood non-integrated guys. Now integrated becomes very easy. Wherever we used to use general ledger, wherever we used to use general ledger, in place of that, we have to bring cash, bank, debtor, creditors. For example, assume raw material purchase for cash. What is the entry? Stores ledger to cash account. Purchase for credit. What is the entry? Stores ledger to creditors. Under integrated, I am talking about. Don't change there. Hello. Don't change the journal entries. Okay. I am telling under integrated. Next, for any overhead incurred guys. For example, where is overhead? What was the entry under non-integrated? Overhead to general ledger. But now cash or bank. Even for wages incurred. What is the entry, sir? Wages to general ledger under non-integrated. But now cash or bank. Clear. Let us come to sales also. Where is sales? Where are you? Here. Okay, under non-integrated, what was the entry? General ledger to sales, whether it is cash or credit sales, but under integrated, if it is cash sales, cash or bank to sales account. Sir, what if it is credit sales? Debtors to sales. Hope you understand. Clear? Yes, same to same copy pasted, but in place of general ledger, we need to bring respective accounts. That's all. Rest all remains same, guys. Rest all copy paste. I've just given few examples here. Guys, the under non-integrated, we have two books, financial records, cost records. Under integrated, only one book. How do we pass the entries in each of these books? For the same transaction, we will see. For material purchased in financial books, in your accounts, financial records is nothing but your accounts. I didn't teach you this. Correct? Yes. Accounts faculty would have taken care. Yes, sir. Now, what is the entry for it? Purchases to bank or if it is creditors. Coming to cost records, what is the entry? Stores ledger to general ledger. Whether it is cash purchase, credit purchase, doesn't matter. We just now know. Whereas under integrated, in place of this, we will bring whatever we used to use in accounts. That is, if it is cash purchase to bank, if it is credit purchase to creditors. Hope you got it. Same way. For wages paid or salaries paid in financial records, what is the entry? Wages to cash or bank. Yeah, and to the extent possible, if you are making immediate payment, use bank only, guys. Because nowadays cash transactions are not entertained. Even in income tax, you would have seen cash payment more than 10,000. If you are made to a single person in a single day, it is zero. You cannot claim anything. Clear? Whether it is revenue expenditure or capital expenditure. Now, if it is a capital expenditure, if you have paid more than 10,000 in a day to a single person to purchase an asset, it is as if you have not incurred any cost. What is the cost of asset to be added to the block? Zero. That means you cannot claim depreciation. Sir, what if it is a revenue expenditure? Then section 48. Which section? Tell me. Which section which will disallow the cash expenditure in income tax under the HGBP? 40A3. If cash payment is made to a single person in a single day, more than 10,000, then it is completely dissolved. Not only the excess, entire amount is dissolved. Clear? So that is why most of the transactions will happen through bank tax. Will happen through bank. There are many things also, provisions covered in income tax especially. Clear? You cannot pay in cash, you cannot receive in cash. If you do so, then here and there, they are also trying to penalize. They are trying to curb the cash transactions. Yeah, because when you do the transaction through banking channel, even they will have a eye on you. Eye on you means what you are receiving, what you are paying. Because your bank account is linked to Aadhaar and PAN. And PAN is the unique number for income tax purpose. Anything you receive, anything you pay through your bank account, everything income tax department is getting to know. Okay, don't worry, your WhatsApp message and all they will not get to know. Okay, only what comes in and what goes out through your bank account. So, Sure. Next, wages paid. What is the entry in financial books? Wages to cash or bank. Whereas in cost records, wages control to general ledger. Whereas now in integrated, what is the entry, sir? In place of general ledger, I will bring back cash or bank. Then sales made in our financial books, what is the entry? If it is cash sales, bank to sales. If it is credit, debtors to sales. Whereas cost records, cash or credit, only one entry, sir. General ledger to sales. Then coming to integrated, if it is cash sales, bank to sales. If it is credit sales, debtors to sales. Clear? Yes. Guys, I have given all three. This is anyway not a part of your syllabus, but I have just given you so that you can compare and easily understand. Yeah, what is the difference between each of the books? Last one, any overhead incurred, any expenses incurred. In financial books, what is the entry? Expenses or overhead. Actually, in financial books and all, we don't use the word overheads. Yeah, we just use the word expense. So that is why I use the word expense. Expenses to cash or bank. Whereas in cost records, overhead control, that is the respective overhead, control to general ledger. Whereas when it comes to integrated, we will remove this overhead control to cash or bank. Clear. I have just given overhead control here, guys. It will have a name like factory, administration, selling and distribution. You need to use the respective name. Got it? Huh? Integrated done now? Yes. Guys, only one thing. See, if you thoroughly study non-integrated, then integrated becomes very easy. Just be careful. See, whenever you are passing the entries under integrated, try to connect to non-integrated. Okay, that is what we will pass. But instead of general ledger, let me use this. Let me use this. This means what? Cash, bank, creditors, debtors. Sure. Fine. We are done with the first part of this chapter. Now coming to reconciliation. Sir, when will reconciliation come? Only when the company is following non-integrated accounting system. Non-integrated means, sir, is it integrated? No. Both the transactions are not integrated. Whereas in integrated, I will maintain one books by integrating both. Oh. Under non-integrated accounting system, I will maintain two separate set of books. One book is for recording financial transaction. Another book is for recording costing transaction. So that means we will have two profits. Why, sir? Because the objective of cost records and financial records is different. In cost records, what is my objective? To record the profit or loss which I have made by manufacturing and selling my product, assuming I am a manufacturer. Yeah. If any expenses or income is there which is not related to product, will I record it in my cost books? No. For example, rent received, dividend received, interest received, or expenses like loss on issue of debentures, preliminary expenses, goodwill written off, or loss on sale of assets. Will I record them? Or income tax paid, donations given, subscriptions given. Will we record it in cost books? No, sir. Got it? Then coming to the financial books. In financial books, what is my objective? To calculate the profit or loss of the company as a whole. How much profit the company made in a year, in which they will consider all the income earned. The major income is from the sale of product only. But in addition to that, they would have made some investments. On that, they will earn income. Correct? Yes, sir. Same way, they would be incurring some expenses which is not related to product also. Will they record that? Yes. All the expenses and incomes would be recorded in the P&L account in financial books. Yeah. Because of this, there will be a difference in profit tax. So I have also given here what are the main reasons why we will have a difference between costing profit and financial profit. Sir, what are those? One by one. Pure financial charges, pure financial income means these are the items which are recorded only in financial books, but not in costing books. But not in costing books. Let me read and explain. I have given few examples also. Listen this. Items shown only in financial accounts, we call it pure financial items. First one, pure financial charges means these are the expenses charged only in financial books. Examples: loss on sale of fixed assets and investments, expenses and discount on issue of shares or debenture, interest on bank loan, mortgages, debentures, etc. Damages payable, penalties and fines, goodwill or preliminary expenses written off, income tax, donations, subscriptions, dividend paid or proposed, transferred to reserves and sinking fund. Guys, if you observe, all these are the expenses which we will record only in which books? In which books? Financial books. And it is an expenses. It is an expenses. Because of this, my financial profit will go up or go down? Go down. Whereas my costing profit, I have not at all recorded these items. So my costing profit would be same. There is no change in it. There is no change in it. Hope you're getting it. Okay, let me explain this. Yeah. Now, listen, guys. This is financial record. This is costing records. For costing records, normally we prepare cost sheet and all, but I have taken it in the form of income statement. Let us take it as costing P&L. Listen. There is a financial income which we have recorded in financial book, 10,000. Okay, or else let me start with financial expenses because that is what we have just now covered. There is a financial expenses of 5,000 which I have recorded in financial books. Whereas I have not recorded this in my, I have not recorded this in my costs. Clear? So because of this item, let us analyze individually. Because of this item, my financial profit has gone down, whereas my costing profit is same. Why, sir? Because I have not recorded this transaction. Clear? Now assume, guys, we are doing the reconciliation. See, while doing reconciliation, either of the profit we will take it as a base. Either of the profit we will take it as a base. Means either costing profit or financial profit. Clear? Now if I take the financial profit as a base, I need to show what is the other one. In between, I need to show plus or minus. That plus or minus is nothing but the differences or the reasons for the difference. Clear? Yes. Now assume my starting point is financial profit. My financial profit has already increased or decreased. It has come down. Now if I have to match it with my costing profit, what should I do, guys? I need to add it. Because if I have debited only in financial book, my financial profit has come down. Whereas my costing profit is same. My starting point is financial profit, which has already gone down. What should I do? Lift it up. Lift it up means what should I do? Add. Add how much? 5,000. Next. Next. Sir, what if my costing profit is a starting point? Either of the two you will do, guys, not both. But I'm just explaining both because you should know both the ways. Now, sir, what if I'm starting with costing profit? Simple. Now, my costing profit has not changed because of this. So, guys, whenever you are taking any profit as a base, any changes, you have to make it for that term. Any changes, you have to make it for that. Clear? Yes. Now, my financial profit has already gone down by 5,000. Whereas my costing profit is same. Now my starting point is costing profit. Any adjustments I can make is for what? Costing profit. So what should I do? Bring it down. Bring it down. How do you do it? Deduct 5,000. Deduct 5,000. Got it? Just so. Next. Pure financial income means these are the incomes which are recorded only in financial books. Because of this, my financial profit has gone up, whereas my costing profit is same, no change. What are those examples? Rent receivable, profit made on sale of investments, fixed assets, etc. Transfer fees received, interest dividends received, on income received on investments. That is, you would have invested in shares for which you get dividend, or you would have invested in a bonds or debenture for which you get interest, or even if you would have kept FD or any deposit for which you earn interest. These incomes are recorded only in financial books, guys. Next, brokerage received, discount, commission, etc. received. See, some of this can also be payments. For example, interest paid. It will be pure financial charges. Clear? Or sir, what if I am paying dividend for my shareholders? Then pure financial charges. If I receive income, if I pay expenses. Clear? Let me explain this with an example. Guys, assume there is a financial income of 10,000, which I have recorded only in financial books. Because of this, my financial profit has gone up. But have I recorded this in my cost books? No. So there is no change in my costing profit. There is no change in my costing profit. Now, because of this, there is a difference in profits. Yes, sir. How do I reconcile it? Assume my starting point is financial profit. My financial profit has already gone up. Now, how do I match it with costing profit? Deduct this. So deduct 10,000. Deduct 10,000. Same way. Same way. Sir, my costing profit is a starting point. There is no change in my costing profit, but my financial profit has already gone up. If I have to match my costing profit with financial profit, what should I do? Add 10. Add 10,000. Is that clear? Yes. Next. Items included only in cost accounts means especially the notional items like notional rent, notional salary, notional interest. These are the items which are recorded only in cost books but not in financial books. Will that also lead to differences? Yes. Then adoption of different basis of valuation of stock. For example, sir, for costing I am following FIFO, whereas in my financial books I am following weighted average. So in that case, will we have a difference in the closing stock value? Yes. When we have a difference in closing stock value, guys, automatically it will have an impact on profit. Yeah, same way. Different methods of charging depreciation. For example, sir, in costing, we are following WDV method, whereas in accounts, we are following SLM. Will the amount of depreciation be different? Yes. And will it affect my profits? Yes. Yeah. Let me give some examples. Listen. Let me just erase all this. Listen. Assume there is an expenses which is recorded here as 20,000, whereas in cost books we have recorded only 50,000. 50. We call it as under absorption in cost books. Under absorption in cost books or under recorded. Now listen. Sir, because of this, my financial profit has gone down by 20,000, whereas my costing profit has gone down by only 15,000. So here plus is how much? 5,000. Plus down is 5,000. Correct. I mean extra debit is 5,000 in simple accounting. Extra debit is 5,000. Now, if I am starting with financial profit, my financial profit has already gone down further by excess how much? 5,000. Now, if I have to match it with my cost profit, what should I do? Add 5,000. Add 5,000. Got it? The same way. If my starting point is cost profit, sir, my cost profit has gone down by only 15, whereas my financial profit has gone down by 20. So 5,000 less I have charged in cost books. So what should I do now? Charge another 5. Charge another. Deduct it. Got it? Yes. Next, let me take one more item. Sir, I will change now. This is 20, but this is 25. 25. So because of this, here we have debited 25. My costing profit has gone down by 25, but financial profit only by 20. So extra debit of how much here? 5,000. What should I do? Guys, financial profit. Financial profit is a starting point. Any adjustments I can make is for financial profit. Now, my financial profit has gone down only by 20,000, whereas my financial costing profit 25. So I should reduce another 5,000. Another 5,000. Same way. Costing profits are already excess debit of 5,000. Already my profit has come down excess by 5,000. So what should you do now? Add 5,000. Add 5,000. Hope you are understanding. Each item analyzed from the profit angle, guys. Is it increasing your profit or decreasing your profit? But one thing you keep in mind, any adjustments you can make is for what? Starting point. Assume, guys, listen. Assume your starting point is costing profit. There is a mistake committed in financial books. What should you do now? Give adjustment for that mistake here also. Clear? Add or deduct it. Hope you understood. You cannot see. We are not going and doing any changes in the books, guys. Books are already closed. We found out that there is a difference in profits for which we are preparing a separate statement. Separate statement doesn't mean that we are going and correcting all the things in the books. No, we are not doing any alteration in the books. We are not rectifying the errors. Clear? Rectification of errors, you learned it in accounts. Na? We are not doing that here. What are we doing, sir? Sir, books are already closed. We have got so and so profit in each book. There is a difference. We are trying to analyze what is the reason for it. That reason is presented in this statement. See, there is a profit difference of 25,000. That 25,000 difference is for what reason? I am giving a separate statement for you. Separate statement for you. Because some students might get confused with rectification of errors. Oh, we are doing all this rectification or correction in books. No, books are already closed. Hope you are getting it. Yeah, yes. Now, let me come to the income side. Assume, guys, there is one income recorded here, 50,000. Whereas in my costing books, I have recorded only 30,000. Okay. So because of this, my financial profit has gone by 50,000, gone up to by 50,000. Whereas costing profit only 30,000. So here extra how much, sir? 20,000. Extra credited. That means profit has increased by 20,000. If my financial profit is a starting point, what should you do? Deduct 20. Already it has gone up now. Bring it down to match with costing profit. Now, if my costing profit is a starting point, sir, my financial profit has already gone up. My costing is 20,000 less. If I have to match it with financial profit, what should I do? Add. So add 20. Add 20. Now let me take vice versa. So I'm making it 70. So here profit has gone up by 70, but here only by 50. So in costing, extra how much, sir? 20,000. So my costing profit is overstated by 20,000. So if my financial profit is a starting point, sir, it is understated. If I have to match it with the costing profit, what should I do? Add 20,000. If I start with costing profit, it is already overstated, sir. How will I match it with financial profit? Deduct it. Deduct it. Clear? So this is what you have to do, guys. Clear? First, decide what should be your base. Either financial profit or costing profit. If they have given both in the question, it is your choice. If they have given any one profit, obviously you have to take that one. Or else sometimes they will give instruction in the question. Prepare a reconciliation statement by taking costing profit as a base. Or by starting with costing profit. You have to start with it. Even though they have given another profit, please don't start with that. Oh, sure. Coming back. So reconciliation can be done in two ways, guys. One is through reconciliation statement, whichever I showed you now. We will take one profit as a base, add few items, deduct few items, and at the end we will get the profit as per the others. Another one is through memorandum reconciliation account. Memorandum reconciliation. Okay. First, you can see through reconciliation statement. Sir, what do? We take one profit as a base. I have given here cost profits. If I take cost profit as a base, I have given all the items which you need to add and all the items which you need to deduct. You need to mug up all this, no? Nothing to mug up. I have just given here for your reference. Clear? As I told you, I just took few examples and I explained, same way you analyze this. Because of this item, my base profit means with which you are starting. Is it increased or decreased? If I have to match it with the another profit, what should I do? Add or deduct? Accordingly, it is. Clear? Guys, it is just a plus minus game, but just take time and think. If required, you can do rough working like this. Okay, just put a rough cost records and financial records and see. Okay, because of this, what has happened, plus, minus, and all, analyze it. Or else, if you can just analyze it in the mind also, do it. Try to do it as early as possible, but don't commit a mistake in a hurry. Okay, because instead of plus, if you do minus also, waste. Clear? And if at all, if you get this kind of question in the exam, know how to capitalize, guys. Okay, don't lose even half marks. Because plus minus and all, you should be punter. This is with respect to statement. Sir, what if by chance if I start with financial profit? What if I start with financial profit? Then whatever should be added will come as deduction, and whatever you have deducted will come as addition. Clear? Yes. Next. Sir, what if you are drawing memorandum reconciliation account? If they ask you to draw it, only you do it. If not, try to always reconcile through statement. Sir, what is this memorandum reconciliation account? Guys, here don't worry about double entry system and all. Sir, if I have debited here, where will I credit? If I have credited here, where will I debit, credit and all? Don't worry about it. Clear? Yes. So simple. If the starting point is a profit, start it on the credit side. Whatever you are supposed to add, show it on the credit side. Whatever you are supposed to deduct, show it on the debit side. At the end, the balancing figure would be profit as per the other. Profit as per the other. I repeat, you will start with profit, whichever profit, show it on the credit side. Start with that. Whatever you have to add on the credit side. Whatever you have to deduct on the debit side. At the end, balancing figure would be the profit as per the other books. Sir, what if by chance if debit side is more, then you will have loss as per the other book on the credits. Yeah. Sir, what if starting point itself is a loss? Then you have to show it on this side. Loss as per the respective. Loss as per the respective book, guys. And even in the statement, guys, if at all if the starting point is the loss, don't get confused. Just put this in bracket. That's all. And when you are analyzing whether to add an item or deduct an item, please analyze from profit point of view. If you start analyzing from loss point of view, it will confuse you. It will confuse you. Analyze from profit point of view. Means because of this item, my profit has increased or decreased. Accordingly, decide whether to add or deduct. But one change is you put the starting point in the bracket. When is this? When the starting point is a loss. Okay. Done with this, sir? Yes. Sure. One more important thing with respect to non-integrated. Guys, with respect to non-integrated accounting system, we discussed the journal entry, ledger, everything. No? Yes. I will try to connect it to the cost sheet format. I will try to connect it to the cost sheet format. The last part. Interesting. Pay attention. So let us just go through. Cost sheet we already covered. Cost sheet format is this. Here, just have a look into it. If they ask you to prepare cost sheet, this is what you have to do. No change in this. I'm not compromising with it. Clear? Yes. But now, when we are doing cost accounting system, guys, we are following the same sequence to pass journal entry and prepare ledger accounts. But few changes are, these things will not come, guys. These things and all will not come. Okay. These things they are not covered in cost accounting systems. Clear? And administrative overhead will always come after cost of production. Will always come after cost of production. Here we will see whether it is related to production, general and all. There you consider it as general. There you consider it as general. Hope you are getting it. Clear? Now let me connect it to the cost accounting system. Same thing. Cost sheet and cost accounting system I am trying to connect. Please pay attention. Through this. So this is the format for cost accounting system with minor changes. With minor changes. What are those? First, only focus on this side. This side. Okay. Direct material plus direct wages plus if at all if there is any other direct expenses. What is it? Prime cost. Then plus factory overhead absorbed plus opening WAP closing minus closing WAP will give you what? COP. There it was factory cost, correct? But here straight away COP. Cost of production or cost of goods manufactured. Then administrative overhead absorbed plus opening stock of finished goods minus closing stock of finished goods will give you what? COGS. Plus selling and distribution overhead absorbed will give you cost of sales. Will give you cost of sales. Okay. This is the format for cost accounting system with some changes. Almost same like cost sheet with some changes. Clear? Especially at this point, there are few changes. That is, I told you quality inspection, that this and all will not come here. Okay. Now let me try to connect it to the accounts. Guys, direct material, you would have transferred from where to where? Stores ledger to WAP. So it is sitting where? In WAP control account. Then direct wages also you will transfer from which account to which account? Wages control to WAP control. Then direct expenses, if at all if it is there, straight away you would record it in WAP control account. Okay, that is WAP control to general ledger. You straight away record it, if at all if it is given in the question. Most of the time they don't give. Okay. Now all these things are sitting where? In WAP control account. Correct now people? See how beautifully I am trying to explain. You have to understand where is our WAP. Direct material, direct wages, plus if there is any direct expenses. Clear? Then opening stock of WAP minus closing stock of WAP plus factory overhead observed will give us what? COP. Will give us COP. Now observe. Now observe. Direct material, direct wages, direct expenses plus factory overhead observed plus opening WAP minus closing WAP. Minus closing WAP on the credit side. All other items are on the debit side. Closing WAP is on the credit side. Means minus only, no? Yes. So what is that figure called? Cost of production. Cost of production. Hope you are getting it. Clear? Yes. So once we get cost of production, we are at this stage. Cost of production, where do we calculate? In WAP control account. We will transfer from WAP control to which account? Finished goods control. But the name of that amount is what, guys? Cost of production. Next, Administrative overhead absorbed. Opening stock of finished goods minus closing stock of finished goods will give us what? COGS. Absorbed. In finished goods control account. Let us go to finished goods. They will receive cost of production plus administrative overhead absorbed will come here plus opening stock of finished goods minus closing stock of finished goods. What do you get? COGS. Where are you transferring it to? Cost of sales. Absorb. Cost of production we transferred for WIP to finished goods. Then administrative overhead absorbed also. We transferred from administrative overhead to the finished goods control account. Then opening stock is there on the debit side of finished goods control account. Like what? To balance brought down. Then closing stock of finished goods is on the credit side of finished goods control, like as what? By balance carried on. After taking all this into consideration, what are we getting? COGS. We are transferring this from where to where? Finished goods control to cost of sales account. Finished goods control to cost of sales account. Okay, sir. Then selling and distribution absorbed. We will transfer from selling and distribution overhead to cost of sales. At the end, what do we get, sir? Cost of sales. We will transfer cost of sales to which account? Sales account. To sales account and record the sales there. Correct. If you want, you can also show another two steps. Plus profit is equal to sales. Clear? Yes. If you observe cost of sales also, you can see they will receive cost of goods sold from which account? Finished goods control account. Plus selling and distribution overhead absorbed. We will get what? Cost of sales. Where do we transfer it to? Sales account, or straight away you can transfer it to costing P&L account also. Clear? Yes. So this is all about the cost accounting system chapter, guys. If you want, you can just have a look into this. Okay. This is I have drafted in order to connect cost accounting system with cost sheet format. Yeah. And whatever is the changes, you just make a note of that also if required. For example, here overhead will all that is administrative overhead will always be general, which will come after cost of production. Clear. And all the items of cost sheet will not come here, guys. Like quality inspection, primary packing, secondary packing, those things and all might not come here. Got it? Yes, sir. Yes, students. Now we will revise chapter 8, which talks about unit and batch costing. From now on, whatever we will be studying is with respect to methods of costing. Methods of costing. We learned in the first chapter only the basics about this, guys. Now we will learn in detail along with how to apply this method in the calculation of cost. See, method of costing is something which an organization will follow to calculate their cost or to ascertain their cost. Sir, there are various methods of costing, no sir. How do I choose for me or for my company? Depending upon the nature of work the company is doing, they will choose whichever method of costing is suitable for them. Once they choose using that method, they will calculate the cost of completing their job. In this chapter, we will be covering only the two methods. In the upcoming chapters, we will cover the other methods. Okay, sir. So let us see some basics about the method of costing, or what are the different industries classification is there. They have given. We will see that. Costing method enables the users to have customized information of any cost object. What is cost object? It is something for which we will determine the cost separately, or we will measure the cost separately. To the need and suitability. Different methods of costing have been developed according to the needs and nature of the industry. So depending upon what work I am doing, I will adopt whichever method of costing is suitable for my company. For the sake of simplicity, industries has been grouped into two types, guys. One is industries who is doing the job work. Industries who are doing the job work means I will do the job or I will start the work only once you give the order for me. And whatever work I will do is as per your specification, as per your requirement. Under this, each job would be unique, guys. Each job would be different. One job may not be the same like the other job. Clear? For example, assume I am a furniture maker. Now you will come and give an order for double cot. I will do it as per your specification. You will tell length, breadth, everything. According to that, I will do it. Now your friend will come and tell, sir, I want same double bed, but in a little different way. I will do as per their specification. Correct? So each job I am doing as per the customer's request. Clear? Yes, sir. Whereas there is one more industry, which is industries engaged in the mass production of a single product or identical products. Means, sir, same product I am producing on a continuous basis. I am a pen manufacturer. Will each pen be different? No. Assume I am manufacturing 1000 pen or 1 lakh pen. Each pen will be different. Each pen will be same. Are they unique? No, sir. They will be same to same. Everything. See, I might be producing different types of pen. Assume this is one of the type of pen. Even whether I am producing 1000, 100 or 1 lakh, everything will be same to same. Will they have a separate identity? No, they will be same to same. Clear? Yes, sir. So let us see what is the difference between both. For the industry doing the job work, an entity which is engaged in the execution of a special orders, each order being distinguishable, means each order is different from the other. Jobs are worked strictly in accordance with whom? The customer specification or requirement. However you tell, I will do the work and give it back to you. And each job order is unique. Means each job order is different from the other. Yes, sir. Well, coming to the other one, that is the continuous or process type of industries. The continuous or process type of industries are characterized by the continuous production of uniform products. Uniform is same according to the standard specification. Guys, company would have already fixed what should be the length of this pen, width of this pen, okay, how it should be, how this nib should be, everything they would have specified. As per that, we will manufacture all the pens. In such a case, the successive lots are generally indistinguishable, means one is not different from the other as to the size and form. Examples are who are following job work, shipbuilding, construction of road and bridges, manufacturing of heavy electrical machineries and tools. Guys, if it is heavy machines, shipbuilding and all, they will manufacture only once they get the order. If it is a small machines and all, maybe they will manufacture and keep it. You will go and select it. They are talking about here heavy electric machineries and tools, wood and furniture works, etc. Whereas coming to this, which are the industries which will follow this type of methods? That is chemical and pharmaceutical products, paper or food products, canning, paints and varnish oil, rubber, textile, etc. Who will be manufacturing the same kind of product on a continuous basis. Then coming to the last difference, the method of costing for ascertaining the cost of each job either is job costing, or if it is a contract costing like for construction work and all, we follow contract costing, or the last one is batch costing. Sir, can we follow batch costing also here? Yes. For example, assume guys, I'm a furniture maker. Now one of the educational institution came and told me, because sir, we want 100 tables or 100 bench we want. Now, can I consider this as a batch? Yes. Okay, now 100 bench or desk, whatever I have received the order for, I can consider it as one batch. So, can I follow batch costing also here? Yes. Coming to the other side, which are the suitable methods of costing? Process costing, single output costing, or operating costing. In this chapter, we will be discussing two methods of costing. What are those, sir? Unit costing and batch costing. And guys, unit costing here, sir, is there anything special we will be learning? No. Whatever we would have learned in cost sheet, now same thing. Once we get total cost, if I divide it by total output, what do I get? Cost per unit. Sir, who will follow unit costing? When a company is manufacturing one product on a continuous basis, they will follow the unit costing or single output costing. So through this method, what do they do, sir? They will calculate the total cost, which includes all the expenses, material, labor, overhead, everything. It is easy now because they are not doing multi-product. Any expenses they have incurred is for this product. So just calculate total cost divided by number of units. You will get cost per unit. Next, batch costing. Batch costing, this is important. You can get a numerical question also here. Batch is what, guys? A group of units. When I am producing the same product on a continuous basis, clear? Or when I am producing or I am doing a work for a group of product or group of job, I can follow batch costing. For example, I am a biscuit manufacturer. Instead of manufacturing one single biscuits, I will manufacture maybe 12 biscuits in a batch or 100 biscuits in a batch. Or I assume I am a pharmaceutical company. Clear? I manufacture medicines. So, sir, should I manufacture each single tablet separately? Maybe not. Assume I will manufacture 12 tablets in a batch or 100 tablets in a batch. Clear? This 12 and 100 is nothing but batch size. Batch size. When I am manufacturing a group of units in one particular lot, that is called batch costing. So in this, what do we do, sir? We will calculate the cost of each batch separately. Each batch separately. So I will keep each batch separately. So what would be the cost object here? Batch. So identify what is the material cost, labor cost, overhead cost for each batch. Once you get the total cost of the batch, divide it by number of units in the batch. Assume guys, number of units in the batch is 100. So we have got, what is the total cost of a batch? Assume 10,000. Now 10,000 divided by 100, what do you get? Cost per unit. Cost per unit in the batch. I repeat, first we will calculate what is the total cost in the batch, which includes material cost, labor cost, overhead cost. Then divide it by number of units in the batch, which we call it as batch size. Once you do this, what do you get? Cost per unit in the batch. Cost per unit in the batch. And when the companies come manufacturing or doing number of batches, they will give name for each batch. Batch 1, batch 2, batch 3, like this. Even for your guys classes, okay, there will be given a name, or else maybe year 2025 batch, 2024 batch, or September 2025 batch. Clear? Or Jan 2026 batch, like that. Correct? So when the organization is handling multiple batches, they will keep a name for each batch. Okay, sir. And one important thing in this batch costing is deciding the batch size. Batch size should always be a standard, guys. That is, I told you, I am producing 100 units in each batch. This 100 is a batch size. Now I told 100, but how will the company decide this, sir? How will the company decide what should be the size of the batch? For that, we need to use a concept called economic batch quantity. Economic batch quantity. Now assume guys, in a year, we are supposed to produce totally. In a year, we are supposed to produce totally how many units? Let us consider it as 10,000. 10,000. Now I want to produce it in batches. I want to produce it in batches. Now I want to know what should be the size of each batch. Should it be like 1,000, 500, 2,000, 5,000? What should be the batch size? I am confused. Now I am deciding on that. Now, see guys, if I keep batch size highest, then the carrying cost would be more. Clear? Let me write it. If the quantity of the batch is more, then the carrying cost also would be more. Whereas machine setup cost we will call it as, that will be lower. Why, sir? Because number of batches will be less. If batch size is more, number of batches will be less, right? So in that case, setup cost will be lower. At the same time, if I produce less quantity in each batch, then carrying cost would be lower, whereas setup cost would be more. Why, sir? Because number of setup would be more. Clear? And one thing you should be knowing, guys, please be careful. Economic batch quantity is similar to a concept called EOQ, which we learned in material cost chapter. But one important difference between both is EOQ is calculated for raw material. EBQ is calculated for output. Clear? Let us go back to EOQ and try to connect to this. Guys, in EOQ, that is economic order quantity, which we learned in the material cost chapter. What did we do? Sir, in a year, totally I require, assume 1 lakh kgs of raw material. Annual requirement of raw material is how much? 1 lakh. My confusion is, how much should I purchase each time? How much should I purchase each time? That is where EOQ helped me. If I am purchasing in a larger lots, then carrying cost will be more because I have to look after more number of units. Whereas ordering cost would be lower. Why, sir? Because the number of orders will be less. Same way, if I purchase in large, smaller quantity, carrying cost would be lower, but number of orders would be more. Na? So ordering cost will be more. So EOQ concept will help me to decide a lot size where the total of carrying as well as ordering will be minimum. Assume as per EOQ, we got 10,000 kgs. That means every time I place a fresh order, if I place it for 10,000 units, my total of carrying cost and ordering cost would be minimum. will be minimum. And at EOQ, total carrying cost and total ordering cost would be same. Would be same. Total of both will be minimum. Individually, both will be equal. Correct? Yes. So EOQ we will calculate for what, guys? Raw material. And if carrying cost is given in percentage, we will apply that percentage on what? Purchase price. Because higher the purchase price of the raw material, higher would be the carrying cost. Carrying cost. Why, sir? I have to care for it more. I have to take the extreme care of it. So accordingly, my carrying cost would be more. Now coming to EB, that is economic batch quantity. We are calculating it for output, guys. What do we manufacture? Output. Now we are deciding, sir, in each batch, how many units should I manufacture? How many units should I manufacture? Totally in a year, I am supposed to produce 10,000 kgs of output. But in each batch, how much should I produce? So there are two costs associated with it. What is it, sir? Carrying cost, and the other one is the setup cost. What is carrying cost, sir? Sir, once the output is produced in a batch, I need to take care of it until it is sold. Until it is sold. So once the manufacturing is done, to take care of it till it is sold, whatever cost we incur is called carrying cost here. Carrying cost, holding cost, or storage cost. And please be careful. In EOQ calculation, carrying cost was for raw material. That is, once I purchase till I use it in the production process, what is the cost I incur? Whereas here, once I produce my output till it is sold in the market or till it is sold to the customer, what is the cost I will incur to look after that? That is to look after what? Finished goods. Okay, now then there is one more cost called machine setup cost. That is, once a number of units are produced, we need to set up the machine again and manufacture it. So, what is the cost we will incur to set up the machine, guys, or equipment? Got it? Yes, sir. So please be careful. One thing you have to be very clear. Concept, formula, and all almost same. But for what we calculate is different. Clear? Yes. Let us study that. Primarily, the total production cost under batch production comprises of two main costs. What are those? Machine setup cost and holding cost. Inventory holding cost is for what? If you want to write for finished goods. For finished goods or output, guys. Okay, sir. If the batch size is higher, means the number of units in the batch is more, means which cost would be more, guys? Which cost would be more? The inventory holding cost. The setup cost may decline due to lesser number of setups, but units in the inventory will go up, leading to what? Higher holding cost. If lot size is lower, lower inventory holding costs are accomplished, but with what? Higher setup cost. Why higher setup cost, sir? When batch size is lower, the number of setups would be more. When number of setup is more, the setup cost would also be more. Okay. So you can see, I have also given by way of diagram. Okay. So you can see here, this is the batch size, this is the cost. So, just a yes. Now, as the batch size increases, inventory carrying cost will increase. Clear? As batch size increases, the setup cost will decrease. Will decrease. If batch size is lower, assume like 100, 200 and all, then setup cost would be highest, somewhere here. Clear? Yes, sir. And this is what, sir? The total cost, total of both carrying cost as well as setup cost. Carrying cost as well as setup cost. Very similar to UOQ, guys. Correct? Same to same diagram. Only names will change. Economic batch quantity is a batch size where total cost of setup and holding cost are at minimum. At minimum. Guys, see, in the place of setup for EOQ, what it was? Ordering. Correct? Total ordering cost. Whereas here it is total setup cost. The objective here being to determine what are we calculating through EBQ, guys. The production lot or batch size means in each batch, how many units should I produce? And that optimizes both setup as well as inventory holding cost. Now, important statement I have given here. Economic batch quantity is always calculated for what? Output. To decide how many units has to be produced in each batch or in each lot. Whereas it is similar to EOQ, but EOQ will always be calculated for what, guys? Raw material, that is input. To decide how many units should be Purchased, not produced. Purchased. Each time a order is placed. Each time a order is placed, guys. So what is the formula to calculate EBQ, sir? Square root of 2 into annual demand. D stands for annual demand. Annual demand of raw material or output of? Output. Please be careful. Into setup cost for setup. Whole divided by carrying cost per unit per annum. Important thing. If carrying cost is given in percentage, you need to apply it on what? Cost of production. Cost of production. Well, calculating EOQ, if carrying cost is given in percentage, we used to apply it on purchase price of raw material. But here, guys, once the manufacture is manufacturing is completed, I need to look after the products. If the cost of the product which I have manufactured is huge, then the carrying cost which I incur also should be more. Why is that? Because I have to take care of it properly. Even if few units are lost, it is a huge loss for me. Clear? Yes. So the carrying cost directly depends on the cost of production of the product. So if carrying cost is given as a percentage in the question, apply it on cost of production per unit of output, not on purchase price. Please be careful. Here we are calculating it for output. Now, sir, can we calculate total setup cost and total carrying cost? Yes. We used to calculate total ordering cost for raw material. Now, what was the formula? Annual demand of raw material divided by lot size, which was normally EOQ, into ordering cost per order. Same way here. Annual demand of output divided by EBQ or lot size. What do you get, guys? Number of setup into setup cost per setup, cost per setup. Cost per setup. Then second one, total carrying cost, same like mine, EO, half into batch size here. Okay, that is for output into carrying cost per unit per annum. And please be careful, in EBQ formula, we will use only this last part. Clear? Whatever you get here, don't use it in EBQ formula, you will go wrong. In EBQ formula, it is setup cost per setup and here carrying cost per unit per annum and not the total. Yeah. And at EBQ, both of them will be equal. Both of them would be equal individually. Yes. Hope you understood. Clear? Yes. Yes, students. Now we will revise chapter 9, which talks about job costing. So we have started with the methods of costing. We have covered two methods in the previous chapter, that is unit and batch costing. Now we will learn the third, which is job costing. Sir, which type of entities will follow job costing is? Guys, whoever is doing the work after receiving the customer order as per the customer requirements. When I am doing the work or job as per the customer's requirement after receiving the order from the customer, then I would be following job costing. By following job costing, what do I do, sir? I will calculate the cost of each job separately. So to complete the job, I would have incurred a number of expenses. So for each job, I will maintain a separate job cost sheet and calculate the cost of completing each and every job separately. For example, I will accumulate the cost of material, labor, and overhead incurred for each job. Like material also, I would have used it for number of jobs, but for one particular job, what is the material cost? Same way, sir, my workers would have worked for number of jobs. We will see how much time they have dedicated or allocated for this particular job, and we will accordingly calculate the cost, guys. Yes, sir. Now, sir, this kind of method of costing is followed by the entity which are producing the same product on continuous basis, or when they are manufacturing or producing each product differently, which is unique. Unique. The second one. Correct. So under job costing, each job would be unique. Each task I complete would be unique. Yes. So what is it? We will see. Quickly, we'll go through. This method of costing is used in job order industries where the production is as per the requirement of the customer. It is not like I will manufacture and keep it, you will come and buy. No, no. You will come and give the order. Only then I will start doing the work as per your specification. In job order industries, the production is not on continuous basis. Rather, it is only when order from the customer is received. But it can be continuous. For example, I will not be keep on manufacturing and keep it. But if I am receiving the customer orders frequently, very regularly, will I be doing the work regularly, continuously? Yes. But what are they trying to communicate here? Not in continuous means, guys, we are not manufacturing and keeping the output so that customer will come and buy it. No, we are not doing it. Only when you come and order, we will start working. It is only when order from the customer is received, and that too as per the specification of the customers. Method used in such type of business organization is job costing or job order costing. Guys, we already learned the cost sheet chapter. In cost sheet chapter, whatever we did was, I have prepared a cost sheet maybe for a company as a whole. Means by considering what work they are doing or what job they are completing, we will prepare the cost sheet for the company as a whole for a year, for a month, or for a quarter. But under job costing also we can prepare a cost sheet for each job separately. For each job separately. That means there will be a separate cost sheet for each and every job. And for the organization, for easy maintenance, what they do is they will give a name for each and every job or maybe the number. They will give it. If you guys also observe, the best example for job costing is the motor workshops or the service. When you guys leave your two-wheelers for service, they would have maintained one job card telling what all work we have done for your vehicle. And they will explain you, this is what the costs are. If you ask, if not, they will tell, sir, this is the bill, please pay the amount in the counter, we will clear your vehicle. So if you pay the bill, they will seal it and give it to you. You have to take it to the security guard. You will tell, okay, sir, you are free to take your vehicle. Clear. So if you observe in that job card, they would have given the details of what and all we have earned. What is the labor charges? What is the material consumed? Everything they would have given. Clear. So did they maintain it only for you? Yes. With respect to your vehicle, they have maintained separate job card. Likewise, they would have maintained it for each and every vehicle which they serviced. Clear. So that is the best example for job cost sheet or job card. Oh. So what is the process under job costing, guys? Simple. We will prepare a job cost sheet where we will consider what is the material cost, labor cost, and overhead cost incurred for each and every job separately. Here we can also pass the journal entry, which is as same as what we discussed in cost accounting system, guys. They can either ask the question on cost sheet, where you will follow the same format which we discussed in cost sheet chapter, but all the items might not come. Okay, we have discussed all the items from A to Z, everything. But sir, when they ask the question in the exam, when they ask on everything, here, even in the class, we discussed one illustration from ICI material where almost every item was given. Clear. So will they ask so much items in the exam, sir? May not be, guys, because that is very much time taking. Oh, fine. So whatever, one thing is they can ask you to prepare job cost sheet, or else the other one is journal entry. Journal entry is nothing but whatever we learned in cost accounting system under non-integrated in cost books. Same to same interest rates. Oh, let us see. For purchase of material, what is the entry we will pass? Stores ledger to cost ledger control account. Next, for the value of direct material issued to the job. Issued to the job in the sense direct material always. Here, issued to the production, they may not mention. They may give it as issued to the job, which is nothing but like a production. Yes. So what is the entry, sir? Work in progress to stores ledger as a direct material. It is considered to be direct. Sir, what if it is returned back? Means whatever was issued to the job is given back. Then reverse the entry. What is it, sir? Stores ledger to work in progress. Whatever entry we have passed here, we need to just reverse. Next, sir, what if I return back the goods to the suppliers? Purchase returns. This is PR. Purchase returns. When you purchase, what is the entry you have passed? Just reverse. Just reverse it. So stock is going out, sir. So the entry would be cost ledger to stores ledger control account. Then if there is any indirect material, straight away send it to where? The factory overhead control account. Yeah, you would have purchased. When you have purchased, you would have passed the same entry for both direct as well as indirect material. But when you are transferring, you will transfer it to whom? Factory overhead control account to store structure. Then for wages paid, what is the entry? Wages control to cost ledger control count. Then in direct wages and indirect wages. Sir, can I combine both of this and pass one compound entry? That is also fine. Okay. Now coming to this. So if it is the direct wages, where do we transfer it to? Work in progress. So work in progress to wages control. If it is indirect wages, it will go to factory overhead control account. So factory overhead control account to wages control. Then, if there is any other indirect expenses paid other than indirect material and indirect wages, then where do we record it, sir? In factory overhead control account. Factory overhead control to cost ledger. It is nothing but like any factory or production overhead incurred. Next, we are charging it, means we are observing the factory overhead. What is the entry? Whatever factory overhead is observed, where do we send it to? To WAP control. So who is the receiver? WAP control. Who is the giver? Factory overhead. Debit the giver, debit the receiver, credit the givers. Okay. Then for the total cost of jobs completed, similar to cost of production, here we will call it as cost of job completed. Where are we sending it, sir? There we used to send it to finished goods control account now. Yes, but here there is nothing called finished goods control account. So try straight away send it to where, guys? Cost of sales. Cost of sales to WAP control. Hope you are understanding. It is nothing but cost of production. Clear? We used to send from where to where? WAP control to finished goods control. But when it comes to job, there won't be a finished goods control account. If at all, if by chance if they are given in the question, then follow the same procedure which we discussed in cost accounting system. Clear? Normally finished goods will not be there. So straight away, cost of job completed. Where do you transfer it to? Cost of sales. Okay, sir. Now, whatever balance is there in cost of sales, you will transfer it to costing P&L account and record the sales in costing P&L account. Sir, instead of opening the cost of sales and closing it, can I straight away transfer here only to costing P&L account? Yes. You can transfer this to costing P&L account. On the debit side, you will record the cost of sales or the cost of job completed. On the credit side, you record sales. Where, sir? In costing P&L. Clear? So in that case, you can avoid preparing this one extra account. Clear? Or else, sir, in between this, can I bring even sales account also, sir? Yes. Clear? But in order to save time, better record the sales in costing P&L account here. Clear? Yes. Notes you can see. General ledger adjustment account is another name for cost ledger. Here everywhere I have used cost ledger control account, which is nothing but general ledger, guys. Okay, sir. Then the balance of costing profit and loss account will show you what profit or loss made on that particular job. Then the balance of cost ledger control account shall be carry forward. Carry forward means it is like maybe the incomplete work, or we will carry it to the next year or next period. Last one. With the balance on all the accounts, trial balance can be drawn. Okay, sometimes they may ask you, if they ask you to prepare the ledger accounts, there are two kind of questions. One, they can ask only ledger accounts, or else they will ask you to prepare ledger accounts along with trial balance. Along with trial balance. That's all. That is all about this chapter. Very simple and small sharp. Yeah. Now we will revise chapter 10, which talks about process costing. Even process costing is one of the method of costing, guys, which is followed by an entity which follow different processes to convert their raw material into output. We call this as conversion process. Clear? Conversion of what, sir? Raw material into output. Guys, the conversion process will include two types of cost. What is it? Labor and overhead. Once I purchase raw material, started using it in the production process, we will take lot of efforts to convert that raw material into output. That process is called conversion process or manufacturing process. If organization is following different processes to convert their raw material into output, they follow process costing. Sir, by following process costing, what do? They calculate the cost of each process. And it will also help them to know which process is performing better, who is incurring more cost, who is contributing more to the organization, which process. So in this case, guys, which would be the cost object? For us, the cost object would be process. So we are allocating the cost for each process separately. So assume there are three different processes in an organization. We will prepare three different costs. All the expenses relating to the process would be debited, and if there is any sales or output transferred to next process or loss, we will record it on the credit side. Normally, sales will not be done in the process accounts, guys. It will be done finally in the finished stock account or in the sales account. And in process costing, the output of process 1 will become the input of process 2. Same way, the output of process 2 will become the input for process 3. Clear? And it has to go in a sequence. In your exam, they can ask you to prepare process account. Either one process account or multiple process account. Multiple process means maximum 2 or 3. Not more than that. Clear? Yes. And for the organization, for easy sake, they will keep a name for each process. There will be a name for each process. And in your exam and all, what they do is 1, 2, 3 or A, B, C like that. Clear? Or they may also give the name used in the industry. Yes. So you can see raw material will be introduced into the production process where in the first process. Then we will send whatever work is done in process 1. We'll go to process 2. Then next to process 3. Last is finished goods when it is ready to sell. When it is ready to sell. So I told you we need to prepare a separate process account for each and every process. Sir, what do we record there? Guys, I have tried to give everything here in one account. This is just like a format for you. Just like a format. I will also discuss along with some question or examples later. But first pay attention, understand the format. Process account is like any expense account. Yeah, we will debit with all the expenses and credit with. Normally incomes are not there. Whatever you transfer to next process or the loss. Or the loss. And loss means we will transfer it to the respective loss account. Clear? Yes. Listen. Now basic raw material means the raw material which is introduced in the first process. This is the raw material for the entire company. Clear? We will take that. Then there might be direct material for each and every process types. Clear? For example, sir, for process 2, process 3 also, can there be a direct material? Yes. Well, direct material means the material which is used by that process has direct. Clear? Sir, what is the difference between the basic and direct? Simple. Basic is nothing but this, guys. The raw material from which we started manufacturing. Whereas direct material, in case of process costing, is the materials used by the respective processes for the work which is assigned to them. For the work which is assigned to them. So this is also direct material, but for the company as a whole. Whereas this is the direct material for whom? For the respective processes. Clear? Yes. Sir, what if they have given indirect material, indirect labor and all? Everything you will record on the debit side only. Any expenses of the process, please record it on the debit side. So you can see labor, direct expenses, production overhead or any overhead, we will take it here. Okay, sir. Then all the expenses are recorded. Then if by chance if there is any defective or waste for rectifying that, I have incurred some cost, debit that. If at all it is given in the question. Then coming to the credit side, guys, important. Normal loss. Sir, what is normal loss? What is abnormal loss? There are two different types of losses in the production process, guys. Clear? If there is any loss which is unavoidable, which is uncontrollable, whatever I do, it is bound to happen. So I don't have any control over it. We call it as what? Normal loss. And the cost of normal loss will always be absorbed by good units. Will always be absorbed by good units. Means the cost per good unit will go up automatically. Clear? Yes, sir. So simple. Let me tell you. I will show you. Assume, guys, I had purchased 100 units at 10,000 cost. Cost is fully debited. Yes. Now there is a loss of 5 units. There is a loss of 5 units. So remaining units is how much, guys? 95. So whatever is the cost of these 5 units will be absorbed by whom? Remaining 95 units. Remaining 95 units. But this 5 units can bring me some small scrap value. Some small scrap value. So what should I do? I have to reduce it from 10,000. 10,000 is my total cost. But this 5 units which is lost, but I will get some scrap value. Assume it is 100 rupees. So I need to deduct 100 here. What is my net cost, guy? 9,900. So what is the cost of this 95 units if I ask you? How much is that? 9,900. But instead of deducting, as I have already debited 10,000 on the debit side, what will I do is, I will give a credit. I will give a credit for what? Scrap value of normal loss units. This is not the cost, guys. This is the scrap value of normal loss units. Now, if I ask you, what is the net debit? 9,900. 9,900. Correct? Yes, sir. That is the cost of how many units? 95. How did I get 95? 100 minus 5. So if I ask you what is the cost per unit now? 9,900 divided by 95. Hope you understood. Now, assume whatever is the cost per unit you have got. Out of this 90, 95, 90 is sold, 5 is kept as closing stock. If I ask you what is the cost of output? Then it is 90 into the cost whatever you have bought. What is the cost of closing stock means? 5 into the cost per unit what you have bought. Hope you understood. I repeat. Guys, I have incurred a total cost of 10,000 for 100 units input. Later, I got to know there is a 5 units loss, normal loss units. Now, whatever is the cost of it is a loss for me, will be absorbed by remaining units. How much is that? 95. But from this 5 units, I will get some small scrap value, which will reduce my cost. So, what is my net cost now? 10,000 minus 100, which is 9,900. Divide it by what is the good units remaining? 95. How did I get 95? 100 minus 5. You will get cost per unit. Assume out of this 95, the units transferred to next process is 90. So what is the cost of output transferred to next process? 90 into whatever cost per unit we have got. And 5 we have kept it as closing stock. What is the cost of closing stock? 5 into whatever cost per unit we have got. Got it? Yes. Yes. Let me read for normal loss. It is defined as the loss of material which is inherent. Inherent means I cannot avoid it, sir. It is bound to happen in the nature of work. Such a loss can be reasonably anticipated from the nature of the material, nature of operation, the experience and technical data. It is unavoidable because of the nature of material or the process. Guys, organization would have already be prepared for it. I know it will happen and I cannot control it. So not what normally organization will do is they will fix it as a percentage of input. 5%, 2%, 3%, they will fix. I know it will happen. Nah? I cannot control. So better I will be prepared for it. I will be prepared for it. So they will anticipate it and they would estimate what is the percentage. Assume 5% they have given. You need to apply this 5% on what? Input. Input, guys. Got it? Yes. Treatment in cost accounts for normal loss. The cost of normal loss in practice is observed by whom? Good units. Good units means the remaining units. Clear? That is the total input minus the normal loss units. In my example, it was 95. Remaining units produced. The amount realized from the sale of normal loss units should be credited to processor. Why, sir? Because we have to reduce it from the cost. Now I cannot go and deduct it on the debit side. So instead of doing it, what do I do? I will give a credit. So after considering normal loss, how do I calculate the cost per unit, guys? Very simple. Take the total cost minus the scrap value of normal loss units. In my example, it was 1000. I guess 1000 or 10,000? 10,000. So 10,000 minus 100. Minus 100. How much it will give? 9,900. Divided by total input minus normal loss units. Clear? Yes, sir. That is 100 minus 5, which is 95. Which is 95. What do you get now here? Cost per unit. So you can see, guys, assume input is, I am giving another example. Input is 1000. And normal loss, normally they would have given in percentage. Assume it is 10% of input. So 10% of input comes to 100. What was the expected output now? What is the expected output? 900. But actually we ended up getting only 750 output. We ended up getting only 750 as good units of output. That means remaining 150 is what, sir? Abnormal loss. Abnormal loss. Guys, we call this as normal output. After reducing normal loss from input, whatever I was anticipating, whatever I was expecting is called normal output. If I get the same, there is no chance of abnormal loss or abnormal gain. But if my actual output is less than normal output, then the difference is what, guys? Abnormal loss. Abnormal loss. Or else, if I ask you, what is the total loss? 250. 250. If total loss is more than normal loss, what is the difference? Abnormal. Hope you understood. You can analyze in two ways. If your actual output is less than normal output, what is normal output? Input minus normal loss. Then what is the difference? Abnormal loss. Or else your total loss is more than normal loss. What is the difference? Abnormal loss. Hope you understood. Now what is abnormal loss? Abnormal loss is something which I would have controlled it. If I had taken precautionary measures, I would have avoided it. But I didn't do it. So it happened. So when it happened, it is because of my ignorance or negligence. Should I allow it for the cost of the units to increase? No. Please value it separately and send it to abnormal loss account. And from there, whatever is the net loss, you will transfer it to costing P&L account. So you need to value the abnormal loss separately and send it to abnormal loss account. And in abnormal loss account, if you are receiving any scrap value, you will record it there and transfer the final net loss to costing P&L account. Okay, sir. Sure. Let us see. What is that abnormal loss? It is defined as the loss in excess of predetermined loss. What is the predetermined loss? Normal loss, which I had already expected it will happen. Have I predetermined it as I anticipated it? Yes. This type of loss may occur due to carelessness of workers, a bad plant design, or an operation sabotage, that is wastage. Such a loss cannot obviously be estimated in advance. Clear? So this normally will not be estimated in advance, guys, because this happened because of my mistake. Clear? It is a reason. Yes. So this would have not been anticipated. Normally this would be like balancing figure, guys. Balancing figure. Okay. What is the treatment for it in cost accounts? Do we value it separately or will we include it in the cost of good units? We will value it separately. The cost of abnormal process loss unit is equal to the cost of good unit. The total cost of abnormal process loss is credited to what? Process account from which it arises. Sir, why do we credit it, sir? That's very simple. Here already total cost is debited. Now, can I allow my abnormal loss to be absorbed by good units? No. So as the total cost already includes the cost of abnormal loss units, what do I do is I will try to remove it by giving a credit. By giving a credit. And I will treat it separately in abnormal loss. So how do we calculate this value, sir? Guys, listen here. In the units column, normally this will be the balancing figure. In the units column. Once I get the units, can I calculate the value? Yes. What is the formula? Here we discussed same formula. Now you need to apply multiply with what? Abnormal loss units. So what is the value of abnormal loss? Same formula into how many units, sir? Abnormal loss units. That's simple. What do you get here? Cost per unit. Multiply it with abnormal loss units. You got it? Yes. Now coming back to this. Pay attention. Guys, when you are preparing the process account, you need to present both the sides, units column also. Units amount, units amount. Okay. First thing you will close is units column. When you close units column, there are two possibilities. Either you will get abnormal loss or abnormal gain. If debit side is more, abnormal loss on the credit side. If by chance if credit side is more, then on the debit side, abnormal gain. Either of the two, not both. I have given both here in the format. That doesn't mean that you will get both. Anyone. That is why I have highlighted. Okay. So whatever I have given in red color is like a balancing figure in units column. Once I close units column, now come to the amount column. Now you need to calculate the value of abnormal loss using the formula which I just now explained. Then output, you can keep it as balancing figure in the amount column. You can keep it as balancing figure in the amount column. Or else, even this you can calculate. How is it, sir? If you multiply here with the number of units of output, you will get the same answer. Here we multiplied with abnormal loss units. Now, instead of that, if I take the number of units transferred to next process, I will get what is the cost of output transferred to next process. Clear? And if at all, if they have given closing stock, you will consider that also on the credits. You will consider that also on the credit side. Okay. Now, whatever amount we will transfer to abnormal loss account, we will receive it there. We will receive it there. Yes, sir. So I will prepare an abnormal loss account. So you can see here process account. Whatever we transferred there credited will be debited here. Now, even for these units, we will get some scrap value. Yes, sir. So record. By cost ledger control account is nothing but the scrap value. Scrap value of what? Abnormal loss. See, in the exam, if they have just given scrap value, take it for both normal loss units as well as abnormal loss units. Whereas, if they have given it separately, for normal loss separate scrap value, for abnormal loss separate scrap value, please take it accordingly. Clear? Yes. And whatever is the net loss, this will be the balancing figure. Transfer it to where? Costing P&L account. Costing P&L account. Guys, one difference between both the losses, listen here. Here what I transferred to normal loss account is not the cost of normal loss units. It is the scrap value of the normal loss units. Whereas whatever I am transferring here to abnormal loss account, it is the cost of abnormal loss units. Clear? Will I record the scrap value of abnormal loss units in the process account? No, 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 no. Where do I record it? In abnormal loss account. In abnormal loss account. Hope you understand. Yes, sir. Next, sir, if not abnormal loss, I can get abnormal gain. Abnormal gain is what? Guys, listen. Logically, you learn. Simple. Listen here. Sir, I expected 100 units will be normal loss. This I would have expected at the beginning of the year or at the end of the year? Beginning of the year. I would have already recorded this at the beginning of the year. I have recorded the scrap value, assume 5 rupees per unit, 500. Already I have recorded. Yes. But the end of the year, I got to know actually loss is not 100 units, it is only 80 units. That means 20 is what? Abnormal gain. Now, what is abnormal gain, sir? I expected it to be loss, but it turned out to be good. Sir, I expected 50 marks, passing marks in my costing paper, but I got 60 gain of 10 marks. Abnormal gain. They will not do any charity. Only if you have written, they will give marks. Okay, don't assume that. Sir, if I write for 50, they will give 60. Definitely not. Okay. So I repeat, listen. You expected 50 in a paper, but you ended up getting 60. 10 rupees is gain. Sorry, 10 marks is there. Gain. Clear? Yes. Same way. I expected my normal loss to be 100 units. But the end of the year, Jamuna, at the end of the year, I got to know there is actual loss of only 80. That means 20, which I expected to be loss, turned out to be good. But I would have already recorded this, guys. 100 I would have already booked. Now, can I go and cancel that? No. So, what do you do now? Go and record 20 here. Go ahead and record 20 here. Now, how do I calculate the value of abnormal gain, sir? Same like abnormal loss. Same like abnormal loss. Whatever cost per unit you would have got into the number of abnormal gain units. Clear? So, whatever I will transfer here, I will receive it there. I will receive it there. Where, sir? Abnormal gain account. You can see here. Whatever I have debited in process account, we will credit it here. We will credit it here. Guys, one important thing now. How many normal loss I observed? I estimated 100. But actually normal loss is how much now? Only 80. Guys, listen. For normal loss, I would have already accounted scrap value per unit 5 rupees. 500 I already accounted. But will I get now 500? Will I get 500? No, I will get only on 80 units. That means on 20 units, I lost scrap value. I will record. See, this is my actual gain. Where is it? It is my gain, but out of this gain, I am losing some small value. What is it, sir? For this 20 units, I am losing scrap value. Record it here. Guys, whatever I am writing here, to normal loss, it is nothing but loss of scrap value. Why, sir? Because I already recorded the scrap value on the credit side for how many units? 100 units. I expected that I will get scrap value for 100 units and I reduced 500 from my cost. But only at the end of the year I got to know actual loss is only 80. That means on 20 units I will be losing the scrap value. Yes. Please record it here. Please record it here. Clear? That is 20 units. 20 into 5 will come here. Remaining is the net gain which we will transfer it to costing P&L account. This is the net gain. This is the net gain. Hope you understood. Clear? Yes. Sure. Let us read it. Abnormal gain. Guys, listen here. Input was 1000. I expected 10% as loss. So normal output was 900. That is normal loss is 100. But actually my output turned out to be 950. My normal output was what? 900. So that means remaining 50 is what, sir? Abnormal gain. Or else, let me take like this. What is my total loss? Only 50. Only 50. Whereas my normal loss is 100. When total loss is less than normal loss, what is the difference called as? Abnormal gain. Abnormal gain. Okay, sir. Sometimes loss under a process is less than the anticipated normal figure. In other words, the actual production exceeds the expected figures. Under such a situation, the difference between actual and expected loss or actual and expected production is known as abnormal gain or abnormal yield. So abnormal gain may be defined as unexpected gain in production under the normal conditions. Means guys, simple. Sir, I expected 100 would be a loss, but actually I ended up getting only 80 loss. That means 20 which I expected to be loss turned out to be good units. Turned out to be good units means, can I sell it in the market, sir, at a usual selling price? Yes. How do we calculate the value of abnormal gain? Same formula, guys. First calculate cost per unit, multiply it with abnormal gain units. Now you might ask me, sir, when you are reducing your normal loss units, will you reduce only 50 or full 100, sir? 100, guys. Because all these calculations would have been done at the beginning of the year only. Normal loss you would have expected at the beginning itself, percentage. Clear? Yes. Even scrap value I would have taken for 50 units, 100 units, 100 units. Clear? Yes, sir. Into abnormal gain units, which is 50 per month. Clear? So once you give debit in the process account, bring it here, and please be careful with this. Many students might miss this. And even if they're doing, they may not know the reason why is it. Yeah, so simple, guys. This is a loss of scrap value. Loss of scrap value. Sir, can we lose scrap value also? Yes, we have gained something big, guys, in life. Clear? We have lost something small. Let us leave it. Let us leave it. Correct now, guys, because this abnormal gain 50 units is there. No, I can sell it in the market at a regular price. For that, we are losing some small scrap value. Let us let go. Correct now. That is what the story of even CA students. Okay, you guys are making yourself for a better future. In this journey, if there are some small sacrifices which we have to do, you have to do it, guys. Clear? Now, you might see some of your friends, especially those who have completed their degree. You might be seeing your friends working, earning some income and all. Okay, but don't worry. Don't compare your present to today with their life or with their earnings. You guys are aiming something big in your life. It's okay to sacrifice few things, hold your nerve, control your emotions, control your desires, and focus on your studies. Okay, definitely you will have better future. That is what I can tell. Don't compare with others, guys. That's the best thing. If at all, if you want to compare, always compare with someone who is above you, not below you. Above you in terms of knowledge and qualification and talent. Yeah, yes. Sure, sir. Fine, sir. Again, coming back to format. Again, coming back to format. Yes. Hope you understood whatever I have explained it. Clear. Guys, follow the order. Follow the order. Let me tell the order. First, record all the expenses, people. Abnormal gain will not come at the beginning. It will come only at the end. First, record all the expenses. Okay, sir. Then units column. You open inputs. Then normal loss will be normally given in percentage. That percentage has to be applied on input. Okay. Then output and all normally units will be given, guys. Clear. So first, to try to close units column. Check which side is more. Majority of the time, debit side might be more, but may not be always. Check which side is more. If debit side is more, then on the credit side, abnormal loss. If credit side is more, on the debit side, abnormal gain. So in the units column, always the balancing figure would be either abnormal loss or abnormal gain. Once units column is closed, you need to find out maybe two figures at least. Clear? Calculate one figure using the formula. That is like this. Another one you can keep it as balancing figure. Or else you can find out this also using the formula. If you just multiply with the number of units of output transferred to next process, you will get this line. Clear? Yes. If closing stock is given, you can record that also. Clear? Yes. Sure. I have also given what it will be debited, credited and all individually, one by one item. So we have covered some basics about the process costing. Let me also explain it through an example. I already give one or two examples, but still I am taking one more here. I will also take up one question and tell you, don't worry. First, raw material 10,000 is introduced into the production process at a cost of how much? 10 rupees per unit. So total cost is 1 lakh. Direct wages 10,000, production overhead 15,000. So what is my total cost? 1 lakh 25,000. Everything would be debited here, sir. Hello, sir, everything would be debited here? Yes. Next, actual output transfer to next process is only 9,206. Output is 9,200. That is this figure. Units. Okay, sir. Then normal loss 5%. 5% on what? 10,000. 10,000, which comes to how much, sir? 500. 500. So normal output is how much, guys? 10,000 minus 500. How much it should is of it was supposed to be 9,500. But actually output is how much, sir? 9,200. That means remaining 300 is what, sir? Abnormal loss. Abnormal loss. That would be the balancing figure in the normally units column. Okay. Sure. Now let us come to the cost part. Sir, total cost is 1,25,000. We have a normal loss of 500 units. We are getting a scrap value of 3 rupees per each unit. So what is the scrap value? It is 500 into 3, which is 1,500. What is my net cost, sir? 123,500, which is nothing but the numerator part. Total cost minus scrap value of normal loss units. So you will get 123,500 divided by normal output. What is normal output, sir? 10,000 minus 5% loss, which is 9,500. Divide each other. What do you get? You cost per unit. Cost per unit 13 rupees. Now, if I want to calculate value of abnormal gain, 13 into 300, which comes to 3,900. I want to calculate cost of output, 13 into 9,200. 9,200. Hope you got it. Clear? Same thing, whatever I have calculated here, now we need to present. Now we need to present. So 1 lakh cost. Okay, let me do it. I need to present it. How much is the units? 10,000. Okay. What is the cost of that? 1 lakh. Wages cost 10, 15. Okay. 10,000, 15,000. For this and all units will not come, people. Normal loss is 500. What is the scrap value? Into 3,500. So if I ask you what is the net cost? Debit minus credit. Debit minus credit. Okay. Then we have an abnormal loss 3,900. 3,900. What is the unit, sir? 300. Gross output is how much, sir? 9,200. Normally, this would be the balancing figure. So, total of 10,000, 10,000. Until I find out abnormal loss, there will be zero here. You find it out as balancing figure. Now, output cost is how much? 119,600. 119,600. Hope you understood. Now bring that here. 300 into the cost of it is 3,900. For this also, do we get a scrap value? Yes. If they are not given separately, take same 3 rupees. So 300 into 3, 900. Clear? Remaining is how much, sir? 3,000. Transfer it to costing candle. What is this, sir? Net loss. Net loss. Clear? And if you prepare normal loss account also same, guys. Listen here. If you prepare normal loss, once again I will show you. On the debit side, you will take how much in units? 500. 1,500. Then on the credit side, by cost ledger control account, how much, sir? Same. 500, 1,500. Match. That's all. This is normal loss account. Normal loss account. Debit side, you receive whatever is transferred here, no? You receive it here. Clear? This was with an anticipation you have booked. When you receive it, you will pass this entry. When you actually receive the scrap back. Clear? Guys, when I passed this entry, I have not yet received the amount. It was just with an anticipation. When did I pass this entry? At the beginning of the year. When I actually receive it, you need to receive the amount. What would be the entry? By cost ledger control account to normal loss account. Got it? Yes, sir. Sure. One second. I will just show you a question which I have solved in my regular class. You can see your guys. All the data is given. We will not go in detail about the data and all. So you can see one by one. First material, wages, overheads, every expenses we will take. Okay, sir. Every expenses we will take. On the credit side, we will first record the normal loss. How much is that? 5% of input. Take it. Then scrap value they have given 12.5. 375 into 12.5. You will get scrap value of normal loss units. Now, if I ask you what is the cost, it is the total of debit side 6,94,350 minus 4,688 divided by units 7,500 minus 375. You will get cost per unit. Now, first let us close the units column. Output they would have given 7050. Total of Debit side 7,500, credit side not matching, sir. So what is the balancing figure? 75. So multiply 75 here, you will get cost of abnormal loss. Take it here. And now close amount column. Debit side is more, balancing figure on the credit side is cost of output. Sir, can I calculate this using the formula also? Yes. Instead of 75, if you bring 7050 here, you will get cost of output. But I would suggest you to keep it as balancing figure so that amounts column will exactly match as. Amounts column will exactly match. Especially if you have got something decimal here, then it may lead to some difference. So in order to avoid that difference, better keep it as the balancing figure under the amount column. Under the amount column. Okay. So abnormal loss, you can see whatever I have transferred here, I will receive it first. I will receive it first. Then we will receive the scrap value for abnormal loss units. Then remaining we will transfer it to costing P&L account, which I call it as net loss. Net loss. Guys, please don't straight away transfer from here only to costing P&L account, because here we don't record the scrap value of abnormal loss accounts or loss units. Clear? So please transfer it to abnormal loss. There you record scrap value, and from there you transfer it to costing P&L. Sir, what if there is abnormal gain? Okay, in this account there is an abnormal gain. Okay, guys, when there is an abnormal gain, you have to be extra careful. First, record all the expenses, inputs, then also output. Normal loss, how much is that, sir? 10% of input, 7050 into 10%. Okay, record the scrap value also, which is 37.5 into 705. Okay, game over. Now, first we need to close units column. Check which side is more. Don't always conclude that debit side would be more. Sir, this time credit side is more, sir. 7250, and on the debit side only 7050. So what is the difference, sir? Balancing figure of normal gain on the debit side. Clear? And once you close the units column, now we need to calculate cost per unit. Now, first total of the cost debit side, but don't write it here. Don't write it here, because we will get this value also. Do the total, but don't write it in the total. Just take it here. Whatever total you get here, just to take it here, guys. So total cost. Please be careful. Total cost will not include this. We have not yet determined this. Only this will come. Minus scrap value divided by input minus normal loss units. You will get cost per unit. Multiply with abnormal loss units. You will get value of abnormal loss. Sorry, abnormal gain. Multiply with abnormal gain units, you will get value of abnormal gain. Now, whatever value you have got here, add this and write the total. Clear? Guys, one mistake students might do is, whatever total they get here, they will immediately write. Don't do that. When there is abnormal gain, wait, guys. Wait for the value of abnormal gain, because that will also come on the debit side. Clear? Or if at all, if you want to write the total, you can write this total provided you have got this. If not, you would have still have to determine this. Clear? Yes. Once I get that debit side total, you can take the cost of output transfer to next process as balancing figure. Or else you can calculate this also using the formula. So instead of 180, if you take 6525, you will get the cost of output. You will get the cost of output. Hope you understand. And when there is abnormal gain, observe. Sir, first receive it. 180 units at 25209. Receive it on the credit side. Because there it is debited, here it would be credited. Now, for 180 units, will I get a scrap value? No, it is a loss. So for 180 units, 37.5 I am losing. So it is like a loss, guys. It is like a loss. So record it. Remaining, whatever is there, is called net gain. Transfer it to costing P&L. Transfer it to costing P&L account. This is nothing but loss of normal scrap. Clear? Yes. Sure. Let us now enter the new concept here. Inter-process profits. Guys, as we already learned, sir, the output of one process will be sent to the next process. Same way, output of process 2 will be sent to process 3 at cost. But now company want to know what is the performance of each process. Who is contributing better? Who is adding more profit to the company? In that case, they will not transfer the output of process 1 to process 2 at cost. They will ask you to add some profit and transfer it at what price, sir? Transfer price. But please be careful. Process 2 will not know how much profit is added by process 1. Same way, process 3 will not know how much profit is added by 1 and 2. Got it? This would be kept as confidential by the top level manager. They will just tell process 1, whatever work you are doing, you transfer it to process 2 at this much price. Same way, whatever work process 2 you are doing, you transfer to process 3 at this much price. This price is normally fixed by top level management. Yes. Doing the industry research and all means simple. How do they fix it? Well, simple. If process 1 output is sold in the market, at what price can we sell it? We are not selling it. If I sell it, then we will fix that as transfer price. Same way, whatever work process 2 is doing, if I sell it in the open market, at what price can I sell it? We will fix that as transfer price. Yeah. Sir, what is the main reason behind it? Simple. To evaluate the performance of each process. To evaluate the performance of each process. Now, assume guys, company got to know process 2 is not performing better. They are incurring huge cost. They are taking too much time. In that case, what company can plan is they can give 1 or 2 warning for them. If not, eliminate process 2 and try to outsource that work to others. Whatever process 2 is doing in-house, try to eliminate it and outsource that work to maybe the outside agency. Why, sir? Because assume guys, if process 2 is doing in-house work, they are incurring 10 lakh costs. Now there is one person who is ready to do the same work for me for 7 lakh. I can save 3 lakh, no? Yes. But obviously there are other qualitative factors to consider. I have to share some secrets with him and all. Now what if he himself starts the business which is competitive for me? That and all we need to consider. But if everything is okay, maybe I can outsource this work to outsiders. So that is why companies normally transfer the output of one process to another process, not at cost, but at profit, by adding a profit, which we call it as transfer price. Transfer price. But one problem here is, guys, whatever process 1 sent to process 2 to process 3. Now, process 1 doesn't have any problem. Why? Because there is no one adding profit to them. But when it comes to process 2 and process 3, they will be having a material which is sent by 1 and 3 will be having which is sent by 2. Correct. Now, if they have already completed the work and sent it to next process or sold it, no problem. But what if they are having it as closing stock? Now, assume guys, process 3 is having a closing stock. Closing stock, can it be shown at profit? No. But here, closing stock is not at cost. Why, sir? Because process 1 and process 2 would have added some profit. Can I show my inventory at cost or at profit? Cost. Correct? Even accounting standard or Ind AS 2 tells the same. You value it at lower of cost or net realizable value. If your selling price is more than cost, then we will always show the inventory at cost. Now, can I show my inventory which is there in process 2 or process 3 at cost plus profit? No, I have to show it at cost. But my closing stock will have some profit which is added by previous processes, which we call it as unrealized profit. What should we do with this, sir? Create a reserve and remove it. Create a reserve and remove it. Why, sir? Because we cannot make profit by keeping the goods with us only. Can we do it? Will accounting standard allow recognizing the profit by keeping the goods with you only? No. So now closing stock of process 3 will have some element of profit which is added by 1 and 2. Can we have that in our books? No. Please try to remove it. Please try to remove it. Hope you understand. By creating a reserve. Yes. That is what we are learning now. Inter-process profits. Normally, the output of one process is transferred to another process at cost, but sometimes at a price showing a profit to the transfer process. That to the transfer process means to the receiver. Okay, the transferor will add some profit and send it to the receiver. The transfer price may be made at a price corresponding to the current wholesale market price. That is, if I sell it in the market, what price can I get? We are not selling it, but if I sell, what is that I will be getting? Or at a cost plus some agreed percentage of profit. That is cost plus some certain percentage of profit. The advantage of the method is to find out whether the particular process is making profit or loss. So we can calculate each process. Is it making profit or loss? If yes, how much? This will help the management whether to process the product or to buy the product from the market. Guys, we will make this decision in marginal costing. Make or buy decisions. Make or buy decision. Sir, should I continue with this process in-house or should I stop it and start purchasing it from outside? So transfer price is nothing but cost plus profit, guys. Don't call it a selling price. We are not selling it. Clear? If it is for outsider, we call this as selling price. But here we are not selling it. We are sending it to the next process. The profits introduced remain a part of the prices of processed stocks, finished stocks, and work in progress. The balance sheet cannot show the stock with profit, guys, because the accounting standards will not allow it. This problem arises only in respect of stock on and at the end of the period. That is only on the closing stock. So what about the units completed and transferred to next process? Guys, this goods, if I had already sold it, then I would have recognized profit on it. There is no problem in it. So for the goods sold, we don't care. But for the goods which are still lying with us, we cannot show that goods along with profit. We have to show it at cost. The unrealized profit in the closing stock is eliminated by creating a stock reserve. By creating a stock reserve. I will try to explain this with an example with a question, guys. See, whenever you are preparing the process accounts, which includes the inter-process profits, you should have three amount column on the both sides. Cost profit total on both the sides. Clear? Guys, think like this. This is the cost to the company as a whole. Whereas this is for the process. Will process know what is the profit added by the previous process? No, they will not know. But will top level management know it? Yes. So for the company, if I ask you what is cost, it is this. For the process, if I ask you what is the cost, for them, Papa, they will believe that this is their cost. Clear? So cost column stands for company, whereas total column stands for the process. Got it? Yes. Process one normally will not have any profits, guys, because no one is there before them to add. Let us go to process two to understand better. Yeah. So opening stock value they had given 9,000. Clear? In that, how much is the profit they would have given? This I would have anyway recognized it during the period because normally opening stock I would have sold during the period. Because this was the closing stock for the last year, this I would have sold it. We will take care of it. Then this is what we have received from process 1. Now for process 2, what is cost price? Is it 4,500 or 54? 54. 54 because they don't know what profit added by process 1 and 1. But for the same goods, what is the cost to the company? 4,500. 4,500. Only top level management will know this figure. Clear? I repeat. For process 2, the cost is 54,000. Whereas for the same goods, what is the cost to the company? 4,500. Okay. Then we got prime cost and all here. Then closing stock, normally they will give this value, 4,500, which includes profit. Sir, how will I find out the profit element? Simple. You can either find out cost element or profit element. Either one you calculate. How is this, sir? Simple. Let us calculate cost. 4,500 is a part of 90. How much is for 70? So simple. 4,500 divided by 90 into 75,000. You will get what is the cost. In that case, you can keep profit as balancing figure. Or else, can I calculate the profit amount, sir? Yes. How is it? 4,500 divided by 90,000 into 15,000. Into 15,000. You get profit. You either calculate cost or profit. Keep the other one as balancing figure. You can see I have shown it here also. Cost element I have calculated. Cost of closest. Clear? Huh? Yes. So simple. I repeat once again. This divided by this into 75,000. That will give you the cost of closing stock. Or else if you want to calculate the profit in closing stock, then 4,500 divided by 90,000 into 50,000. 50,000. Okay. Then we have added overhead cost also. Then we will get a total cost 90,000. Now on 90,000, process 2 has to add a profit. Normally, if they have given it as a percentage and all, will you add it on 75, 750 or 90? 90. Because what is the cost for process 2? 90. For that, you add profit and send it to next process. So next process story is what? Sir, 75,750 worth of goods is sent to next process at 1,12,500 by adding a profit of 36,750. So when finished stock receive the goods, for them what is the cost? 1,12,500. 1,12,500. Okay, sir. This is the profit and the profit percentage and profit amount calculations. Finish stock. Oh, guys, if I have to then see this, you will do only if they have asked in the question reconciliation of profit. So inter-process profit added you have to take. What is the inter-process profits, sir? One by one we will see. 13,500, 22,500, and here 16,250. Clear, we will take it. But is it realized profit? No, because some of them still might be lying in closing stock. So what should we do? Add unrealized profit in opening stock. Why are you adding it, sir? Simple. Opening stock. Would I have been served it in the current period? Yes. I would have recognized profit on it. Yes. And this is the profit added in the current period or last period? Last period. Clear? Because this was the closing stock for last period. I would have deducted it. In the current period, I am adding it. Same way, closing stock. On closing stock, is profit added in the current period? Yes. Is it a part of this? Yes. But have I sold it? No. That means, is it realized or unrealized profit? Unrealized. Deduct. Deducted. You will get what is the realized profit from each process. If I ask you who is performing better, process. Clear. Company has totally earned a profit of how much? 57,575. How much is contributed by each process? Each process. Got it. So this is what the total profit made by the company. You can see here. Total profit. So if I ask you the breakup, how much each is contributed by processors, we will get it here. Yeah. If they ask you, show the value of closing stock to be appearing in the balance sheet. Guys, whatever process 1, process 2 and finished stock, closing stock is there. Closing balance. Is it a closing asset of a company, of an entity? Yes, inventory. They have to show it as a current asset in the balance sheet. At what value? Cost. So we need to take what values, sir? Closing stock 3,700, 3,750, and here 757. So this is the value of closing stock in the balance sheet of the company. Cost of closing stock. Hope you understand. Yeah, this and all only if they ask you to it. Yeah, normally they may ask only the process accounts. You will stop it there. Got it? This is all about the inter-process profits. Yes, we'll continue. There is some more topics to be covered. Next is valuation of work in progress. That is, if there is work in progress, then how do we value it? Important for this chapter, guys. So first of all, what is work in progress? Partly finished goods. Partly finished goods. Guys, if there is any units on which I started manufacturing but not completed. Because see, by the end of the year, that is 31st March, can every unit be completed and be ready for sale? No. So there can be few units on which I have started working but not yet completed. But not yet completed. What do we call it as? Work in progress. Even in cost sheet format and all we saw. Opening WAP means we will add, closing WAP means we will deduct it. But there the values was already given. In this chapter we are understanding, we are learning how to determine that value. How to determine that value. Guys, for work in progress, we should always calculate equivalent units. What is equivalent units, sir? Guys, assume there is a 1,000 units of closing work in progress on which we have done 60% work. What is the number of equivalent units? 600. Sir, what is the meaning of it? Means if 100% work is done, how many units I would have completed? 600. I am not done. This is just for calculation. Equivalent units is only for calculation purposes. Clear? See, there are 5,000 units which is completed. Clear. Now I have to compare that with 1,000. Sir, is the base same? No. 5,000 100% complete, whereas 1,000 is not 100% complete. If this 1,000 100% complete means how much I would have got? 600. Now can I add 500 with 600 with 5,000? Yes. Now assume my total cost is 10 lakh. 10 lakh. 10 lakh divided by 5,600. What do I get? Cost per equivalent unit. Cost per equivalent unit. Hope you understand. Clear. To calculate cost per unit, I cannot simply add up both of this and take 6,000 as denominator. Why is that? They both are not for same level of work. Same level of work. So in order to calculate cost per unit, I need to have equivalent units, which is equal in terms of work completed. So 5,000, 100% work done, whereas 1,000 knows. But if 100% work done, how much I would have completed, sir? 600 completed units. Now I can add up both and take it as a denominator to calculate what? Cost per unit. So you can see equivalent units I have given. Equivalent production means converting the incomplete production units into equivalent number of completed units. Guys, it is just a notional calculation. Sir, does it mean that 600 units are completed? Can we go and sell it in the market? No. I am not selling it in the market. This is only for calculation purpose. The term equivalent unit means a notional quantity of completed units substituted for an actual quantity of incomplete physical units. What is the incomplete actual physical units? 1,000. If I convert that into equivalent number of units, this is notional. This is notional. Incomplete physical units in progress. Sir, how do I get it? Simple. Equivalent units of work in progress is equal to actual number of units in progress into percentage of work completed in that period. That is also important, guys. Listen here. Now assume there is an opening WAP of 100 units on which 40% work is done, and there is closing WAP of 500 units on which 75% work is done. You tell me on this, how much work is done in the current period? How much work is done in the current period? 60%. Why, sir? 40% was already done last year. Remaining we will complete. Will we start again from zero? No. Whatever is remaining, we will do it first. So 60% is the work done in the current period. So if I ask you what is the equivalent unit, it would be 60 here in the current period. Current period. Whereas on closing WAP, how much work I have done? 75%. When I have done this? Current period. So what is the equivalent unit? 500 into 75%. 375. Got it? Hope you understand. So for opening WIP, should we take work completed or work remaining? Work remaining. For closing WIP, we need to take work completed or remaining? Complete. That is in simple. Whatever we have done in the current period. Whatever we have done in the current period, guys. Oh. So accounting procedure. Whenever there is a work in progress, sir, what is the accounting procedure? Step 1. Prepare statement of equivalent production. Step 2. Prepare statement of cost per equivalent unit. Then prepare statement of evaluation. At the end, prepare process account as usual. Okay. Sure. Format for equivalent production, guys. Statement of equivalent production. First, take inputs. Input opening WAP will be there plus unit introduced during the current period. Means how many units are introduced into the manufacturing process. Then you try to tally that with output. We'll come to this part later. First, we will try to tally with output. Units completed you take. That is nothing but output transfer to next process. Then normal loss. Normally will be given as a percentage. And guys, here when they give percentage, you need to take it on both most of the time. If they clearly give only 10% on unit introduced, you will take only on this. They will tell 10% on both, including opening WAP. Then you have to take on both 10%. Clear? Yes, we took it, sir. Then closing WAP, they will be given in the question. Now try to tally this. It won't be matching. The balancing figure would be abnormal loss. Clear? Sir, what if by chance if output only is more? Then the difference is abnormal gain. You need to deduct it. If there is abnormal gain, you have to show it as a negative loss. Clear? First you do this. Try to tally the output with input. Here normally the abnormal loss would be the balancing figure. Clear? Or else if output only is more, then you will have abnormal gain loss. Hope you got it. Clear? Once I ensure that yes, these both are equal, sir, then I will proceed further. Clear. And if there is abnormal gain, first total up, this will be more. Maybe here you will show abnormal gain, how much ever is there. Clear. Then you will get one more number. Try to match that with this. Clear? Yes. If it is abnormal loss, you can show it here only as positive. As positive. Any doubt, madam? Got it now? Yes. Sure. Once I am done with this two, I will proceed further to calculate equivalent units. Equivalent units for 100 units completed, it will be always 100 percentage of work done. So we will get same units. Same units. It also depends on the methods, which I will explain later. Then for normal loss, we never take units. Why, sir? Simple, guys. We are calculating the units to calculate the cost. So while calculating the cost, will we value the normal loss units separately? No. Whatever is the cost of normal loss will be absorbed by good units. So automatically whatever is the remaining units, the cost of which will become more. So we will not take anything in the units column here for normal loss. Whereas for abnormal loss, take whatever percentage they have given as percentage completion work. That is the degree of completion. If nothing is given, consider 100%. Consider 100%. Then closing WAP, they would have given it accordingly, take it. Clear. And with respect to degree of completion, sometimes they may give for labor and overhead same percentage. In that case, you can club both and write one column, labor and overhead. If they have given it separately, please show separately like this. No, sir, they have given same percentages. Then in that case, you can club and write under 1, under 180. Oh. Now we got equivalent units for material, labor and overhead. Take it to the next calculation. Statement of cost per equivalent unit we are calculating. What do we do? Take each of the material, labor, overhead cost. And if at all, if there is any scrap, value of normal loss units, reduce it from material cost. For this normal loss units, if you are getting any scrap value, reduce it from where? Material cost. Take the net. That is material cost minus scrap value of normal loss units, remaining you take. Okay, sir. Then take labor and overhead cost also. Then whatever equivalent units you have got here, consider here. Divide each other. Cost by equivalent units. What do you get, sir? Cost per equivalent units. Clear? Here if you do, you will get total cost per equivalent unit. This is element wise. Material, labor, overhead. If you total up, you will get cost per equivalent unit. Using this, we will calculate the cost of output, closing WAP and abnormal loss, for which we need to prepare something called as statement of evaluation. We need to prepare statement of evaluation to calculate what and all, sir? Value of abnormal loss, value of closing WAP and value of output transferred to next process. For that, what values will we take it, sir? Cost per equivalent unit. I have given some notes here. For normal loss, no equivalent unit is calculated. As normal loss unit is observed, whatever is the cost of normal loss units are there, is observed by whom? Good units. Good units is nothing but now here. This units, guys. Remaining units. Then, if degree of completion for abnormal loss unit is not given, you will take 100%. Same way for abnormal gain, you will take the degree of completion as 100%. But please be careful, if it is abnormal gain, you have to show it as a reduction here, whatever is the units. Okay. If the degree of completion for opening WAP is given in the question, then you are supposed to follow FIFO method. Sir, what if degree of completion for opening WAP is not given in the question? Then you will follow weighted average. Yeah, see, normally in the question, they would ask you to follow the respective method. But they have not mentioned the method, but they have asked you to do statement of equivalent production, statement of cost, statement of evaluation. Sir, how do I do it? Check for opening WAP. Have they given the degree of completion? Degree of completion means how much work is done. If it is given, you can follow FIFO method. Sir, no, sir, opening WAP, degree of completion is not given. Then you have to follow weighted average method, guys. Now, to prepare all this, we have two methods available. What are those, sir? FIFO method and weighted average method. I have given it here theoretically, but let me explain it through the numbers. That would be better. Yes. Let us learn from this. Yes, pay attention. Look here. We will go step by step. First one, statement of equivalent production. Chetan, look at me. Look at me, man. No. Chalo. Opening WAP, 3000 is there. Sir, have they given the degree of completion for opening WAP? No, only cost they have given. That means which method can I follow? Weighted average. Weighted average. Okay, let us follow weighted average. Then unit increase during the current period, how much? 42,000. So totally we have an input of 45,000. Now they are given the data. Units completed and transferred to next process, which is nothing but output, is how much? 36,000. Then normal loss, they have told 4%. 4% of what? Both. So 45,000 into 4%, 1,800. Then closing WAP also they have given 4,200. They would have given it in the question. Okay. Then abnormal loss is not given. Find it out as balancing figure. 45. But if you do here, you will be getting 40. So try to match it by keeping abnormal loss balancing figure 3,000. Now both are matching, sir? Yes. Go ahead. Once we are done with this, tick. Next part. Equivalent production. I am doing it for material separately, labor and overhead together. Why, sir? Because for labor and overhead, they have given the same percentages. Now, under weighted average method. Hello, under weighted average method, we need to take 100% for work completed and transferred to next process. How much is from opening WAP and all? We don't care. Okay. So 100%, 100% we will take. Then for normal loss, we don't take anything in the units column. Please be careful with this. Okay. Then abnormal loss, they would have given. Yeah, they have given here. Accordingly, take it. If nothing is given, you can consider 100, 100. Clear? Then for closing WAP also, they would have given. How much, sir? 150. Okay. So 100 here, 50 here. Take it. So we got equivalent units. Which method we are following? Weighted average. Very good. Now, statement of cost. Statement of cost, we need to take total cost, guys. Total cost means cost of opening WAP plus current period cost. What is the cost of opening WAP? They have given you. Plus current period cost, they have given here. Add up everything. Add up everything. And from material cost, we need to deduct one thing. What is it? Scrap value of normal loss units. This one. You can observe. I am reducing it from current period material cost. Clear? So we took cost of opening WAP as well as current period cost. Guys, one thing you should know. This is the cost incurred in the current period or last period? Last period. But under weighted average method, we don't have any separate treatment. Cost is cost. Just take it and calculate weighted average price. Just calculate weighted average price. Okay. So once you get total cost, how did you get total cost? Cost of opening WAP plus current period cost. Okay. Divided by equivalent units. Equivalent units. You get cost per equivalent units. I call it as weighted average price. I call it as weighted average price. For material, labor and overhead we have got. Per unit how much? 136. Using this, we can prepare statement of evaluation. Statement of evaluation. Okay. Cost of output is how much? 36,000 units into per unit straight away take 137. Multiply. Oh, we got it. For abnormal loss, please be careful. 3,000 is actual units. But for calculation, you need to take equivalent units. Because whatever cost we have calculated here is for actual units or equivalent unit? Equivalent unit. So for material, how much, sir? And 3,000. For labor and overhead, how much, sir? 2,100. Multiply with respective cost. 3,000 into 85 for material. For labor, 2,100 into 12. For overhead, 2,100 into 40. Clear? What did I take here is not actual units, equivalent units. Why is the simple logic? This is the cost per equivalent unit. Okay. Then coming to closing WAP, actual units is 4,200. But I need to take equivalent units here. What is the equivalent units, sir? 4,200, 2,100. Multiply it with the respective cost. 4,200 into 85. 2,100 into 12, 2,100 into 1. Clear? Guys, here my intention is not to solve the question. I am explaining you how to apply the concept. Clear? Yes. Because if you know the concept, if you know how to apply it, sir, that is more important for you now. Clear? Solving questions we will take care. That is separate. Yeah, just sure. Now we got the closing WAP cost. Add up everything. Guys, under weighted average method, this figure has to match with this figure. The total year has to match with the total year. There should not be any difference. Clear? And if by chance if you got any of this as decimal, maybe some minor difference you get, you better set it up here. As the last amount, you just set it up. This will be only if you are getting this as decimals. Clear? Hope you understood. Which method did we solve, guys? Weighted average. Under weighted average, what work we did when and all we don't care. Sir, in the current year, we have completed this many units, just transfer it. And we take total cost here. When we have incurred it, we are not bothered. Here, same question. Now let us solve under FIFO. Under FIFO. Now they have given the degree of completion for opening WAP. Material 100% expense, labor and overhead 50% expense. Pay attention. Sir, input is same story. Output. How much is the output? Transfer to next process 36,000. But there you give a breakup. How much is from opening WAP? 3,000. Remaining is how much, guys? 33 is out of current year introduction. You know, under FIFO, they are only bothered about what did I do this year? What I have done this year. What I have done last year is for last year. What I will do for this year is for this year. Clear? Now, as soon as I begin the show in the current year, first I will complete the incomplete units and sell it. Remaining only I will produce from here. So totally my output is 36,000. Out of that 3,000 is from here, remaining 33 is from here. Hope you understood. Okay. On this 3,000, am I doing 100% work now? No. Sir, with respect to material, already everything is done. So 0% work. With respect to labor and overhead, 50% is already done. What is remaining? Another 50%. Another 50%. So we need to take only that much. Hope you are understanding. See, sir, what if this was 40%? Should I take 40 or 60 here? 60. Remaining work. Remaining work. Oh. Then out of current period introduction, how much I have produced out of this? 33. When did I start working on this? Current period. When did I complete? Current period. That means 100% work I have. 100% work I have done in the current period itself. So what is the equivalent unit? 33, 33. Rest all will remain same as. Rest all remains same. Only difference is this part. Hope you understand. Under weighted average, what we did? We simply took 36,000 into 100%. Into 100%. Correct? That's all. Weighted average. We never bothered about what did we do exactly in this year, how much we had done last year. No. We didn't. Clear? Okay. So under FIFO, we only considered what is the work we have done in the current period. So we got the equivalent units this much. Same way, even when it comes to cost, should I take total cost or only current period cost? Only current period cost. Sir, what is the logic? Guys, simple. While calculating the equivalent units, did we consider only the work done in the current period or full? Only the work done in the current period. Same way. Here we need to take only the current period cost. Divide it by equivalent units. Here also scrap value and all you have to reduce, which is same. So we will take only current period cost. Divided by equivalent units. What do you get? Cost per equivalent unit. Is it for the current period or weighted average? Current period. So simple, guys. Current period cost divided by current period work. You will get cost per equivalent unit in the current period. In the current period. Now coming to statement of evaluation. Here it is important. Sir, here I need to transfer the output to next process. No, sir. There, should I take 36,000 units or only 33? How many units I am transferring to next process? 36,000. So take full. So out of 36, how much is out of opening WAP? 3,000. On that, we already incurred some cost in the past year. Take that. This is the cost of opening WAP. Clear on which I used to take here now under weighted average method. Whereas under FIFO, we are taking it separately. Okay. So what is this, sir? Simple. Cost of opening WAP which was incurred in the last year. For that, we need to add on opening WAP, how much cost is incurred in the current period. Sir, how do you get it? What is the equivalent units for opening WAP? Material 0 for labor and overhead 1500. So take 1500, 1500 for labor and overhead, multiply it with the cost per equivalent unit. So you will get 76,275. Guys, someone. This is the cost which was incurred on opening WAP in the last period. To complete how much work? 50% work. Sorry, 50%. 100% with respect to material, and for labor and overhead, 50%. Now, remaining work is done in the current period, for which we have incurred cost of how much? 76,275. Now, what is the total cost of 3,000 units? 379, 175. What is the total output? 36. We have only got 3,000 cost. Remaining 33 is completely done in the current period. So 33,000 into what is the cost per equivalent unit? Total I will take 137.7. 137.7. Now, if I ask you what is the cost of 36,000 output which is transferred to next process, this figure is clear. Then abnormal loss and WAP will remain same. And here, if you do total, this total will not match exactly with this. The difference is nothing but this figure. Clear? The difference between this and this is exactly equal to this. Got it? Yes. Hope you understood. Because simple. I considered this figure in this calculation, but I didn't consider it here. That is why that difference. Under weighted average, exactly it will match. Whereas under weight FIFO, the difference would be the cost of opening WAP incurred in the last year. Clear? Let me summarize that. Let me summarize only this, not the entire chapter. Till now, I'm doing that only. Under FIFO, I'm only bothered about what did I do in the current period. What work did I complete in the current period? What cost did I incur in the current period? So we only consider what work we have done as well as what cost we have incurred in the current period. Clear? Whereas when calculating the cost of output, we will take the even cost of opening WAP. Whereas under weighted average method, work done is work done. Just take it. 36,000 work units are completed and transferred to next process. Take it as 100%. Even in the cost, take total cost. Open WAP cost as well as current period cost. Divide the total cost by equivalent units. You will get weighted average price. That is cost per equivalent unit. Yeah. And once I do this, if they ask you to prepare the process account and all, guys, easy. Process account and all, easy. See, opening WAP 3,000. For that, cost would have already been given in the question. Take it. Sir, instead of presenting it individually like this, can I add up everything and put one amount here? That is also fine. Then this is the cost incurred in the current period. Take it. Okay. Then on the credit side, normal loss 1,800 units. Scrap value 1,12,500, which we will take here, which we will get here. Yes, 1,12,500. Take it. Then abnormal loss 3,000 units. 3,000 units. What is the cost of it? 367,335. Then closing WAP, how many units? 4,200. What is the cost of it? 471, 790. Take it. Even output, how many units are there? 36,000. What is the cost of it? 4923, 275. One thing you have to be careful here is, guys, see, while doing the statement of evaluation for closing WAP, abnormal loss and all, we will take the equivalent units for calculation. But in the process account, when you are presenting, please take actual units, or else units column will not match. You need to present what in the units column? Actual units, not equivalent units. Clear? And whatever cost we write here is nothing but what I would have got in statement of evaluation. Statement of evaluation. Got it? Yes. And if there is any scrap value of abnormal loss, then you will record it separately, guys. You will record it separately. Where is that? Just a minute. Yes, you can see here. First, write whatever you have transferred from process, that is, this figure has to come there. Then, if there is any scrap value of abnormal loss units, record it here. and the balance net loss transfer it to costing P&L account. Costing P&L account. Okay, sir. Normal loss also same way. Whatever is transferred here, bring it later, receive the scrap. Receive the scrap. Yes, sir. So this is all about FIFO and weighted average method, guys. Okay. What is the main difference? I already explained it. Let me go through it once. The main difference between FIFO method and weighted average method is that units of opening work in progress and their costs are taken in full under average method. While under FIFO method, only the remaining work done, that is the work done in the current period, is considered. Then one small topic in this chapter called operation costing is covered. Operation is different, operating is different. Clear. Operation means, guys, I am producing the same products but in different varieties. Different varieties. So manufacturing process is same, sir, but the raw material which I use is different. The raw material which I use for each kind of variety of output is different, whereas the process is same. Whereas the process is same. For example, assume I am a shoe manufacturer. Clear. So I manufacture different types of shoe. The process is same, but depending upon which shoe I will manufacture, the raw material also will change accordingly. Clear. Yes. Process is it same, sir? Clear. So operation costing is nothing but when you are producing the different varieties of same product using different raw material, but the same manufacturing process. We call it as operation costing. Let me do. This product costing system is used when an entity produces more than one variant of final product using different materials, that is raw material, but with the same conversion activity. Conversion activities means manufacturing process, which means conversion activities are similar for all the product variants, but material will vary significantly. Operation costing method is also known as hybrid product costing system, as material costs are accumulated by what? Either job order or batches, because material will vary from product to product or from batch to batch. Say, same kind of shoe, I can manufacture 100. So in that case, can I follow batch costing? Yes. Next. But conversion cost, that is labor and overhead costs, are accumulated by department wise or process wise. So in the manufacturing process also, I might have different processes. Process 1, 2, 3 like that. So for conversion process, I can either follow department or process costing method. Better is process costing method to assign this cost to the products. Example of the industries which will follow operation costing is ready-made garments, shoemaking, jewelry, etc. Clear? Yes, sir. So this is all about the process costing chapter, guys. Yes, now we will revise chapter 11, which talks about joint and byproducts. Guys, this is like a continuation from process costing. So at the end of process, if we get two or more products which are of same value or equal value or same importance, we call them as joint products. No, sir, one product is higher value, the other product is lower value. Then we call it one product which is having higher value as main product and the other one as byproduct. Let me try to explain this with an example. Then we will go through whatever is there. Guys, assume I am using milk as a raw material in my production process in order to produce two products, butter and cream. My intention is to produce both the products. My intention is not to produce only one product. My intention is to produce both the products. Out of what, sir? Milk. And both of them are coming out of same process. Same process. So till this point, butter and cream doesn't have any separate identity. Only at this point they get their separate identity, and that point is called split off point or point of separation. Until here, whatever cost might be incurred from the beginning of production till the split off point. Sir, we don't know how much exactly I have incurred for butter, how much exactly we have incurred for cream. We call it a joint cost. So why do you don't know? Because they got their separate identity only at this point. So any cost which is incurred up to this, I don't know individually how much I incurred for butter, how much I incurred for 3. So we call it as joint cost. Now, few of the joint products can be sold at this point only. Again, let me tell you, sir, why do we call this as joint products? Guys, they are resulting from the same process, same raw material, and they are almost having same value. Means need not be exactly equal, but almost they are having same value as. Correct? Yes. Now, at this point, they got their identity. The company has an option. They can either sell these products at the split off point only, provided there is a ready market, or else they can further process this and sell it as next product. Clear? For example, assume they want to further process butter into ghee and sell it. It is their option. Sir, if the ready market is available for butter, they can sell butter itself. If not, they can further process it into ghee and then sell ghee. Choice is theirs. Clear? Or sometimes for butter, means for butter there is a ready market, but one of the joint product, assume for cream, there is no ready market, sir. Customers will not buy it as it is. I need to further process and sell it. Then you don't have a choice to sell here. You have to further process and sell it at this. Clear? Whereas for few joint products, company will have an option. They can either sell here or further process that and then sell it as the next product. In that case, what do we do is we will compare. If I sell here, what is the sale value? If I sell here, what is the sale value? For example, let me take another example. Guys, just listen. Now, sir, raw material, I started manufacturing through a raw material. I have incurred a joint cost up to split off point. At the end of split off point, I got JP1, JP2, joint product 1, joint product 2. How much quantity, sir? 100 kg, 120 kg. Now, if I sell it at split off point only, I will get a sale value of 80,000 and 90,000. Company can sell it. Or else, if they further process JP1, they will incur a cost of 10,000. We call it as further processing cost. And if they sell, they will get 1 lakh. 1 lakh. Now you tell me, should I further process or sell at split off point? See, if I sell at split off point 80, if I further process and sell 1 lakh. So what is the additional sales, guys? 20,000. For this additional sales of 20,000, what is the additional cost I will incur? 10,000. So there is an incremental revenue of how much? 10,000. Means my profit will increase by 10,000 if I further process and sell it. Hope you're understanding. So this kind of questions can come. This kind of questions can come. Should the company sell the joint product at split off point or should they further process and sell it? Simple. Take incremental sales. Incremental sales means what is the additional sales we will get? 20,000. For further processing, what is the additional cost you will incur? 10,000. Deduct each other means 10,000 minus 20,000, you will get 10,000 positive. That means you can further process and sell. Same way here. Assume like JP2. If I sell it at split off point, 90,000. If I further process and sell it, I can sell it at 1,20,000. So what is the additional revenue, sir? 30,000. For this, what is the additional cost I have to incur? 15,000. So if I further process and sell, what is the additional income I will earn? 15,000. Means the profit of the company will increase by 15,000. Clear? Sir, what if by chance, if this is, okay, I'm just changing it. Assume this is like only 95,000. 95,000. Don't just compare this. Additional sales is 5,000. But for this, I have to incur an additional cost of how much? 15,000. That means there will be a loss of 10,000 if I further process. There will be a loss of 10,000 if I further process. This is one of the decision making guys. They may ask you, should the company sell the joint product at split off point or after further processing? Or after further processing? Yes, sir. Now, one more important task in this chapter is, sir, this cost I have incurred for both JP1 and JP2, no, sir. How do I distribute it to JP1 and JP2? Should I first of all distribute it, sir? Yes, because guys, ultimately company want to know what is the profit made from JP1, what is the profit made from JP2. Hey, here, coming late and JP1, how much profit we have made? JP2, how much profit we have made? For that, we should know individually what is the cost of JP1, what is the cost of JP2. So for that purpose, we need to distribute this 1 lakh joint cost between JP1 and JP2. Sir, oh, we have various methods available. We have various methods available. Same way in this example also. Sir, I have incurred 1 lakh expenses for both butter and cream. Now, how much for butter, how much for cream? I need to distribute it or apportion it in the ratio. Various ratios are available as per the method we will choose. Yeah. And what is the main purpose of doing this? I am repeating again. What is the main purpose of distributing or apportioning the joint cut between the products? Sir, I want to know what is the profit made by each product. If you want to know the profit made by each product, you should know what is the cost of each product. Cost also includes what? The joint cost. See, further processing cost, no doubt, sir, we know for how much is incurred for which product. It is individually incurred, whereas this cost is jointly incurred. So we need to split this 1 lakh between the joint products. Hope you understood. Okay, so the main task for us is to split this. Okay, quickly we'll go through. Joint products are those products which are produced simultaneously. Did I separately produce them? No. It is coming from the same process, same raw material. From the similar process of manufacturing of equal importance. Guys, both the products are almost having same importance. Clear? That is why we call them as joint product. Sir, what one product is having higher value, the other product is having lower value. Then we call it as main product and byproduct. Clear? Yes. The point where the joint cost get identified is known as what, guys? Split off point, or we also call it as point of separation. Point of separation. In my example, this part, where the joint products got the separate identity. Examples of, okay, cost incurred up to split off point is known as joint cost. Example of joint products in the oil industry is gasoline, fuel oil, lubricants, paraffin, coal, tar, asphalt, and kerosene are all produced from where? Crude petroleum, which is a raw material. Okay, I have also given on diagram here. Where are you? Yes. You can see joint input, common production process. From that, we are getting 3 joint products. What are those, sir? Oil, gasoline, chemicals. If it is separately processed, then I can sell it. Sir, can I sell it at this point only? Maybe yes, if there is ready market available. If not, you need to further process it and sell it. Clear? For example, here they have given gasoline. I am selling as it is at split off point only. Whereas this too, we are further processing and selling it. Further processing and selling it. Oh, coming back. So joint products imply the following. These are the features of joint products. What are those? Everything I have already explained one by one. They are produced from the same basic raw material. Yes, so in my example, it was milk. They are comparatively of equal importance, that is butter and cheese. They are produced simultaneously by a common process. Sir, is the production process same? Yes. They may require further processing after the point of separation. I have mentioned may. It is always not must. Clear? If required, we will further process and sell it. If not, can I sell it at split off point only, sir? Yes, few joint products would be sold at the split off point only. Okay. Now we have understood joint products. Sir, what is byproduct? What is byproducts? So, guys, I started manufacturing my product. My product is main product. Clear? My intention is to produce only this. But in the process, I also got one more byproduct, sir. I also got one more byproduct, sir. Yes. Will I accept it? Obviously, yes. I will not throw it away. I will not throw it away. And this is having lower sale value when compared to the main product. For example, assume this I am selling 1000 rupees per unit, whereas this I am selling at 50 rupees per unit or 20 rupees per unit. Clear? Guys, this is like secondary product. My intention was not to produce this. My intention was to produce main product. Incidentally, in the process, I also got byproduct. I am not throwing it away. I am also selling it for a lower value. Or maybe I will put it for a scrap and get some scrap value. Clear? Yes. So this is bringing some additional revenue to the company. Clear? Here in this case, sir, there is a joint cost incurred 1 lakh for main product and byproduct. How do I split it? How do I split it? In this case, what we do is, guys, first we will calculate what is the share of byproduct in the joint cost. Remaining, we will give it to the main product. Remaining, we will give it to the main product. For example, assume we got 10,000 as share of joint cost to the byproduct. Remaining 90,000 will go to the main product. Clear? For this also we have various methods. What are those? We will discuss later. First, we'll understand the concept of joint and by-use. Here. Now, sir, what is the main difference between joint products and main products? Guys, see the value. Okay, so here byproduct only 50 rupees when compared to main product. Sir, what if this is also almost equal to 1000? Then we call this as joint products. Joint products. If they are almost off, I'm not telling you exactly equal. Here, was it exactly equal? No, but almost same. Correct. So can I call them as joint products? Yes. But here I cannot call them as joint products. Clear? Example, sir. Example. Sir, while manufacturing sugar from sugarcane, we get molasses. Clear? That is a byproduct. Same way, while manufacturing soap, soap is my main product. We will get glycerin. Glycerin, you know, no? Yes, sir. Same way. Okay. This is not from manufacturing point of view, but let me mention. Sir, my investments, my main aim is to earn capital gains, which is the appreciation in share price. But as a byproduct, we also get dividends. Correct. So we'll get some small amount of dividends off. That is like my byproduct. Clear? This is from investment point of view. Please don't give this example in your exam. Clear? Yes. Sir. Byproducts. Byproducts emerge as a result of processing operation of another product, or they are produced from the scrap or waste of the material of a process. Right? This can also happen. For example, especially in textile industry. Clear? They will have waste clothes and all. Through that, they will make a mat. Doormat, you know, na? In textile industry, whatever waste clothes they will have, they will not throw it away. They will make out of that maybe something else they may stitch or the doormat. I have literally seen that. Clear? Sir, is this a byproduct? Yes. So using the waste which will come in the manufacturing process, we are manufacturing now. Means the other product, not our main product. Clear? Yes, sir. In short, a byproduct is a secondary or subsidiary product. All this can be your MCQ. Byproduct is my not main product. It is not my primary product. It is my secondary or subsidiary product, which emanates as a result of manufacture of main product. My intention is to produce main product. In the same process, incidentally, I got one more product. The point at which they are separated from the main product or the products is known as split off point. Cost incurred up to split off point is known as joint point. This is same diagram, common diagram. Examples I have given of byproducts are molasses in the manufacture of sugar and glycerin obtained in the manufacture of soap. Soap would be main product, sugar would be main product, whereas what is byproduct? Glycerin and molasses. What is the difference? Main difference between the joint product and byproducts. Joint products will almost have same importance, whereas byproduct will have lower value when compared to main product. Joint products are produced simultaneously, whereas byproducts are produced incidentally. Means it will also come from the same process, but my intention was not to produce that. So it came incidentally out of the process. Now coming to co-products, co-brothers. You know Cobra, co-brothers. Like that. So co-products means, sir, companies manufacturing the same product in different varieties. Different varieties. See, even in last chapter, that is process costing, at the end we learned something called operation costing. I gave an example of shoe making. I'm a shoe manufacturer. I manufacture different varieties of shoe. For me, the process is same, but the raw material is different. Correct? Yes. Similar to that, co-products. Means the same product and manufacturing in different varieties. Examples I've given here. Assume I am a fan manufacturer. I manufacture ceiling fan, table fan, pedestal fan, cabin fan. And here, what they're telling is, your raw material may be same or different. Even the process might be same or different. It can be anything. In operation costing, they told raw material would be different, but the process would be same. But here, for co-products, it can be same or it can be different, depending upon what exactly you are manufacturing. Let us read it. Co-products are a particular type of products, but produced in different varieties. These products may not necessarily arise from the same operation or raw materials and may be produced in different quantities without any correlation to others, according to the needs of the market. Clear? Sir, can it be produced in the same process? Maybe yes, but may not be always. May not be always. Clear? Sir, can we have different process? Yes. Next, coming to apportionment of joint cost price. So now we have seen what is joint products. What is joint cost also we have understood. Sir, how do we apportion it? I told you. Now dividing this 1 lakh between butter and cheese is my task. For that we have various methods. What are those? One by joint costs are expenditure incurred up to the point of separation or split off point. The commonly used methods for apportioning joint costs over the joint products are as follows. One by one. First one, physical unit method. Means whatever is the quantity of output at the end of split off. Let me take this example. What is the quantity of output at split off point? 100 kg, 120 kg. We will take that as a basis. We will take that as a basis to apportion joint cost. How much will go to JP1 guys? How much will go to JP1? 1 lakh into 100 divided by total 220. 220. How much will go to JP2? 1 lakh into 120. Yes, I will show you. 1 lakh into 120 divided by 220. 220. Hope you understand. This is for JP2, whereas for JP1, 1 lakh, I am showing it again, into 100 by 220. Got it? So how will you get 220? 100 plus 120, 220. Clear? So whatever is the quantity of output at split off point, we will take that as a basis class. I will show you one more example. Yes, you can see this is the units of output. This is the units of output. Using this as a basis, this all are joint products. Using this as a basis, we will apportion the joint. Sir, what if there is any loss in the process? In this process, what if there is any loss? Even that loss also will be apportioned in same ratio, guys. Same ratio. Clear? That is the quantity of joint products at split off point. Yes, the first one. Under this method, the basis I used for apportioning the joint cost over the joint product is the physical volume of materials present in the joint products at the point of separation. Any loss arising during the stage of processing is also apportioned over the products on same basis. Same basis means what, sir? Quantity of output. This method cannot be applied if the physical units of the two joint products are different. If physical units are different, for example, sir, one is in kg, another one is in liters, sir. Can I apply this method? Maybe not suitable. Maybe not suitable. Physical quantity is different. One is in kg, the other one is in liters. So this method is not suitable. Look for the next one. Next, what is it, sir? Net realizable value at split off points. Guys, important. Important method. What do we do? Guys, we will just do reverse calculation. What is it, sir? Please listen. I will take the sale value after further processing and whatever has happened in this process, I will deduct it. I will try to get what? The value of the joint product at this point. At this point. That is nothing but NRV. And we use this NRV as a basis to apportion joint costs. We will use NRV as a basis to apportion joint costs. Sir, how is it? Simple. We will take sale value after further processing minus further processing cost. And if there is any estimated profit, you reduce that also. Then if there is any selling and distribution expenses, that will come only at this point. Because you are selling when? After further processing. Reduce it. Yeah, sometimes further processing cost itself might include selling and distribution or else they might give separately. However, they are given, take it. Deduct each other. Means from sale value, you will reduce three things, guys. What are those? Estimated profit, selling and distribution overhead, and also the further processing cost. What do you get now? You will get the value of the joint product at the split off. Correct? We did reverse working. Use that as a basis. Use that as a basis to apportion joint cost among joint products. So I have given an equation here. How do we calculate NRV? Estimated sale value of joint products after further processing. From that reduce three things. What are those, sir? Estimated profit, selling and distribution expenses, further processing cost. What do you get? NRV. And we are using this as a ratio to apportion joint cost among joint products. See, I have given all three here. Sometimes estimated profit and selling and distribution expenses may not be given. Ignore. If this two is not given, straight away reduce only further processing cost, you will get NRV. If it is given, please deduct that also. Clear? Yes. I have one question for it. I will just show you. How do you present it? Yes. You can see this is the sale value of the joint products. Product A and product B is the joint products. We have taken sale value after further processing. Then from that we are reducing further processing cost. Estimated profit, selling and distribution expenses is not given. So this is my NRV. 3:2 ratio. Divide joint cost. Total joint cost is 64,500 and divide it into 3:2 ratio. 3:2 ratio. What is the 3:2? Net realizable values. And please be careful, as I mentioned you, if they have given estimated profit and selling and distribution expenses, please reduce the cost to calculate NRV. Guys, what is NRV is nothing but the value of the joint products at split off point. At split off point. I am calculating, I am taking sale value after further processing and doing the reverse calculation so that I will get the value of joint products where at split off. I am taking that as a ratio to apportion the joint cost. Okay, sir. Next, using technical estimates, normally the top level management will fix, okay, in what ratio should you split joint cost? 1:1, 2:1, they will fix the ratio. In that ratio, we will split the joint cost between joint products. This method uses technical estimates to apportion the joint cost over the joint products. This method is used when the result obtained by the above method does not match with the resources consumed by joint products or the realizable value, sale value of the joint products are not readily available. Means, sir, we are not able to apply this method, or if I apply this method also, they are not giving the proper results. They are not giving the proper results. In that case, which is better, sir? Technical estimates. Technical estimates means the company will do deep research. How much each joint product is consuming the resources. Means how much money might be spent for each joint product. And they will fix the ratio. And as per that ratio, we need to split the joint cost. Next, other methods. Other methods. The following are the methods which are used by management for taking managerial decisions. Which are those, sir? Market value at the point of separation. Market value is nothing but sale value. Sale value. Okay, sir. Guys, see, this method can be followed only if joint products can be sold at split off point. Can be sold at split off point. Assume here both the joint products can be sold at split off point. What is the sale value? 80,000, 90,000. Take 8:9 as the ratio. Take 8:9 as the ratio to do what? To split joint costs between joint products. The sale value, guys, please be careful. They would have given selling price also sometimes. Don't take selling price. Multiply selling price with the quantity of joint products. You will get sale value now. Take sale value. For example, assume selling price they have given 100 here and 120 here. Selling price I am telling you. Will you take 100 and 120 as a ratio? No, no. You need to multiply this with the quantity. Selling price into quantity. You will get what? Sale value. Please take sale value as a base or as a ratio. Because some students by mistake they will take selling price. If quantity is different, if quantity is same, it will not make any difference. For example, here also quantity is 100, here also quantity is 100. In that case, you can straight away take selling price only. Clear? If quantity is different, please don't take selling price straight away. Multiply selling price with quantity, you will get sale value. Take that as a ratio. Okay, sir. Let me read. This method is applicable when the joint product has a ready market without any further processing. It is useful method where further processing costs are incurred disproportionately. Disproportionately means, guys, what cost is like 10,000, here only 1,000. Too much difference is there. Or else here 10,000, whereas here 50,000. Difference is there, no? Yes, sir. Next. In such a case, joint cost will be allocated in the ratio of sale value, not selling price, of the joint products at split off point over the joint products. Next, second alternative available here is market value after further processing. This you can take only if all the joint products are further processed. Oh, in that case, what do we do, sir? We will take the sale value after further processing as a ratio. So I can take 100 is to 120 as a ratio. What is this, sir? Sale value after further processing. After further processing. Next, average unit cost method. Average unit cost method is simple. Divide the total joint cost by total output of joint products. Total output of joint products. What do you get? Average cost per unit. Average cost per unit. For example, I will show you. One question is there. See guys, in this case, joint cost is 60,000. There are 3 joint products which we have produced. The total of this is 1000. So if I divide 60,000 by 1000, what do we get, sir? 60 per unit. This is on an average. What is the cost per unit? So multiply that with the respective units. What do you get, sir? Share of joint cost for each joint product. But what is the disadvantage of this method is they are giving a same cost for all the joint products. Same cost for all the joint product. If it is having exactly equal importance, then you can follow this. If not, then this method is not suitable. Clear? So this is overall average cost per unit. Clear? What did I do, sir? Total joint cost divided by total output of all the joint products put together. Oh, we got average unit cost method. Last one is contribution margin method. This is a bit lengthy, guys. So here, what should we do is when we have a joint cost, we need to check how much is variable, how much is fixed. The variable portion of joint cost has to be apportioned to whom? Has to be apportioned to the joint products in the physical quantity. Whereas the fixed element of joint cost has to be apportioned in contribution ratio. What is it, sir? Just a minute. Yeah, let me take this example. Listen, guys. Sir, joint cost is 10,000. In that variable is 6,000, fixed is 4,000. Okay. There is 2 joint products, JP1, JP2. What is the output? 1000 kgs, 800 kgs. Further processing cost also they have given. Sir, how much? Variable 3, fixed 2 for JP1. Whereas for JP2, variable 4,000, fixed 2,000. Fixed 2,000. Okay. Then sale value is how much? This is for JP2. Sale value after further processing for JP1 is 20,000, whereas for JP2 is 25,000. Okay. Now what should I do? Guys, this 6,000 has to be apportioned in quantity ratio. Physical output of joint products. What is it, sir? 1000 is to 800. You can observe here. So in this 6,000, how do we apportion it, sir? In this ratio. Got it? How much we got? 3,333 and 2,667 for JP1, JP2. Hope you understand. We have just apportioned this. Now coming to this. Sir, how do we apportion the fixed cost? In contribution ratio. Sir, what is contribution? Sales minus variable cost is my contribution. Guys, if they have given both the variable cost, you need to deduct total variable portion. Total variable portion. Let me do that here. Sale value after further processing I am taking. From that I am reducing all the variable costs. Joint cost, in that how much is variable portion? 3,333, 2,667. I reduced it. Then also in further processing cost also variable portion is there. 3 and 4 reduced. You get contribution of each joint products. Now 4,000 has to be split between joint product in what ratio? This ratio. Hope you understand. Clear? Yes. Got it. Sure. And if by chance in the same case, if they ask you to find out the profit, then reduce the fixed cost here. Fixed cost means both, even this as well as this part. This part is anyway separately available. You can reduce for each product. Whereas this, you need to split it between joint products in this ratios. Got it? So from contribution, if you just reduce fixed cost, then you will get profit. Yeah. And in this example, I had given even further processing cost. How much is variable? How much is fixed? Sometimes they may not mention this. They may give only the joint cost portion. In that case, what do you do, sir? Just a minute. Yes. You can see in this question, the joint variable joint cost is total is this much, whereas the marginal cost, which is nothing but variable cost, is 4,400, fixed cost is 3,900. So how do we split 4,400 in the quantity of output? So you can see in physical quantity. Then how do we split the fixed cost, sir? How much is fixed cost? 3,900. Only joint cost information they have given in the question. Further processing cost they have not mentioned. So from the sale value, first take sale value, just reduce the marginal cost. Clear, that is nothing but variable portion. You will get contribution. Take this as a ratio. Take this as a ratio. That is 40 is to 12. 40 is to 12. So now the fixed portion in joint cost, we will split it in 40 is to 12 ratio. 40 is to 12 ratio. Hope you understand the difference between that question and this question. Yeah, in this case, whatever I had mentioned, even for further processing, they are given a split between variable and fixed. So when you are calculating the contribution, you have to take care of the further processing cost variable element also. Here, yes. And here I have taken the sale value after further processing. But in that question, it was at split off point. Assuming the products are sold at split off point. Okay, both the ways I have shown. Both the ways I have shown. So the most important, see, if they want to keep it lengthy, they may ask this method, but the most important method is the NRV method, guys. Net realizable value method. Okay, sir. So done with the joint products and joint costs. Now coming to the byproduct. I already explained the concept of byproduct now. Even for byproduct, there would be a joint cost. Clear. Now what do the company do is on priority basis, first they will calculate what is the cost of byproduct. What is the cost of byproduct? Now this is my byproduct. Listen now. Listen, this is for 50 rupees. Now what do we do is we will calculate what is the share of byproduct in the joint cost first. Joint cost is totally 1 lakh. So what do I do is there is one popular method called net realizable value. Net realizable value method. So from net realizable, how do we get net realizable value? It is like this. We will take the sale value of byproduct. If there is any further processing cost, or if there is any estimated profit, or if there is any selling and distribution expenses, if there is any selling and distribution expenses, we will reduce it. What do we get, sir? NRV. Same thing we used to do for joint products now, but for joint products, this used to be the ratio to apportion joint cost. Agree, but for byproduct, this is straight away the share of joint cost. This is straight away the share of joint cost. Assume guys, we are getting this as 15,000. I'm just taking it as 15,000. Now this will be the share of byproduct in joint cost. So how much we are getting for byproduct? 15,000. Remaining you put it to main product. Remaining is how much, sir? 85,000. 85,000. Got it. 85,000. So what do we do here is always first find out the joint cost share for byproduct. Then remaining will go to the main product. Here. And most of the time, company will not expect any profit from the byproduct. Anyway, incidentally we have got, we will not expect any profit from it. Whatever is the sale value, straight away they may consider that only as NRV. If there is no further processing cost also, straight away sale value of byproduct, they will take it as what? NRV. Or if any of this is given in the question, please reduce it. Please reduce. Okay, sure. Methods of apportionment of joint costs to the byproducts. For accounting of byproducts and arriving at the cost of production to the main product, Net realizable value method. First, this is the important method here, guys. Same way, like however we used to calculate for joint products, now same way. But the difference is, guys, we will calculate net realizable value for each of the joint products, and we will take that as a ratio to apportion joint cost. Whereas now we will calculate NRV only to the byproduct, and that straight away is the share of joint cost to the byproduct. Clear? Will we calculate NRV to the main product? No, no, not required. Okay. The realization on the disposal of the byproduct may be deducted from the realization is nothing but the sale value, guys. Shall may be deducted from the total cost of the production so as to arrive at the cost of main product. When the byproduct requires some additional processing, like further processing, and expenses are incurred, the expenses so incurred should be deducted from the total sale value of the byproduct, and only the net realization should be deducted from the total cost of production. And here total cost of production is nothing but joint cost. Yes, I will show you one question where I have done this. Yes. Guys, in this question, gamma is our main product, kappa is a byproduct. Okay, company is manufacturing two products from the same process, gamma and kappa. Kappa, kappa. Sure. First, what are we doing is they are asking you to calculate the share of the joint cost. We are using NRV method. Even if question is silent, follow NRV method. Yeah. So sale value of kappa is given. They have also told company is estimating a profit of so much on the joint product. Deduct that, then further processing cost you deduct. All this are for only byproduct. Now, what did you get NRV for the byproduct? 10,600. This is the share of joint cost for the byproduct. Clear? Now, total joint cost was 39,000. In that, how much is the share of byproduct? 10,600. Remaining will be share of whom? Main product. In joint cost, this is the share of main product. Got it? Yes. And even in the exam, assume guys, they didn't ask anything about the byproduct. They asked you to find out what is the total cost of main product or cost per unit of main product. Still, you need to calculate this. Why, sir? Until you know what is the share of joint cost to the byproduct, you will not know the share of joint cost to the main product. So you have to do this either as a working and then find out what is the cost per unit of main product. Clear? Even though they have not asked it directly. Next, standard cost in technical estimates means they will tell put this much cost to byproduct. Who will tell, sir? Top level management. They would have done some research. Based on that, they will tell we will not do all this NRV calculation and all. I have already fixed one ratio. Whatever is the total joint cost, 10% of that put to byproduct. Remaining 90% is for main product. Clear? They would have fixed certain percentage on ratio. Next, comparative price method. Under this method, the value of byproduct is ascertained with reference to the price of similar or alternate material. Means, sir, now we have got a byproduct, assume molasses. If I had purchased it from outside, or if similar product is available as a substitute outside, that is in the market, what is the price of? We will record the byproduct at that price. Remaining cost will go to whom? Main product. Last one, reuse basis. Guys, in the process, we got some byproduct. I am not selling it, sir. I am using it as a raw material in my production process. I am using it as a raw material in my production process. In that case, guys, listen now. I got a byproduct. Assume molasses. Am I selling it? No. I am using molasses in the chocolate manufacturing as a raw material. Clear? So if I had purchased this molasses from outside, what is the cost I would have incurred? Record byproduct at that price. Record the byproduct at that price. I repeat, byproduct we are not selling in the market. We are using it as input in maybe the same process or some other process. Clear? In that case, if this raw material was purchased from outside, what is the cost I would have incurred? Record byproduct at that price. In some cases, the byproduct can be processed in the same process as part of the input of the process. In that case, the value put on the byproduct should be same as that of material introduced into the process. That is nothing but cost of raw material. Now, treatment of byproduct in cost accounting, guys. How do we treat the cost of byproduct? First check whether the byproduct is of small value or bigger value. Obviously smaller value. If it is of bigger value, will I treat it as byproduct? No. Sure. When there are small total value, the amount realized from their sale may be dealt in any of the following two ways. The sale value of the byproducts may be credited to costing profit and loss account. It is treated either as miscellaneous income or as additional sales revenue. You guys would have done all this in accounts. Now, if there is any small income and all, we will just credit it as what? Miscellaneous income. Same way, the sale value of byproduct, you just treat it as what? The miscellaneous income. Or else, the sale proceeds of the byproduct may be treated as deductions from total cost. Guys, very similar to the scrap value of normal loss units. Clear? So in process costing, we learn we will debit all the expenses in process account and we will give a credit to what? Normal loss units and the scrap value of normal loss units. We will get what? Net cost. Agree, no, guys? So even in the calculation below, what do we do? How do we calculate cost per unit? Total cost minus scrap value of normal loss units whole divided by total input minus normal loss units. You will get cost per unit, right? Yeah. So in the numerator, what did we do? Total cost minus scrap value of normal loss units. Same way here they are asking you. From total cost, just reduce the sale value of byproduct. Remaining is my net cost, which will be absorbed by whom? The main product. Which will be absorbed by the main product. Hope you understood. Yeah. So here they are trying to asking you to treat the sale value of byproduct very similar to the scrap value of the normal loss units, guys. Next, when the byproducts are of considerable total value, means it is considerable having higher values, higher sales value. Then in that case, where byproducts are of considerable value or total value, they may be regarded as not joint products and not byproducts, rather than as byproducts. To determine exact cost of byproducts, the cost incurred up to the point of separation should be apportioned over the byproduct and joint product using certain logical basis, like maybe the quantity, sale value, or anything like that. Next, where the byproduct requires further processing. In this case, the net realizable value of the byproduct at split off point may be arrived at by subtracting what? Further processing cost from the realizable value of byproduct. I already explained this method. Clear? And such net realizable value will be the joint cost attributable to byproduct. Is it clear? Yes. And guys, this part is important. They had asked theory question on this in one exam. I guess for 5 marks. You need to explain it. Yeah. And there can be a question on decision making, as I told you, whether joint products or byproduct. Should it be sold at split off point? Should we further process and sell it? Clear? Like as I told you, I already mentioned about it. I'm just repeating, guys. Assume this is like byproduct. Sir, here I can sell it at 15,000. If I further process and sell it, I can sell it at 25,000, sir. What is the further processing cost? 5,000. So should I further process or not? Yes. Because if I further process, I will get additional 10,000 sales. For that, I will incur an additional cost of 5,000. What is my incremental profit? 5,000. Clear? Sir, what if by chance if this is 15,000? Will I further process? No. Better sell the byproduct at split off points. Clear? Just so. So this is all about chapter 11, guys. Yes, students. Now we will revise chapter 12, which talks about service costing. Guys, till now, whatever we have discussed, that is the different methods of costing, they were applicable to the manufacturer. Depending upon what work I will do, I will adopt the suitable method of costing for me to calculate the cost. Whereas for service rendering entities, there is one method of costing which is called service costing. So service costing is followed by the entities who are engaged in service rendering. It might be like educational institution, hospitals, transportation, or information technology, anyone who is rendering the service. Sir, what do they do by following the service costing? They will try to calculate what is the cost of service they are rendering. Sir, how is it possible, guys? They will prepare a separate cost sheet for whatever service they are rendering, or else it is very simple. Sir, what do they do by preparing the cost sheet? They will just first find out what is the total cost, divide it by the total unit of service rendered. Total unit of service rendered. What do we get, sir? Cost per unit of service rendered. For that, we can add some profit and fix the price for the customers or clients. How much do we charge for each unit of service to the clients? Clear? So that is what we will be learning, and there will be number of service industries, guys. Even in exams, you can get different kinds of questions on different industries, but the most tested one in exams are like transportation, educational, or hotel industry, like that. Even hospitals, sometimes they are testing. These are the areas or service industries where they are trying to ask the questions repeatedly. Oh, we'll start. Service costing is a method of ascertaining what the cost of providing the service. So there itself we should understand that who will follow this method of costing, sir? Whoever is engaged in service provider or who is service provider. It is also known as operating costing. Guys, please be careful. Operation, which we learned at the end of process costing, is different. Operating is different. Operating is just the other name for service costing. Service costing is normally used in service sector. It is a method of costing applied to undertaking which provides service rather than production of material. Whereas if you are engaged in production, we already learned what are the different methods available. Depending upon whatever work I am doing, I will choose which is suitable for me. Service costing is just a variant of unit or output costing. Why, sir? Right? What do we do in unit or output costing? When I am continuously manufacturing one product on a continuous basis, the regular basis, I will follow unit costing. What do? I will calculate total cost divided by total output. What do I get, sir? Cost per unit. Same way here also we have to. Okay, very similar to cost unit method or unit costing method. Sir, what do we do here is we will try to calculate the cost of each unit of service provided. Sir, how do we derive it? I already explained it. Total cost divided by units of service rendered. You will get cost per unit of service. Service cost unit. Guys, we have learned in first chapter only cost unit. That is something for which we will calculate cost ultimately. Cost object is like overall, whereas cost unit is like per unit, per hour. Like so, for service industries, what are the cost units? I have given various things are here. Transportation. It depends on whether it is a passenger or goods. If it is a passenger, then it is passenger kilometers. That is, what is the cost to carry one passenger for 1 kilometer? Sir, will we carry only one passenger? Assume I am a bus transportation. Will I carry only one passenger? No, no. Only for calculation of cost purpose, we will decide. Cost per passenger per kilometer. Sir, what is the purpose of it? Guys, assume cost per passenger per kilometer, we got it 10 rupees. 10 rupees. I want to make 50% profit. So, how much will I fix the fare as? 15 rupees. Now, assume you got into my bus and asked for a ticket for a place which is around 100 kilometers from here. How much will I charge you? 15 into 100. Hope you understood. Means this fare is fixed based on what? Cost per passenger kilometer. Means what is the cost the company is incurring to carry one passenger per 1 kilometer. If they work out this, then it will help them to calculate the fare. Because the fare is charged for each and every customer, means passenger separately, guys. Clear? So when you embark my bus or when you get into my bus, I will decide the fare based on how long do you want me to travel. Okay, means how long will you travel in my bus? Clear? Where is your destination point and what is the distance of it? 100 kilometers means 15 into 100. Assume another person get into my bus and ask for a ticket which is 50 kilometers away from here. So how much will I charge? 15 into 50. 15 into 50. Same way for goods transportation, it would be 10 kilometer or quintal kilometer. Clear? Means to carry 1 ton per 1 kilometer, what is the cost we are incurring? And we call this as composite cost unit price. When there are two or more bays, here there are two bays. What is it, sir? Passenger kilometer. Same way for goods transportation, tonne kilometer, two bays are there. We call it as composite cost unit. Composite cost unit. Next, electricity supply service, kilowatt hours. Then hospital, per patient per day. This is also composite. Per patient per day. How much is the cost? Clear? Or else per bed per day. Like that. Or per patient per treatment. What is the cost? So, or per operation, which is nothing but treatment. Then canteen, per item or per meal. If it is a cinema, per ticket. Then if it is a hotel, guest days or room days. That is per room per day. What is the charge? Correct. Now, see, whenever we go for any accommodation, we stay there for few days. Correct. Now, am I occupying the entire hotel? No, sir. One room in the hotel or in the resort. In that case, they have to work out the cost for one room per day. What is the cost? Accordingly, they will fix the rent, room charges. Yes. Next, bank or financial institution per transaction or per service. Example like letter of credit per application per project. So based on they offer different kinds of services. So for each and every service, they calculate the cost so that they will know what is the amount to be charged to the customer or account holder. Educational institutions per course or per student per year also. Clear? Yes, sir. Or per student per course, which is composite. Then per batch or per lecture, etc. Then IT and ITES, that is information technology and information technology enabled service. Cost per project or per module. Then last one is insurance services per policy or per claim or per third party administration. Sometimes they will also outsource it to the others. Okay, whatever administration they will do, that is with respect to processing of claim and all, they will outsource it to the others. So we call it as third party administration. Okay. Now, what is the major difference between service costing and product costing? Guys, in product costing, what is my first major cost? Which is the first cost which I will incur? Material. Correct? And that would be the one major cost for us in the manufacturing process. Whereas in service, there is nothing called material. Even if there is material, it might be indirect material, but not direct material. So, in service costing, what plays a major role, sir? The support services will play a major role. Most of the expenses which we will incur would be either indirect or overhead. Yeah, whereas in product costing, material is one of the major cost cuts. Then coming to cost unit. Use of composite cost unit, we can use normally for service. Okay, whereas for goods, we normally use output as a cost unit, like cost per unit. Correct? Huh? That is with respect to product. Then material and employee cost. For manufacturing, material will be the major cost, labor would be there. But when it comes to service, sir, it is more of employee. More of employees. Then coming to traceability of cost. Indirect costs like administration overheads are generally have significant proportion in total cost for a service. So most of the expenses which we incur in service industry would be indirect in nature because they provide support services. They provide support services. Yes, sir. Then KPIs, that is key performance indicators. Because there are different KPIs for different industries. What are those? Some of them has been listed down in your syllabus. What are those? One by one, we will see. Okay. Key performance indicators are the quantitative and qualitative factors which are commonly used to assess the performance of an organization. Using this, can we evaluate the performance of a company or the organization? Yes. Which are important to achieve its goal, like calculation of cost per cost unit, calculation of cost or revenue per KPI, helps to evaluate the performance against the industry standard. I means I can compare myself with what is the industry average. Here, like in FM and all, you would have seen, sir, what is the PE of my company when compared to industry PE? Comparing this, I can tell whether my company shares are overvalued or undervalued. Same way here, whatever KPI we have computed for my company, I will compare it with industry standard and tell whether I am performing better or not when compared to others in the industry. So one by one we will see. First, transportation industry. What are the KPIs? First one, number of shipments, means how much delivery we have given. Number of deliveries, especially like Amazon, Flipkart and all, they are also into delivery. No? They will calculate what is the number of delivery or shipment they have done. Next, truck turnaround rate. Truck turning, guys, it is nothing but once the truck or lorry has entered my factory gate to load the goods, how long did it take from entering to exit? Clear? Assume today morning it entered and in the evening it went out, exit. Totally, they were in the factory in for 9 hours. So what is the turnaround time? 9 hours. Means it is simple. Once the truck entered the factory gate, how long did it take to load the goods into it and leave the factory? Then coming to lead time or order cycle time, the amount of time in between order placement by the customer and receipt of order. This is delivery time we call it as. Especially the quick commerce is in a tight fight in this case. Okay, they came out with 30 minutes delivery, 10 minutes delivery, 5 minutes delivery. Why, sir? Because customers are ready to pay premium amount if you can save their time. Yeah, even in this Amazon, Flipkart and all, you would have seen one day delivery, they may charge you more, or same day delivery, they may charge you more. Or else, no, sir, I'm not ready to pay extra. You can wait for 3-4 days. They will deliver it for sure. Whatever you have ordered only, they will deliver, but they will take time. If you want quick delivery, maybe they will charge you with a premium amount. Or if you have that Prime membership, then it is free for you. Yeah, for obvious, Prime membership is a cost. Okay, yes, means they're trying to push you to take that Prime membership. Yeah, so that they offer you a lot of things. Even whenever there is an offer, what I have seen is they will allow the Prime users one day before. You can access the offers one day before. Okay, so indirectly they are trying to push you to take the Prime memberships. Okay. Next, on time and in full. The number of orders delivered according to the schedule and quantity specified. Even in food delivery, this happens. Correct? So, assume they have promised 20 minutes delivery or 10 minutes delivery. They will also cross check from their side. How many deliveries did we deliver on time as promised? How much we couldn't deliver? Okay, and they will try to work on how much they couldn't deliver. Now they will try to work on that. Then coming to hotel industries, cost per occupied room means if a customer come and occupy the room, then what is the cost we will need? For unoccupied room, will they calculate the cost? No. Why, sir? Because we cannot charge anyone for unoccupied room, right? Whatever is the cost of the entire hotel, they will charge only for the occupied room. Clear? Assume out of 100, there is only 80 room which is occupied. Now cost is totally 10 lakh. So 10 lakh divided by 80 occupied rooms they will do. Why, sir? Because we can charge only when the rooms are occupied. So once they calculate the cost per occupied room, they will add some profit and they will fix the room charges. Yeah. Yes. Next, occupancy rate. As I told you, assume guys, totally they have 1,000 rooms in a hotel. On an average, how much will be occupied? Like 70%, 80%. Because throughout the year, every room might not be occupied. Clear? So this is called occupancy rate. Occupancy rate. Next, revenue per available room. Sir, for one room, what is the revenue we are collecting? And there will be different categories of rooms which hotels will be providing guys. Like AC, without AC, sir, single bed, double bed, okay, or different square feet also, or with different features. Okay, hill view, top view, ground floor, the last floor and all. So different pricing they would be followed. Sir, on an average, per room, how much we are charging? I might be charging different rentals for different rooms, but on an average, approximately how much? Yeah. So in that case, what can I do is total revenue. I will divide it by total rooms. I will get on an average per room how much we are charging. Next, hospitals, healthcare industries, bed occupancy rate. Assume guys, an hospital has totally 100 beds. Will all the 100 beds be occupied throughout the year? No. Clear? Yes. Now getting patient also is business. Where? To hospitals. Okay. Chalo, the reference, everything will happen. Okay. The only thing is we should not get into there. Once we step into that, they will make sure that we will go late as means we will go out as late as possible. Okay, we may go alive only. Okay, that is also doubtful nowadays. Okay, but when we are going late, they will try to push that number of days which we stay in hospital as much as possible. Oh, chal, come. Bed occupancy rate means out of 100 beds, on an average, how many beds are occupied? Like 70%, 80%, whatever is the bed occupancy rate. Yes, sir. Then staff to patient ratio. Staff to patient ratio means, sir, for one patient, how many staffs are there? Or else, for one staff, how many patients are there? For example, it can be vice versa. Clear. Assume there are to take care of 10 patients, there is one nurse. Clear like that. Or else to take care of 25 patients, there is 5 nurse, 1 doctor. This is the ratio. Clear. Yes. Because for every patient, there will be not won't be one doctor. Clear. One doctor will come to check you. Same doctor will go to check other patients also. Average treatment charge, guys. There will be different price which they will be charging for different treatments. Clear? On an average, sir, how much is my charge? How much is our charge? Sir, how do they calculate it? Simple. Total revenue they have collected from the patients or fees divided by total treatment given. So we will get on an average per treatment how much we are charged. Clear? Even in production or manufacturing entities, we can calculate it. Assume I am selling number of units. I want to calculate what is the average selling price. So divide the total sales by number of units sold. You will get on an average what is my selling price. Next. Next is IT industries gross burn rate. Guys, you would have seen, even if you are observing Shark Tank or if you are watching Shark Tank, they would be asking, some of the sharks will be asking, what is your burn rate? Burn rate means not burning the body. Okay, that is how much loss you are suffering. How much loss you are suffering. This scenarios will come when your cash outflow is more than cash inflow. Even in your FM, you would have learned. Okay, or in your accounts. Sir, what is it? Cash flow statements, correct? So if you have that negative net cash flow, it is like a loss for you, correct? So your outflow is more than inflow, especially from operating. If you have negative cash flow, it is a very bad signal, negative signal about the company, correct? Yes, sir. Even there is like application of fund, sources of fund flow statement, cash flow statement, and something related to that. Clear? So simple, sir. To take care of my business, I already invested capital, but to run it, to operate it also, I'm spending more and more money out of my own pocket, because whatever I'm earning from my business is not enough, sir. So I'm spending something out of my own pocket. Next, it is nothing but loss funds. That's all. Customer acquisition cost, CAC. CAC. Sir, what is this? Guys, to acquire one customer, what is the cost we are incurring? Nothing but marketing and advertisement expenses. Clear. Nowadays, lot of competition in advertising also. Clear. Different modes of advertisement. You use influencer, affiliate marketing, different kind of marketing. For that, whatever cost you are incurring. Then customer lifetime value. Customer lifetime value means, see, you have the power of retaining the customers. One customer will come back to you how many times? And what is the total business one customer will give you throughout their life? Throughout their life. And this will come only in case of recurring nature. If it is only one time purchase, then this will not come us. Clear? Recurring, especially like subscription and all will be there. Clear? Subscription and all. Sir, every month you have to subscribe, or every year you have to subscribe. How long will you subscribe? Clear? So that is called lifetime value. Means one customer can give you how much business throughout the life of that particular customer. Monthly recurring revenue, the amount earned each month, that is through subscription model. And clear. So every month we need to subscribe. Even classes are now available in some subscription model. Okay, you can subscribe for 1 month more classes, 6 months classes, 12 months classes. Yeah, or full course till I pass. Like that, different platform have different validity or plans. Clear. Or else, if you take easily this Netflix, Amazon and all. Sir, can I take the subscription monthly, yearly and all? Yes, they have a different plan. And one strategy what they are playing now is auto pay. Okay, that is the biggest strategy. That is, once you opt for 1 month subscription, they will make sure that they will auto pay. They will fix an auto pay for the second month. If you don't want, you have to go and cancel it. See how they play with customers' mindset. Assume, guys, my validity is getting over in 2-3 days. Your next subscription renewal is already been fixed, auto pay. Now you need to take extra efforts to go and cancel that. At the end moment, you also feel that one new movie came, one new OTT. What do you call that as? I forgot. I'm not getting. Series. New series came, so I want to watch. Let me extend it. Let me extend it, and now how they are playing is Geo. When they came, everything was free. Now Geo also is charging. That is how they know how to make the money. When Geo SIM came, also they gave freely. They make people addictive to SMS, to calls, to internet especially. Later they start charging. Now they're lifting, they're trying to, sir, grab from how much ever is possible from the customers. Okay, how the plans are like this, you observe, guys. See, if you take the normal plan, you will get advertisement. In between, you get advertisement. If you want to cancel that also, you want to opt out of that also, you take premium, where the price is more. They will show the advertisement in such a way that you feel like whether you are watching series or advertisement. Clear as they will show advertisement only like series. Same advertisement ಬರುತ್ತೆ ಹಾಕೊಂಡು ಹೊಡಿತಾರೆ. You feel like, oh, let me not watch this again, take premium. Okay, next level subscription. Yeah. Chalo. They should also understand that they're trying to irritate us. That's all. Clear. So same advertisement, how many times will you see? Clear. In one part only, how many times it will come. So they are trying to irritate you so that you will take the next level subscription. Chalo. And here there is also something called as monthly revenue recurring. That is one is subscription. The other one strategy is like new sales, upsales and all. Like whenever you guys shopping, you do shopping in Amazon, Flipkart and all, you put something for a cart or you are about to buy one product. They will tell customer bought together. Influence. Customer bought together laptop jete tabu, laptop jete bagu, charger, they will show you mobile jete mobile case. They will show you 2 3 products. It just to influence you. You will be feeling like, see, you didn't have planned to purchase that second item that they're trying to push you. You will feel like, oh, mobile, 50,000 mobile. What if it is there without screen guard? Oh, yo, what if it is there without case? Let me buy that toss. Yeah, or else some warranty, guarantee and all they tell. 3 years warranty, break, that to this. Especially if you go to Sangeeta, they will, Sangeeta, you know, na? Not well. Show a mobile store. Yarappa adu anta. Sangeeta anide. Chala, listen. So when you go there, they are not selling mobile. They are selling what? Insurance policies. Insurance policy not for your body, for your mobile. People, they are not bothered about insurance for their health, life and all. But for their mobile, they should have insurance. What if it breaks? Seriously, I have literally youth, especially. Sir, they don't care. Parents are there, no sir. If anything happens, they will take care. But mobile, mattam kodsala. They will not get you one more mobile, no. So they want the on mobile insurance, pakka. And insurance company will do such a way that, sir, if you go out and break, we will give you a new mobile, sir. They will influence you in such a way that you have to buy that insurance. Sir, what if it breaks or that is so? You will be scared. You are investing so much to my mobile phone, which is the cost of your kidney or heart, especially iPhone. Clear? iPhone. Huh? So in that case, you feel like Apple or the Apple Care. Yeah, sure. How much cost? For the cost of that Apple Care, you can buy one more smartphone. Serious, normal phone. I'm not talking about iPhone. Another phone you can buy. Okay. So my mother, when I took iPhone, she asked, okay, what is the Apple Care and I like that. Oh yeah, my mobile cost is only your insurance cost. That is what Papa parents. Okay, sometimes they will be using simple phones. Okay, they prefer to use it. But guys, to the extent possible, don't trouble your parents for all these fancy things. If they can really afford to it, okay. But if not, please don't trouble. Because I have literally seen students getting mobile phone, good mobile phones from their parents on EMI. Papa, they are working to clear your dues. If they are taking loan to at least pay your fees or anything, sir, always good. But to get you bike, mobile, all those things are not good, guys. So wait for a moment, complete your studies, and you guys, once you start earning, do whatever you want with your art and money. Where were we? Churn rate. Oh, churn rate means what, sir? The percentage of customer that cancels their recurring subscriptions means, sir, I was using this Amazon Prime or Netflix subscription from last 6 months. Now I am canceling, sir. Sir, exams are near now, sir. Why should I need subscriptions now? 2 months cancelled. Now they will also call you. They will try to push you. Take your subscription is getting over, anta. You send back the message for them. I have my exams. Will you come and write? Sure. Cost per feature. Now, if I want to add any additional feature, what is the cost of it? Guys, we are already giving the feature. If I want to add additional feature, as in now you are watching classes on our app. Now you want to add one extra feature that will come with the cost. And what is the cost we are incurring for it? Yeah, like that. Even companies which have various websites, Amazon, Flipkart, they also have a lot of features, correct? Like filter options, that, this, and all. Now, if they want to make you, the user, experience more, feel better, they may keep on adding additional features. Obviously, that will come with a cost for them. Telecom, average return per user, ARPU we call it. This is one of the commonly used words. Even this, whenever Airtel or Jio announces their results, they will announce their ARPU. ARPU means what, sir? Average revenue per user. Means how do they calculate it, sir? Total revenue from all the subscribers divided by number of subscribers. Means on an average, from one subscriber, how much they are. Yeah, and companies are trying to increase this. Correct. Now they are trying to plan in such a way that, sir, now monthly plan was like initially 200. They will increase it to 300, 350, 400, 450, and they will plan in such a way that even though Airtel and Jio are competitors, they will plan in such a way that both will increase the price together. Okay, so that none of the customers feel discriminated. You will find an option. Some students, especially, they will have both the SIMs. Okay, they will see where the option is better. You will see both the plans under Airtel also, Jio also, almost same prices. ಹೆಂಗಿದು ಇಬ್ರು ಒಟ್ಟಿಗೆ ವರ್ಕ್ ಮಾಡ್ತಾರ clear because they will plan their price hike in such a way that both of them will hike in the at the same time. Subscriber acquisition cost. This is the cost incurred by the telecom industry to or telecommunication company to acquire one subscriber. That is new customers. That is what this Geo did. Okay, they gave lot of things free, almost everything. Why? To acquire the customers from other telecommunication company. Many of the telecommunication companies shut down only. And whatever loss they incurred initially, that was like for them customer acquisition cost, subscriber acquisition cost. Next, network operating cost. Guys, this telecommunication company has to shell lot of money on license telecommunication network. That is the tower and all you have seen. They have to incur a lot of cost for it. How much cost they are incurring? Then gross revenue retention means by retaining the same customer, what is the extra revenue we are earning? That is you guys also will be doing. If you have recharged for 1 month, 3 months and all, again and again you will be doing it. Clear? So that repetition is called the gross revenue retention. Then educational sector, our sector, instruction cost, that is the cost of part-time and full-time faculty members. Then administration cost, any college or school or even this institute, they will have administration team. Obviously, there whoever is working, they have to pay salary. So what is the cost of administration? Then tuition cost incurred by the students on semester or annual basis. So whatever fees they charge you. Okay, for that, what is the cost? What is the fees you pay is their revenue, but they will also be incurring the cost to run one semester or 1 year class. They have a lot of cost. What is the cost of running the classes for 1 year or 6 months or per batch? Then student to faculty ratio means, for example, sir, for 100 students, how many faculties are there? Assume 2 faculties or 3 faculties. So this is the ratio of student to faculty. Yes. Assume in a school, there are totally 1,000 children, all sections put together, all the classes put together. 1,000 children are there. For them, 50 teachers are there. So what is the ratio? 50 teachers per 1,000 students. For each and every student, there will not be one teacher. Correct, Mr. Disney? In your school, it was like that. No. ಸ್ವಲ್ಪ ಜೋರಾಗಿ ರಿಯಾಕ್ಷನ್ ಕೊಡ್ಬೇಕು ನೀವು ತುಂಬಾ ಸ್ಟೋರ್ ನಾನು ಹಂಗೆ ಟೀಚ್ ಮಾಡಿದೆ ಅನ್ಕೊಳ್ಳಿ ಅಷ್ಟೇ ಈಗಲೇ ದೊಡ್ಡ ಇನ್ಶೂರೆನ್ಸ್ ಸೆಕ್ಟರ್ average cost per claim. Average cost per claim is nothing but when the policy is matured, you will submit this, you will claim the amount. Now that is called the average cost per claim. They have to cross check everything and they will have to process the amount, right? For that, will they incur the cost, sir? Yes. Then components of claim cost which are associated with like legal fees, time to settle, administration costs, report delays, everything will come. And some of the insurance companies will also take you to the court when you are claiming falsely that, sir, I am supposed to receive so much money. Yeah, but they believe that no, you have manipulated something. In that case, there is a chance of that they will also incur the legal cost. Then cost per quote, the cost that the company incurs in order to get a quote in front of potential claim. Potential claim means you have not yet taken the policy. Now we have sent some agent to your home, okay, to convince you to buy the policy. Okay, whatever cost they are incurring for it. Clear? So they will convince you in such a way that, sir, what if you are not there, your family full on road? Okay, please take the policy so that if you go also, your family is taken care of. Administration cost per policy. The cost of policy administration to number of policies outstanding. So in simple, how much administration cost the insurance company are incurring. They will also have a lot of administration cost. If you have not paid the premium on time, they will call you. Clear? And whenever you are supposed to claim the amount, or assume you have taken a health insurance policy, you are supposed to claim it, you have admitted for some medical purpose. Now you have to talk to them, the calling customer care center. Clear? All this is a part of administration. Then average policy size. Right? There will be different policy holders who would have taken the policy for different amounts. Assume she has taken for 5 lakh, he has taken for 10 lakh, he has taken for 20 lakh. Sir, on an average, what is the cost? What is the policy size? Means you take the total of all the revenue or premium collected, divide it by number of policies. Number of policies. You will get to know what is the revenue per policy on an average. Okay. Guys, they may ask like theory questions. They may give any particular industry and ask you to list 2 or 3 KPIs. Okay, or maybe 4, depending upon the marks. Next. Now we are getting into the numerical part. Methods for ascertaining the service cost unit. First one is composite. If it is a single cost unit, you will find out cost per unit of service. Composite means what, sir? 2 or more, like we discussed. Passenger kilometer, 10 kilometer, per patient per day, per student per year. All these are composite. Composite cost unit. Sometimes 2 measurement units are combined together to know the cost of service or operation. These are called composite cost units. For example, in public transportation undertaking, would measure the operating cost per passenger per kilometer. That is to carry 1 passenger for 1 kilometer. What is the cost we will incur? Same way, 10 kilometer, quintal kilometer, passenger kilometer, or per patient per day. Okay. Guys, especially when it comes to the composite cost unit, normally they ask it for especially transportation systems or transportation industry. We can calculate in 2 ways, absolute or commercial. Absolute is nothing but weighted average, whereas commercial is nothing but simple average. Guys, see, please understand it numerically. Only then you can understand. Because if you try to understand only theoretically, then you may not get clarity. You will get confused with quantitative and qualitative factor. First of all, so what is qualitative, what is quantitative? I have mentioned here. In a transportation service, variable cost is dependent on distance covered. Correct. Now, variable cost will vary with what? Number of kilometers traveled. So in that case, what is the quantitative factor? The distance. Number of kilometers would be the quantitative factor. Whereas whatever weight the truck carry or whatever is the passenger the bus will carry, it would be qualitative. Will variable cost vary with how much weight you are carrying? No. Will variable cost vary with how many passengers you are carrying? No. Assume guys the bus capacity is 100 passengers. Now whether they are carrying 20 passenger, 50 passenger, 80 passenger or 100 passenger, will variable cost vary? No. That means it is a qualitative factor. But if the number of kilometers traveled is 50 or 100, 150, 200, will variable cost vary? Yes. That means it is a quantitative factor. So if variable cost change due to change in this, then that is called quantitative factor. No, sir, variable cost will remain same. Clear? Means it will not vary. Then we call it as qualitative factor. Since the weight carried, that is in case of goods transportation or in case of passengers travel does not affect the variable cost. Does not affect the variable cost means it will not vary by variable cost. In that case, it is a qualitative factor. So in simple guys, if it is a goods transportation, what is quantitative factor? The number of kilometers. What is qualitative? Weight. Clear? That is ton or quantity. Next, coming to qualitative factor in case of passenger transportation is what? Number of kilometers. Qualitative is number of passengers. Quantitative is kilometers, whereas qualitative is passengers or the weight carried. Now coming to this. Listen. Sir, what is absolute or weighted average basis? It is a summation of products of qualitative and quantitative factor. Let us break down that. First, you need to calculate what? Product of qualitative and quantitative. That means you have to multiply quantity with quality. Means I'm talking about quantitative factor with qualitative factor. Clear? Yes. Then you need to find a sum of all that. That is aggregate. Clear? I have given the tip also here. Multiply distance covered. That is quantitative factor with weight carried in case of goods transportation. Whereas if it is a passenger with number of passengers, you multiplied both for each journey. Then you add up everything. What do you get back? Weighted average. Guys, very simple. Even in your store ledger, we discussed about it. Even in your FM, you have something called as weighted average cost of capital. WACC. Correct? What do you do? Simple. Listen here. Assume we have Q1 into P1 plus Q2 into P2. We have 3 lots totally into P3. Clear? So what did we do? We multiplied first. Correct? Then we added. This will give you total cost, huh? Yes. And there, if you want to calculate weighted average price and all, what do we do, sir? We will also divide it by Q1 plus Q2 plus Q3. This will give you weighted average price, correct? Huh? But here, we are doing this part as multiply quantitative factor with qualitative factor and at the end, add up everything. At the end, add up everything. Let me explain this with an example also first for more clarity. Oh, you can see here, there are different journey which is made through a truck. Truck is carrying a weight and it is making different journey. Okay, sir. Now you see, they have carried 20 tons and traveled for how many kilometers? 80 kilometers. They have carried 12 metric tons and traveled for how many kilometers? 120. And 16 metric ton and traveled for how many kilometers? 160 kilometers. So listen. What is quantitative factor here? Kilometers. Quantitative. What is qualitative factors? Weight, sir. First, each journey, what is the kilometer? What is the weight? What is the kilometer? What is the weight? Multiply. Then you add up. Then you add. What do you get? Sir, absolute metric ton kilometer. Absolute metric ton kilometer, which is nothing but weighted average. Hope you understand. Clear? Nothing. Guys, simple. Multiply weight with the distance traveled for each. Keep on multiplying this. At the end, you add up everything. Clear? Sir, what if it is a passenger transportation? Simple. In place of weight, number of passengers will come. Each journey, how many passengers you are carrying? Multiply that with kilometers. Multiply that with kilometers. At the end, add up. Add up everything. Got it? No? Yes. So you need to find out the product of qualitative and quantitative factor, which is nothing but multiplication. Then you find out the sum of all. Sum is nothing but addition. Now coming to simple average or commercial basis. Sir, what is it? It is a product of average qualitative and total quantitative factor. Means you do like this. First calculate total quantitative factor, means total kilometers traveled. Then you need to calculate average weight carried or average passenger traveled. Then you multiply both. Product means multiply both. Yeah, yes. Tip. What is the tip to calculate this? Calculate total kilometer traveled, that is quantitative factor, and then multiply it with average weight carried or average passengers traveled, qualitative factor. Guys, they will give sometimes in the question only to make your work easy, simple. Assume the bus is traveling 100 kilometers, 150 kilometers, 120 kilometers, different trip they are doing. They will tell on an average the passenger traveled is 60. On an average, the passenger traveled is 60. That means this one. Clear? Or else, on an average, the truck carried a weight of 100 tons. 100 tons. So in that case, you have to use simple average. Oh, let me see this also with an example. Same question. Now we are doing the simple average or commercial basis metric ton kilometer. How is it? Guys, simple. First, find out the simple average of all the weight. 20 plus 12 plus 16, whole divided by 3. So you will get simple average of weight carried. Simple average of weight carried. Multiply that with how many total kilometers traveled. Add up all the kilometers. Yeah, so that means, guys, it is like this. The truck has totally traveled for 360 kilometers by carrying, on an average, 16 metric tons. 16 metric tons. Got it? So this is nothing but commercial metric ton kilometer. Sir, what if it is instead of goods transportation? What if it is a passenger transportation? Then you consider the weighted average of different passengers traveling. Assume you got the weighted simple average of the passenger traveled is 60. Multiply that with the total kilometers traveled. Multiply that with total kilometers traveled. Hope you understand. Guys, even in case of store ledger, in simple average method, what we used to do? Whenever we used to issue, we used to take the simple average of prices. Then we will multiply with the quantity. We will get the cost of issue. We will get the cost of issue. Same way here. You need to take the simple average of weight or passengers. Multiply that with total distance traveled. You will get what? The commercial metric ton kilometer. Or we simply call it as simple average. Hope you got it. Yeah. Yes. Next. See, guys, this is one of the preferable question in the examination. Number of times they are repeating the question on transportation, either goods transportation or passenger transportation. And whenever the question is on goods transportation or passenger transportation or in simple transportation service, please break up your cost into three categories. What are those, sir? Variable, fixed, and the other one is maintenance. Like how you used to calculate machine hour rate, na? Same thing, same presentation. But here it is not per hour, it is per passenger kilometer or per ton kilometer. I will show you the way of presenting the answer also, so that you will know how to present it. You can see, you will divide the cost into standing charges. Standing is nothing but fixed. Then running charges. Sir, what is running charges here? If the cost vary with how many kilometers the bus or truck will run, that is called running cost, like petrol cost, diesel cost. Then one more extra thing is here maintenance. Repairs and maintenance always put it under this. Like semi-variable. It is a semi-variable. Got it? Yes. So you can see you will maintain one column that is to calculate cost per month or cost per annum or cost per bus or cost per truck. The other one is cost per passenger kilometer for passenger transportation, or if it is a goods transportation, cost per ton kilometer. Clear? So for standing, just calculate the total and divide it by passenger kilometer. Then for running, show it individually. Show it individually. And for repairs and maintenance or maintenance charges, one item would be there. Even if multiple is there, you can just add up and divide it by passenger kilometer. Clear? I will show you. You can see some more questions. This is also on passenger. Especially this calculation, sometimes you have to do, guys. Please be careful. This depends on how many kilometers the bus or the truck has traveled. If it is a goods transportation, it will be like this. Instead of passenger kilometer, it will be 10 kilometer. Try to present like this, guys. See, even if you are not giving a breakup, end result will remain same, but step marking will be awarded. So if you don't present the cost like this, giving a breakup, then you might lose step marks. Please be careful. You do like this. Very similar to our machine hour rate calculation. Okay, but in machine hour, we will divide only cost into two types. Here, one more extra is the maintenance. Yeah, and whatever questions I would have solved in the class also is based on the suggested answers of ICI. So I would also suggest you, ICI suggested me to teach like this. Okay, I have taught. You also make sure that you follow the same. Sure, that's all. Coming back. Coming back. We have solved number of questions on every service industries, especially transportation and all. I have solved good number of questions in the regular class. Chalo. Equivalent cost unit or equivalent service unit. Guys, when an organization or entity is providing different category of service or different grade of service, now to calculate cost per unit of service, you should have one equivalent base. You should have one equivalent base. So taking one as the base, convert all others equivalent to that. Either take the highest or lowest as the base and convert all others to the equivalent to that. Yeah, I will explain, especially when it comes to hotel industry or accommodation or lodges. They have this. They have different room category. For each room category, they charge you different price. So when they want to know the cost also, they have to calculate the cost for the respective category. Sir, how do they do it? I will explain it with an example. Yeah, this is a part of my concept book. I will just take this example to explain you. Yeah. Assume guys, this is an example I have given. A hotel has three types of suites for its customers. Suites means different types of rooms. Three types of rooms. What are those? Standard, deluxe, and luxurious. Standard 100 rooms are there. Deluxe 50 rooms are there. Luxurious 30 rooms are there. Okay, very good. Room tariff. Standard, whatever charges you charge, but deluxe you're charging 2.5 times of standard. For example, if you're charging 100 rupees per room, no hotel will charge you 100 rupees, but just for easy sake I am taking. Assume you are charging 100 rupees for standard room per day. How much will you charge for deluxe room? 250. 2.5 times of standard. How much will you charge luxurious? Twice of the deluxe. That means 250 into 2. 500. 500. Correct. So can I tell luxurious is like 5 times of standard, whereas deluxe is 2.5 times of standard. Correct, no guys? Okay. So based on this, we are deciding room tariff. Clear? I repeat. Standard we are charging normal price. Assume 100 rupees. All these are rupees, so not rooms. So per room per day. Whereas deluxe is charging 2.5 times of standard. That means 250 rupees per room per day. Whereas luxurious is charging twice of the deluxe. That means deluxe is 250 per room per day into 2, 5. Now if I compare this with the standard, how much is that? 5 times. Whereas deluxe, 2.5 times. Hope you are getting it. Yes, sir. So you can see the rent of deluxe suite is to be fixed at 2.5 times of standard suite, and that of luxurious suite is twice of the deluxe. Since all the three types of suits use the same amount of overhead, expenses will be common. Overheads, common overhead, general overhead we saw. Now we need to apportion it to each category. How will I do it, sir? Base is not same. Common base is not there. You calculate. Since all the three types of suits use same amount of overheads, but to attach qualitative weight, these rooms are required to be converted into equivalent units. So either take standard as a base or luxurious as a base and convert all others equivalent to that. Yeah, I would suggest you to go by the lowest one, standard. Okay, but I will show you both the ways. If I take standard as a base, how do we do it? If I take luxurious as a base, how do we do it? Oh. So assume 360 days in a year. Okay, that means guys, when they are not given room occupancy, we will assume all the rooms are occupied throughout the year. Or else sometimes they will tell you 80% occupancy. In that case, you have to take 100 into 80%. Or each room category into respective occupancy. Okay. 360 days into 100. How many room days? 36,000. Room days we call it. Means each room is occupied for how many days in a year? 100 rooms is occupied for full 360 days. How much will you get? 36,000. Clear? I told you. See, if nothing is given, you will take the occupancy as 100%. Assume they have given it as 80%. Then you have to multiply here 80%. Where you will get less than 36,000. Clear? Yes. Same way, deluxe. 50 rooms are there. Occupied for full 360 days. 18,000 room days. Then 30 into 360. 10,800. Clear. Now, can I take the total of this to calculate cost per room day? No. Why is that? Because they are not for the same base. They are not equivalent. Can I compare luxurious straight away with standard? No. Now let us calculate equivalent standard room base. Now I am taking this as a base. Which one, sir? Standard. Converting all others for standard. Equivalent to standard. So 36,000 into 1, 36,000 because it is same. Whereas, guys, when it comes to deluxe, it is 2.5 times of standard, right? So 18,000 into 2.5 will give you 45,000, which means 18,000 deluxe room days is equal to 45,000 standard room days into 2.5. That's all, nothing I can. Same way, 10,800 luxurious room days equivalent to 5 times of my standard. So into 5. Into 5. How much do you get? 54,000 standard room days. Now, if I just divide my total cost by this, we will get what? Cost per equivalent standard room days. Okay, I will explain. If you want, sir, why are we doing all this calculation? That also I will explain. Now coming to, sir, why did you take standard? Why not luxurious? Now we are taking luxurious as a base and converting standard and deluxe equivalent to luxurious. Okay, this will anyway remain same. Now, luxurious 10,800 will remain same, 10,800. Clear? Divided by 2, that is deluxe divided by 2 will be the equivalent luxurious room rate. Correct? Now, this is twice of this. That means, can I tell? This is half of this. Filter. Clear? Yes, sir. So I took 18,000 deluxe room days into same way. 36,000 standard room days. Luxurious is equal to how many standard? 5. So divide it by 5. Divide it by 5. Hope you understand. So now 27,000 is what? Equivalent luxurious room days. Luxurious room days. Sir, what is the purpose of doing all this? I want to calculate cost per room day. Now, where did you find out, sir? You only found out the equivalent room days, no, sir. Okay, fine. I will come to that also. Yes. All this in detail we are covered in the class. Okay, but I will try to explain it as early as possible, quickly, all those things. That is why we are doing this calculation. See, you can see standard room is like 1. Deluxe room is 2.5 times of standard rooms, whereas luxurious room is 2.2 times of deluxe rooms. That is nothing but 5 times of standard rooms. Correct? Yes, sir. So I have written the equation here. This is only for your better understanding. If you can understand, you need not write all this in the exam. Yeah, you can see one deluxe room is equal to 2.5 standard rooms. So one luxurious room is equal to 2 deluxe rooms, which is equal to 2.5 into 2, 5 standard rooms. 5 standard rooms. How did we get 5? 2.5 into 2, which is nothing but 5. Okay, yes. I am assuming 4,05,000 is the total overhead cost we have incurred for the entire hotel. Entire hotel. Okay, sir. They're asking, find out cost per room day for each category. Also calculate the charges per room day for each category if the company wants to make 20% profit on cost. Means they're asking you to fix the room charges. To fix the room charges. Okay, guys. First, taking standard food as a base. We already did the calculation till here. What is the use of this, sir? Guys, my total overhead cost is how much? 4,05,000. We will divide it by 1,35,000. What is 1,35,000? Equivalent standard room days. You will get cost per standard room day, which is 3 rupees. Which is 3 rupees. Now let us multiply. What is the total cost of each category? 3 rupees into 36,000. 3 rupees into 45,000. 3 rupees into 54,000. That is equivalent. Sir, why are you multiplying this with this figure, sir? Why not this figure? Guys, this is cost per equivalent standard room days. Multiply that with equivalent standard room days. Okay, now. So you got the total cost for each category. Sir, I want to calculate cost for each category, for each room per day. Can we do it now? Yes. We have got total cost. Divide 1,08,000 by 36,000. You will get 3 rupees, which is same because my equivalent was that one. Next, for deluxe, 1,35,000 divided by 18,000. What is the cost per deluxe room day? 7.5. Cost per deluxe room day. 7.5. Check it. Is it 2.5 times of 3? Yes. Next, 1,62,000 divided by 10,800. You will get 15. Cost per luxurious room. Is it 2 times of my cost per deluxe room day? Yes. Now they want to add 20% profit on it. So 2020 add for this. What is the room charges? 3.6, 9 and 18. That means if you come to my hotel to stay in a luxurious room, per day, I will charge you how much? 18. Per room per day, I will charge 18 guys. Hope you're understanding. Same way, if you come to my hotel and ask to stay for 1 day in standard room, how much will I charge? 3.6. Understood means I'm trying to explain why did we calculate this. Clear? Even in process costing, we did equivalent units calculation. Now, how did we get cost per equivalent unit? Sir, cost divided by equivalent units. Why did we do equivalent units as a base, sir? Because output is 100% complete, whereas closing WAP was not 100% complete, sir. Can I take straight away that as a denominator? No. We will convert that into equivalent units. Only then both are comparable. Output is 100% done, whereas closing WAP, if it was 100% done, how much equivalent units I would have got? I would have done notional calculation. Yes, same way here. Same way here. Now, if I also ask you, what is the total revenue did this hotel earn? Simple. Multiply this with the respective room size. That's all. Total revenue, correct? Huh? Total revenue 3.6 per room day into 36,000. Same way, 9 rupees per room day into 18,000. 18 into 10,800. Add up everything. This is the total revenue made by. This is the total revenue made by them. Hope you got it. Easy. Same way, sir. What if I am taking luxurious rooms as a base? Till here we already learned. Now, sir, what is the cost per luxurious room day? 15. Correct. Huh? That is 4,05,000 divided by equivalent luxurious room day, 27,000. How much do we get? 15. Now take it. 15 into 7,200. You will get 1,08,000. 15 into 9,000. You will get 135. 15 into 10,800. You will get 160. What did we do? Cost per luxurious room day into equivalent luxurious room day. We get total cost for each category. Now you might ask me, sir, why didn't you multiply with this? This is 15 rupees is not the cost for each category. It is for equivalent luxurious room days. Luxurious room day. Did you observe? Same thing we will get. Same amounts we will get. Only way we did was this. That's all. Yeah, yes. Next, calculate cost per room day. 1,08,000 divided by 36,000. 135 divided by 18,000. 162 divided by 10,800. This is the cost per actual room day, not equivalent. Actual room days. And company wants to make 20% profit. 20% profit for each room category. So add 20% for each office. You will get 3.6, 9 and 18. Same to same answers. Same to same answer. Pawan, one we did like this, the other we brought like this. It is going to the same place. Chalo. Hope you understood. Here also, if you want to calculate total revenue, multiply this respective amounts with actual room days and add up. That's all. Clear? In the exam, please don't do both the ways. I would suggest you to go with this way. Take the least as the base and convert all others. Clear? But either way you do, you get same answers. Clear? Sir, what if I take deluxe, sir? Please don't do that. Okay. ನನಗೆ ಒಬ್ರು ಕೆಲವರು ಡಿಫ್ರೆಂಟ್ ಆಗಿರುತ್ತೆ ಸರ್ ಐ ಆಮ್ ಉಪ್ಪಿ ಫ್ಯಾನ್ ಉಪ್ಪಿ ನೋಡ sir I like to be different. You taught us this way, I want to try this way. You will get the same, but lot of confusion in that. Clear? So better don't take the middle one. Take the higher one or the lower one. Okay? Yes. Statement of cost for service sectors. For preparing a statement of cost or cost sheet for the service sector, costs are usually collected and accumulated for a specific period. That is like month, quarter, or a year. Guys, one thing you have to be careful. One thing you have to be careful is while calculating the total cost, few costs might be given per month, few costs might be given like per quarter, per annum, and all. Please convert everything to a equivalent time period, either year or per month. Clear? Yes. The cost statement for services may be prepared either on the basis of functional classification, like how we do cost sheet, as done for the product costing, that is in cost sheet, or on the basis of variability, that is variable and fixed. Cost sheet is prepared classifying all the costs into three different heads, that is fixed cost or standing charges, variable or operating expenses, or even we call it as running cost, semi-variable or maintenance expense. Especially for transportation, please give a breakup like this. Sir, what about other service industries? Guys, in the question itself, if they have given a breakup like variable, fixed, and all, where you can present your answers by giving a breakup of variable, fixed, you also follow the same. I'm talking about other industries. Clear? If not, sir, they are simply given the cost, sir. In that case, you just add up all the costs divided by unit of service. Clear? Because there are number of service industries, guys. We will not be able to discuss about them in this revision class. Each of them. Clear. So if you guys have attended already the class, you will be knowing we have tried to cover the questions on each and every sector in the class. Clear. But now it won't be possible for me to go and tell for each industry how do you present. Simple. Keep it very simple. For any service industry, you will calculate the total cost. If they are asked you to calculate cost unit, total cost divided by number of units of service rendered. Yeah, few things you have to be careful is when cost will vary with number of students, number of rooms, or number of days and all, please be careful with that. Clear? And also few costs might be given like per month, few can be given like per week, per quarter and all. Please convert everything into equivalent time period. Yeah. Yes. In the absence of information, we will exclude semi-variable and only give a breakup between variable and fixed. Sir, now depreciation, is it fixed or variable, sir? If depreciation vary with how many units we produce or how many units of service we render, then it is called variable. No, sir, it will only vary with the passage of time. It is because of passage of time. How much ever units we produce or how much ever kilometers we traveled or how much ever students are there, it will not vary. Then it is fixed. Then it is fixed cost. Then we have a concept called build, operate, transfer, BOT approach. Maybe theory topic they will ask. Guys, under this, there's an approach which is followed by the governments where they will outsource the work to the private sectors. For example, assume central government has outsourced the construction of national highway to Dilip Buildcon. Now Dilip Buildcon will invest their own money into construction of the road and they will put a toll there, collect the toll. But is it forever, sir? May not be. The government would have given a right for them to operate, maybe for 10 years, 20 years, 30 years. After that, they have to transfer the ownership to government. Or else sometimes it can be like joint venture also. Government will invest 50%, Dilip Bitcoin also will invest 50%. Even in the toll charges, they will share. They will share. Something like that, they will have an understanding. So in this case, what do we call it as that? Build, operate, and transfer. Means you invest your own money, build the infrastructure, you operate it for a few years, collect whatever is the revenue for that many years. Then you give back the transfer. You give back the ownership to whom? Government. Government will take care from now. Is that clear? Yes, sir. So this is all about the service costing, guys. Yes, students. Now we will revise chapter 13, which talks about standard costing. Many of the students find it difficult because of the formula, but we will try to make it easy. We will try to analyze the logic behind each of the formula, guys. So there are three different types of variances we need to calculate in this chapter. That is material, labor, and overhead. Under overhead, there are two subcategories. That is variable overhead variance and fixed overhead variances. Okay. But before we start with the variance calculation, first we'll understand, sir, what is the logic behind or what is the concept behind this chapter. Guys, whatever we will learn in this chapter, the standard costing, the concept behind this is nothing but the cost control. Cost control. See, in the first chapter, we learned about cost control. Sir, what is that? We will follow different steps in order to control our cost. That is, at the beginning of the year, first we will set a standard cost, which we also call it as predetermined cost. And when we are doing the actual work, we will try to ensure that my actual cost is equal to the standard cost or much below that, if possible. Yes, sir. We will make sure that my actual cost will not cross the standard cost. If by chance, if actual cost goes above the standard cost, then there will be a difference or variance called adverse variance. And the respective department will be answerable for it. Why did you incur this additional cost? So once we get a variance, we will also analyze that variance. What is the reason behind this? So standard costing is not a method, it is a technique of controlling the cost, where we will set the target at the beginning of the year or at the beginning of the period. Okay, the period might be month, quarter, or year, guys, anything. So let us take it as a year for easy sake. At the beginning of the year, we will set a predetermined cost tax, which we call it as standard cost. And as and when we do the actual work, we will get to know what is the actual cost of our actual work done. Compare this actual cost with the standard cost. And if there is any difference or deviation, we call it as variance. If actual is less than standard, very good. We call it as favorable variance. So even the department or the workers who are engaged in this work will be rewarded for it. Whereas if actual cost goes beyond the standard cost, then we call it as adverse variance. And we will ask the respective department to explain the reason for the same. So we will analyze the variance and ask them to report for the same. So that if there is any changes which we can bring, at least we will bring it so that in the next year we can control our cost. Okay. First, guys, I will try to explain the concept with an example. Then we will go through the formulas. See, at the beginning of the year, we always set a standard which acts like a target, which just act like a target. And at the end of the year, we get to know what is the actual work done. And for that actual work, what is the actual cost we are incurred. Now, assume a company has set a standard cost of 10 lakh to complete a work. But the workers have incurred a cost of 12 lakh. So that means we have incurred 2 lakh more. What do we call it as? 2 lakh adverse. Correct? Actually is more than the standard 2 lakh adverse. Now we will try to figure out a reason for it. Guys, this 2 lakh will be mainly because of three reasons. Either you have incurred material cost more, labor cost more, or overhead cost more. So now, for me, if I just tell 2 lakh extra, it won't be feasible. I need to tell why extra for what reason. Clear? So even this 10 lakh has to be given a breakup element wise. So when they have told 10 lakh, you have to incur the cost. How much for material? How much for labor? How much for overhead? Give me the breakup. So in this 10 lakh, they have told standard material cost should be 5 lakh, standard labor cost should be 3 lakh, and standard standard overhead cost. Here I am not breaking variable and fixed. We will take it as a whole. Overhead is 2 lakh. So the total is coming to 10 lakh. Yes. This is the cost which we are supposed to incur, standard cost. Now we got to know the actual cost. Total is 12 lakh. If I break down, material is 6, labor is 3 lakh 50, and overhead is 2 lakh 50. Now compare each other. Now we are trying to find out this 2 lakh is because of what? How much because of material? How much because of labor? How much because of overhead? Okay, sir. Now, standard material cost was supposed to be 5 lakh, but actually I have incurred 6 lakh. That means 1 lakh more. So, what is the material variance? 1 lakh adverse. Means I have incurred an additional material cost of 1 lakh. Now, let me again try to figure out the reason for this. Sir, this 1 lakh extra, why, sir? Either I have used excess quantity or I have paid excess price for each kg of raw material. So now let us try to figure out that. So this I am breaking down. I was supposed to use standard quantity, 50,000 kgs of raw material in my production process. For each kg, what is the amount I was supposed to pay? 10 rupees. But actually, how much did I use? 54,545. So I have used excess. If I have used excess, obviously because of some wastage or loss in the process, yes, sir. Because of that, will I have adverse variance? Yes. Same way, I was supposed to pay 10 rupees, but I actually paid 11 rupees. This is called standard price, this is called actual price. So actually I have paid more. That means even this will lead to an adverse variance? Yes. Hope you are understanding. First we got 2 lakh. We 2 lakh, we tried to find out how much is because of which element. We got 1 lakh because of material. Now we are trying to figure out the reason under that also. Because of excess usage of material, because of excess payment. Okay, sir. We got. Fine. Material part done. Now let us go to labor. I was supposed to incur 3 lakhs standard labor cost, but I have incurred 350. That means there is an adverse of 50,000. Now let us try to figure out the reason. Maybe I have taken more hours to complete the job, or I have paid more rate to my workers. I was supposed to work only for 3,000 hours to complete this work, but we have worked for 2,800 hours. Good, sir. We have saved the time. Really good. Okay, so that means with respect to hours, we will get positive variance. But with respect to rate, we have paid more. We have paid more. Instead of paying 100 standard rate, we have paid actual rate 125. So here we will get adverse. So if I net adjust both, we will get overall 50,000 adverse. Clear? So when do we have adverse labor variances? Either you have used excess hours or you have paid excess to the workers. Same way, we will try to figure out the reasons for this 50,000 adverse also. Under overhead, there will be two breakup, variable and fixed. So we'll try to calculate. So 50,000 is because of what? Variable overhead or fixed overhead. Under that also, there are various variances. Understood? Means I'm just trying to explain you why are we doing all this. Yeah, I want to know why we have incurred the excess cost or extra cost, and I'm trying to figure out the reason for it. So that at least in the upcoming period, I cannot change my past. At least in the upcoming period, I can take some necessary steps so that my cost would come down. Yes. Next important thing is, see this standard data, whatever they would have given, should always be for actual output. Should always be for actual output. Here everything I have taken plain. Let us go to the next table here. Guys, see, they have given a standard cost. Assume this is like a different case. Standard cost, they have given it as 10 lakh. In that, how much is material, labor, overhead? 5 lakh, 3 lakh, and 2 lakh. Yes, sir. But this was for 1 lakh units. Standard data was given for how many units? 1 lakh units. Now coming to the actual data. Now let me come to the actual data. Actual cost is 11 lakh. In that material, labor and overhead is 580, 320 and 2 lakh. And this is for 80,000 units. Means actual output is 80,000 units. Guys, now you guys tell me, can I compare directly this with this? No, sir. The base is not same. The base is not same. What base, sir? Here, whatever data is given for 1 lakh units, whereas here it is for 80,000 units. And obviously, I know that if I compare this two, we will get a difference. Why, sir? Because this is for 1 lakh and this is for 80,000. Correct. Now I cannot tell you whatever you are supposed to incur for 1 lakh, you incur for 80,000. How is it fair? Clear. Now convert the standard data for what? Actual output. Now what is actual output? 80,000 units. Convert all the standard data. Standard data should always be converted for actual output price. So 10 lakh is for 1 lakh units. How much for 80,000 units? We get 8 lakh. I have given the equation here, you can see. A is nothing but standard. Okay, A is for 1 lakh units. We need to calculate for actual output of 80,000 units. Same way, 5 lakh is for 1 lakh units. How much for 80,000 units? So you'll get 4 lakh material cost, labor cost 2 lakh 40 and overhead 160. Now can I compare this two, sir? Yes, because both are for same level of output. That is 80, 80. Now this both are comparable. Correct now guys. So please be careful normally, especially with respect to quantity and hours. While calculating material variances, quantity, and while calculating labor variances, hours, you should always convert it for actual output. I am explaining the reason. Why do we do that? Because we learn all that now. Yeah, I'm explaining you, sir. Why do we convert always standard data for actual output? Because actual cost will always be for actual output. So actually you have done that. Now what should have been done is standard. So standard also should be for actual work done. Okay. Hope you understood. Now this both are comparable and we will see if there is any variance. Like however we did. Clear? Yes. So here we assumed that everything was like for actual output only and I explained it. One step ahead I went and I took you. Sir, should we convert our standard data for actual output? Very simple. Let me give simple example. Now can we compare your 10th mark sheet with CA marks? 10th, sir, all 90 plus, 95 plus, or even plus 2. Chinmay, correct? Sir, state rank holder, sir. But when it comes to CA, reality we will understand. Sir, CA we should not take so lightly how we took our plus 2 or even our 10th. It will teach you everything. Clear? Yes. It's not like you have taken lightly now, but it will teach you that you should not take lightly. Yes. Because many students, what happens? They will understand the standard of CA exams only after 1 or 2 attempts. After seriously, because they believe that, especially those who have come from degree route also. Sir, degree push model, sir, they wish to push up. Clear now? Whereas in CA it is pull model. They will not pass you. In degree, whatever you write, they will pass you. Correct? In respective universities, okay, or colleges. Because they want you to go out after 3 years. They don't want to keep you. New batches are coming. Whereas when it comes to CA, it is not like that. They want to keep you in the majority side. Majority side is which side? Failing, unsuccessful side. Clear? So please make sure that you will not fall under the unsuccessful category. For that, you have to be exceptionally good, guys. Clear? I know, see, most of you would be giving your best till now, but may not be 100%. May not be 100%. I tell you, see, only when you give your 100%, you get the results what you want us. Clear? Because I have seen literally students taking 6 attempts, 7 attempts, 8 attempts, or 10 attempts. See, nothing wrong in taking the attempts because TA is TA at the end of the day. But the thing is, if you just give your 100% in one attempt, you can just close the game and move forward. Clear? Instead of studying the same thing, you again and again, you also feel like, oh, all this I had studied last time also. When you open the book also, you feel like, oh, I had studied all this. Yeah, that hurts. But somewhere you would have taken something for granted. Something you would have left. Something, somewhere you would have gone to your comfort zone. Just think about it. Sir, now assume 1 or 2 months is left for the exam. If you just push yourself hard, complete it as much as possible, give your best. Sir, 12 hours, 14 hours a day you are able to study. You can study. 12 to 14 hours, assuming you are not doing anything else other than CA, you can study 12 to 14 hours if you avoid all your distractions. Now, if you can give your best in this 1 or 2 months, again it will avoid studying same thing, guys. Clear? Because you again repeating for 4 months, that will not be fruitful. And over a period of time, you will also lose interest. Ayo, why to get so many times? My friends and all after already degree, they are already working, they are already earning. Please don't give up. I tell you, you will realize the importance of this qualification once you qualify. Very, very much important, guys. I tell you. See, I will give one example which is very close to me. That is my wife. Okay, she cleared her exams later, but today we both are qualified chartered accountant, and she is enjoying her qualification. Clear, and it will happen for many people. It will happen. I can see some of them even after married they are doing it, highly appreciable. But you guys make sure that before you get other responsibilities in your life, you clear it off, because managing studies along with other responsibility, maybe your work or family or whatever it is highly challenging, guys. I'm not telling it is impossible. It is highly challenging. Now you don't have anything in your life except studies. Eagles, you will feel. Yeah, just think about managing studies with other things will be like more challenging for you. Yeah. See, I was just following this cricket. I'm the big cricket fan. Okay. But now we don't get time to watch. Previously, when I was in school and all, even test match ball to ball, I used to watch. Okay. But now we cannot watch because of our time constraints. I was just watching, just look at the players, how they are performing, even when they are completely injured. One person going to play only in one hand, another person is coming with a broken or fractured leg. Okay, like this number of examples have happened. See their dedication. They know that they cannot go and perform there. They know that I can at least stop the match. I can at least stop the other person winning the match. That is their intention. Correct? Now, Chris Wokes came with an intention of not hitting the ball and winning the match. He just wanted to go and stand there. Same way with Pant and all. So many people have played like this. So I know you guys also somewhere feel mentally tired, physically tired. Okay, sir, I am not able to do it. Oh, yo, I'm not able to sit for so long hours. But somewhere, guys, just try to remove that from your mind and see that can you give better. Okay, is it possible for you? Yes, I really appreciate for you guys who are attending both the revision classes now. Morning costing, evening accounts. Sir, sitting for so long hours, is it practically possible? You guys showed that. Yes, it's possible. Clear. If I ask you to sit for a regular classes and all for so long, you will tell no. But now, just before the exams, you guys are ready to sit because you will also know the importance of the classes. Clear. Sir, if it is helpful for me, I will do it. Tough. I agree. It is tough, but I can do it. Clear. So even at your home, guys, when you feel that after 8 hours or 10 hours, oh, my body is tired, let me rest. Maybe if it was during your regular study period, yes, I would have suggested take rest. But just before the exam, try to push as much as possible. Try to push. Sir, 8 hours, try to make it 9 hours. 9 hours, try to make it 10 hours. 10 hours, make it 11 hours. So how much ever is possible? Because guys, assume just half an hour or 1 hour extra in a day can bring you a lot of things in your life. Just imagine 2 marks extra you are studying every day. 2 marks into number of days. Sir, whoever is in 120, 130, 140, pass. Correct. Many people have failed just by getting 130, 140, 145, 146, 148. Passed in all the subjects but not passed. Sir, how is it possible? In CA, everything is possible. Passed individual subject but failed in results. How, sir? Aggregate. Clear. And it is very painful to accept that results during the results time and to move forward. So that is why I suggest you, see, you have that potential in yourself. Make sure that you are giving your best and whatever is possible, try to cover entire syllabus, guys. Solve good number of questions, then we will see why you cannot pass. And especially costing, the more number of questions you solve, the more comfortable position you will be with respect to passing the exams. Clear? So even in this concepts, I am telling you however to apply the concepts in the questions. But you guys also watch the questions marathon. For each and every chapter, I have done a questions marathon, which is also available. In the regular class, I would have already covered number of questions, including the past examination questions. But now, if time permits, please do also watch the questions marathon, where you will get an idea about, sir, how to solve the question, the stepwise, how to start, how to solve, and how to end. And once you watch, try to take up some interesting question. Maybe now you are not able to solve all the questions. At least in one chapter, you will find one or two questions interesting. Take up that question. Don't look into the answer. You try solving. And while solving it, don't simply put only numbers, plus minus plus minus. Please present it as if it is an exam. Particulars, so amount, working note, everything you give guys. Because in the exam, what happens now? If you are not writing the notes, working notes now, in the exam also, like automatically you will follow that one. Or in a hurry, you will feel like our notes is not required, we will go forward. Guys, many students lose marks in that. So please ensure that you write 100% of your answers, which the evaluator would be impressed with. Don't take a chance thinking, let us see what he will do. Okay, if you take that chance, you can correct it only in the next step. Now you cannot go and plead the evaluator because you are nowhere aware that who is that guy or who is that girl who is evaluating your paper. So try to give that proper 100% answer in your answer sheet, and that will come only by way of practice. Sir, now I will practice roughly, sir, in the class or during preparation. In the exam, perfectly I will present, sir. Maybe your hand will not run, guys, automatically. Yeah, this will happen because now you are used to writing only numbers. There you are supposed to write notes, so particulars ಅಲ್ಲಿ data ಎಲ್ಲ ಬರೀಬೇಕಲ್ಲ. There you will not feel that comfort in writing. Somewhere you feel that you are getting stuck or your hand is getting stuck. Please don't get into those problems. Okay, now let us get back to our syllabus or problems. Sure, let me read. Standard costs are divided into three main cost components, which is nothing but elements: direct material cost, direct employee cost, and overhead cost. So we saw standard cost, they had given us the target of how much? 10 lakh. Now 10 lakh we will break down element wise. How much should be my standard material cost, standard labor cost, and standard overhead cost? Now, by comparing our actual cost with standard cost, what do we calculate, sir? Variance. If variance is positive, we call it as favorable. If variance is negative, we call it as adverse. The primary object of standard costing is to reveal the difference between actual cost and standard cost. Standard cost is nothing but how much should have been my cost. It is like a target. After standard costs have been established, the next step is to ascertain the actual cost under each element and compare them with the standard cost. The difference between them is called cost variance. If actual cost is more than, I have given it here, if actual cost is more than standard cost, then we call it as adverse variance. If actual cost is less than the standard cost, then also we will have variance, but that is favorable variance. Favorable variance will increase the profit of the organization, whereas adverse variance will bring down the profit of the organization because we have incurred more costs. Now coming to the variance calculation. So please be little attentive because all this formulas, derivation also I will tell you, very easy. Guys, while calculating any variance means you are finding out the difference. When you are finding out any difference, something minus something. Correct. Something minus something. Now standard minus actual minus standard. You tell me what will come first. Standard will come first or actual will come first? ಮೊಟ್ಟೆ ಮೊದಲ ಕೋಳಿ ಮೊದಲ ಅಲ್ಲ ನಾನು ಕೇಳ್ತಾ ಇರೋದು. Will standard come first or actual come first? Standard. So in the formula always it should be standard minus actual. Clear? No need to get confused in any formula except two, which we will learn it under fixed overhead. Clear? Everywhere else it is always standard minus actual, because standard we will have it at the beginning of the year, whereas actual we will get to know only at the end of the period. Okay, sir. Now, material cost variance. Sir, we are trying to find out what is the difference between standard material cost and actual material cost. Yes. Guys, for this kind of question, whenever they ask you to calculate the material variance, labor variance, or the overhead variance, first draw a table. Even though they have asked you to calculate the variances, but draw a table. Sir, what kind of table you are talking about? Let me show you. Like this. The table which is showing you the data about the standard and actual. Clear? Normally, number of materials will be given, guys, like X, Y, Z, and all. There are different kinds of raw material used in the production process. Okay. So you will write first the standard quantity. Guys, standard quantity you can see here. Sir, they have given per unit of output. 6 kg and 4 kg. And what is the actual output, sir? 1000. Always convert the standard data for actual output. Clear? So that is your first job. Whenever you are solving the question, first check whether standard quantity is for actual output. If it is already given, well and good. But most of the time they don't give it directly. You need to calculate it. Standard should always be for what? Actual output. Okay, sir. Standard rate they would have given. Standard rate is nothing but like per kg or per unit. Okay. We call it a standard rate or standard price. One and the same. Then if you multiply both, what do you get? Standard cost. This is nothing but standard cost of material. Then actual. Actual will be already directly given in the question. You need not do anything extra. Clear? So actual quantity, actual rate will be given. You calculate actual cost. Actual cost means you need to multiply both. That's all. Clear? Now, sir, what is the material cost variance? We are finding out the difference between standard cost and actual cost. You can find it out in two ways. Sometimes even ICS suggested answers will give only the total calculation. That is standard material cost minus actual material cost. Here you will get adverse because actual is more. Clear? Yes. Or else you can do individually also. That is this minus this minus this, then add up. I would suggest you when they have given more than one kind of raw material, do it individually and show the total like this. Show the total also, don't miss it. You can just observe the presentation. Write the formula first. That is also very important thing. Sir, formula I have in my mind, sir. I will do only the calculation, sir. They will also give marks accordingly. Clear? They will cut the marks for sure. Please write the formula and I suggest guys to avoid the shortcuts. See, even sometimes ICI in suggested answers they will use AQ, SQ and all. But we don't know whether evaluator will accept it or not. Okay. To be safer from student angle, please try to write full forms. I know it will take little extra time. That's okay. That's okay, guys. Oh, hope you understood. That is the material cost variance. What are we calculating here? The difference between the standard material cost and actual material cost. Got it? Next. Next, sir, if I divide the cost variance into two, we get usage variance and price variance. I discussed, we had a material cost variance that will be due to two reasons. Either you have used excess quantity or you have paid excess price. I discussed at the beginning. Yes, sir. Now, either you have used more raw material or you have paid more price. So that might be the reason for material cost variance. So let us find out that. What is the formula for this? Okay, first material cost variance let us discuss, which we have already finished. Standard cost of material for actual output minus actual cost of materials, which is nothing but how do I get standard cost, sir? Standard quantity into standard price minus actual quantity into actual price. And please be careful, guys. Standard quantity should always be for actual. Okay. And if there is any variance, it will be either due to price or usage. Now we have two formula for it: price and usage. Guys, come on. If there is a material price variance, we are finding out the difference between whom? Use a quantity na price. Price. So which price will come first? Standard price. So what is the formula? Standard price minus actual price. This is the extra cost we have paid for how much quantity? Actual quantity purchased. Actual quantity purchased. And who is responsible for purchasing that? Purchase department. So if there is any adverse price variance, that is material price variance, who is held responsible? Purchase department. You didn't negotiate properly. You didn't find a better supplier. So they are held responsible. Next is usage. Now usage, what do you use? Price or quantity now? Quantity. So we are finding out the difference between the quantity. So what is the formula, sir? Standard quantity for actual output minus actual quantity. And actual quantity here, which ones are used or consumed? Because you are using it. There is a difference between purchased and used, na? Yes, I will explain that. Into standard. Who is responsible for using the raw material? Production department. So if there is any adverse usage variance, who is held responsible? Production department. Production department, because they are the one who is using the raw material. If there is excess usage of raw material, who should be held responsible? Production department. Got it? And sir, see guys, for price variance we are supposed to use whatever we are purchasing, whereas for usage we should use what is used or consumed. Clear? Normally they may not give separately. They will just give actual quantity. We will assume that quantity purchased is equal to quantity used. But if they have given opening stock and closing stock, then there is one question on illustration in ICI material about this. Clear? I have explained this even in my regular class. If there is opening stock and closing stock of raw material given, then purchase would be different, use would be different. But for academic purpose, in order to reconcile the variance, you use consume. You use consume. I have given a note here, you can see. It is always assumed that quantity purchased is equal to quantity used or consumed. Because if nothing is given in the question, we will assume. Until unless separately given in the question. Means in the question they have given purchase separately, consumed separately. Or else they have given the information about opening raw material and closing stock of raw material. In that case. If in the question both quantity purchased and quantity consumed is given, then use quantity consumed for variance calculations. Clear? Actually speaking, sir, here we should use purchased, here you should use used. Clear? But for academic purpose, you need to reconcile the variance also. Clear? If it has to tally and match, better use here also consumed, here also consumed. If they have given it separate. Sir, only they have given actual quantity in the question, sir. Assume purchased is equal to consumed. Whatever is purchased is consumed. Hope you got it. Yeah. So in simple, I repeat once again, because this should not lead to confusion for you. If by chance in the question they have given consumed and purchased separately, including the opening stock of raw material and closing stock of raw material, in the variance calculation, consider consumed. Consider consumed. Okay. And once you calculate the usage and price, guys, if you add up both, that should be equal to material cost variance. Only ensure that and then move forward. Only ensure that and then move forward. And easy to calculate also, guys. All this are once you know the logic and the formula, application is easy. Sir, use price variance. Standard price minus actual price. Okay, now into what? Actual quantities. Clear? Individually you calculate and add it up. And please be careful. One is favorable, one is adverse means. Please do the net. Okay, students always do add up and write on it. If one is favorable, one is adverse, one is negative, one is positive. So you have to do net adjust. That is where sometimes students will miss out. Clear? They will be exceptionally good in advanced topics. Some simple things like this they will miss out. Clear? So please don't give chance like that. Next, usage. Sir, what are we comparing? Quantity. So standard quantity minus actual quantity into standard price. Into standard price. Clear? You can see that. Next, coming to mix and yield variance. So usage variance is subdivided into mix and yield gas. Sir, when will this come as? Only when there are more than one kind of raw material used in the production process. Let's assume I am using three categories of raw material A, B, C. In the production, I was supposed to use 2:3:1 ratio. That is 2 kg of A, 3 kg of B, and 1 kg of C. Clear? But I have mismatched, sir. I have used more of C, sir, and less of B, sir. Something mismatch I have done. Because of that, will I get a variance? Yes. Because the cost of A, B, and C raw material will be different. So if you have made any mistake in the mix of using the raw materials, whatever variance you get is called material mix variance. Material mix variance. When do you get it? Only when there is more than one kind of raw material used in the production process. Sir, I am using only one raw material in my production process. Then this will not come. Then this will not come. Okay. Material mix variance. Sir, what is the formula for it? Revised standard quantity minus actual quantity used into standard price. Sir, what is this revised standard quantity? It is the total actual quantity which we need to break up in the ratio of standard quantity ratio. In the standard quantity ratio. So if I have to tell it in this question, we need to take this 10,700 and divide it in 4:6 ratio. 4:6 ratio. We get revised standard quantity. Simple. If this quantity was used in this ratio, what is that mix? Clear? Yes. And you will get this variance only if this mix and this mix is mismatching. You are supposed to use in 6:4 ratio, but you have used it in some other ratio. Only then you will get this mix variance. Got it? I repeat once again. Take the total actual quantity, divide it in standard quantity ratio. So I will show it. Revised standard quantity. You can see how 10,700. I have divided it between X and Y in 6:4 ratio. We will get the respective numbers. Take that here. revised standard quantity minus actual quantity into standard price. Is that clear? Sir, instead of doing it separately here, can I add one extra column here also? Yes, that is fine. If you're comfortable, you can do that. Clear? Or else, please show the calculation. If you're not done here, please show it here. I have shown here, you can see. Revised standard quantity. And the last formula is yield variance. Yield variance. What is the formula, sir? Standard quantity minus revised standard quantity into standard price. Clear? Standard quantity and revised standard quantity I already explained. Deduct each other and multiply with standard price. You will calculate it for each raw material. Each raw material. You can see here. Each raw material. We have another way of calculating yield variance. See, using this formula, I calculated for each kind of raw material. One overall formula is there. What is it, sir? Total standard input. What is the total standard input? 10,000 minus total standard, I repeat, total standard input minus total actual input into average standard price. Into average standard price. Sir, how do I get average standard price? Standard cost divided by standard quantity. You will get 8.8. Clear? Yes, sir. So find out the difference between this. You will get 700 into 8.8. I have shown it here. You can see. This is the total standard quantity. This is the total actual quantity into average standard price. This is average standard price. How do I get average standard price? Standard cost divided by standard quantity. Clear? That means you will get overall. You can see it is matching. Same thing, it is matching. Yeah. So if you want to calculate individually for each element of raw material, do this. No, sir, I will calculate overall, then you can use this. Sir, which do you suggest us in the exam? Maybe this. If it is like MCQ question and all, you can use this. Tuck, 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 tuck calculation. Yeah. If not, better use this. Okay, sir. Fine, sir. Then coming to labor. Sir, in my example, where are you? My example. Sir, we found out the reason why 2 lakh. Now let us try to find out reason why 1 lakh. There will be two major reasons. What is it, guys? Two major reasons. What is it? Either you have worked for more hours or you have paid more wages to the workers. Clear? Yes, sir. And here also, guys, one more thing. If you add up both of this, you will get equal to usage variance. Just try to reconcile at the end. If it is not matching, that means somewhere you have gone wrong. Please quickly cross-check. Clear? Yes. Yes. Now coming to labor cost variance. Sir, what is labor cost variance? Same like material. Guys, once you know material, labor is easy. Instead of quantity, here we will get hours. There it was like price or rate per unit. Here it is price or rate, or normally rate. We don't call it as price. Rate per hour. Rate per hour. So labor cost variance is nothing but standard labor cost minus actual labor cost. Then, sir, this will be due to two reasons. What are those? Efficiency, rate, or idle time. See, rate variance is how much we have paid. Guys, here itself, name itself is telling rate. So you are finding out the difference between what? Rate. Standard rate minus actual rate. And this you will pay for what? Actual hours spent. Actual hours spent. Okay, sir. Next, labor efficiency variance. Guys, efficiency can always be measured for actual hours work, the spent hour work. Productivity we will get for actual hours work. So this will always be for worked hours. So what is the formula, sir? Standard hours for actual output minus actual hours work into standard rate. Into standard rate. And sir, if there is any difference between spent and work, what do we call it as? Idle time. So we need to separately calculate idle time variance. So what is the formula? Idle time into standard rate. That's all. And it will always be adverse. It will always be adverse. So let us see now the formulas. Labor cost variance. What is the formula, sir? Standard hours for actual output into standard rate. What do we get? Standard labor cost minus actual hours into actual rate. And actual hours here means actual hours spent. Because the payment will always be made for spent hours. Okay. That will give us actual labor cost. and actual labor cost. If it is more or less than standard labor cost, then we will get labor cost variance. And if there is labor cost variance, there will be two reasons for it, either the hours or the rate. Now let us calculate that. Labor rate variance. What is the formula, sir? Standard rate minus actual rate. And here rate means will always be per hour. Will always be per hour. So standard rate minus actual rate. Into payment is made for spent hours or worked hours? Spent. So spent. Very simple. Sir, I am spending 9 hours in my office, but I am working only for 7 hours. So productivity is for 7 hours or 9 hours? 7 hours. So efficiency is measured for 7 hours, whereas the payment is given for 9 hours. So labor rate variance, we need to take for spent or work spent, whereas efficiency is for worked hours, that is 7 hours. Clear? There is a difference. Please be careful. Sir, actual hours, is it same? No, it will be different. That is only when there is ideal time. Okay. Labor rate variance, if it is adverse, guys, if it is adverse, who is responsible for it? HR department. Because you are the one who is negotiating with the workers, new workers. You should have negotiated a better price with them. Next, labor efficiency variance. Labor efficiency means, sir, efficiency is measured in terms of price or hours. Hours. So, what is the formula, sir? Standard hours for actual output minus actual hours worked into standard rate, because efficiency or productivity is given for hours worked, not for hours spent. Okay, sir. So who is responsible? If by chance, if actual hours is more than the standard hours, who is responsible? Sir, the production manager. He didn't make the workers work, or the supervisor. Okay, there will be a supervisor. Now we'll keep on telling, hey, work, why are you wasting time? He didn't do his job properly. He didn't do his job properly. Yes. So, how do we calculate work hours, sir? Spent hours, or we call it as paid hours minus idle time. Idle time. And whenever there is idle time, while calculating the labor variances, always assume it is due to abnormal idle time. It is always due to abnormal idle time. Okay. So, if there is idle time, then we need to calculate that also. Idle hours into standard rate, and it will always be adverse, guys. Always be adverse. Okay, sir. And sir, what if by chance if there is no idle time? See, you will reconcile here. Labor cost variance is equal to labor rate plus labor idle time plus labor efficiency. If by chance if there is no idle time, then obviously hours spent is equal to hours worked. So straight away, rate plus efficiency. That's all. Rate plus efficiency will give you cost variance. If question is silent about idle hours, you don't assume something and take it. You assume there is no idle hours. You assume there is no idle hours. Okay. And I am telling you again, whenever they have given idle hours, please assume it to be due to abnormal reasons. So that is why we are doing a separate calculation for it. If it is due to normal reason, we ignore it. We ignore it. Okay. Fine, sir. So we got this. Or even idle time. Next, sir, efficiency variance can be subdivided into labor mix variance and yield variance. Very similar to material. Very similar to material. Guys, for material mix variance, what was the formula? Revised standard quantity minus actual quantity into standard price. Here, instead of quantity, bring hours. Standard hours minus actual hours. Hello, actual hours spent or work done. Guys, simple logic. For efficiency, you are using work of spent. Work. And this two are the subdivision of efficiency. So what should you use? Work. Common sense. Correct. You have to use work. So revised standard hours. Revised standard hours minus actual hours work into standard rate. Whereas here, standard hours for actual output minus revised standard hours into standard rate. Clear? Yes. Sure. Let us see. Labor mix variance or gang composition variance. Sir, when will this variance come? Guys, only when there are more than one category of workers used in the production process, like skilled, semi-skilled, unskilled. Sir, only if there are one category of workers working in the manufacturing process, then you will calculate only till here. Clear? Yes. So, for example, why is this mix variance, sir? Simple, guys, listen. Sir, there are skilled, unskilled, and semi-skilled workers. To produce each and every unit, I was supposed to use 2 hours of skilled workers, 5 hours of unskilled workers, and 3 hours of semi-skilled workers, sir. This is what was standard proposition. But now I have mismatched this. I have used more of skilled. That means payment will be more, na? Clear? Yes. So that means I have missed out that mix. And gang, why are you calling it as gang? All these people put together gang. Boys gang irutal. Okay, or even girls gang will be there. Clear? So like that. Sir, the group of workers is called gang. Correct, Tejaswini? Group of students is called gang. Same way, group of workers is called gang. So mixed variance, we also call it as gang composition variance. So if there is any mismatch of the hours of each category of workers, then we will have adverse mixed variance. Okay, sir. Now here, sir, what is the revised standard hours? Simple. Take the total actual hours worked, divide it in standard hours each. What do you divide? Total actual hours worked. Guys, here you will take this now. Same thing, total you take. Divide it in standard hours each. Clear up? Yes. So formula is revised standard hours minus actual hours worked into standard rate. Next coming to yield variance. Standard hours minus revised standard hours into standard rate. Here also we can use the alternate formula. What is that alternate formula I told you? Total standard hours minus total actual hours work into average standard rate. How do we get average standard rate, sir? Standard cost divided by standard hours. Got it? Yes. Let me also show it in the question, guys. Just a minute. You can see here. I'm just showing you how to apply it. First, always prepare a table like this. This will help you in variance calculation. This is standard data. This is actual data. Always ensure that standard is for actual. Even here, they are given the standard data for 1 unit. 1 unit they are given in this. They are given for 1 unit of output. Convert it for actual output of 10,000. Okay, we have done it here. We have done it. Okay. Once we have got standard hours, multiply that with standard rate, we will get standard cost. Same way, actual hours spent would be given in the question. Clear? That is paid hours. This is the hours for which payment is made. Multiply that with rate, you will get actual cost. Clear? And when you are calculating the labor cost variance, you should always straight away deduct each other. Sir, standard cost minus actual cost for each of them. Clear? Or else you can do it total also. Standard cost minus actual cost. I suggest you to do individually and then show the total. Yeah. Then coming to rate. Sir, standard rate minus actual rate into what? Actual hours spent. Spent. Clear up? Yes, sir. Same way we have to do for all three and do the total. You can see here. And here we are taking spent. Please be careful. Next, coming to efficiency variance. For efficiency variance, we need work. So in the question, if they have given any information about idle time, deduct idle time from hours spent, guys. What do you get, sir? Actual hours work. We have got actual hours work. Clear? If possible, if you have space, you can add one more column here. Actually, two more. One is for idle time, the other one is for actual hours work. Hey, two column extra you have to add. One is idle time, the other one is actual hours work. Sir, no space, sir. Then better present lines. Then better present line this. Even revised standard hours will come for that one additional column. So if you don't have so much space, better present it separately. Hope you understand. Please calculate this separately. Normally this will not be given directly. Okay, sir. Then, so for efficiency we use that. For efficiency we use it. What is it, sir? Standard hours minus actual hours work into standard rate. And anything which comes under efficiency will always be for work. Okay. Then also calculate idle time variance. Idle hours into standard rate. And it will always be adverse. Normally, guys, while calculating the variance, if you get positive answer, favorable, negative answer, adverse. But for this, don't go for, sir, positive answer I got, sir. Multiplication, no negative symbol at all. So I will write favorable. No. Idle time is always a curse for a company. Clear? Because they are incurring the expenditure for the product output, which they have not got. No productivity, but still payment is happening. Okay, sir. Now you add up all these three, guys. Idle, efficiency, and rate. Cross check whether it is matching cost variance. Clear? Only in totals you can check. Don't check it individually and all. Better check it in total. Just plus this plus this. Everything is adverse. Is it equal to cost each? Clear. Only then you proceed further. If not, somewhere something has gone wrong, please cross check quickly. Then coming to mix and yield. Mix we need to calculate revised standard hours. Guys, how is it? Take this actual hours work total, divide it in this ratio. 2 is to 3 is to 5. Total actual hours work in standard hours ratio. Standard hours ratio. Let me just show it. You can see. This is the total actual hours divided in standard hours ratio. Standard hours is simplified here. And ensure that total you will get same 1,07,000. Then you will also calculate yield variance, which is standard hours minus revised standard hours into standard rate. Once the data is ready now, just placing them. Apply the formula, place them. That's all. Tuck, 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 tuck. And don't take too much time for it. Yeah. And see, if you can do this calculation without calculator, do it. But if you're not confident, better use calculator. Yeah, because instead of writing favorable, you will write adverse. Instead of writing adverse, you will write favorable. So all that confusion don't want. Okay. So when you're doing, please follow the same order in the calculator also. So if you get positive answer, favorable. Negative answer, adverse. Then for this, we have alternate formula also. I told you. What is it, sir? Total standard hours, which is 1 lakh. Take it here. I have done it here. Minus total actual hours work, 1,07,000. Into average standard rate. How is it, sir? 3,90,000 divided by 1 lakh. We will get 3.9. Okay, now, so this is nothing but the total yield variance. Fine, sir. So clarification I have given. If any information in the question is relating to standard is given for other level of output, we call it a standard quantity, because sometimes standard data might be given for 100 units, but actual output is for 1,000. So divided by 100 into 1,000. That is always convert the standard quantity as well as standard hours for actual output price. Now coming to overhead variance. Guys, whatever we discussed, material and labor will always be direct in nature. Whatever material variance and labor variance we discussed, that is with respect to direct. All indirect expenses will come under overhead. And overhead we will subdivide it to variable and fixed. But before we learn the overhead variances, sir, we should know how to calculate few rates. How is it, sir? Simple. Guys, I will try to explain with this example. Here they will use the word budgeted and all. So please be careful. Listen, guys. They will give budgeted data, actual data. Budgeted is nothing but your target, which they have set at the beginning of the period. Actual is what you have achieved, what you have exceeded. Okay. Chalo. Production, 1,000. We call it as budgeted output. This is actual output. Then labor hours, budgeted hours, actual hours. Then overhead cost, budgeted overhead cost, actual overhead cost. Oh. Now you need to do some calculations, guys. I have just taken overall here and not divided variable, fixed and all, but same calculation for variable as well as fixed. You need to calculate the variances separately, but I have just taken overhead here just to explain you the concept. Sir, how do we calculate? For example, here, standard overhead rate per unit, 10 lakh divided by 1,000. That is nothing but budgeted overhead cost divided by budgeted output. Divided by budgeted output, you will get 1,000. Same way, sir, actual cost per unit. It is 8 lakh divided by 800. 1,000 rupees. Got it? Then coming to, sir, standard overhead rate per hour, sir. 10 lakh divided by 8,000. Which we call it as budgeted overhead divided by budget hours. You will get per hour. Per hour output. Same way, sir, I want to calculate actual overhead rate per hour. How do we calculate it, sir? Actual overhead divided by actual labor hours. Got it. Hope you understand. Especially the standard calculations we need to do. Standard overhead rate per unit, per hour calculations and all we need to do, because this will help us in our variance calculation. Now, guys, when we are observing the overheads and all, it will always be based on standards. So here what they have given is not standard hours, it is budgeted hours. Sir, what is the difference between budgeted and standard? Guys, budgeted hours will always be for budgeted output. Whereas standard hours, we need to convert it for actual output. Sir, how is it? Simple. You can see standard hours for actual output. Sir, 8,000 is for 1,000 units. How much for 800 units? How much for 800 units, guys? Is that clear? So if you divide 8,000 by 1,000, how much you get? 8. Correct? Into 800. You will get 6,400. What do we call this as? Standard hours. Standard hours is different. Budgeted hours is different. I repeat once again. Budgeted hours is always for budgeted output. Whereas standard hours, we need to convert it for actual output. How is it, sir? Simple. 8,000 is for 1,000 units. How much for? 800 units. That means to produce 800 units, how many hours you were supposed to take? You were supposed to take. Hope you understood, guys. Here, budgeted is different, standard is different. Means with respect to hours. Now, we will observe the overheads for each and every unit produced because we would have fixed predetermined overhead rate. Correct? This is the predetermined overhead rate, guys. This is per unit per hour. Now, what is the standard hours? 6,400. How much overhead we have observed? For each unit, 125 into 125, 8 lakhs. Or else we can go with units also. Observe. For each unit we produce, how much overhead we will absorb? 1,000 rupees. How many units we have produced? 800. So 800 into 1,000 will give us overhead absorbed. This is nothing but overhead absorbed, guys. 8 lakh, 8 lakh. You will get same. You can calculate it based on hours or output. Hours means it should always be for actual output. What hours? Standard hours. How much is my standard hours? 6,400. For each hour we work, what is the overhead we should absorb? 125. So 6,400 into 125. How much do you get? 8 lakh. We call it as overhead absorb. Clear? Then, sir, can I calculate in another way? Yes. What is the overhead rate per unit? Predetermined overhead rate. We discussed in overhead chapter also, na? Yes, this is nothing but predetermined overhead rate fixed based on budgeted. Yes, sir. For each and every unit I produce, how much will I absorb? 1,000 rupees. How many units I have produced? 800. So how much I would have totally absorbed? 1,000 into 800, which is 80. Either way you can do, you will get same. Yeah, but please be careful when you are multiplying here. That is the rate per hour. Take standard hours. Standard hours. This is what you were supposed to take to produce 800 units. Hope you understood. So these are some basic calculations which you have to keep it ready first. Then you apply the formulas and calculate the variances. So I have given here, you can see. Standard overhead rate per unit. How do you calculate? Budgeted overhead divided by budgeted hour. Then standard overhead rate per hour, how do you calculate? Budgeted overhead divided by budgeted hours. How do you calculate standard hours for actual output? Budgeted hours is for budgeted output. How much for actual output? How much for actual output? Then standard output for actual hours. Budgeted output is for budgeted hours. How much for actual hours? Okay, especially these three are important calculations. Got it? Yes. Budgeted hours will be for budgeted output, where standard hours will be always be for actual output. Clear? So means budgeted hours only, we will convert it for actual output. What do we call that hours as? Standard hours. When I convert my budgeted hours for actual output, we get standard hours for actual output, like how we did for labor calculation. Oh, variable overhead variances. Now, the overhead is classified into two. It can be variable or it can be fixed. Sir, what about material and labor? Whatever we discussed, I already told it is direct. When it is direct, it is always variable in nature. Okay, sir. Variable overheads consist of expenses other than direct material and direct labor, which vary with the level of production. Any cost other than direct material and direct labor, which will vary with the output or level of production, we put it under what? Variable overhead. Means it will vary with the production, means higher the production, higher will be the cost. Lower the production, lower will be the cost. Like that. Okay. If the way, and I am not telling it is direct in nature. Any overhead obviously it will be indirect in nature. Is it directly attributable to my product? Can I tell for each and every unit how much I am incurring? Maybe not. But is it varying with my production? Yes. So we call it as variable overhead. If variable overhead consists of like indirect materials, then in this case it varies with direct material used. On the other hand, if variable overhead is depending on the number of hours worked, then in this case, it will vary with labor hours or machine hours. So if nothing is mentioned in the question, we will assume it based on labor hours or machine hours. So variable overhead variance is classified into two: variable overhead expenditure variance and efficiency variance. First of all, how do we get variable overhead cost variance? Variable overhead, cost variance. What is the formula? Standard variable overhead for actual output minus actual variable overhead incurred. This is nothing but whatever actual cost is incurred. And please be careful, guys. Here we are doing only variable calculation. There will be a fixed calculation separately. Yeah, yes. Variable overhead cost variance calculation is very similar to labor cost variance. What was the formula, sir? Standard labor cost minus actual labor cost. Now here also, how do I get this, sir? Standard variable overhead for actual output. How do I get it? Simple. Whatever is the standard variable overhead rate per hour, multiply that with standard hours. Multiply that with standard hours. You get it. The standard variable overhead for actual output. Or else standard variable overhead rate per unit, multiply it with actual output. You get this. Got it? Next, we will subdivide this into expenditure and efficiency. Guys, very similar to labor variance. In labor, we had labor rate variance. Now, what was the formula for it? Standard rate minus actual rate into actual hours spent. Actual hours spent. Correct? But here we will always take work. So what is the formula, sir? Standard variable overhead rate per unit, per hour, minus actual variable overhead rate per hour into actual hours worked. Here it should be actual hours worked. Clear? Yes. Same way. I have given similar to labor rate variance. Next one, variable overhead efficiency variance. Very similar to labor efficiency variance. What is the formula for labor efficiency variance, guys? Standard hours for actual output minus actual hours work into standard rate. Here also same to same formula, but instead of writing only standard rate, we need to write standard variable overhead rate per. Here are same to same formula. Standard hours minus actual hours work into standard variable overhead rate per hour. Sir, how is this calculation? Let me quickly show it. Just a minute. See here, when it is overhead variances, guys, you can get three kind of questions. One question only on variable overhead variance. The other question is only on fixed overhead variance, or else they may combine both and ask one single question. Yeah, yes. So in the class, actually, I have done all three types. Individually for variable, individually for fixed, one combined question. I'm going with that one combined question. Guys, budgeted data is given, actual data is given. Now, first we will focus on variable part. Sir, first standard variable overhead rate per unit per hour we need to calculate. How is it? Takes budgeted variable overhead, divide it by budgeted output. You will get the standard variable overhead rate per unit. 30. Same way. Sir, per hour I need. How do you do? 1,20,000 divided by 8,000 hours. Here machine hours is given. So you will get 15 rupees per hour. Standard variable rate per hour. Then we also should calculate standard hours for actual output. Sir, budgeted hours is for budgeted output. How much for actual output? We get standard hours 7,600. Then even actual variable overhead rate per hour is calculated, which is nothing but actual variable overhead divided by actual hours. Okay, now translate the values in the formula. Variable overhead cost variance. What is the formula, sir? Standard variable overhead for actual output. How do we get it? Standard hours into standard rate per hour. Or else, you can also do it in another way. How is it, sir? Actual output 3,800 into the rate per unit 30. I have done it here. I have shown it. Actual output into rate per unit. Or else, standard hours into rate per hour. Both will give you same. Minus actual overhead. You will get same answer. This is just an alternate calculation. I have not done two different calculations. Yes, sir. Next, expenditure variance. Standard rate per hour is how much? 15. Minus actual rate per hour, 15.38. 15.38 into actual hours. Guys, as we have got decimal here. If you want to avoid the difference, then better take as it is. If I want to avoid the difference, then take this. You can see I have considered the same 120 divided by 7,800. Because if I take 15.38, which is a decimal, you might get some difference. If you are reconciling, it will not. So in order to avoid the difference, you can do it. Sir, when I do this calculation, how will I do it in calculator, sir? Simple. You do 15 into 7,800 minus 120 divided by 7,800 into 7,800, which will give you 121. Clear? Hope you understood. 15 into 7,800, you will get 1,17,000. Here, cancel this out. You will get 120. Take as it is. So 3,000 adverse. By doing this, we are avoiding the difference. We are avoiding the difference, guys. Nothing wrong even if you take 15.38 here, but you will get some minor difference. Okay. Then efficiency variance. Standard hours minus actual hours into standard rate per hour. So everything is already ready. Just start. Clear? So 3,000 adverse, 3,000 adverse should be equal to 6,000 adverse. Matching, sir. Matching is okay. Let us move forward. And guys, till now, whatever we have discussed, all the variances which is having positive, favorable, which is having negative, adverse. Until now, whatever we have discussed, standard always first, actual next. Clear? Whereas under fixed, in two places it will change. Clear? Yes. Fixed overhead variances. Fixed overhead represents all items of expenditure, all items of expenditure all items of expenditure which are more or less remain constant irrespective of the level of output. Sir, how much ever the level of output changes, the cost will remain same, sir. We call them fixed overhead. So fixed overhead cost variance can be divided into fixed overhead volume variance and expenditure variance. And volume can be subdivided into three, which is efficiency, capacity, and calendar. And when there is calendar, we will calculate the revised capacity variance. Okay, if there is no calendar, then we will calculate only two. If there is calendar, then we will calculate capacity also, but that is revised capacity. Revised capacity. And when do we calculate calendar variances? Only when they are given the number of days information in the question, like budgeted days and actual days. Oh, pay attention. Fixed overhead cost variance. Fixed overhead cost variance is the difference between the actual fixed overhead and absorbed fixed overhead. Guys, in overhead chapter, we used to calculate under absorption, over absorption. Nothing but that only. Here, they are not calling it as under absorption, over absorption. They are calling it as variance. There also it was difference only, people. Overhead absorbed minus actual. The difference is to be under absorption or over absorption. Here also same to same we are calculating, but they are naming it as overhead. Sorry, variance. They are naming it as variance. Chalo. What is the formula for fixed overhead cost variance? Absorbed fixed overhead minus actual fixed overhead. Sir, how do we calculate the absorbed fixed overhead? Recall your overhead knowledge. We will first fix predetermined overhead rate and assume it is per unit 100 rupees. For each and every unit we produce, how much we will be observing? 100 rupees. Correct? Yes. So, observed can be calculated in two ways. I have written the equation here. You can also write the RMR. Observed fixed overhead is equal to Chinmay. Right? Put the RMR. Manjunath done? Observed fixed overhead is equal to standard hours per actual output. How do we get standard hours? How do we get standard hours? Budgeted hours divided by budgeted output into actual output. Yes. Standard hours for actual output into standard fixed overhead rate per hour. How do we get this? Budgeted fixed overhead divided by budgeted hours. Oh, we'll get standard rate per hour. Or else the other way one is observed fixed overhead is equal to actual output into standard rate per unit. Please be careful. If this is the output, here you have to take rate per unit. If this is hours, then you have to take per hour. Both the ways you will get same answer. Both the ways you will get the same answer. Okay, sir. Then fixed overhead expenditure variance. What is the formula, sir? Budgeted minus actual. What is budgeted? They would be given in the question. Budgeted overhead will always be for budgeted output. Take as it is. Take as it is. Sir, what is the difference between budgeted and absorbed? Guys, absorbed, I have converted the budgeted data for what? Actual output. Clear? Means if predetermined overhead rate was absorbed for actual output, how much it would have been? Clear? Whereas budgeted will always be for budgeted output. Budgeted fixed overhead will always be for budgeted output. Whereas actual is for always actual. Actually, what is clear? Sir, how come, sir? Confusing terms. Listen. There is a difference between all three. Observed means if I am following the standard rate to observe on actual output, how much will I get? Clear now? Standard rate I am following to observe for what? Actual output. How much do I get? Whereas budgeted is budgeted cost for budgeted output. Whereas actual is actual for actual output. Actually, how much you have? Clear? Yes. So this is like a mix of both. Rate is standard, but output is actual. Whereas this is both budgeted. Whereas this is both actual. So this is like a combination of both. Observe. Clear? Right? Yes. Sure. So fixed overhead expenditure variance. What is the formula, sir? Budgeted fixed overhead minus actual fixed overhead. Whereas overhead volume variance. What is the formula, sir? Observed minus budget. Observed minus budget. There is a chance of that you might get confused. So please be careful, guys. Here observed minus observed. A minus A. Yeah. Whereas here B minus A. That is budgeted minus actual. Whereas last one, that is volume. It is A minus B. A minus B. Okay, sir. Next. Oh, first, let me discuss this with the question. Sir, coming to fixed data. How can we calculate fixed overhead rate per unit and per hour rate? Guys, simple. We have fixed budgeted overhead divided by budgeted hours. You will get standard fixed overhead per hour. If you divide 4 lakh by budgeted output of 4,000 units, you will get standard fixed overhead rate per unit. Got it? Yes, sir. Don't assume the variable and fixed rate per unit per hour will be same, Anta. It will be different. You can just observe in this question only. Yes. So we have got per unit 100, per hour 50. Let us see. Fixed overhead cost variance. Observed fixed overhead. How do we calculate it, sir? If I observe based on hours, 50 hours 50 rupees into standard hours. Standard hours, how much? 7,600. Hours data will remain same for both fixed and variable. Yes, sir. Sir, what if I use output data? Then per unit. Per unit into actual output. 3,800. You will get same. You will get same. Minus actual fixed overhead. You are getting 10,000 adverse. Next, fixed overhead expenditure variance. Budgeted, which is given in the question for budgeted output only. Minus actual. Both will be given in the question. Don't worry. Both will be given. This minus this. That's all. Budgeted minus actual. Then volume variance. Observed minus budget. Observed minus budget. Okay, observed we already calculated minus budget. Just cross check, is it matching? 20,000 favorable and 10,000, sorry, 20,000 adverse, 10,000 favorable. You will get 10,000 adverse net. Sir, is it equal? Yes. Only then proceed further. Only then proceed further. Okay, let us now proceed further. Fixed overhead efficiency variance, similar to labor efficiency variance. What is the formula, sir? Standard hours for actual output minus actual hours, that is nothing but work, into standard fixed overhead rate per hour. Guys, one thing you keep, whenever you are finding out the difference between hours, even the rate should be per hour. Okay, sir. Efficiency variance. Next, coming to capacity variance. Guys, these two formulas are different. Please be careful. Till now, wherever we have calculated the variance, we have always taken standard first, then actual. Okay, for all the variants. Whereas here for this, it was a bit different. Whereas for all other variances, it was always standard minus actual. Positive means favorable, negative means adverse. Clear? Now we are thinking from capacity utilization point of view. Now guys, assume my capacity was to budgeted hours to work for 100 hours. But I have worked only for 80 hours. Good or bad? With respect to capacity utilization? Bad. We have underutilized the capacity. You have underutilized the capacity. Clear. So will you have positive or adverse variance? Adverse variance. Or else, assume my budget balance is 100, but I work for 110. I use the capacity to the best. Overutilization. Clear. So will you have positive or adverse now? Positive. Clear. So that is why the position is interchanged. When it comes to capacity, guys, if actual is more, good. If actual is less, bad. If actual is less, that means what, sir? We have underutilized the capacity. Guys, here we are not thinking from cost point of view. We are thinking from what point of view? Capacity utilization point of view. Sure, should actual be more or less? Sir, it should be more, sir. It should be more. Okay, so actual hours minus budgeted hours into standard rate per hour. Clear? So please be careful here. The positions have changed. We are taking actual first, then budgeted. Then coming to fixed overhead calendar variance. Sir, here also we are talking with respect to the our days worked. Now assume I was supposed to work for 30 days. I have worked only for 29 days. Good or bad? Bad. I have worked one day less. That means one day's productivity we have lost. Yes, adverse variance. Same way. Assume guys, I was supposed to work for 25 days, but I worked for 27 days. Good. You have produced more. Good. See, obviously, if I have worked more, cost is more. But here we are not thinking from cost point of view. Did we work more or not? Did we use the capacity more or not? We are thinking from that point of view. Clear? So here also, if actual days worked is more than budgeted, it is always good. So we are taking actual first minus budgeted. Guys, what is the formula? Calendar variance. Actual days minus budgeted days. You will get the difference in days or hours or days. So rate should be per day. Per day. Sir, how do we get it? Simple. How do we get the rate per day? Simple, simple. Listen, listen here. Budgeted fixed overhead divided by budgeted days. Budgeted fixed overhead divided by budgeted days. That is the standard fixed overhead rate per day. See, by mistake, student might take here per hour, guys. Please don't do that. You are finding out the difference between days, not per hour. So even the rate should be per day. Per day. Hope you got it. Yes. And whenever you get confused with this, sir, should I take actual first or budgeted first? Just see, should actual be more or less? If actual is more with respect to capacity and work days, it's always good. So take actual first. If actual is more, it is favorable. It is favorable. Okay. And whenever we calculate calendar variance, then instead of calculating capacity variance, we need to calculate revised capacity variance. Revised capacity variance. Sir, what is the formula? See, same thing, capacity, but this will change. What is it, sir? Actual hours minus revised budgeted hours into standard fixed overhead rate per hour. Sir, how do we get revised budgeted hours? Budgeted hours is for budgeted days into actual days. Means in simple, budgeted hours we are converting for actual days, sir. So let me show it here. How do we calculate it, sir? Simple, simple. Listen, listen. Budgeted hours divided by budgeted days into actual days. Into actual days. So you can see, I will show the calculation. In this question, calendar variance is there. Okay, that is actual minus budgeted into standard rate per day. So we are calculating capacity as revised capacity. So what is the formula, sir? Actual hours minus revised budgeted hours into standard rate per hour. So how do we get the revised budgeted hours? 8,000 budgeted hours divided by budgeted days into actual days. Into actual days, guys. Okay, fine. General note at the end. What is that general note, sir? Whenever just a minute. Yes. Whenever the variance is positive, then it is known as favorable variance. And when the variance is negative, we call it as unfavorable variance. But ideal time variance will always be adverse. Will always be adverse. And unfavorable and adverse is one and the same. Yes. Unfavorable is otherwise called as adverse. Fine. So we are done with discussing the standard costing. To the extent possible in this short period, I have tried to explain you each and everything. But if you have already attended the regular class, you will be knowing each and every formula. I have gone in detail and I would have explained you guys. Because this formula should not be mug up. You need to understand what you are calculating. Accordingly, you can only derive the formulas. Okay, which is very, very important. Because if you try to mug up and if you try to keep it in your mind, you cannot retain it for a long period. So this is all about standard costing. Yes, students. Now we will revise chapter 14, which talks about marginal costing. So before we learn marginal costing, we will see, sir, what is marginal cost? Then we will understand what is marginal costing. Guys, marginal cost means the cost of producing one additional unit. Sir, I was producing 1,000 units. Now, if I produce 1,001 units, will the cost be same? No, it will increase. So that what is that additional cost is called marginal cost, which is nothing but variable cost. Why is that? Because if I produce 1,000 units or 1,001 units, my fixed cost will remain same, sir. Will it change? No. The only cost which will vary along with my output is variable cost, which is nothing but marginal cost. So marginal cost and variable cost is one and the same, sir? Yes. So even if you have seen, whenever there is a semi-variable expenses or semi-fixed cost, sir, how do we compute variable portion and fixed portion? We will do a calculation. Normally, the data would be given for two activity level or for two period. Calculate change in cost divided by change in output. You will get variable cost per unit, which is nothing but marginal cost. Clear? Yes, sir. So you can see, I have given an example also. Guys, to produce 10 units, our cost was 10,000. Now to produce 11th units, we have incurred a cost of total 10,500. So what is the additional cost we have incurred to produce one additional unit? 500, which is nothing but variable. Clear? And marginal cost will include what and all, sir? Prime cost plus variable overheads. Variable overheads. Overheads can also be fixed. Will it be a part of my marginal cost? No. So marginal cost and variable cost is one and the same. Now coming to marginal costing. Sir, it is a method of technique. It is a technique. It is a technique used by the management for decision making within the organization. That is internal decision making. And marginal costing is a technique where we consider only variable manufacturing costs to value the products. So the product cost is only variable manufacturing cost. Sir, what if I incurred any fixed cost for manufacturing? Then we will treat it as a period cost. We will treat it as a period cost. So we need to first task under marginal costing is to segregate variable cost and fixed cost. And when we calculate as a format type, if I deduct all my variable costs, whether it is manufacturing, non-manufacturing, everything, if my entire variable cost is reduced from the sales, we get something called as contribution. And from my contribution, if I reduce all the fixed costs, then we get the profit. But under marginal costing, they are not bothered about this. They are not bothered about this. Why, sir? Simple logic is, sir, if my decision can influence it, we will consider. Will my decision influence the fixed cost? No. Accordingly, they don't consider the profit also. So any decision under marginal costing will be made based on either variable cost or contribution. Why, sir? Because only variable cost is in my control. Whereas the fixed cost is not in my control, let me not worry about it. As I cannot make any changes in that, why will we consider? And please be careful, marginal costing is always used for internal decision making. Something opposite to marginal costing is there, which is called absorption costing. Absorption costing is also called as full cost technique. They will tell cost is cost. Whether it is variable or fixed, we don't care. I have incurred a cost of 10,000. Yes, we will record. And absorption costing system will record all the manufacturing costs to value the products, whether it is variable or fixed. Got it? Under absorption costing, my inventory will always be overvalued. Why, sir? It will include one additional element called fixed manufacturing overhead. And anything which is not related to production, they will treat it separately. They will treat it separately. Yes. And absorption costing system is used for external reporting purpose or for income tax purpose. External reporting means, guys, when you are preparing the financial statements in your accounts, have you ever bothered about how much is variable, how much is fixed and all? No, just record all the expenses. Same way, in income tax also, you will bother about what is allowed, what is disallowed under the PGBP. But do you care about, sir, what is variable, what is fixed, what is controllable, what is uncontrollable? No. So for income tax purpose and for preparing the financial statements, we always follow a technique called absorption costing. That is for external purpose. We always do this for external purpose. Correct? Income tax calculation is for income tax department, whereas financial statement is for the user or the shareholders. Yeah. Whereas within the organization, to make various decisions, we use a technique called marginal costing. Is that clear? Yes. So if I have to give an example also, I have made one example here. Just a minute. Yes, you can see. Guys, direct material cost to produce a product is 250. Means we are using 10 kg of raw material at 25 rupees each. 250. Direct labor is 2 hours at 200 per hour, so 400. Variable manufacturing overhead is 50. And fixed manufacturing overhead is 100. So total manufacturing cost per unit is what? 800. If I am following the marginal costing, if I am following marginal costing, I will value each and every unit at what price? Sir, only this much. That's 700. Whereas if I am following absorption costing, I will value each and every unit at what? 800. Let me go little one step ahead and explain you. Guys, assume I have produced 1000 units in a month. In that 800 I have sold, 200 is the closing stock. Sir, how do I value it? How do I value each of them? Product cost is 700 under marginal. I told you, which includes only variable portion. Clear. And guys, please be careful. This is only related to manufacturing. Over and above that also there might be other variable cost and all. Clear. For example, variable selling expenses, variable administration overhead. Yes. See, when we are calculating contribution from sales, we will reduce all the variable costs. We get contribution. But while valuing the product, we will take only the variable manufacturing portions. Clear? That is nothing but prime cost plus variable manufacturing overhead. Clear? Which gives us 700 here. Whereas under absorption, it is 800. Now, if I ask you what is the cost of production, 1000 into 700 under marginal costing, whereas 1000 into 800 under absorption costing. Whereas if I ask you cost of goods sold, because there is a closing stock, what is the cost of goods sold? 800 into 700, 800 into 800. So what is the cost of closing stock under marginal costing? 200 units into 700, whereas under absorption 200 into 800. So they may ask MCQ question and all, guys, like this. And under absorption costing, can I tell my closing stock will always be overvalued? Yes, because of one element, which is that fixed manufacturing overhead. Got it? Yes. So please be careful. We call this as product cost. Product cost under marginal costing. Whereas under absorption costing, the entire manufacturing cost is a product cost. Sir, under marginal costing, you told we will consider only this as product cost. What about under it? We call it as period cost. We will charge it to the profit. That is P&L account. Is that clear? We consider only variable manufacturing expenses. Even direct material and direct labor is also part of manufacturing expenses only. Whereas this is variable manufacturing overhead, which is like your factory overheads. Okay, sir. Coming back to this. So first thing which we have to do under marginal costing is to differentiate variable cost and fixed cost. Marginal costing is also called as variable costing or differential costing or direct cost. Direct costing is nothing but, sir, whatever 700 I took, is it directly attributable to my products? Yes. So we also call it as direct costing. Okay. Under marginal costing, inventory is valued at what and all, guys? Only variable cost. That is direct material, direct labor. I had told you, hope you remember, prime cost is always variable in nature. Even if by chance if other direct expenses comes, even that also we will take it. Clear? Plus variable manufacturing overheads. Okay. Guys, now coming to one of the important, guys, this is the format of marginal costing. Format looks very simple and plain, but lot of things are there in this. So what is the format we follow in marginal costing? Sales minus variable cost will give us contribution. Sir, here variable cost means only manufacturing variable cost or all variable cost? All variable cost. Total variable cost. You get contribution. minus fixed cost will give you profit. And as I told you, any decisions under marginal costing we will make either based on variable cost or contribution. Why, sir? Because only those things are in my control. If I take any decision, which cost can I influence? Only variable cost. Yeah, yes, sir. Now, guys, listen. Sir, there is something called as like break-even sales and all. We will discuss one by one. First, PV ratio. Sir, what is PV ratio? Profit volume ratio. We also call it as like CVP analysis. Means, sir, if quantity or volume changes, how will it affect our profit and cost? Will it affect, sir? Yes. But which cost? Only variable cost. Clear? If quantity is nothing but the level of production, if quantity or volume changes, will it affect my cost and profit, sir? Yes. Clear? Yes. Why, sir? How will profit affect? Guys, higher the contribution, higher will be the profit. Why is that? Because fixed cost will remain same. So if you can earn more contribution, that will lead to what? More profit. Clear? Now, what is PV ratio? The first item under this calculations are PV ratio, profit volume ratio. Actually, the name used is profit. It is actually contribution. Clear? Sir, profit means what, sir? Profit divided by sales into 100. Correct? But actually, we are not doing that. We are doing what? Contribution by sales into 100. It should have been called as contribution to sales ratio or contribution volume ratio. Clear? So it is a wrong name, but still, this is what they will ask in the exam also. You don't tell. PV ratio means profit by sales. If I go by name, that is what actually we can understand. But what we are supposed to calculate is nothing but contribution by sales into 100. So in simple, PV ratio means how much is my contribution when compared to sales price. We normally express this in percentage. So always multiply with 100. Clear? Yes. Now, if my contribution or PV ratio is 20%, how much is my variable cost? 80%. Balancing figure. Correct? Yes. Or else, if my contribution is 30%, how much is my variable cost? 70%. Because sales minus variable cost only will give us contribution. Got it? Yes. Next, we have something called as break-even sales. Break-even sales. Sir, what is break-even sales? This is the sales level at which my total cost is equal to sales. Total cost includes both fixed as well as variable. Clear? So break-even sales is the sales where the total cost is equal to total sales, or no profit, no loss. Because total cost is equal to sales, right? So no profit, no loss. That means, assume guys, my break-even sales is 1 lakh units. Below 1 lakh units, I will be suffering loss. Above 1 lakh units, I start earning the profit. So if my break-even sales is 1 lakh units, assume my actual sales is 120. That 20 is what? Margin of safety. So that margin of safety will bring me profits. Clear? Now listen. Sir, at break-even sales, there is zero profit. Zero profit. That means, can I tell at break-even point, contribution is equal to fixed cost? Because profit is zero, right? Yes, they both will be equal. For example, this is 10 lakh, this is 10 lakh. So profit would be zero. Clear? I told total cost will be equal to sales, break-even sales. But I can also tell at the break-even point, the contribution will be equal to fixed cost. Why, sir? Because profit is zero. Profit is zero. Or else I can also tell my sales is equal to total cost. One and the same. One and the same. Now, sir, till I reach break-even point, my contribution is less than fixed cost. That means I will be having a loss. Once I cross break-even point, assume guys break-even point is like 10 lakh rupees. Once I cross break-even sales, that is over and above 10 lakh. Assume I have made a sales of 12 lakh. 2 lakh is my cushion, safety. What is it called as? What is it called as, sir? Margin of safety. Margin of safety. Now I repeat, my actual sales is 12 lakh. My break-even sales is 10 lakh. So my 2 lakh is what, guys? MOS, margin of safety. Like when used for exemption, are saved. Okay, even if I have to write other papers next time, but this paper, exemptions are clear like that. Margin of safety. This will come only after you achieve break-even sales. So for this, should I incur any fixed cost? No. Because I would have already recovered all my fixed costs. If I produce more and sell more, should I incur more fixed cost? No, sir, it will remain same. So can I tell for this 2 lakh, I will incur only variable cost? Yes. So now listen. For this 2 lakh, can I also tell contribution is equal to profit? For 2 lakh sales, can I tell contribution is equal to profit? Yes. Why? Because for 2 lakh, I will be incurring only variable costs. If I multiply with PV ratio, I will get contribution. As fixed cost would be 0 for it, that is equal to profit. That is equal to profit. Is that clear? Because all these techniques or concepts will help you in the questions. If you just mug up the formula, that will not help you, because sometimes if straightforward question is asked, just apply the formula, calculate. If not, you need to use few techniques. Clear? Yes. So, what are the assumptions under CVP analysis? We will see. So, under CVP, first, what do we do, guys? We will learn the relationship between cost, volume, and profit. Means if volume changes, that is quantity, will my cost and profit change? Yes. So, certain assumptions under the CVP analysis. Costs are bifurcated into variable and fixed. Fixed cost will remain constant and will not change with the level of output. That is total fixed cost. Whereas variable cost per unit remains same. Whereas total variable cost will vary with my level of output. Selling price also will remain constant until unless given in the question. If nothing is given, we will assume all this will remain same. They only told selling price is increased by 10%, selling price is decreased by 10%. You will remember the assumptions. How can it change? Write the note. No, selling price cannot change. How can you give it in the question? Wrong question, please give me grace marker. Sure. So if nothing is given in the question, guys, we assume all this will remain same. The number of units produced and sold will remain same, as there won't be no opening stock, no closing stock. Then there will be no change in the operating efficiency. Whatever I am operating now, same thing will continue. And in case of multi-product company, the sales mix remains same. Sales mix means, assume I am selling 3 products, A, B, C, in the ratio of 2:1:3. That is, for every 2 units of A, I will sell 1 unit of B and 3 units of C. And this mix will continue as same. We call this as product mix or sales mix. Okay, sir. Now, guys, this is the profit statement or the format under the marginal costing to compute the profit. We also have a format under absorption costing, which we will discuss later. But now we are discussing marginal costing. Let us focus on that. This is the format. You have to present like this. Guys, it is nothing but this format. Sales minus variable cost will give you contribution. Contribution minus fixed cost will give you what, Nishan? Profit. But in the format, when they have asked you to prepare the profit statement, please give a breakup of this also. In variable, how much is manufacturing cost? How much is non-manufacturing cost? Non-manufacturing cost means expenses which is not incurred for manufacturing. Clear? You can see here. I am mentioned. Revenue, that is nothing but sales. Take it to the outer column. Then product cost. You already know now what all cost will you use to value the products. Hello? This one, correct? Yes, sir. Take it first. Direct material, direct labor, plus if at all, if there is any direct expenses, take that also, which will give you prime cost plus variable manufacturing overhead. So whatever you get here, can I call it as product cost? Yes. So you can see variable cost of production. And we have to value the product at this price only. This is for the units produced. If there is any opening stock, closing stock, please adjust it. Opening stock of finished goods at last period cost of production. Normally the value will be given in the question. Value will be given in the question. Whereas closing stock of finished goods, you need to value it at current period cost of production. For example, assume guys, current period variable cost of production is 10 lakh and you have produced 10,000 units. What is the cost per unit? 10 lakh divided by 10,000. And assume closing stock is 500 units. How do you calculate it? 10 lakh divided by 10,000 into 500. Yeah. So closing stock obviously will always be out of the current period of production. I have produced but not sold. Whereas opening stock is I had produced last year but I am not sold it. Will I sell it in the current period? Yes. So we will add it to the cost. But this is at what cost? Last year cost of production. Last year cost of production. Normally they would have given this value in the question. If at all, if it is. Or if question is silent about opening stock and closing stock, please ignore it. Yeah. Yes. So once I adjust opening stock and closing stock, what do I get? Variable cost of goods sold. Guys, similar to cost sheet, but here we are using the word variable. Clear? And anything fixed will come later. Okay, fine. So now we are seeing from the product what has happened. Product contribution margin means from product what we have got. And we should also reduce other variable costs not related to manufacturing, like variable administrative overhead, variable selling and distribution overhead. Now you get actual contribution. Actual contribution. This is nothing but what we calculate here. Clear? So we take total variable cost here, we get contribution. But in the profit statement, we need to give a breakup. In the variable cost, how much is relating to manufacturing, how much is non-manufacturing. This is nothing but non-manufacturing variable overheads. So now we are getting contribution. Contribution margin or contribution. From that, reduce all the fixed costs. You get profit. You get profit. Hope you understand. Clear? Same to same profit, same to same profit we will calculate, but the steps we follow in profit statement is little more. We need to present each and every step. Yeah. See, please be careful. You will follow this format only if they have asked you to prepare like cost and profit statement or profit statement under marginal costing. Each and every step you have to present it. But if they are asking you to calculate break-even sales, margin of safety and all, in simple you will use this, only this format to derive what's a contribution, net profit and all. You want it for calculation, just use this simple format. Yeah. Yes. Now, what is the cost equation here? Marginal cost equation. Sir, sales minus variable cost. What do you get? Contribution, which is nothing but fixed cost plus profit. Can I tell contribution is equal to fixed cost plus profit? Yes. Now listen. At break-even sales, profit would be 0. Can I tell contribution is equal to fixed cost? Hello, at break-even sales. Sir, no, sir, we have already crossed break-even sales. In that case, contribution will be equal to what? Fixed cost plus profit also. Because we have profit. Now we have already crossed break-even sales means we already started earning profit. Okay. So, what is PV ratio? It is a percentage of my contribution when compared to sales. How do we calculate it, sir? Contribution by sales into 100. Even if you keep it in decimal also no problem. If you want to convert it into percentage, then into 100. Then PV ratio. Guys, first formula is always this. But sometimes they will give you 2-period data. 2-period data. In that case, how do you calculate? Change in profit or change in contribution divided by change in sales. Clear? And especially here, guys, please be careful. Change in profit. Assume they are given 2-period data. Period 1, period 2. Profit here is 10,000. Here it is 25,000. What is the change in profit? Sir, 15,000. No problem. But sometimes they will mess up like this. Sir, period 1, period 2. Period 1, 10,000 loss. Period 2, 25,000 profit. What is the change in profit? 35,000. Because from minus 10 to plus 25 we have gone. So minus 10 to 0, 10,000. Plus 25,000. So totally change in profit is 35,000. Because sometimes students might miss out this. Where when they are given one period loss, the other period profit. Please be careful. And this formula you can follow only when they have given 2-period data. Yeah, yes. Now, sir, how can we improve our PV ratio? By increasing your sales. So, what and all will come before PV ratio? By increasing your sales or selling price, produce more and more quantity, or try to reduce your variable cost. Try to reduce your variable cost. Or assume you are producing multi products, like number of products. Try to produce more of the product which is giving you more PV ratio. And maybe you can produce less or discontinue the products which is giving you less PV ratio or negative PV ratio. Yes. Some products might give negative contribution also. Chances are there. Okay. Next, break-even analysis. Break-even analysis is important, guys. See, topics looks very simple, but lot of hidden information would be there, especially for calculation. Guys, listen here. X-axis, Y-axis. Sir, in X-axis we are writing units, and in Y-axis cost and sales. Now, my fixed cost is something which will remain fixed irrespective of how many units I produce. Yes, sir. Then my variable cost will always start from 0 and it will increase with my level of production. They are not drawn variable cost here. So I have taken total cost here. You can see total cost means what, sir? Fixed cost plus variable cost. Clear? So you can see this part is there now, this variable portion. Anyway, your total cost will start with fixed cost only, because even if production is zero, still you will end up incurring fixed cost. So total cost is nothing but variable cost plus fixed cost. If I ask you this part is what? It is variable. Okay, sir. Then sales will always be from zero, guys. I have to put the efforts and only then I will be able to make it. So sales will be like this. You can observe this is the point of intersection. That is where my total cost and sales line intersects. That is called break-even point. If I extend it to x-axis, I will get break-even point or sales in units. If I extend it to y-axis, I will get break-even sales in rupees. Guys, listen. This is the point where my total cost is equal to total sales. Yes, you can see both are intersecting. Before that, my cost is more than sales. That means this is a loss area. You can see cost line is more above the sales line. Whereas once we reach break-even point, my sales will go above and cost will be lower. So that means, can I tell this is a profit area? Yes. So once I cross break-even point, I will start making profit. And anything over and above this, we will call this as what, guys? Margin of safety. This part is called margin of safety. And for margin of safety, we will incur only variable cost. So if I multiply margin of safety with PV ratio, we get contribution, which is equal to profit. Because for margin of safety, which is like additional sales, we will not incur any fixed cost. We have already recovered all my fixed costs below this one. Below this itself. So for margin of safety, we will incur only variable cost. Got it? Yes, sir. Now coming to break-even point. Guys, break-even point means I told you, a point at which my total cost is equal to total sales or no profit, no loss. So can I tell this both will be equal? Yes. So break-even sales can be calculated in rupees or in units. Guys, it is nothing but contribution divided by. If you want to calculate in rupees, it is nothing but contribution in rupees divided by contribution in percentage. That is PV ratio. If you want to calculate it in units, the formula is contribution in rupees divided by contribution per unit. Contribution per unit. But actually in the formula, they are not using contribution in the numerator. Instead of that, they are using fixed cost. Why, sir? Because at break-even sale, fixed cost is equal to contribution. They both are one and the same. Correct. So let us see the formula. Break-even sales in rupees. The formula is fixed cost divided by PV ratio. Guys, fixed cost here is nothing but contribution. So contribution in rupees divided by contribution in percentage will give you what? How much rupees of sales you have to make. Clear? That's simple. I will give you a simple example. Assume I have made 1 lakh profit. The profit percentage is 10%. Can you tell me what is the total sales made? 1 lakh divided by 10%. Profit in rupees, profit in percentage. You will get 10 lakh. What is it? I have made a 10 lakh sales to earn 1 lakh profit at 10%. Correct? Likewise, same way. I have made a profit of 1 lakh. For each unit, I will earn 100 rupees profit. Can you tell how many units I have sold? Yes. I have totally earned 1 lakh profit. For each unit I sell, I will make 100 rupees profit. So what is by the number of units I have sold to earn a profit of 1 lakh? Same thing we are doing here. Sir, I want to have so much of contribution. My PV ratio is so much. Tell me how much sales I have to make in order to recover all my costs. That is nothing but break-even sales. So assume break-even sales, we are getting it as like 20 lakh. That means if my sales is 20 lakh, I have reached a point where there is no profit, no loss. If my sales is less than 20 lakh, loss. If my sales is more than 20 lakh, I start earning profit. So my initial target would be to reach 20 lakh. Same way, can I calculate break-even sales in units? Yes. Fixed cost divided by contribution per unit. Simple guys. If you want to calculate in units, keep the denominator as per unit. If you want to calculate in rupees, keep it as PV ratio. That is in percentage or decimal. Oh. Now assume you are getting this as 1 lakh units. What is the meaning of it, sir? If you produce and sell 1 lakh units, you will break even. If you sell 1 lakh, less than 1 lakh, loss. If you sell more than 1 lakh, profit. It is profit. Clear? Assume my sales is actually 1,20,000 units. 1,20,000 units. So that means 20,000 is what for me? Margin of safety. Will it bring any profit to me? Yes, sir. So at break-even point, fixed cost is equal to contribution as profit would be 0. Guys, there can be another calculation also asked. See here the profit is 0. Sometimes they will give it in the question. Company wants to earn 1 lakh profit. Tell what sales they have to make. We use the formula called required sales. So here profit was 0. Correct? So that is why we didn't take it. But now company wants to make some profit. They are asking you how much sales should we make. We will use the formula called required sales. Required sales. They would have given how much profit the company is desiring to make it. So if they are asking you to calculate how much rupees of sales we have to make, then fixed cost divided by desired profit by PV ratio. If they are asking how many units should we sell, if you want to make a profit of so much, then they use the denominator as contribution per unit. Clear? Guys, it is nothing but numerator is nothing but what? Total contribution. Fixed cost plus desired profit will give you what? Contribution. So total contribution divided by contribution percentage. Or else here, total contribution divided by contribution per unit. So if you want to achieve so much of profit, how much contribution should you maintain? Simple. Is that yeah? Sir, here you are taking desired profit. But in break-even sales, you missed it, sir. Why? Because we know that it is 0. Even if you want, you write and mention 0. Why to waste time? Correct? Yes. So this formula is similar to break-even sales formula with one addition as desired profit. This formula you will use only when they have given in the question that company is willing to maintain a profit of so much. How much sales should they achieve? Or how many units should they sell? If they ask units, use this. If they ask rupees, you do this. Or else if you do one, the other one is easy. For example, assume you have found out in rupees. Now can you calculate in units? Yes, just divide it by selling price. Just divide it by selling price. Or else you have got it in units. Can you get now in rupees? Yes, just multiply with selling price. Just multiply with selling price. Here also. Here also same story. Sir, I have got the break-even sales in rupees. Can I calculate in units? Yes, just divide it by selling price. Alright, sir, I have got it in units. Can I calculate in rupees? Yes, just multiply with selling price. Stay. Got it? Yes. Now, once I get break-even sales, sir, anything over and above break-even sales is what? My margin of sale. This is safer zone for me, sir. Sir, I have reached a point where I have started making a profit. Clear. Even in your exams, you will be counting. Okay, when will I cross 40 or 50? Correct. Now relax. Relax and okay. Now at least you will have that satisfaction. Okay. Now anything which I get more is margin of safety. Correct. Yes. Because first initial target is to break even. Break even actually is to 40 or 50. Yeah, 40 is like officially for the world it is 40 passing marks. But for you guys, you should understand it is 50. Because if you get 40 but not 50, gone. Gone. Okay. Sure. So first you reach break even point. After that, full smiling. Why, sir? Because we have already reached no break even. So margin of safety. Okay. This is adding value for which subject? Next subject. Correct. Above 50. This is for not this subject. For next subject, sir. For safety. Correct. Like that. Chalo. I just give an example. Margin of safety. Hey. I control. ಎದುರುತ್ತಿಲ್ಲ ಅವನ ಮೇಲೆ ನೀನು ಚಲ margin of safety is a sales over and above break-even sales. So how do we calculate it, sir? Simple. Total sales minus break-even sales. Or else you can calculate profit by PV ratio. Why, sir? Guys, for margin of safety, there is no fixed cost. So how do I calculate profit? Margin of safety into PV ratio. Margin of safety into PV ratio. Actually, this will give you contribution. But for margin of safety, contribution is equal to profit. So can I calculate margin of safety like this? Profit by PV ratio? Yes. Alternate. This same formula interchange. Yeah. And please be careful, guys. When you are applying PV ratio, don't apply it on total sales. Assume your total sales is 12 lakh. Break even sales is 10 lakh. Your margin of safety is how much? 2 lakh. Apply PV ratio on this. If you apply on this, you will not get profit. You will actually get contribution. Got it. From that you have to reduce fixed cost also. Assume. Now you are applying PV ratio on this. You will get contribution, reduce fixed cost, you will get profit. If you want to calculate profit straight away, then straight away take margin of safety into PV ratio. Got it? Yes, sir. Now coming to this one. Sir, what if a company is a multi-product company? We have two or more products. In that case, we need to calculate the break-even sale using composite contribution per unit. That is, there will be a common fixed cost. Assume guys, I am manufacturing three products. All three products put together, I have incurred a common fixed cost of 5 lakh. Divided by composite contribution per unit. Sir, what is composite contribution per unit? You will calculate that by taking sales mix quantity as a ratio or sales mix value stacks. I suggest take it as a quantity. Means how many units of each product is sold. Clear? It is very similar to your weighted average cost of capital. Okay. So let me give an example for that. One question we have. You can see J and K is the products. The company is selling 4 units of J and 3 units of K, which we call it as sales mix. And common fixed cost for both the products, that is J as well as K put together, is 6,16,000. And contribution per unit of J and K is 40 and 20 each. Now, sir, can I use 2 to contribution in the denominator? Not possible. Calculate like weighted average, which we call it as composite contribution per unit. Sir, what is the contribution per unit for K? 40. What is the ratio of K? 4 by 7. That is total. 4 by 7. Sales mix. 4 by sales mix is 4 is to 3, right? Total of ratios 7. So 4 by 7. Same way. What is the contribution of K? Okay. What is the contribution of K? 20. What is the ratio? 3 by 7. You will get 31.43. This is both put together on an average. What is the contribution per unit? So now divide common fixed cost by composite contribution per unit. What do you get? Break even sales in units. Means you should totally sell 19,600 units in order to break even. Sir, please tell me how many units of J, how many units of K. Again, divide it in the sales mix ratio. Into 4 by 7 for J, into 3 by 7 for K. So if the company want to break even, they have to sell 11,200 units of J and 8,400 units of K. Hope you understand. Yeah, and guys, this calculation, nothing new. You would have already done it in your financial management. Weighted average cost of capital. For example, sir, cost of equity into weight of equity plus cost of debt into weight of debt. Correct. Now, what do you get, sir? Weighted average cost of capital. Means, what is the cost for the company as a whole? Sir, for equity separate, for debt separate, I want to know for a company as a whole, what is the weighted average cost? Same thing we did here. Sir, for J it is 40, for K it is 20. I want to know overall how much per unit. Why, sir? Plus fixed cost, I have not incurred individually for J and K. I have incurred overall 6,16,000, which we call it as common fixed cost. So when I'm dividing common fixed cost, I should have one common contribution per unit, which is nothing but we call it as composite contribution per unit. Clear? And when you get break-even sales also, it is overall. Please split it again between the products in what ratios are same weight, same sales mix ratio as. Is that clear? Now, if by chance if they ask you rupees, just multiply with selling price. Ashte. Just multiply with selling price. Got it. And now this can I multiply with selling price? No, because this is both put together. First break it down between the products and then multiply with selling price. Hope you got it. Clear? Yes. Next, cash break-even point means it is a point at which total cash inflow is equal to cash outflow. Yeah. So cash break-even point means there is no cash profit, there is no cash loss. How do we calculate it, sir? Cash fixed cost divided by contribution per unit. Same like BES, but here we are not taking only fixed cost. We are taking cash fixed cost. So how do we get cash fixed cost? Guys, from fixed cost, if there is any non-cash fixed cost, you remove it, like depreciation. Clear? You will get cash fixed cost. Oh, yes. Done with this. Next. We are going for decision making part. Short-term decision making using the concept of CVP. CVP stands for cost, volume, profit analysis. The areas of short-term decisions may be classified into two broad categories. First one is decisions related with excess supply. Excess supply means, sir, I am producing more, but I have less sales. For example, assume guys, I have the capacity to produce 1 lakh units, but as of now, the demand for my product is only 80,000. Now I will try to create a demand for additional sales of how much? Additional sales of how much, sir? 20,000. Clear? Now, listen. I am already making profit by selling 80,000 units. That means I have break even. Yes. Now tell me, for this 20,000 units, what should be my selling price? If I have to create extra demand for this, sir, my selling price can be anything more than marginal cost. Marginal cost. Why is that? Because this 20,000 is like margin of safety for me. I will incur only variable cost. So anything I am earning as a contribution will be my profit. Clear? Assume guys, originally I am selling 80,000 units at 100 rupees. Now 20,000 also I can sell it at 100, but there is no one to purchase it, sir. Maybe you will offer it at a discount price, or I will find a new customer. Assume your variable cost is 60. Now you will fix the selling price for 20,000 at any price over and above 60. Assume you are fixing it at 75. That means how much is your contribution? 50. That is equal to profit. That is equal to profit. Why is that? Because I am already making profit from 80,000 units. Means I have already break even. So if you have achieved a break even over and above your actual present sales, whatever remaining unutilized capacity is there, or unused capacity is there, or underutilized capacity is there, you can use it to sell the product at any price more than your marginal cost. But make sure that you are not selling it in the same market where you are selling this product. Why, sir? Because if you sell 20,000 units at 75, where you are also selling 80,000 units, this customer will be like, love. Why, sir? Because obviously you will lose that customer trust, loyalty. Because they feel like my neighbor is getting same product at 75. Only prestige, pride. Clear. How can you sell for me for 100? Clear. Now he is taking full liberty. Now he is teasing me that same product I have bought it at 75. So you cannot do that. So what you try to do for this 20,000 is maybe you will find a different market, or you will export it, or you sell it at under a different brand. You will sell it at a different brand name. You guys would have seen same company will sell the same product but in different varieties under different brand name, different costs. Especially HUL, they sell different soaps at different prices. Lifebuoy, Pierce, Lux, everything are manufactured by them only, but their target customers are different. Accordingly, price is also clear. Yes, even mobile manufacturer, Oppo or Vivo or even OnePlus, all these are from same parent company. They're trying to sell it under a different brand name. Oh, sure. Come back. Processing of special order will always happen if at all, if your selling price is more than marginal cost, but make sure that you're already making profit. Okay, by selling 80,000 units, you are already making profit, and also your additional sale will not impact your present sales. Determination of price for stimulating demand means, sir, presently the demand for my product is only 80,000. Maybe you offer a discount. You offer a discount, or else give buy more, same more. If you buy 10 units, I will give you 10% discount. 20 units, 20% discount. 30 units, 30% discount. 100 units, 100% discount. ಆಮೇಲೆ ನೀವೇನ್ ಮಾಡ್ತೀರಿ local versus export sale. You consider various benefits. Sir, if I sell it in domestic market, yes, I may get less price. But if I export, I may get it in dollars, sir. Dollars. So more revenue. But obviously complication also would be there. Okay, licensing, import, export, the export duty, import. Export actually country supports. Okay, even in GST, it is treated as zero rated supply. If your outward supply is zero rated, on your inward supply, can you claim ITC? Yes, you can claim ITC. Clear? Yes. So considering all other benefit, you check whether to sell in domestic market or to export it. Then determination of minimum price for price quotation. Minimum price. Price quotation means I am offering you to supply the goods in the coming future. I should also tell at what price I am ready to supply. Okay, for that I need to prepare something called as quotation as. So while preparing the quotation, in that I should mention the price. For that price, I should have worked out what is my cost also. While discussing even overhead chapter, I told you we should know our total cost per unit cost. So for that is why we will do so much of exercise for overhead cost. Yeah, why sir? To give the quotations. That is to quote a price, telling at what price I am ready to supply the product to you. This is done. Next, shutdown or continue decision. Shutdown or continue decision is with respect to temporary period, guys, not forever. See, forever, if you want to shut down, no decision. Sir, close it today, get lost. Clear? If you want to shut down for a temporary period, then you will see, is it better to shut down for 2 months or can I continue? Guys, if you shut down also, there will be loss. If you continue also, there will be a loss. But see where the loss is lower. Where the loss is lower. Because if you shut down, you may avoid few fixed costs. Few costs you will continue to incur, but few costs you will avoid. So considering it, if I continue, what will be a loss? If I shut down, what will be a loss? Check both. Wherever it is lower, you go. Yeah. If you continue, you may still suffer a loss. But if you shut down, it will be more loss. Better to continue. Better to continue. Next, decisions related with excess demand. Excess demand means, sir, for my product, there is a huge demand, but I am not able to produce so much because I have less capacity, or less labors, or less raw material, or less vitamin, which is money. Make or buy in-house processing versus outsourcing of raw material. That is with respect to raw material. Should I make it in-house or should I outsource it? Guys, there are two criteria here or two situations. If I was already manufacturing raw material, I will be incurring variable cost as well as fixed cost. Yes. Now I am thinking to stop manufacturing and start purchasing. I should compare what with what. Variable manufacturing cost with outside purchase price. Why, sir? Because if I stop manufacturing today, still I will continue to incur fixed cost. So I have to compare with what, guys? Variable manufacturing cost with purchase price and choose whichever is lower. Whichever is lower. Hope you understood. Because fixed cost is like irrelevant. Whether I manufacture or I purchase, I will be incurring fixed cost. Sir, even if you stop manufacturing, will you incur? Yes. So in that case, can I consider it as irrelevant? Yes, because under both options it will remain same. Now, will it affect my decision? No. Next scenario is, sir, I was purchasing till now. I am thinking to start manufacturing it in-house. If I start manufacturing, I should incur the cost from zero, which includes both variable and fixed. So I should compare outside purchase price with what? Total manufacturing cost and choose whichever is lower. And choose whichever is lower. Then product mix decision under resource constraint, that is nothing but limiting factor. Now, sir, I have 5 products to manufacture, but I have very limited resources available with me. Now tell me which product to produce how much. That is deciding how many units should I produce. That is called product mix or sales mix. Considering limiting factor, which is called key factor. Sir, what is key factor? Something which is available in limited. So I have given it here. Limiting factor or key factor means something which is available in limited. So I should plan my activities by keeping this as a yes. Because assume guys, there is huge demand for my output. I can sell 10 lakh units, but to sell 10 lakh units, I don't have sufficient raw materials. Assume I have only 5 lakh kgs of raw material. Now, using this as a basis, I need to plan my production. Clear? So if something is available for me in limited, we call it as key factor or limiting factor. So while preparing the budget of sales mix or the product mix, I need to keep this as a base. Guys, if there is no key factor, whichever product is giving me more contribution, that is more profitable. I will try to produce more of that. But when there is key factor, you cannot make decision based on contribution. You need to make decision based on contribution per key factor. Contribution per key factor. Sir, how do we calculate it, sir? I have one illustration for it. Yes, please pay attention. There are three products which companies manufacturing and selling it. So selling price is 20, 25 and 30. Variable cost is 8, 10, 12. So can we calculate contribution, sir? Yes, 12, 15 each. Now if there is no key factor and all, if I ask you which product will you manufacture more? C. Next B. Last G. But if there is key factor, let us see. Raw material per unit. You will use 2 kg of raw material to produce each unit of A, 3 kg of raw material to produce each unit of B, and 4 kg of raw material to produce each unit of C. Market demand for my output, not for raw material, is 10,000, 8,000, 7,500. That means this is what maximum I can produce and sell. Because I cannot produce more than the demand and keep it. Na? Yes. What is the total raw material available? 50,000 kgs. Now can I tell this is the key factor? Because this is available in limited. So I should plan my production by keeping this as a base. So this is the key factor. Now what should I calculate as? Contribution per key. Contribution per key factor. So when there is a key factor, I cannot make decision based on contribution per unit. Assume there is no key factor. If I ask you which product is more profitable, C, sir. Which is least profitable? Yes. But now key factor is there. Take it. Raw material per unit, 2 kg, 3 kg, 4 kg, whatever I have given you. Divide each other. Contribution per unit divided by key factor. What do you get? Contribution per key factor. That means for each kg of raw material, product A is able to generate how much contribution? 6 rupees. B, 5 rupees. C, 4.5. Now if I ask you, who is able to use the raw material effectively, profitably? Who is using it? A. Raw material is available in limited. Who is able to generate more contribution for each kg of raw material? A. Rank then now. Rank based on what, sir? This guys. A. First rank. B. Second rank. C. Third. Now based on that you decide how many units of each you will produce. What is the maximum demand for this product? 10,000, 8,000 and 7,500. This is what you can maximum produce. Now let us start with A because that is the first rank product. So to produce 10,000 units of A, how much raw material we require? 2 kg per each unit. So totally 20,000. Do we have it? Yes, we have it, sir. So after producing 10,000 units of A, still how much raw material is left? 50,000 minus 20,000, 30,000. Okay, sir. For B, how much we require to produce 8,000 units? For each unit, 3 kg. So how much we require? 24,000 kg. Do we have it? Yes, sir. We have it. So we will produce full 8,000 units. Coming to C, how much raw material is left, guys? Still only 20 plus 24, 44. So 50 total availability minus 44. How much is left? Only 6,000. Only 6,000. From 6,000, how much can I produce? For each unit, I require 4 kg. So 6,000 divided by 4. How many units can I produce? 1,500. Now you might ask me, sir, why not 7,500? If you do 7,500 into 4, you will get 30,000. Do we have so much of raw material? No. After producing A and B, we are left with only 6,000 kg. So using that, how much units of C we can produce? 1,500. So now what is the product mix? A is to B is to C. 10,000 is to 8,000 is to 1,500. Hope you understood that. So whenever there is a key factor, you need to make decision based on contribution per key factor. So guys, here raw material was the key factor. Same way, labor hours might be the key factor. So instead of kg, it will be like labor hours per unit. Labor hours per unit. Assume this is like 2 hours. So whatever you get 6 rupees, that means, sir, for each and every hour the worker work for product A, we are able to generate a contribution of how much? 6 rupees. It is like that. That is the meaning. Got it? Yes, sir. And for many company, what would be the key factor? The demand for their products. So they have everything, but no sales, no customers to buy. Clear. So in that case, what would be the key factor? Sales. Or else, sir, I have very good brand. Customers are ready to purchase from me, but I am not able to supply it on time. In that case, what would be the key factor? Maybe money, that is the capital, or raw material, or even the power availability, or even the labor. labor hours. Or then whenever we are making any decision size, we need to consider few things. What are those? Note. The cost and benefit of an option is identified for measurement if it passes the principles of controllability and relevance. Yes, any cost we are incurring will give us some benefit. See what is the benefit, what is the cost we are incurring. So benefit should always be more. Correct? Now even in your FM you would have done. What is the return on investment? Clear? Sir, if net cash inflow is more than cash outflow, we will go for it. NPV positive. If NPV is negative, Tata Bhajan, we will not accept. Correct? Same way. So see the cost and benefit analysis. Sir, if I incur so much cost, what is the benefit I will get out of? Clear. That is what you do in NPV and all. Na? Present value of cash inflows minus present value of cash outflows. What do you get? NPV. If it is positive, accept it. If it is negative, then yes. So here also we will see, sir, whatever we are doing, is it in our hands controllable and is it also relevant? Relevant means I told you, sir, fixed cost is same under both the options. Is it relevant for us? No, ignore it. While making decisions, will I consider it? No. Or else there are some costs which is not in my control. Will I consider it while making decisions? No. So you please consider what is in your control as well as what is relevant. Relevant means, sir, when do we call it as relevant is when assume I have to make a decision between two options. Under both the options, that cost is changing. That cost is changing. Assume guys, I have plan A, plan B. Under both, direct material cost is 100 rupees. It is irrelevant. Whereas assume direct labor cost is 70 year, 80 year. Is it relevant? Yes. It is changing under both the options, so it is relevant. Here, yes. Sir. So we need to consider the decisions which are both controllable, that is, which can be controlled through my actions, as well as which is relevant. Done with the marginal costing, not with the chapter. Now coming to absorption costing. Just opposite to marginal costing is our absorption costing. Absorption costing is also called as full costing technique. They tell cost is cost. Whether I can control it or not, I don't care. I have incurred it on record. And absorption costing is used for external reporting purpose. That is for preparing financial statements or for income tax purpose. And under absorption costing, we will always value the inventory at total manufacturing cost. I already explained this now. Remember now? 800. And can I tell under absorption costing, my inventory will always be overvalued? Yes, because of one extra element, fixed manufacturing overhead price. So you can see here. I have mentioned. So inventory is valued under absorption costing at what? Direct material plus direct labor plus manufacturing over variable manufacturing overhead plus one extra thing I have also underlined, fixed manufacturing overhead price. Sir, what is the format to prepare income statement or profit statement? We already saw under marginal costing. Under marginal costing, what is the sequence we will follow? Sales minus variable cost is equal to contribution minus fixed cost is equal to my profit. But variable cost, I need to see how much is product cost, how much is non-product cost. Non-product cost is something but not related to manufacturing. Here it is very similar to cost sheet format. Don't prepare cost sheet at all. Here, okay, similar to. Yeah, sir, what do we do, sir? Just calculate total cost and remove it from sales. You will get the profit. But while calculating total cost, try to follow the format of cost sheet. Sir, we will see. Sales, we will take it first, or you can also take it at the end. Direct material consumed, direct labor, variable manufacturing overhead plus fixed manufacturing overhead. And do we charge fixed manufacturing overhead for each and every unit produced? Yes. But do we know it at the beginning? No. So for that, what do we follow? Predetermined overhead rate. Assume we have fixed a predetermined overhead rate 10 rupees. So for each and every unit we observe, or for each and every unit we produce, how much we observe? 10 rupees. Clear? It is purely based on predetermined rates. Okay, sir. We get cost of production. For that, you adjust opening stock of finished goods and closing stock of finished goods. Add opening stock of finished goods. This will be normally valued at previous period cost of production. Whereas closing stock of finished goods will be deducted and it will be valued at what cost? Current period cost of production. For example, assume guys, the cost here is 20 lakh for producing 1500 units. What is the cost per unit? 20 lakh divided by 1500. Assume out of this, closing stock is 200 units into 200. Into 200. Deduct 1. Sir, why are we deducting? I already explained everything in cost sheet format. We are not selling this product this year. So it is not helping me to generate any revenue. So in order to match revenue, we should record only the cost which has incurred and which has helped me to generate the revenue. Clear? Yes. Okay. We got cost of goods sold. For that, one important thing, guys, we need to add or deduct under or over absorption of fixed manufacturing overhead. Sir, will there be under absorption or over absorption? Yes, guys. We discussed now in overhead chapter. If you are following predetermined overhead rate, at the end of the year, we will have under absorption or over absorption. We used to add, if there's under absorption, we used to add it to the respective cost of goods sold, that is under closing stock and all. Sir, if it is over absorption, we used to reduce. Clear? Yes, sir. Same way. Listen, guys. Assume, sir, we have fixed a predetermined fixed overhead rate at 10 rupees and we have produced 10,000 units. How much is absorbed, sir? 1 lakh. But we got to know actual fixed overhead is 1,20,000. So we have under absorbed. So we need to add 20,000 more in. We need to add 20,000 more. Hope you understood. Under absorbed. We had absorbed only 1 lakh here, but actually it is 1,20,000. Sir, what if it is vice versa? For example, assume actual overhead is only 90,000. Only 90. Whereas we have observed how much? 1 lakh. So we already observed 10,000 more. So what should I do? Deduct 10,000. Deduct 10,000. When I observed more means you already charged more. So deduct. If you observed less means you have charged less. So now you need to. Hope you understand. Okay. Sure. Then we will get non-manufacturing expenses also, which is like administrative cost, selling and distribution cost, which is not related to production. Which is not related to production. Bring it here, you will get total cost. Yeah, I repeat, guys. If it is under absorption, you have to add. If it is over absorption, you have to deduct. If you want, you can make a note. I have written actually here. Under means like positive, over means in bracket, means deduct. Oh, so you will get total cost, reduce total cost from sales, you will get profit. Whereas they may ask question for both preparing the income statement under marginal costing as well as absorption costing. If you remember, we have solved a question in our regular class. Clear? For one single question, they may ask both, or else for one question, they may ask any one. If they ask both, obviously marks weightage would be more, guys. Yes. So this is all about absorption costing. Now, as we have understood both, let us analyze the difference between both. Even this theory question you can expect. The difference between absorption costing and marginal costing. Once you understand both, it is easy to differentiate. What is it? Absorption costing. Stock is valued at only variable manufacturing cost plus, not only variable plus fixed manufacturing overhead. Whereas under marginal costing, it is only variable manufacturing cost, which will include direct material, direct labor plus variable manufacturing overheads. Absorption costing. It treats all the variable manufacturing costs and fixed production overhead as what? Product cost. Means all the manufacturing expenses. Whereas under marginal costing, only variable manufacturing cost will be treated as product cost. So what about the fixed manufacturing cost? We will treat it as period cost. Under absorption costing, under absorption or over absorption generally arises. Correct? Why, sir? We are also charging the fixed manufacturing overhead based on predetermined overhead for each and every unit produced. Whereas under marginal costing, I am not at all charging this. I will wait till I get actual figure and I will charge it later. So under marginal costing, there is no question of under absorption or over absorption. Then under absorption costing, decisions are based on what? Profits, because they don't care about contribution at all. Whereas under marginal costing, decisions are based on contribution because fixed cost is not in our control. Under absorption costing, administration, selling and distribution overhead is treated as period cost. That is anything other than manufacturing. And charged against the profits in the period in which they are arise. Means we will not treat it as product cost, we will treat it as period cost. While calculating the profit, we will reduce. Whereas under marginal costing, all fixed costs will be treated as period cost, including fixed manufacturing overhead. Now, under absorption costing, will product cost change, guys? Will product cost change? Yes. Because more number of units you produce, less will be the cost because there is a fixed element. Whereas under marginal costing, what is product cost? Only variable. Variable cost per unit will always remain same. Will it change? No. For example, if I take this only, here, guys, will this cost change? No, sir, because this 3 will remain same per unit. Whereas, guys, fixed overhead, will it remain same per unit? No. Higher the number of units you produce, fixed cost per unit will decrease. Lower the number of units you produce, fixed cost will increase. So, will product cost vary under the absorption costing? Yes, because of one element. What is it, sir? This. More the number of units you produce, product cost per unit will go down. Lower the number of units you produce, product cost per unit will go up. Where? Under which system? Absorption. Whereas under marginal, it will always remain 700. It will always remain 700. Got it? Yes. Fine. So this is all about this chapter. One more topic is there, which is indifference point. Actually, in ICI material, they have not covered anything about indifference point, but question is, if you remember, we have covered the question on from ICI material on indifference point. Clear? So if you are not yet watched, do watch it. The questions marathon for this chapter, where I have discussed a question on indifference point. Okay, from ICI material only. Yes, but let me just mention about it, guys, so that listen. Sir, what is indifference point? Guys, I have two choices, but I am indifferent between them. Means I can either choose that or this. Assume I have product A, product B. Now I am confused. Should I produce product A or should I produce product B? Now there is something called as indifference point. How do I calculate? Formula is change in fixed cost divided by change in variable cost per unit. So calculate. There are two products. What is the fixed cost? 10 lakh, 15 lakh. What is the change in fixed cost? 5 lakh. Then variable cost per unit is what? 25, 20. What is the change in variable cost? 5. Divide each other. You will get 1 lakh units. That means it is like this. If your sales is 1 lakh units, you can either go with product A or product B. Anything is fine. Anything is fine. Guys, it is similar to, profitability index which you calculate in, if I am just trying to connect. If you get profitability index exactly equal to 1, what do you go? Indifferent. More than 1, choose it. Less than 1, reject it. Same way NPV. If NPV is positive, accept. Negative, reject. 0, indifferent. Correct? Same way here. Sir, we got indifference point 1 lakh. If my sales is exactly 1 lakh, which product should I sell, sir? A or B? Anything is fine. Anything is fine. Sir, what if my sales is less than 1 lakh? Then choose a product, choose a product, choose a product where variable cost per unit is more, but total fixed cost is less. Because you are producing less number of units, na? So go with variable cost where it is more and where fixed cost is low. I repeat, where your sales is less than 1 lakh units, you will choose a product which is having higher variable cost per unit but lower fixed cost. Sir, what if my sales is more than 1 lakh units? Then you will choose a product which is having lower variable cost per unit and higher fixed cost. Simple logic. Guys, here you will produce more number of units. More number of units means variable cost will increase. So try to keep it lower as possible because you will multiply this with number of units. You will multiply this with number of units. For example, assume your sales is 2 lakh. You will multiply 2 lakh with 20. Clear? If you choose a product which is having higher variable cost, then you will get much more variable cost. Clear? I repeat once again. If your activity level or if your sales is less than the indifference point, then choose a product with higher variable cost per unit and lower fixed cost. Clear? Yes. Then, if your production or activity level is more than the indifference point, then choose a product with lower variable cost per unit and higher fixed cost. Clear? Yes. So I would suggest you, if you want, still, if you already attended the class, if you already watched it, but try to watch it again. There is a question on this in ICI material. Clear? Actually, this concept is not covered in ICI material under marginal costing, but they have given a question. That means they may test you in the exam also. Be ready for it. Fine? Yes, sir. So this is all about the revision of chapter 40. Yes, students, we will revise one last chapter, that is chapter 15, which talks about the budget and budgetary control. In this chapter, whatever we will be learning is like an extension of what we learned in standard costing. Sir, what is the first concept behind the standard costing? It was the cost control. What do we do, sir? We will set a standard cost at the beginning of the period. Then as and when we do the work, we will compute the actual cost, compare the actual with the standard, and see if there is any variance. We will look into the reasons for it. Okay, if it is favorable, very good. If it is adverse, then we will look into the reasons and we will try to implement some changes in the organization so that at least in the next year it will not repeat again. Clear? So means standard cost is what, guys? It is acting as a target for you. You have to keep your actual cost below that or maybe at par with that, but you should not go above that, which is nothing but like our budget. Clear? Now even our country has a budget. The finance minister of the country, the Madam G, okay, every year she will come and present a budget in the month of February, which will be applicable from 1st April. Okay, very important for tax students. Correct? Every time I pray that Madam should not make any changes on that. But Madam has to come out with changes. If not, she cannot impress the public. Clear? And whenever there is amendments, it's a big headache for teachers, and next headache is for students. Clear? Especially last time, lot of changes in capital gains and tax rates they made it. That too in between the year. It became very difficult for students for academic purpose. Why, sir? From 1st April to 22nd July, different rates. From 23rd July, different rates. Clear? Means in the same year, two different rates. Clear? Chalo. Anyway, that we can manage in taxation. Let us come back to costing now. So in this budget, what does the madam present is? Sir, in the upcoming year, it is always for future. Budget is always for future. In the upcoming year, that is from the beginning of the next financial year, that is 1st April. Sir, what is our plan? What all estimated income we have? What is our estimated expenditure? All the plans, they will explain it through the budget. And what are the government plans? For which plan, how much they are planning to incur. Everything they would be discussing in this. Okay. Now, even for a family, there would be a budget. Parents would have normally worked out a budget. Okay, this is our earnings. Okay, this is our regular expenditure. We will set aside some amount for savings or investment. Remaining, we will see. Okay, or once in a year, they can also plan a trip for student, children's education fee. Everything they would set aside. Clear? Remaining, if any, they will plan some discretionary things. Discretionary things means maybe shopping or maybe going for a trip like abroad trip, or maybe buying some new items for a home, or even buying a gold or anything like that. Clear? That is only when they have huge surplus or extra surplus money. Yes, even when it comes to organization, they will prepare a budget, guys. That is in the upcoming year or in the upcoming period. Normally, budget is prepared for a year, but what they do is once they prepare for a year, they will break down into a small parts, guys. That is per month, per quarter, and all, so that they can make sure that at the end of every month they are achieving their targets. Because if I wait till the end of the year, what if I have not achieved? I cannot go back and correct everything. At least if I break down the budget into small parts like per week, per month, or per quarter, at the end of every month, I can reach it, whether we are acting as per the budget. So once the organization set a budget, in this, what do they do, sir? They will first fix sales budget. When they are fixing a sales budget, they will also coordinate with other departments. First, they will call a meeting. There will be something called as budget committee. They will call for a meeting in which all the functional managers would be there, like production manager, purchase manager, sales manager, marketing manager, all HR manager, all these people would be involved in this. What do they do, sir? Simple. Now, for sales manager, first the top level management will ask, sir, what is the expected sales we can achieve in the next year? Assume in the current year 1 lakh units we have sold. We cannot expect the same 1 lakh units in the next year. There should be some growth. So now sales manager will tell, sir, we can achieve 1,50,000 units, sir. 1,50,000 units. Now for this, what are the different ways? They will also tell, sir, we need to do marketing, we need to do advertisement, we need to spend so much, we need to appoint more salesmen. Everything they will give the strategy and idea. How do we reach 1,50,000 units? Because we are planning 50% increase. Clear? So this is what the sales manager will explain. Now we will ask production manager, are you ready to produce 1,50,000? Do we have enough resources to produce 1,50,000 units? Because if I have to sell 1,50,000 units, I have to produce 1,50,000 units. No? Yes. So production manager, we will question, do we have enough capacity to produce 1,50,000 units? If not, employ more people, purchase new plant and machinery, take new factory. Okay, that is nothing but where the production happens. That is opening a new branch. Okay. And if there is no enough purchases, I mean, sir, if there is no enough raw material available, then we call it as key factor. Assume maximum raw material available is only 1,20,000 kgs. So as per that, I have to plan my sales also. So our sales I can do 1 lakh 50, but there is no raw material. What do you do? So if there is any key factor also, you have to consider that while preparing the budget. Same way, sir, to produce 1 lakh 50,000 units, we need labors. Check with the HR manager. Do we have so much labors? If required, please appoint new people as early as possible because there is a manpower requirement. Now consult even purchase manager. Sir, can you purchase 1 lakh 50,000 raw materials? When do you purchase? Please plan properly. Is the raw material available in the market? How much money is required for it? Do we have so much money? Everything we need to plan because if I have to purchase 1 lakh 50,000 kg, assume for each and every unit of output, I require 1 kg of input. So totally how much raw material I have to purchase in a year? 1 lakh 50, which we call it as annual demand. Now you properly plan how much should be my reorder level, how much should be my purchase quantity, that is reorder quantity, everything you plan properly and confirm us, can we achieve this with respect to purchase. Production manager will tell, yes, I can produce, provided we have labors and raw material available with us. So for labors, whom will we consult? HR manager. For raw material to be purchased, whom will we consult? Purchase manager. Clear? Like this, we will consult each and every one of them and also the supervisor. Sir, how are the workers improving or working? Can we increase their efficiency? Yes, maybe by giving them some bonus or incentives. Correct? If I am giving them fixed pay, okay, every day you work, I will give you so much. Their productivity may not improve. If I ask them to work and if you save time or maybe if you produce more and more, I will give you some incentives or bonus, maybe they will get a motivation and they will start working. So all this has to happen well before us. Clear? So like how you guys also prepare a timetable, correct? So just before your exams, when you start your preparation, you will also prepare a timetable either for 3 subjects or 6 subjects, depending upon how many papers you are writing or how many groups you are writing. Accordingly, daily target you will keep on achieving. No? Same way, organization also. They will prepare a budget for a year and they will break down into like per day, per week, per month. So they keep on achieving it. And they will also see at the end of month you assume, they will see what is the actual work done with the budgeted. Are we in line or if there is any deviation, immediately take action. And whoever is responsible for it, maybe we may penalize them. Okay, because you are not able to achieve the target as desired. Got it, guys? Yes. So this is all about the budget, and there is a lot of things to coordinate also. As I told you, sir, just preparing the budget is not enough. I need to coordinate with each and every department functional manager. And now this functional manager, assume I have given a target for production manager to produce 1 lakh 50,000 units. Now he will take care of his team. He will make sure that his team will achieve this. Clear? Yes. And every functional manager means the head of each department, including finance and even finance department, we will ask, do we have so much of money? Okay, to do all this. If not, please raise the extra money through either debt or equity or whatever it is. You try to raise. So each and every functional manager or department manager will be a part of this budget committee while discussing. But for this budget committee, one head would be there. One among them, we will choose them as a head. Why, sir? Because whenever the top level management calls, like CEO or CFO, everyone cannot go. Correct. There will be one person who is representing this budget committee, who is called as budget controller or budget officer. Is that clear? So even you guys know, like there is something called a GST council. Correct. Any decisions with respect to GST will be taken by whom? GST council. And GST council has various members. Correct. From each and every state, one member. Plus, totally how many states are there for GST? 31. Including 3 union territories with state legislation. That is Delhi, Pondicherry or Puducherry and Jammu Kashmir. These 3 actually are union territory but are considered as states for GST purpose. So totally 31 states. Correct? So 31 state members plus 2 central members. One is Union Finance Minister, another one is Union Finance Minister in charge of state, who is called actually Pankaj Chaudhary. Okay, names you need not remember, but I'm just telling you. Nirmala Sitharaman is a Union Finance Minister, the head of GST Council. GST Council. So while conducting the meeting, all the members should be there. At least half of the members should be present. Correct? Quorum for the GST Council meeting. At least half of the members should be present. Okay, sir. Now, anything with respect to the GST Council meeting or decisions taken, who will communicate, sir? Madam, head of the GST Council. Correct. Actually, it is as if Madam is taking all the decisions. No, there would be a team, but the front face is Madam. Even while reading out the budget, Is it like madam prepared the budget whole night and came and read it on the next day? No, sir. There is a whole a team working on it. Clear? Maybe the finalization, everything would have happened through madam. Okay, that is, they will conduct a meeting just before presenting the budget and all. Finally, madam will come and read it. Clear? Yes, guys. Chal, let us begin. I have just given an overview of this chapter, guys. Let us quickly go through. Budgeting, budgetary control, and standard costing are essential tools frequently used by business executives for the purpose of what? Cost control. For the purpose of cost control, which is nothing but purpose of planning, execution, and control of business activities, guys. A budget is a precise statement of financial and quantitative implications of the course of action that management has decided to follow. That is their future plan in the immediate next period of time, usually a year. Budget can be prepared for any period, guys. But usually, if nothing is given, we consider it for a year. Sir, can we prepare it for a month, for a week, for a quarter, for half year? Yes. Next. A budget fixes a target. Budget is nothing but a target, guys. We need to work as per that. Same way you guys do it. No, you will set a target for each and every day, or maybe once in a week, or once in a 15 days. You try to achieve it. For example, sir, I have to finish this subject within a week, sir. You would have set a target. So that is nothing but your budget or standard. Yes, fixes a target in terms of money as well as quantities against which actual performance is measured. Actual performance means actual work is done. Now, sir, can budget be in terms of money as well as quantities? Yes. Yes. For example, sales. I fixed how many units to be sold? 1,50,000 units. This will generate a sales of, assume, 50 lakh. So did I fix it in both the ways? Sales in rupees 50 lakh, sales in units 1,50,000. Same way, sir, how many units should I produce? Assume considering opening stock, closing stock and all, I am supposed to produce 1,60,000 units. Sales is 150, but there will be some opening stock, closing stock. So assume we got to know production is 1,60,000 units. So for that, obviously we need to incur a cost, material cost, labor cost, everything. Just check how much it should be. That is in terms of finance. Correct? So I can set a budget both in terms of quantity as well as money. That is finance. Thus, the essential features of budget are as follows. It is a statement expressed in money or physical units. That is, as I told you, it can be expressed in money terms or physical units. Physical units is nothing but quantity. Then all the department of a business unit should cooperate for preparation of business budget. I told you, we will call the meeting of all the functional manager. Only then we will fix the budget. Because assume I have fixed a sales budget of 1,50,000. Now production manager is telling later, after 1 week he came and told, no, we cannot achieve it. I don't have so much facility. And better talk with everyone, only then fix a budget. Then, and also coordination should be there. For example, sir, we have fixed a budget of 1,50,000 sales quantity. Now, if I have to achieve a sales, production manager has to produce on time and give it to the sales department. Correct. So our sales department is working rigorously on advertisement, marketing, everything. They are calling the customers, they are approaching the people. But production manager, full latte, full late. They are not able to produce on time. Then is there a coordination? No, sir. Whatever efforts the sales manager is putting or sales department is putting is going into vain. Next, budget is a mean to achieve business objectives and it is not an end in itself. Sir, budget is like for a short period. Business will always have a vision and mission. Correct? They will also have an objective, which is for a very long period. Now, budget is for 1 year, 1 quarter and all. Sir, once a budget is achieved, is it a end? No. Again, for the next period, we will set a new budget. We will start working as per that. It is laid down prior to budget period. That is very important. Sir, budget should be ready always before the budget period. Clear? So assume financial year. Budget in India will always be prepared for a financial year. Should it be prepared and submitted or like presented before 1st April or after 1st April? Sir, before 1st April, sir. Clear? Because it should be implemented from 1st April. Clear? So if you remember, it would be presented in February, then far against all discussions will happen. Very healthy discussion. You know, in the both the houses of parliament, how the discussion will happen. They will discuss far against everything, and once it is finalized, madam will sign. Another madam is there. That is the president madam. Clear? So once she gives her assent in the form of signature, the bill will become act. You know, now finance bill. Before any bill is signed by the president, means any act, it is called bill. Once the president gives her or his signature, it will become an act pass. Clear? So I will just give an example. This I normally teach in income tax, but still, at least for you guys to recall. Once the finance bill is presented by the finance minister, which includes all the changes to be brought or proposed, it has to obtain the majority of the members' approval both in Lok Sabha as well as Rajya Sabha. Once it obtains the majority of the members' approval, it will go to the president. Once president gives his or her assent, that is in the form of signature, the bill will become act as. This is not only for finance bill, this is for any bill. When will the bill become act as? Once the president gives their signature. Oh, so in simple, budget should always be ready before the period starts. Then it should be prepared for a definite future period. Now I told you, you achieved 1,50,000 sales, but I didn't tell for what period. Sir, is it for a month? Is it for a quarter? Is it for a year? Now assume you thought it is for a year, but in my mind it was per month. Now at the end of the year you came and told, sir, I have achieved so much. I told it is per month. Correct. It should not lead to confusion. Let there be a clarity. When you are telling a budget, please mention it is for which period. Is it for a year, month, or quarter? Then the policy to be followed to attain the given objective must be laid down before the budget is prepared. That is, sir, what if I just tell what is the target? It is not enough. I should also tell how to achieve. How do you break down that? And I should also provide the facilities, whatever is required. For example, I have told you you have to do this, but I have not released the money. I have not released the money. What is the use? Correct. So whatever facilities, whatever resources is required, even I need to provide that. Correct. So for example, assume, sir, I have been asked to take class here, but no setup, sir. Or no classroom only, sir. Clear? So is it possible? No. If you have given me some task, then better give me the facilities also. And also tell how to do it. Okay, for teacher, no one need to tell how to do it, but still, maybe if it is a top level management or a good institution and all, they may tell some inputs. So this is what is our students' expectation. Please try to do like this. Correct? Some inputs they might give. Okay, sure. Budgeting. There is a difference between budgeting and budgetary control, guys. What is budgeting? Budgeting is the complete process of designing, implementing, and operating. That is, just planning the budget is not enough. Prepare a budget, implement it, and also make sure that you are working as per the budget. Operating means you are working as per the budget. The main emphasis in budgeting process is the provision of resources of to support plan. I told you. Now, whatever budget is there, please provide the necessary resources for it. Clear, whether it is money, human resources, whatever it is, please provide the resources whatever is required in order to achieve this target, which are being implemented. Okay. Next, budgetary control. Guys, budgetary control is like this. Sir, you have given us the target. We are working as per the target. But every now and then, compare actual with budget, and keep on seeing whether we are in line. Whether we are in line. Correct. Now, for example, simple example I will tell you. Now, once you guys are studying, I always suggest try to take up some questions on that chapter. Assume you have finished one chapter today. You will take up some questions, maybe past examination questions, and you try to answer. Compare your answer with ICI answers. Check whether you are in line with ICI standard. It is always a good practice, guys. Clear? Because sometimes students believe that whatever I know is is the best. Clear? Yes, might be, but may not be as per ICI standards. Clear? May not be to get 50 marks or may not be to get 5 out of 5 in the theory question, especially theory question. Numerical question, I think you guys can manage. Clear? With respect to, see, theory questions means you have to present it in a best way, guys. Some students will have a habit of writing general answer in general. 2 or 3 lines, very perfect. Rest, full story. Sir, we are very good, sir. In BCom, that is what we did, sir. Calm. Name itself is telling. Be calm. Yuntara. Okay. Calm. ಬರ್ತಾನೆ ಅವನು ಅಲ್ಲಾಡ್ಸ್ಕೊಂಡು ನೋಡಲಿ ಹಂಗೆ ಹೋಗ್ತಾ ಇದ್ದೆ ಚಲೋ so try to inculcate all that, guys, because I have told you it is very important for you to understand the reality before jumping into the exam hall. Don't straight away go and eat the examination and there don't get shocked. Oh, this is what the question paper. First question is compulsory. Oh, your first question is for 14 marks. Oh, your 30 marks MCQ. See, then your exam will become a trial for you. Correct. 1 or 2 attempt is for Devru God. Like RCB fans. Sir, first match always for God, sir. Clear. 17 years we took to win the match. And 18th year we won. And what and all happened? Correct. So I felt okay, winning was not like required for whatever happened. Okay, I was a huge RCB fan because I'm from Karnataka, but still the thing is, whatever happened, I felt this win was not required at all. Okay, whose failure it was, we don't care about it because ultimately some people lost their lives. It is not like some people lost their life. What about their family also, especially young people? And I saw, okay, one of my cousin actually posting, okay, he's 15 years of age. He posted, oh, 18 years of wait is over. I was shocked. You are 15 years. You are 15 years. How did you wait for 18 years? ನಾನು ಹೇಳಿದ್ರೆ okay. If I am telling it, okay. Because I am there till from the day the IPL started. This guy 15 years. Obviously, ಹುಟ್ಟಿದಿಂದಾನೇ ನೋಡ್ತಾರ. From the day he was born, he was not seeing. 18 years of wait is over. Fine, guy. So it is simple. Even for CA course. Okay, let us now come back to CA. Even for CA course, guys, the journey is little longer. When compared to any other course, the journey is little longer. But I tell you, the wait is worth. The wait is worth because, guys, you are making something big in your life. So obviously, you cannot do it in a short period. Especially now, there are a lot of misleading information which is happening. CA will take time. So do that course, do this course, and that. CA will take time because obviously they cannot release to the market semi-finished goods. They have to release the output. So to produce the output, it will take time. That output will be you. Okay. Yes, sir. So it will take time, guys. See, they are not planned only from academics point of view. ITT, orientation, articleship, everything should be a part of this because you should be that all-rounder. You cannot be only, sir, I know everything theory, but I don't know how to apply it in the work. You cannot be that person. Correct. Or else, sir, I am very good in my knowledge, but I don't know how to present it. I don't know how to communicate. I don't have any skill. That is why all this ITT, orientation, everything is there. Clear. Everything will make you that perfect person or perfect product ready to the market. So don't worry about the time it is taking or the time you are taking it, guys. You are making your better future now. Just focus on that. Because see, I am always telling this to the students, good things take time. Good things take time. Don't follow the shortcut. Now, for example, sir, assume I saw a video telling in 10 minutes you will get 10 marks. 100 minutes, 100 marks. Andre 100 hours of class yake? Clear. We take normal classes for 100 hours, 150 hours, 200 hours. There will be one person coming and telling 100 minutes, 100 marks, take it. And if that was so easy, then CA everyone would have passed, guys, just by watching 100 minutes video. Or there will be seriously, if you also watching YouTube or finding any videos, you will find 10 marks in 10 minutes, 20 marks in 20 minutes, like that. Yeah, see, if you're following it or if they're really doing good, great. But the thing is, don't fall for the shortcuts. For example, this attempt, pakka questions, guaranteed questions, okay, sure short questions. Guys, no one is God, including me. Clear. If sir, I can predict whatever questions will come it in the exam. No, I may tell what is important, what is not important. Clear up, but still, I cannot sure shortly tell this will definitely come, that will definitely come. And you see, many people do this also. I would have solved 100 questions in the class. Definitely one or two questions out of that will come in the exam. Same to same. Now, can I claim a credit for it? I don't think so because whatever I would have done is from ICA resources only. One or the other question, maybe here and there, one few changes I would have done. Now, can I claim a credit for it? No, guys. Maybe for solving that in the class, I can claim. I cannot tell. This is what my own question. ICA picked it. No. Clear? Yes. Chalo. So, when you are also studying, please don't fall for shortcuts. Don't give ear for your rumors. Clear. For like, especially during exam time, they will tell this paper will be tough this time. Okay, last time this paper was easy. That means this time it would be tough. Or this time the evaluation would be tough. Or results will be less. Or results will be more. Lot of things will happen. Guys, no one will know how the things will happen. Okay, everything is external. Is it in my control? No, sir. What is in your control? Only worry about that. Prepare well, give your best. Leave the rest to the gods. He will take. He or she will take care. Clear. So don't worry too much and just make sure that you try to gain as much as the focus as possible. Especially in today's generation, there is a lot of distractions, guys. Okay, more than the attractions. Means Sir, to study, I'm telling you have a lot of distractions. And I tell you, one small deviation might take you somewhere else. And it may create a lot of gap between your goal and what you are doing. So please make sure that you don't take that deviation. You guys still now are in the right path. If you have taken CA in your life, I know you are already accepted a biggest risk in your life. But make sure that you come out of this as a successful person. That is very, very important. Don't be a loser in your life, guys, because if you go out of this course as unsuccessful person, everyone will look up to you as a loser. Or if you win and if you go out of this course as a qualified chartered accountant, then everyone will look up to you as a winner. You might be a role model. You might be an inspiration for many. See, whenever someone asks me, why did you do CA? Why did you work so hard? Only one thing I will tell you. Only one thing I will share is I didn't want my next generation to take someone else's example. That is, when you are telling your next generation, do that, do this, you cannot show someone else to be the example. Clear? I cannot show my neighbor and tell, be like that. Correct? Be that example in your home. And you need not tell the next generation what to do. They will follow you. And I tell you, trust me, your next generation will outperform. For sure. Clear. That is what happens. Clear eye. You are outperforming your parents and grandparents in terms of knowledge and qualification. I'm telling you. Okay. Now don't and go to home and tell, hey, I am superior. Anta. ಅಲ್ಲೇ ಹೊಡೆದು ಕೂರಿಸ್ತಾರೆ ಚಲೋ ಬಾಲ ಕಟ್ ಮಾಡ್ತಾರೆ ಚಲೋ so when it comes to knowledge qualification and all, obviously that we have more facilities than what they had for sure. That is the reality, and obviously you will give best to the next generation. Clear? So definitely they will outperform you provided you set a right example. If not, what can you tell them? Correct. One or the other day they will also question, "Neene kisiyakagilla. You only cannot do. What will you tell us?" Clear? So please be that example, at least, if not for the society and public at large, at least for your family. And your family is waiting for you to get successful, guys. Whether your parents tell it or not, every day they are waiting, literally waiting. Almost all of you would have already been like 18 plus. Clear? Yes. Means in next few years you have to settle down. That is what your parents are expecting, and they will have their own plans for marriage, or that to this everything. Okay, and responsibility, giving away the responsibility, delegation. Okay, parents have to delegate their responsibility to their children now after a certain age. Yes. So they would have their own plans. Please make sure that you will not make them wait for a very long time. Clear? So try to achieve it as early as possible. See, not only for your parents' sake, but also for you. You guys also will have a lot of wish and dreams. I should do that. I should do this. I should buy this out of my own earnings. Clear? So all that has to happen as early as possible, guys. Don't keep on postponing. Some students take the attempts also lightly. If not this attempt, next attempt. If not next attempt, next to next attempt. Ega three attempts there. Clear? So every 4 months, one attempt is there. No, sir. We will see. If not this attempt, next attempt. So please don't do it, guys, because you are making yourself wait for a longer thing. And the longer you wait, the interest might come down. Interest might come down because what interest you will be having in your first, second attempt and all, gradually it will come down, guys. Diminishing marginal utility. Correct. Because you will be studying the same thing and again and again, you will also feel like, I know all this. Okay, how many times to study all this? I can manage it. And maybe after a certain period, you have to start working. Managing studies along with working will be highly challenging. So please make sure that you complete it at the right time, guys. And there are a lot of things to experience in life after you qualify. Because qualification is not the end. After that, there are a lot of things. Okay, new avenues will open to you. Clear? And I will not definitely promise you that life will be easy after being a chartered accountant, but it will be better. It would be better, guys. So simple example I will give you. Assume you are working for 1 month. Whatever time you are putting in 1 month, you are able to earn 1 lakh per month. Another person is there. He is also working for 1 month. He is earning 20,000. Will it not make a difference? And to earn that 1 lakh, obviously you have to put a hard work, efforts. But maybe in a managerial role. 1 lakh, what example? Sir, 1 lakh. See, it depends on the person. I'm just giving an example. Clear? It depends. It varies from person to person, qualification to qualification, years of experience, and the skill you possess. Everything it will vary. So there will be a lot of differences. The life what you lead and the life what others lead. So be that extraordinary person And for being that extraordinary person, you need to just put that extra efforts. That's all. Okay. Chalo. Where were we? Budgetary control. Okay. So in budgetary control, what do we do is, sir, we will set a budget. We will work as per the budget. And continuously we will be comparing the actual work with budget and see if there is any deviation. And if there is any deviation, immediately we will inform the top level management and we will try to bring necessary changes. Necessary changes. So that is what is budgetary control. Okay. Next, components of budgetary control system. There are different components of budgetary control system. There are totally four. What are those? One by one. Physical budget, normally expressed in quantities. Physical budget is normally expressed in quantities like sales quantity budget, purchase quantity budget, production quantity budget, like that. Whereas cost budget expressed in rupees terms. Clear? Like production cost budget, under production cost budget, material cost budget, labor cost budget, overhead cost budget. So all these are expressed in cost. Then profit budget. Profit is nothing but sales minus the cost. Okay, which includes both the sales as well as cost budgets. Here we will try to find out the profit. Then financial budget, which is nothing like cash budget. Financial position, which will help you to decide the financial position of the company. You know, na financial position, where do you decide? In P&L account or balance sheet? Balance sheet. So wherever you are finding out about the balance sheet figures, or you are planning about the balance sheet figures like cash budget. Cash budget, what do? You will take the opening balance, add all the estimated cash receipts, deduct all the estimated cash payments, you will get closing cash balance, which will affect your balance sheet. Closing cash or bank balance. Yes. We will also prepare something called as capital expenditure budget. Will it affect my balance sheet? Yes. Sir, in the upcoming year, what all assets I am planning to buy? So this are called financial budget. So through this, can I prepare the budgeted balance sheet also for the upcoming period, like estimated balance sheet? See, normally financial statements are always prepared after the books are closed. But when it comes to budget, can I prepare an estimated balance sheet for the upcoming period? Yes. Next, preparation of budget. So what are the steps to be followed in the preparation of budget? First, know the organizational objectives. Your goal or your budget should be in line with organizational objective. Organizational objective is long term. Okay, they will tell for what purpose they are here. Clear? So your budget should accordingly match with that. Clear? So budget in the short run has to match the objectives of the company. Next is identification of key budget factor. I mentioned about this. Sir, I have planned to produce 1,60,000 units of output. For that, I need 1,60,000 kgs of raw material. But we maximum have only 1 lakh, assume 1,20,000 kgs of raw material. So that is a key factor. So I have to plan my budget by keeping that key factor as a base. If you remember, while teaching marginal costing, one question we did, clear, where the raw material, I guess, was the key factor. Correct. So, sir, for all three products, we had a demand, but the last product I couldn't fulfill full. Why, sir? Because of limiting factor. So, within the limited resources, whatever I can do, I will plan it. We fixed at the end product mix, right? Yes. So, even though there is a demand for the last product, I couldn't produce fully. Why? Because I had a limited raw material. Next, appointment of controller or officer. Like madam's example, I told you, there would be a budget committee. In this budget committee, all the members, that is, the members would be the head of each functional department. Clear? And one person will be the head of all of them, who is called the controller, budget controller or budget officer. Anything with respect to the budget will be communicated through them to the top level management. Or even if top level management has to communicate anything, they will straight away communicate not to each and every person. They will communicate to this guy. They will spread the information. Next, budget manual. Sir, what is budget manual? Guys, it is a document in which they would have told what you are supposed to do and how you are supposed to do, who is responsible for what. Clear? Because now top level management assume they've just communicated orally what everyone has to do. Now, some people might forget over a period of time. Correct? So document it. Better prepare a document telling who is supposed to do what. What is your responsibility? What is her responsibility? So that at the end of the year, if you guys don't achieve your targets, I can make you held responsible. Yeah, so document whatever has been discussed and communicated. Then budget period. Budget period should be specifically mentioned. I told you, whenever you are preparing a budget, please specify the period for which budget is prepared. Month, year, half year, whatever it is. It should be for a definite period. Clear? Yes. Definite period means, for example, you should have mentioned for the year, for the quarter, like that. Simply don't tell. For example, budget for the period. Which period? Month, quarter, year. Standard of activity or output. Guys, normally, whenever we are preparing a budget, we will take the past as a base. Last year, what we have achieved, we will set a target based on that to the next year. But obviously, will we copy paste the same? No, sir. Obviously, any company wants to grow, guys. So we will consider the growth rate. We will consider the growth rate. Sir, how much can we grow? How will we grow? I told you, for sales manager, sir, we have planned to sell 50% more. How can we achieve this? So they would have figured out a way. How do we sell more 50,000 units? Yes. And even in your FM and all, you would have seen growth rate and all. Cash flow may not be constant. It will be growing. If it is a constant growth rate, how is it? Dividend growing model and all you have. Correct? Huh? Yes. That G, small g. Okay, stands for what G? Growth G. Okay. Different types of budgets. Depending upon the various bases adopted, budget may be classified into different categories. Madams, pay attention. Based on capacity, fixed budget, flexible budget. We will discuss each of them later. Based on the period, long-term budget, short-term budget, current budget. Okay, sir. Based on function. Based on function means, guys, we call someone like functional managers and all. They are nothing but the managers of each department. Now, functional budgets means what, sir? For each activity, we'll prepare a separate budget. Clear? First, we will log what? Sales budget. And for sales budget also, we will do a lot of research. We will do external factors, we will consider internal factors, we will consider pricing, we will decide. So if I want to sell more, maybe I will plan something about discount offer. Clear? Or else maybe I will try to enter the new market or exports. Clear? Or else I am operating only in south. Now I am planning to go to north or new states. So it can happen like that. Sales budget we will fix first. Then based on sales budget, we will prepare a production budget. But you cannot keep it as it is because there might be some opening stock and closing stock as. Yeah. Yes. And based on production budget, we will prepare a production cost budget. Under that, material, labor, and plant utilization or even overhead will come. Plant utilization means, sir, to produce so much, assume we have prepared a production budget for 1 lakh units. To produce that, do we have a capacity? Do we have a plant? Do we have a factory? If not, please get a new one. Get a new one. Then under overhead, we had a different heads under the cost sheet, na same head. Manufacturing overhead, administrative overhead, selling and distribution overhead. Then coming to research and development, this is discretionary, guys. Every company may not have it, or again, even if they have it, how much money to spend for it depends on how much money you have. Okay, how much money you want to invest on R&D. Then comes financial budget. Financial budget includes your cash budget and capital expenditure budget, which normally affect your balance sheet. Balance sheet. Okay. Guys, first we will prepare all this individual budget. Then we will prepare a summary of all this. We will prepare a summary of all this, which is called master budget. Master budget, or we also call it as like targeted P&L account and balance sheet. Targeted means the budget. Clear? So targeted P&L account and the balance sheet. Now we will see each of them. Classification on the basis of scope or functional. Functional budget. Budgets for a period are classified according to the various activities in the organization. The main activities are what, sir? The sales, production. Under production, there will be like purchase, labor, recruitment, all those things. So for each activity, we'll prepare a separate budget. The fourth and all these activities are interrelated. Sir, can we work without the others? No. For example, can production work without the others? No. If there is no purchase department, who will purchase the raw material? If there is no stores department, who will store the raw material? And whenever required production department, the stores department has to supply the raw material, right? We discussed it in the material chapter. Yes. So all the department has to work in a coordination, guys. The forecast for individual activities are prepared and coordinated with those of other activities and then consolidated to show the total effect of all the activities as a whole. Once we prepare all individual budgets, next we will consolidate it, which is called the master budget, guys. The consolidation of all the functional budget is called master budget. You also, guys, prepare in accounts consolidated financial statements, right? You will first prepare the standalone financial statements for each companies. Clear? And for the entire group as a whole, we will prepare now consolidated. Clear? Likewise, for each department, we will prepare a separate budget. At the end, we will combine everything and prepare one budget for the entire company, which is called master budget. Principal functional budgets are one by one. First one, sales. Guys, sales budget can be prepared both in quantity terms as well as in rupees. And while preparing a sales budget, as I mentioned you, we will consider various factors, the pricing, internal factor, external factors. Then what is the market? Now, especially now if I tell you, Donald Trump, full crazy guy. Clear, a full crazy boy. Now he told we will increase the tariff first to 25%, now 50% already. I don't know again how it will make like with China also they played the same game. Okay, they will increase, they will increase, they will increase, they will. Finally, they both came for an agreement, coordination. Clear? Yes. So now they made it like for in from India, whatever we import, we will charge 50% tariff. Now obviously cost will increase. Now, will the US citizens prefer Indian products there? Maybe not, because the cost of Indian products will increase. Clear? Will it affect our sales? Yes. That is why Indian market is getting corrected now. If you guys have observed, Indian stock market, I am telling you, whoever has the exposure for US market, they're getting corrected. Whether it is pharma company, IT company especially, they're dependent hugely on US clients. Clear? So this will affect their sales. Why, sir? Because automatically when they are charging more tax, your cost will increase. When your cost is increasing, what do? You try to shift it to the customer by increasing your sales, but you are not able to manage. So now what customers will do? They will try to shift to other people or your competitor. Yeah. So there are a lot of things. Even taxes we have to consider. Clear? In India, they are supporting the businesses by bringing a lot of things with respect to startups and all. Even in income tax, if you see, there is a section called 80 IAC and all, where they give deductions for the startups. For the startups, okay, first few years, don't pay any tax, even for SEZ and all. If you go and operate your business in SEZ, 15 years, enjoy. First 5 years, 100%, next five years, 50% of your eligible profit, or last 5 years is like how much amount you will transfer it to special economic zone reinvestment reserve, whichever is lower. Correct? All these are to support the companies or businesses. Especially SEZ has been set up to support export businesses. Clear? Even in GST, if you see any supply to or by SEZ unit or SEZ developer is always interstate. Sir, it is within India only. It is within Karnataka only. Assume, guys, in Karnataka, in Bangalore, electronic city, a particular area of electronic city is declared as SEZ. Now I supplied from a area, Jainagar, to a area in electronic city, which is SEZ. What supply it is? Interstate. Sir, within the same state, within the same city, still interstate. Why? Because for GST, SEZ is considered to be a location outside India. Outside India. Now, if you supply anything to SEZ, it is zero rated. It is at par with export. Interstate, okay. Sir, is it also zero rated? Yes. If you supply anything to SEZ, it is a zero rated. Sir, what if there is any supply by SEZ? Means they are supplying to me. It is interstate supply, but not zero rate. At par with import. IGST would believe it. Clear? I will explain this and this. Interesting. Okay, may not be so much relevant here, but still I am mentioning. Assume this is SEZ. What is this? SEZ. Supply by them is zero rated. Supply to them is interstate. Interstate at par with import. What would be levied here? IGST. And this is zero rated. Zero rated means it's taxable, but rate is zero. Sir, can I claim ITC? Yes, you can claim ITC for your inverter. Oh, come back. Production budget. Sir, once we have locked sales budget, as per that, we will plan our production budget. But please be careful when you are preparing production budget, you should also consider your opening stock and closing stock. I will show you a question. Assume, guys, in this question, they have given the sales already, estimated sales, and they are asking you how much units should you produce. For that, you need to adjust the opening stock and closing stock. Sir, what is the formula, sir? Guys, simple. You know this formula already. Opening stock plus production minus closing stock is equal to sales. Yes. But actually, in this question, sales they have given, but asked you to find out production. Just interchange the position. So, sales minus opening stock plus closing stock is equal to production. Correct. Opening stock is something which is already produced, sir. Should you produce again? No. So deduct it. And sir, why are you deducting it from sales? Very simple logic. Sir, as soon as I start this year, first I will sell what? Opening stock, which is already produced in the last period. Correct? But did I produce it in the current period? No, deduct it. Whereas closing stock is produced in the current period, but not yet sold. So is it included in sales? No. But have I produced it? Yes. So we are adding it. What do you get? Production. So this is the format. When they ask the production budget. Yes. And for production and all, sometimes for production or for closing stock, they will give you some pattern. Here actually, for closing stock, they have given the pattern. What is the closing stock means? 20% of next quarter sales. And remember one thing, closing stock of this quarter will be the opening stock of next quarter. Or closing stock of this year will be the opening stock for next year. Hope you got it. Yes. So we'll get a production quantity. Based on that, we need to plan the raw material, labors and all. Yes. Yes. So production budget, and also guys, here we need to prepare. Once I have locked the production budget, both in terms of cost as well as quantity, then prepare material budget, labor budget and plant. Sir, assume we have prepared a production budget for 1 lakh units. Now for 1 lakh units, how much raw material is required? Can we purchase it? At what price? Everything you prepare. Clear. So now assume the annual requirement for each and every unit of output, we require 1 unit of raw material. So how much raw materials I totally require? 1 lakh. So annual demand is 1 lakh. Plan your reorder level, maximum stock level, minimum stock level, reorder quantity, everything you plan in advance. Clear it. See all that whatever we calculated in second chapter, that is material. Will we do it at the beginning of the year or at the end of the year? Beginning of the year, correct. At the end of the year, if you do, what is the use? At the beginning of the year, standing today, I will calculate what should be my EOQ. Clear what should be my reorder level, everything. Accordingly, I will be following it throughout the year. Next, labor budget. Sir, to produce 1 lakh units, how much labor is required? Assume to produce each and every unit, we require 5 hours of labor. That means totally we require 5 lakh labor hours. That means how many labors? Each labor can work for how many hours? Divide it. Clear? Now assume totally we require 100 labors. Do we have them? Assume presently we have only 80 labors. Make them to work extra shift or else appoint new workers. Appoint new workers. One more thing, if you ask them to work extra shift, you have to pay them overtime premium and all, additional cost. Are you ready to bear it? If yes, okay. If not, better appoint the new workers. See, both has their own advantage, disadvantage, guys. See, if you appoint new workers, you have to appoint them throughout the year. Even when there is no work or even if there is no demand, you have to pay them salary or wages. Whereas present worker only, whenever required, sir, I will make them to work overtime. Okay, some extra cost in terms of overtime premium I will pay, but only when they are working. Extra overtime. Correct. Overtime is not required throughout the year, sir. Only when the work is more or commitment is more. Clear. So as per the needs, the organization will plan this. But you should also not like appoint more people and make them to sit in the bench that is waiting for their work. At the same time, you should also not have very less number of employees because whoever is having will have too much work. They will have too much of pressure. When they cannot handle it, they will decide to quit the organization, which will lead to labor turnover, which will lead to replacement cost. Correct? So many linkages. Sure. Next, plant utilization budget means, sir, to produce 1 lakh units, do we have already the capacity? If yes, continue. If not, plan to have an increased capacity. Increased capacity will come with an increased fixed cost. Got it? Yes. I will just show you. You can see, guys, once I lock the production year, based on this production units, we will prepare even the raw material budget and all. You can see units to be produced, which we got from the previous calculation. And for each unit, how much raw material is required? 2 kgs. Clear? So what is the total raw material required for production? This quantity. Should I purchase everything? No, sir. I might have some opening stock and closing stock. So this is my total raw material required for production, which is nothing but raw material consumed. Now take raw material consumed, add closing balance, deduct opening balance. You will get raw material to be purchased. This equation I am followed. Opening stock plus purchases minus closing stock is equal to consumed. We already have consumed. Now do the reverse calculation. Add closing stock, deduct opening stock of raw material. What do you get, sir? Raw material to be purchased. Sometimes they will also ask you what is the cost of raw material to be purchased. Just multiply with the price per kg. Yeah, and for this question, they are told we will purchase 30% in first quarter, 50% in second quarter, 20% in the third quarter. Accordingly, we divided 3,15,000 in this ratio. If nothing is given, if they have just given purchase price, multiply purchase price with this, you'll get raw material purchase cost. That's got it. Yes. And also using this, they may also ask you to prepare labor or labor budget. Sir, how is it? Simple. This is the units to be produced. Yes. Multiply this with the number of labor hours required to produce each and every unit. Clear? Yes, sir. You will get total labor hours required. If you multiply that with labor rate, you will get labor cost. That's overhead budget. So overhead budget here is nothing but manufacturing overhead budget, administrative overhead budget, selling and distribution overhead budget. Yes, nothing new. We already discussed about this in detail in cost sheet chapter also. Clear? But there we used to present once I incur the cost. Now we need to estimate it in advance. Estimate it in advance. And guys, when it comes to overhead, they may not be able to estimate it accurately as it is not directly attributable to the work. So what they do is they will fix a percentage. For example, factory overhead will be fixed as a percentage of direct wages. They will observe it as a fixed percentage of direct wages. For example, assume direct wages is 1 lakh. They will tell factory overhead is 20% of direct wages. So 20,000. Same way, administrative overhead, selling, distribution overhead and all, they will fix it as a fixed percentage of factory cost. Factory cost. So whatever is the factory cost you have got, apply that percentage, you will get the respective overheads. Got it? Yes. So if I have to just tell it in simple guys, manufacturing overhead is an indirect expenses which we incur in a factory, not the direct expenses. Okay, sir. And factory is a place where production happens. Then administration overhead is an expenses which is incurred for the purpose of planning, execution, administration of an organization. If I come to the cost sheet format, this can be general or related to production. If it is related to production, like sir, planning my production, the execution of production and all, then it will be a part of cost of production. If it is general, it will come after the cost of production. Then selling and distribution overhead. Selling is different, actually distribution is different, but you can club both also. Selling overhead means, sir, to generate sales or to promote my products, what all cost I have incurred is called selling overhead, including advertisement. Whereas distribution overhead is the cost which we have incurred to distribute the product once it is sold, including the transportation cost, carriage outward. Then coming to research and development budget. Sir, some companies set aside certain part of money also for research and development. Clear? Sir, many companies, especially in today's generation, they have to come out with a new way, new products, innovative products. Clear? Today my product might be hero product, but it will not remain as hero forever. So you have to be, even like Apple or iPhones or iPads and all. So they're doing really good. But are they sitting idle? No. They are not settled. They want to come out with a new product. Sir, iPhone 16, 16 Pro, 16 Pro Max, or what all varieties. Yeah, maybe few extra features. Extra feature. Will they stand there? No. Next they will come out with 17 or 18 or 20, 25. I don't know what all numbers they will bring. Yes, sir. Same way. I'm just giving one mobile manufacturer name, but it is same way all the places. Even in teaching, sir, if teachers remain same with same knowledge, same way of teaching, can he be a teacher, successful teacher? In fact, forever, no, guys. Correct? Because we also always be working on how can we present better, how can I teach better, or how can I simplify it. If you see my notes or my teaching today or after 2 years will not be same. Definitely, we would have also improved over a period of time. And whatever notes you are seeing now, colorful notes, sir, did I make it in 1 day or 2 day? Definitely not. It will be over a period of time, guys. Yeah. Even you guys, will you become an overnight chart accountant? No. So you will be investing a lot of time. You will also find your innovations. You will students also will do innovations. Clear? Actually, I would have solved assume a question in one way. You will come out with another way. Sir, can we solve like this? Correct. Huh? If it is giving same result, yes, you can do it. Especially in standard costing, I only try to simplify it. In ICI material, whatever questions they are given, answers, it is bit challenging here. I have told you when I was discussing the questions on standard costing and all, I have told you follow my way. It is more easier. Clear? So that is better because that is more simplified. When we were discussing the questions on IC from ICI material on each and every chapter, and even while I am discussing the question paper, I will tell you the better way of doing. Yeah, ICI would have given some suggested answers. but maybe little confusing for the students. Let us do it in an other. For that, even I would have spent a time thinking, oh, this can be presented in another way, which is more simpler to the students. Yeah, and now you will also tell, some students will tell, sir, this subject didn't happen well. I only did full innovation, sir. I only studied myself, sir. I found a way how to study. Correct. That you how to do is, guys, now you cannot blame anyone for your failure results. If something didn't go your way, please find a way. Clear. Please find a way and as early as possible. Sir, nowadays you have lot of opportunities, lot of options. If not this way, you find out the other way. But I suggest you to find as early as possible. Clear? Sure. Financial budget. Under that cash budget and capital expenditure budget. Cash budget is nothing like cash and bank balance budget. So we normally take opening cash and bank balance. We will add all the estimated cash receipts, deduct all the estimated cash payments. We will get the closing cash and bank balance as clear. And you guys would have prepared receipts and payments account and all very similar to that. Clear. Debit side, you will start with opening balance, record all the receipts, credit side, all payments. What do you get at the end? Closing balance. Yeah, very similar. Or your cash and bank account is there now. That also you can do. Okay. Normally budget means we will do it in a statement form, but can I do it in account form also? Yes. Start with opening balance, two balance brought up. Add up all the receipts, estimated receipts, because it is for the future. Then on the credit side, record all the estimated payments. You will get closing balance. That's all. Yes. Then capital expenditure budget, normally this will be long-term price. Because capital expenditure budget, I will not be incurring every day, every year. Once I purchase a budget, I expect it to use for number of years. So capital expenditure budget is like a long-term budget where I am investing the money into the capital assets or fixed assets. This will come only when the company is expanding their operations. Correct? Because if I am remaining same, then I will continue with whatever assets I have, or if at all, if there is any asset which has become outdated, I may replace it. But normally, guys, even when you are reading the balance sheets and all, I spoke about this in my regular class. Okay, about how do we decide whether to invest in the shares or not? Fundamental analysis. One of the thing I told you, if the investment in the assets are increasing, if reserves and surplus are increasing, that means the company is expanding. Correct. So assume last year the assets was 100 crore. This year they've invested in 120 crore. It is a signal of what company is expanding. When company is expanding, obviously it will result in additional sales, additional profit. Correct. Then master budget. That is the summary of all the functional budget. Whatever we discussed now, of all this summary is called master budget. We also call it as targeted profit and loss account and balance sheet. Sir, how do we prepare it? Similar to cost sheet, but format is bit changed. Sales minus cost of goods sold. Sales minus cost of goods sold is equal to gross profit. That is whatever you take care in trading account. Trading account, you know now, you already forgot? No, right? Yes. Then whatever you take in P&L account will come here. Less administration expenses, selling and distribution expenses, I can call it as like indirect expenses not related to production. Not related to production. Then what do you get? PBT, profit before tax. From that you reduce tax, if at all if they have given the question. If not, you can stop it at this point. If they have given tax rate, apply tax rate on this figure, reduce tax, you will get profit after tax, PAT. Profit after tax. Then classification on the basis of capacity or flexibility. Fixed budget, flexible budget. Fixed budget means, guys, here the cost will remain same irrespective of the activity level you achieve. Now I have told you to produce 100 units, you have to incur a cost of 1 lakh. Now whether you produce 110 units or 90 units, your cost should be 1 lakh only. It should not vary. Clear? Sir, this is fixed budget where your cost will not vary with the level of output. That means you can follow this budget only if your cost is fixed cost, or else if you know that I can exactly produce 100 units. Target is to produce 100 units. You know that exactly you will go and end up producing 100 units. Only then you will follow fixed budget. Clear? This is not practically followed as because normally what budget I prepare at the end of the year, I may not be exactly going and achieving it. Some plus or minus will happen. Clear? So that is where the flexible budget will play here. Fixed budget is also called as static budget. Now, what is flexible budget, sir? Assume, guys, to produce 100 units, I have told you 1 lakh is the cost. Clear? I would have given a breakup. How much should be variable? How much should be fixed? For example, assume this is 60,000, this is 40,000. Now my actual target achieved is assume 80 units, 90 units. Can I change this cost? Yes. Anyway, fixed will remain same, whereas variable will vary with activity level. So flexible budget will give you cost at any level. Any level. Now they will fix one level. Now if the actual levels changes, can I change my cost also? Yes. For example, I will show you. Yes. So you can see one simple question. See, at 50%, this is my sales, variable cost, fixed cost, and semi-variable cost. Clear? Yes. Whereas now, if I operate at 60, 75, 90, or 100, they will ask you to give flexible budget. If I operate at so and so level, what should be my cost? Fixed cost will anyway remain same. Whereas variable cost will straight away vary with activity cost. So 50,000 is for 50% means how much for 60%? 60,000. 60,000 for 60% means how much for 75%? 75,000. Likewise, variable cost will directly vary with activity level. Whereas semi-variable, if at all if it is there, they would have given some pattern. Up to certain level, it will remain fixed. After that, it will increase. They would have given some pattern. They would have given some pattern. Here in this question, they were given like this. Here like this. Semi-variable expenses remain constant between 45% and 65% of capacity, increasing by 10% between what? 65 to 80. So if your capacity is between 65 to 80, it will increase by 10%. If your capacity is between 80 to 100, then it will increase by 20%. It will increase by 20%. Sir, what about up to 65%? Remain same. Remain same. You can see only if it goes above 65%, it will increase by 10%. Some pattern they would have given for semi-variable costs. Clear? And if nothing is mentioned in the question, we assume fixed cost will remain same. But sometimes if they tell after 80% it will increase or after 100% it will increase, only then you consider. If nothing is mentioned in the question, you will assume that it will remain fixed cost. And whenever you are preparing flexible budget, you need to give a breakup between variable cost, fixed cost and all. And if at all if there is semi-variable, then calculate that also. Clear? And even semi-variable we can divide actually into variable portion and fixed portion. That we will do only if it is required in the answer text. So you can see in this question we have done that. There are some semi-variable expenses. Okay, there are some semi-variable expenses for which we have calculated like what is the variable portion, that is change in cost divided by change in output. We will get the variable portions. So once you get the variable cost per unit, actually these are variable. Sir, how will I know whether the cost is variable? Simple. If variable cost per unit remains same at all the levels, it is called variable cost. Whereas fixed cost in total, if it remains same, then we call it as the fixed cost total. Clear? Sir, per unit also not same, total also not same, then it is semi-variable. So how do I divide semi-variable expenses into variable and fixed, sir? Simple. Take change in expense divided by change in output. You'll get variable cost per unit. Then take any one activity level. Find out what is the total variable expenses. We have taken 8,000. What is the variable cost per unit? 0.025. Calculate total variable cost 200. Now deduct this from total expenses. 400, sorry, 600 is the total expenses. In that, how much is variable? 200. Remaining 400 is what? Fixed. Clear? So should I take 8,000 units activity only? There is another activity. Can I consider that? Yes, same answer. So simple you will do, guys. You will take total cost at a particular activity. From that, you reduce total variable cost. How do I get, sir? Number of units into variable cost per unit, which you have got here. Remaining is your fixed cost. Remaining is your fixed cost. Okay. Then classification on the basis of time period. That is long-term budget. Long-term budget means, see, sometimes they tell it is more than 1 year, but actually it is 3 to 10 years. Like your fixed assets budget or capital expenditure budgets. These are the long-term budgets. Then short-term budget is between 1 to 2 years. 1 to 2 years. Whereas current budget is like months to weeks. That is presently what I am working. Months to weeks. Okay. Sometimes company will do like this also. They will prepare a budget for a decade. Then they will break down into years. Then that year budget they will break down into months. Clear? It can happen. See, you cannot oversee a decade exactly now with certainty. Clear? May not be like decade also. So at least like 3 years, 5 years and all, they will prepare a budget. Then they will prepare a yearly budget. Then they will subdivide that into monthly budget or quarterly budget. Because it is very difficult to oversee a decade and all. We don't know, sir. You know, COVID came and turned all things around. Clear, upside down, over it. Clear. No one was planned for it. No one had planned for it. So how the things, it was like doing, especially COVID time, what is happening? It is like we are watching some movies, Hollywood movie. Okay, ಇದೆಲ್ಲ ಬರುತ್ತೆ, ಟಚ್ ಮಾಡಿದ್ರೆ ಏನೋ ಆಗುತ್ತೆ, ಕೆಮ್ಮಿದ್ರೆ ಏನೋ ಆಗುತ್ತೆ ಅನ್ನೋದು. Clear. So all this was a first time experience. Okay, and we have crossed that. What and all we have seen in our generation. ಇನ್ನ ಎಷ್ಟೊಂದು ಇರುತ್ತೆ ನೋಡೋದು. Sure. Zero based budgeting. Zero based budgeting. Like actually, traditional budgeting works like this. Assume last year my units was, okay, let me take it here better. Last year, assume like 2024, my production was 10 lakh units and I had incurred a cost of 100 lakh. This year, I am planning that my cost would be 120 lakh. Under traditional budget, I need to explain only this, why 20 extra. Why 20 extra under traditional budget? Clear. Whereas in the under zero based budgeting, you need to explain full 120 lakh. Why are you incurring 120 lakh? Explain me each and everything. Explain me each and every rupee. Hope you understood. Under traditional, I will not explain everything. I will explain only what is extra. What is the change? I will explain only that. Sir, why 20 lakh extra? Whereas under zero based budgeting, there is no base. In traditional, this was a base, correct? We asked you to explain only this. Whereas under zero based budgeting, no base, nothing. Please explain full 120 lakh. How much for what? Why? Please explain. That is what is called zero based budgeting. Zero based budgeting is a method of budgeting which requires each cost element to be specifically justified. Means you should tell why this cost, why that cost. Each and every rupee you have to explain. Though the activities to which the budget relates are not being undertaken for the first time. Sir, zero base means we don't have any base, we don't have any history. No, we will have it. Okay, but we will not consider it. Clear? You explain me each and everything. Zero based budgeting differs from conventional system of budgeting. Conventional means traditional, because it mainly starts from scratch or zero and not on the basis of trends or historical levels of expenditure. I told you, conventional or traditional means you need to just explain the extra. Whereas under zero based budgeting, you need to explain from zero. Performance budgeting means here we are evaluating the performance of an organization or each and every department. I had given you the target for each and every department. Now at the end of the year, we will evaluate who has performed how. And accordingly, we will reward them or penalize them if they have not worked as per the plan. We will try to appraise. Okay, we will try to appreciate the workers whoever has worked well. Budget bidder. Even see, when it comes to students, also it happens. Felicitation. Clear. Once you guys have passed your exams or cleared your exams, you will be felicitated by the educational institutions. Clear. Wherever you are studied, like that. Even your employees has to be appraised for their work or their hard work. Budget ratio. Guys, there are various budget ratios to be calculated. Ratio means we compare one with the other. Even in your FM, you will calculate various ratio, current ratio, quick ratio, correct now, interest coverage ratio. What do? Divide one by the other. Clear? Don't deduct each other, divide it. Clear? Yes, sir. And we normally express it in percentage, so we will multiply it with 100. So we are comparing two figures here. And here figures is nothing but hours. Clear? Yes, sir. Budget ratios provide information about the performance level, the extent of deviation of actual performance from the budgeted performance, and whether the actual performance is favorable or unfavorable. If ratio is more than or equal to 100, then it is favorable. If it is less than 100, then it is unfavorable. Actually, if it is exactly equal to 100, I can tell at par. More than 100, favorable. Less than 100, unfavorable. Oh. Okay. Sure. We will see all these formulas you should know, guys. I will come from bottom. See, budgeted hours. I have given a note here. Budgeted hours is always for budgeted output. Whereas standard hours, we need to convert it for what? Actual output. How do we get standard hours, sir? Simple. Budgeted hours divided by budgeted output into actual output. Into actual output. This will give you what, guys? Standard hours. So please be careful. Don't get confused with the words standard hours and budgeted hours because we use both in the formulas. Now, calendar ratio itself. Guys, we somewhere heard about it. Calendar variance, fixed overhead calendar variance. What is the formula for that? Actual days minus budgeted days into fixed standard, sir. Standard fixed overhead rate per day. Correct. Same way here. Sir, we will not deduct each other. We will divide, sir. Actual working days divided by budgeted working days. No into rate. It is into 100. Into 100. Sir, if actual is more, good or bad? Good. They told you should work for 25 days, but I have worked for 26 days. Good, no? Yes. Next, efficiency ratio. Guys, efficiency variance we had, what is it, sir? Standard hours for actual output minus actual hours work into standard rate per hour. Standard rate per hour. Okay, same way, instead of deducting, you divide here. Standard hours divided by actual hours work into 100. Clear? Yes, sir. Next, level of activity ratio. Level of activity ratio. Activity ratio. Sir, how much is my activity when compared to plan? Standard hours divided by budgeted hours. Sir, both one and the same. No, I already covered it. Standard hours will always be for actual output, whereas budgeted hours will always be for budgeted output. Clear? Yes, sir. So divide each other and you will calculate the activity ratio. Then coming to capacity ratio. Guys, under capacity ratio, there are three. There are three. Don't get confused. Small differences are there. Please listen carefully. First, actual capacity usage ratio means how much capacity we have used. Guys, assume maximum we can work for 10,000 hours. But actually, we have worked only for 7,000 hours. So, how much capacity we have utilized? Only 70%. So, actual capacity usage ratio means actual hours divided by maximum hours divided by means how much capacity you have used. Clear? Yes. Next, actual usage of budgeted capacity means how much you have used when compared to budgeted. Guys, see, maximum is 10,000, but I had planned to use only 8,000. I had planned to use 8,000 hours, but I used only 7,000 hours. They are also underutilization. They are also underutilization. How much, sir? 87.5. Hope you're understanding. Guys, maximum we can work for 10,000 hours. But I had prepared a budget only for 8,000 hours. But I ended up working only for 7,000 hours. Hope you are catching it. Yes, sir. Then, and this is there now. This is nothing but fixed overhead capacity variance. Fixed overhead capacity variance we had under fixed overhead. What was the formula to calculate that? Sir, actual hours minus budgeted hours into standard fixed overhead rate per hour. So instead of deducting, you need to just divide here. And into will be 100 because we need to express it in percentage. Next, standard capacity employed ratio. Standard capacity usage ratio means, sir, budgeted hours divided by maximum. Guys, maximum I can work for 10,000 hours. But now we are planning to use for how much? Only 8,000 hours. This is my plan, not my actual. Actual we have seen already 7,7. Clear? So your plan for how much? Standard capacity employed ratio, which is 80%. Budgeted divided by maximum. Budgeted divided by maximum, guys. Clear? Just so. Sure. So finally, we have done this. So we have completed the costing concepts revision or marathon. See, normally we take more than 100 hours or in fact like 130 or 150 hours in our regular class to complete the class. But in a short period of time, I have tried to complete the entire 15 chapters, all 15 chapters, but as short as possible. Okay, but I have tried to cover the concepts, everything, but in a faster way, guys. Yeah, and also make sure that you guys are watching the questions marathon. I would suggest you to watch the concepts along with questions so that you know the concept and also you know how to apply it. Here also in the concepts marathon, I have told you how to apply it, but specifically questions I would have not covered. So please refer to that also. and hope this was helpful for you guys. I know, especially when you guys are during the exam time, it's very hard to sit for a long hours, to focus for a long hours, but push yourself. You are working for your better tomorrow. Clear. And recently I had shared one quote actually in my channel, that is WhatsApp and Telegram channel. I would like to mention that here. See, when the cost of distraction is too heavy to pay, then the price of focus is better to pay. Clear, is more affordable. The price of focus is affordable. Clear. I repeat because first time it will not go. When the cost of distraction is too heavy to bear, which will cost our life, career, the price of focus is affordable to. Okay, means we can pay it. Because if you don't focus on your studies now, then you have to work hard throughout your life. Okay, and that too, when compared to others, when you guys see in your work or in your company, other people are like much ahead of you, are earning well, working in a better position, you will feel bad about yourself. You will feel guilty. Instead of feeling guilty later, please work now. Even many students will feel guilty even in the exam hall. Shit, I should have studied, and others are all writing full. Clear. You are like, oh, yo, this topic I didn't study. You are sitting empty, idle. There also you will feel, no, okay, I should have studied. Or even after getting results, you will feel like, shit, I should have studied for some more. Okay, 145, 140 I have got. Just to miss. Clear. So instead of feeling guilty, please work now and try to increase your productivity as much as possible. How much ever you can, you know what best you can perform best. There is no limit for it. Try to perform to your best, and definitely you will get the results what you want. So hope this sessions was helpful for you. So please make sure that you guys make the best utilization of the same. And also if it is helpful, don't forget to share it to your friends. Thank you.